Good morning. Welcome back to Forex Focus here on Tasty Live. It's Thursday. I'm Glenn Freiberger. With me, Mike Henley of the Twitter sphere. You're all tapped in. Did you see? I was watching a lot of SB highlights on Twitter. Did you catch that live or no?
I saw some snippets. Shane Gillis is hilarious. So
Shane Gillis got to host, and he went for it.
yeah.
Wow. Yeah.
There's some Thunder players there too. So.
He made a joke about SGA getting people in foul trouble. He made a joke about them taking, what's his name? O.J. Simpson's Heisman away. Ooh.
He's no filter.
had a few funny ones about Bill Belichick having a 24-year-old girlfriend. But you didn't watch it real time.
No, I fell asleep real early yesterday.
Yeah, me too. But my girl Coco Gauff won best tennis player. The Saquon Barkley backwards hurdle won best play.
Oh yeah.
That also made a Madden cover. But yeah, this is the summer doldrums of sports. So SBs is the only thing. I guess a lot of people here had qualms with how the baseball All-Star game finished. It was tied, and so they went to a swing off. But you're not a big baseball guy, are you?
A little bit. When I was younger, it's tough with the Cubs and the Sox. But
What do you mean? Cubs are going to win today. They're looking pretty good. A lot of people around the office thinking they have titled hopes, but you're not biting.
I don't know. We'll see. I don't pay too much attention to baseball, but I know Bulls don't have any chance this year, so it's just tough in Chicago right now.
That's true, but they can't take our hope away from us, Michael.
Well, if you don't have any hope to begin with, it's hard to be.
Yeah, then you definitely can't
something.
take it away. But we're here on a Thursday. Crazier week than I would have expected for dollar pairs, for non-dollar pairs, the FX space in general. We'll get into the platform here towards the end of the show, but I ran some more numbers that maybe some people are interested if you want to hop into our slides. Today we're talking mean reversion profitability in non-dollar pairs. So Frank and I earlier this week were looking at some cross currency pairs not having a dollar component in it. Because they were the biggest movers of the day. I think Monday, coming into the weekend, not a lot of dollar news. And so got my gears turning about looking into these non-dollar pairs and continuing on to a similar study that we did in dollar pairs, but with the thesis of we're in summer, not a ton going on unless you have, the intermittent Trump-Powell back and forth to fire or not to fire. The world's fastest taco trade, as I was calling it yesterday, with all of that volatility. But FX markets, not the most volatile right now, and non-dollar pairs are a part of that as well. And so we're working with the thesis that in low volatility, without major movers, FX markets are more prone to just go back and forth, trade back and forth within ranges, and perhaps exhibit more mean reverting qualities. We'll test if that's true, which pairs it's true for, and when a trade like that would be the most profitable. But here we're looking at the 7 most popular non-dollar pairs here. So a lot of these still highly liquid, still highly traded across the globe. And so here in the U.S., we tend to have a very U.S. dollar oriented lens, and for some good reason. I mean, it's the most traded currency in the world, and a lot of major countries and regions trade a lot of things in dollars, and so it's no surprise. But it's also worth calling out that a lot of these other currencies, these currency crosses, can be just as liquid at times, especially pairs like that euro yen and pound yen, the most liquid non-dollar pairs, I believe, by some recent statistic. But here we're looking at realized volatility annualized over the past year, and also the percentile in which what we're looking at, the realized volatility we're looking at currently, how that stacks up to the past year of data. So not only are we seeing volatility, in the 3% to the near 7%, to contextualize that, in all except that Australian dollar, New Zealand dollar, and that euro pound, except for those which are in the middle of their range. The others are very low in the percentile column, and this low vol column analyzes if this percentile is under 30, the 30th percentile, or not, and that's how we're going to measure, our low volatility environment. So we're seeing 5 out of the 7 pairs in this low volatility environment. Any surprises to you here, Mike? I know I pulled these numbers, threw them right at you.
NZD, the Aussie is kind of an interesting one there because that surprises me. I watched that chart a ton, and it's got a lot of back and forth, so that's interesting to see over the past 5 years. I mean, 5 years ago, I was 20 years old, so maybe I wasn't looking then, but lately, that data surprises me, just comparing that to chart data.
And yeah, we're going to see some interesting trends across this data, but worth calling out on this slide that you see the Australian dollar, New Zealand dollar at 3% realized volatility. You see the euro pound at 4.5% volatility. Those don't scream to me as high volatility percentages, but those are in the middle of the range for these. And the more you think about it, the more it starts to make sense that pairs like currencies like Australian dollar and New Zealand dollar have a rolling correlation with each other of near 80% over the past 5 years, and that euro and the pound similarly have a very close geographic proximity and a very high historic correlation. So it makes sense that you wouldn't expect these to fluctuate a ton. At least that's how I'm contextualizing it. But let's get into what we analyzed. We analyzed the past 5 years of price data from July 2020 to July 2025 using daily close data for these 7 non-US dollar pairs. And what we did, we measured the realized volatility, as we just brought up, using 20-day periods, standard deviations, and we separated this into low volatility environments, less than the 30th percentile, and the rest high volatility. So not an equal weighting, but since this volatility is a little harder to measure, splitting it 50-50 didn't make a ton of sense to me. Just identifying when you can recognize that volatility is definitely coming in. It's likely to be in that 30th percentile or lower. And what we did is we used Bollinger Bands to simulate trade performance. So what we did is trade entry criteria would be when the closing price touched the 2 standard deviation Bollinger Band, then we entered a contrarian trade. So when the price was less than the lower band, that triggered a buy and going long. And when the price got higher than the upper band, that triggered a short trade to simulate, a mean reverting trade. And what we did is we calculated the win rate, so any positive P&L, with various time frames, so 1 to 10 days, and compared a lot of these volatility environments and the win rates there. The reason we use Bollinger Bands is because that is actually a pretty straightforward calculation using the moving average as well as the same standard deviation on a rolling basis. So it reacts to volatility environments. So when we're talking about low volatility and high volatility environments, this indicator or calculation works because it reacts to, it's not a set threshold across the board, a set pip distance or percentage distance. It reacts to how much the market is moving. And we got some very interesting results here. First, we're looking at chopping it between low volatility average win rate and high volatility average win rate to see if this thesis was true. When we did this with dollar pairs, it was a bit of a mixed bag in terms of which environment was better for mean reversion. Here, non-dollar pairs, it's looking a lot more favorable for low volatility mean reversion, as well as mean reversion across the board. I mean, I ran these numbers a few times to try and get this, make sure this 71% win rate was right. And this study that we conducted has a very specific set of criteria. The occurrences, weren't small, but they weren't a ton by any means. We're looking over past 5 years of price data, and for certain pairs that meant only 200 trades entered, and so not a ton of opportunities. But when we're looking at these numbers, definitely favorable historically for mean reversion, and as much as almost 12% pop in euro yen for win rate in low volatility environments compared to high volatility environments. Anything here that piques your interest, Mike?
70, anything 50+% win rate is pretty crazy, right? Because if you judge your risk reward right, you can be profitable with a sub 50% win rate. So a 71.6% win rate that's surprising to me. It makes sense because if you just watch Forex charts a lot of the time, you see the mean reversion happen a lot, right? But a 71.6% win rate on a strategy is pretty crazy.
Yeah, and who knows if that would hold up, into
Right.
this current environment, just looking at historic data here. But yeah, what sticks out to me is, validation that, maybe the US dollar component in a lot of pairs, popular Forex pairs, can be a much heavier impact, causing sustained swings, as we've seen in the gigantic depreciation of the US dollar so far this year, on the heels of a massive appreciation heading into 2025. So definitely some expanded ranges in dollar pairs. Another thing that sticks out to me, yen markets, when we look at dollar yen, that I've cut this up of fair 4 or 5 different ways, doing mean reversion versus momentum trading, various historic studies. Yen pairs consistently don't exhibit, the dollar yen, that is, doesn't traditionally exhibit as solid mean reversion characteristics, whereas here we're looking at Australian dollar yen, euro yen, pound yen, still posting higher than 50% win rates. And very interesting to me that euro yen has such a pop in low volatility when things aren't moving. That tends to mean revert, because we're looking at euro yen and pound yen, I think, still near historic extremes. We'll have in the platform after, but those have been trending recently. So maybe some potential opportunity there. Last thing I want to call out that caused me to rerun a bunch of these numbers was the difference in Australian dollar, Canadian dollar, and New Zealand dollar, Canadian dollar. Two very highly correlated currencies against the same currency, two highly correlated pairs. How on earth is there's such a drastic difference between their win rates in this using this criteria, with New Zealand dollar, Canadian dollar not being profitable really in either environment, and such consistently for the Australian dollar, Canadian dollar, Aussie CAD. And the second tier analysis I did was calculate the overlap for when these extremes were hit, and it was only 35% 35% overlap between these two occurrences, meaning these Bollinger Band triggers only happened on the same day for these two pairs 35% of the time. And so you were getting majority of unique instances unique trade entries between these two pairs. So that validated that result. But yeah, let's get into timing these trades, because when we think about Forex markets, very popular to intraday scalp, but also because of the kind of rolling nature of the contracts, you don't have to decide a month like futures. You could theoretically hold on to these positions for as long as you'd like. And so what actually works for mean reverting strategies? Here we're looking at low volatility environments. Frank Caberna hates when I throw up 10 million numbers on the chart. And so I've made it into a nice little graph, nice little visual representation. And this is just the win rate by time held in days. So looking at hold periods from 1 day to 10 days. And, we're seeing what we saw in the table with Australian dollar, Canadian dollar outperforming the rest. And I highlighted, the sub 50% here in red as what wouldn't be, with symmetric risk reward, what wouldn't be profitable. And we're seeing, consistency by pair, pair characteristics taking over here. But was surprised to see that for more than 3 pairs, around 6 days held was the peak for win rates, peak for our top outperformer, peak for Euro Yen, and I think the Australian Yen. So this calls out to me that there isn't a ton of a clear winner for hold it this many days, but there is merit to holding perhaps multiple days, and as much as more than a traditional trading week. Anything else here stick out to you?
Just when you look at Aussie CAD and NZD CAD, just that it looks like the charts are inverse of each
I
other,
know.
which is pretty interesting. Most simply, what this data is kind of showing me is Aussie CAD is, again, past performance is not an indicative of future results, but Aussie CAD is things are kind of already priced in, right? And that's why things mean revert so often, or at least that's what the data is saying. NZD CAD or Kiwi CAD is, it's not really priced in yet, right? Things change and the market's not mean reverting as much. That's just a surprising factor there. I'm gonna probably take a look deeper into this after, because that's really interesting to me, the differential between such correlated markets.
Yeah, to me as well. And now looking over high volatility environments, so when volatility is in the upper 70 percentile, so taking out that lower third just about, you're seeing a lot more consistency, not only the win rates coming in across the pairs, but really just pair specific. But the one trend to me that stuck out here was the difference between day 1 and day 2, an uptick in a lot of these pairs, particularly Euro Pound and Aussie New Zealand dollar. So all this saying to me, maybe it's worth waiting more than a day, if you're already waiting 1 day for this mean reversion, if you don't get it the first day. So not a ton of takeaways from these charts itself, but a bunch of key takeaways that I hadn't known prior to this study, and that non-US dollar pairs generally more mean reverting in low volatility environments. We saw that in 5 of the 7 pairs, and greater than 50% win rates in a lot of those, using this trade entry criteria. Australian dollar, Canadian dollar becomes the outperformer in this group, posting as much as 70+% win rates for some of these trade criterias. And regardless of low volatility environment, high volatility, some of these mean reversion trades can take multiple days for greatest success. That'll do it for our study today. But what I wanted to do is hop into the platform, because we can take a look at a lot of these pairs in real time. Let's look no further than Australian dollar, Canadian dollar. And something I made pretty simply about this study and the trade entry criteria is if you go over to the indicators, you add Bollinger Bands, bam, that already uses, and you're looking at the daily chart, that already uses the criteria that I used in the study, 20-day rolling period and 2 standard deviation move. And so no need to, you absolutely can change this to your own criteria, but kept it simple here. And we can kind of see, some historic example. This would be when a close is above the upper band, a trade entered right here. You got paid day 1, 2, 3. I mean, this may be one of the greatest examples of going from band to band in 5 days. But yeah, you're not seeing, another call out from this is you're not seeing a ton of observations. So it's definitely one to just keep in the back of your mind, perhaps. But when you do, I mean, this past month or so to date, any of these, you're getting paid without any period of getting burned. Here's where the possibility of feeling a lot of heat here this close outside the band here as well, and this is where you start to take in the price level into account, because while if you entered a trade here 1, 2, 3, 4, 5, 6, it would have taken you 10 days to be profitable from this level.
If
but
you
also
survive the
yeah,
movement,
you're taking a ton of heat here.
couple hundred pips there.
Yeah, with this pair, only a 3% margin requirement. And so this levered product, you're taking a ton of heat here if you're riding this out. Just some things to consider. Does that validate things in your mind, or?
Yeah, that's what's interesting, because the first part you showed of the most recent like 5-day action, that shows low volatility environments, right? How that
Right.
strategy works. But then that April huge drop, that shows, hey, maybe what did GBP Euro do? Because Aussie CAD's moving hard, hundreds of pips to the downside day after day. So maybe I switched to another market mean reverting, which is pretty interesting. But it's hard to say where things were going in April, right? Because we had a global embargo on kind of the entire world for a bit there. So that was interesting. And that's why you saw so much outsized moves in the currency markets. But even Euro Pound during high volatility market environments, that thing still moved a ton,
It's
right?
swinging,
That's a couple hundred pips in April as well. So
Yeah, and good call out with identifying now, perhaps waiting for kind of low volatility environments to form, because here you're still looking at pretty high volatility jumps, and then if you were here, you got burned pretty bad off this gigantic rise. As we saw, this turned out to be a pretty global move here around the Liberation Day news and the stock market sell-off. I'm surprised, honestly, that even non-dollar pairs still got hit pretty hard to the euro's favor here, getting a lot of that substitute demand from U.S. dollar, as we knew that sold off. But yeah, checking in on our dollar pairs this morning, we've got some big movers there as well. Oh wow, Australian dollar getting hammered. Dollar yen back up where we were early this week, near 149. The world's fastest taco trade playing out here. We're back where we were before the added volatility. We got to, let's take off this indicator, go over to the hourly chart. Yeah, I mean, we got a ton of volatility that's even sub 1 hour. Rose a whole 100 pips here in this euro dollar. all the way back on the indication that Trump would fire Powell soon, Fed Chair Powell, and the immediate rollback of him then publicly stating he has no intention of firing Fed Chair Powell right now, unless there's fraud. If there's fraud, we'll fire him. But now we're getting, right back. This is set up for a very, very interesting day for dollar pairs, because we are right back to where we were before all of that transpired. Took a while to shake it all out. Europe coming in this morning and getting us back to where we were today, or where we were yesterday. But yeah, we're right back to levels we were at starting the week. A lot to look for. Australian dollar, US dollar, really trending back towards the middle of its range, bouncing pretty hard near 66 cents. Not a lot of economic data today for the U.S. That
Got
is
some retail sales, right?
Retail sales.
At 7:30.
Yeah, retail sales in half an hour. We'll see if that moves dollar pairs, but we're getting a lot of natural organic price action, a lot of unique price points, and a lot of dollar movement early on this Thursday. That'll do it for us today on Forex Focus. Thanks for joining us. Don't go anywhere, because we got Tom, Tony, and Vanetta up next on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Tomas, good morning, you knuckleheads. Hello, Vanetta. Hello, Tom.
You okay?
Yeah, sure.
sure?
You kidding me? Yeah. 70-degree day in Chicago after being 90-something.
Is it going to be 70 today?
Yeah, it's 73.
You see, you got to get on like the Weather Channel. You wear long sleeve hoodies when it's 93 degrees. You wear short sleeve shirts when you're going to freeze your little nipples. I mean, this is not right.
All he cares about is TikTok, and TikTok won't tell him the local weather, so he doesn't.
Right, we
know.
got to get a little weather ticker on the bottom of TikTok so you can be informed.
Thank you so much for your concern.
Next couple of days, I don't know if I'm.
I wasn't the one watching TikTok before the show started. Bat, were you the one watching TikToks before the show started?
No, I was not. I was doing my job.
Yeah, I was doing my job too, making sure everything was
66
ready
right
to
now,
go.
high of 74. Tomorrow, 64 to 80.
Perfect.
I know.
That's my weather.
When are you playing golf?
Saturday. What is it?
It's gonna rain all day
75%
Saturday.
chance of rain, 70 to 85.
We're gonna get like an inch and a half of rain on Saturday.
No, we're not, are we?
Why would I make that up?
I'm not happy about that. What's Sunday?
What's Sunday?
It might rain Sunday, but less chance of rain Sunday. So this is riveting, I'm sure, for people.
Yeah,
all over.
55%. Yeah, but it's only gonna be a high of 77. Not as muggy.
Oof. I don't do well in the rain.
I'm gonna save it.
I don't like the rain. I was driving home last night and it was about, let's say, 4 or something.
Torrential rain.
Oh my God.
We're under a thunderstorm watch.
Oh my God.
Oh my God, girl.
Oh my God.
Oh my God.
People were pulling over for like, they were like crazy winds for like 2 seconds. I heard they shut down O'Hare.
Well, they always shut down O'Hare. That's nothing new. But
Anyway, there was like,
with summer thunderstorms, like it happens.
there was this girl and she was riding a divvy bike on her way home and I passed her and I'm like, and I thought to myself, oh my.
On the expressway?
No, I don't take the expressway.
Oh, on Ashland?
Yeah.
Oh.
I'm like, girl, you got about 2 blocks left before you're gonna get crushed.
But peeps already writing in. What is he gonna melt? I mean, you're gonna be okay. Don't worry. If you get a little rain on you, you'll be fine.
What? When I play golf?
Yeah.
Oh yeah, I'm okay with the rain.
I think they sell those rain pants at Costco. You
wear
just
no
get those rain pants.
Stinking rain pants.
I have when I ride my motorcycle, I have a rain suit. Oh, the cherries.
Are you gonna embarrass me in Mexico when we play golf? Like you got an outfit or two to wear, right? Like you're not gonna rip out some like
I have a
Costco.
Mexican.
Wait, you guys are both going to Mexico?
Oh, you don't know this?
No.
Yeah.
When are you going to Mexico?
August sometime.
In August, we're going on vacation together.
Oh man. Wait, I want to go to Mexico.
You can come.
Can I come?
Pack your bags.
Yeah. Oh my God, I'm gonna get so many chihuahuas.
Now, you got the outfit that they bought for you. We're gonna play 2 days, aren't we? 1 day, 2 days.
I got outfits.
I don't think you do, man. I don't want you to embarrass me. I know you can play and stuff like that, but you don't look like you can play. I look like I can play, but I can't play.
No, I got everything. I got all the outfits. I got outfits. I got shoes.
You got shoes?
I got shoes.
Like golf shoes?
Yeah.
Like real ones?
Yeah.
They make like Air Jordan golf shoes now.
I
Those are cool.
I don't wear.
Oh yeah, those are cool.
I don't wear them normally, but I don't want to embarrass the host. So,
Is it Tony from Mexico?
Yeah.
Yeah, I want to come. Tony from Mexico.
Don't have any other friends?
So actually, I'm going to do a talk I have 2 talks to do in Mexico City. And Tony's my.
And I'm the AV guy.
I've never been to Mexico City. I would love to go to Mexico
never been
City.
to
It's a very vibrant city with a very cool food scene and lots of architecture and art and culture.
Mexico City's great.
Yeah, I would like to go.
Yeah, it's got amazing food scene. But I'm doing 2 talks in Mexico City, and then I'm doing 2 talks in Guadalajara.
No take backs.
It's a working event.
No take backs, Mexico.
Could you imagine if he gets stopped? How good would that be? I usually get stopped. I might not make it.
I mean, you might get stopped. I don't know.
I mean, it happens.
I mean, I love Mexico City and Guadalajara. They're both great places.
I mean, all it's going to take is for this administration to read just one of your past cherry bombs, and you're not coming back into this country.
I hope they don't subscribe to the cherry bomb. Oh no!
You better scrub your phone, honey.
Oh no!
You better wipe it clean. You better just do some things.
Something.
Yeah, you better do something, because
I mean,
I better write something quick.
I was born and raised here.
don't matter. Don't matter. Don't matter.
Not an anchor baby.
Don't matter. Don't matter.
We'll annex Hartsdale for 24 hours just to get rid of it. Fine.
That's okay. I could end up in worse places.
Oh, that's right. Well, also you can stock up on all of your pharmacia
That is
in
true.
Mexico.
So I am working on that.
Replenish all of your drugs.
Yes.
Oh no, I never even used the last set of
Here's what
I know,
you
but I need it. You don't share. You're
I loaded
horrible.
up. I loaded up with so many drugs last time.
But not those.
I got 2 words for you though,
real
Tom. Mexican Ozempic.
I got all the Mexican penicillin.
We can make a lot of money with that.
Oh, to the housewives, the Mexican Ozempic?
Yeah.
Yeah.
Mexican penicillin.
Need some.
Top notch.
I got
Need
it.
some Z-Packs.
You got it.
You got
I
it.
get my own because you don't share.
Oh, well, I don't know what's a Z-Pack and what's not.
Oh, that's.
But I got it all.
Give me a list.
Yeah, I will make a list of
Check
stuff,
it twice like Santa.
of stuff that I want. Yeah, for Mexico. Done and done. It's gonna be really hot though.
Yeah, all Tony's friends are doctors. We could you can get anything you want. Just let me know.
Just to let you know. All right, I got it. Hey, did you go out with last night Joe Stone Crab or no tonight?
Tonight.
Wow. So you got to stay here all day.
No, I have actually a crazy schedule today, but I will be here. I have the show this morning, then I had a webinar, then I got a show, then I got a meeting, then I got to go to Joe's.
I'm not going with the B team. I'm going with the A team on Saturday.
Ah, okay.
The A team.
Don't you worry about
B.A. Baracus.
The A team on Saturday.
The A team sounds the same as the B team.
Butchie, Slappy, Scott and the Six, myself and my wife. That's the A team.
Oh,
Ooh, that's nice.
Oh, God.
I got the nod.
When's the last time you dined with the Sheridans?
Oh, it's been a while.
It's been a while. I was going to say, yeah.
Who's going to order for you guys?
I'm sorry?
Who's going to know what to order for you guys?
That's what the 6 and my wife's there for, to tell the other 4 what to order.
Who's going to know what to order?
Tell Tommy I say hello. She's
I will. I most
a
certainly
lovely lady. She's such a wonderful person.
I certainly will. I will give her your message.
I just don't know who's going to order for you guys. I don't like that. I don't like that group ordering wise.
Credit card roulette maybe for the end. That would be fun. Bring back the old days.
Oh, you'll put Butchie and Slappy out of business.
Aw, I love it. They do sound like my 2 favorite dwarves, Butchie and Slappy.
They should have been in the movie. You're right.
They should have. They should have. Traitor dwarves.
We're gonna take Butchie and we're gonna take Slappy and Scott down tonight.
I know they're not going to be used to like 2 for this weekend.
Oh, they're not going to be used to the bill tonight.
Oh no.
Hey, well, since Scott's paying, will you bring me back a piece of key lime pie, please? Thank you.
Much appreciated.
Much appreciated.
Those guys are going to take advantage of them. I wouldn't take advantage of them, but
Oh yeah.
You lie.
they're going to take advantage of them.
They're going to take advantage of him.
Oh, they're going to take advantage.
Chucky's going to take advantage of him. He's on the arm.
Oh yeah, they're going to take advantage of him. I've seen this movie. It doesn't end pretty.
That's too funny. So what'd you do last night? What'd you get up to?
Nothing.
I can see it right now because how many stone crab claws come in an order?
1.
We'll need 6. We'll need 6 of those. Oh, that's bad.
That place is such a ripoff for stone crabs and crab legs. It's the biggest.
What's your over/under for how much tonight's going to cost?
I don't know. I'm going to be a little bit late. I got a meeting, so I'm going to miss the stone.
You going to put your order in ahead of time?
Yeah, put your order in ahead of
I
time.
don't care about the potatoes.
The potatoes are the best part of
I know. I'm not a huge stone crab fan. I do like their crab legs.
And they're not in season right now anyway, so they're
not.
So they're it's
not
all the burrs. September, October, November.
I'm not a huge
July doesn't work.
I think they're
frozen.
Overrated.
Interesting.
Well, some could say the same thing about you, but that's
sure.
Yeah, sure.
But they worked a good gimmick. They made a multi $100 million business out of stone crabs.
Nice work if you can get it.
Nice work if you can get it.
Yeah.
Yes. But anyway, it's gonna be fun. It'll be a fun night. A lot of us haven't. A couple of us haven't seen each other for a while, so.
See, that's good.
It'll be a free for all. It's funny. The same group. This is the same kind of group. We've been friends for, I don't know, like 30, 40 years.
Yeah, that's a long time.
I know.
But that's good that you guys are still like maintaining those connections because it takes work to maintain friendships because life gets in the way.
Guys, with women it does.
Well,
It takes work.
men don't ask questions. Men are the worst. You're like, oh man, my buddy's getting a divorce, and everyone's like, oh my God, why? What happened? You're like, I don't know, I didn't ask. And you're like, what is wrong? What is wrong with men? Why can't you ask a follow-up question?
If I don't see somebody for, if I don't see somebody for 2 years, I'm fine. They're fine.
Sure.
Ask a follow-up question, though.
What's the follow-up? Listen, if we have a friend and they're getting divorced, we already know why.
Okay. Because he's insufferable?
Wait, you were married?
He's insufferable?
I don't know how you married her in the first place.
Okay. All right.
There's never a question of, oh, that's too bad. I feel bad for you. It's like, hey,
I could have told you this was going to end.
What took you so long?
All right. That's enough. Do not take relationship advice from these two yahoos.
God, I never thought you'd make it this long.
These two yahoos. Anyway, Bat, how about you? What'd you get up to last night?
Last night, big rain last night, right?
Yeah, thunderstorms, yeah.
Yeah, you were probably cleaning out your basement.
No. Basement's fine. Everything's good that way. I had the conversation with my son. He wanted to go play 9 holes.
In the rain?
No, it wasn't raining yet. So I said, son.
Because he was home all day, so it wasn't raining yet.
Summer. So I said, son, you got to check the weather report before you go out
Sure.
and play. It's going to storm. Like Alexa's telling you it's going to storm. Your app's telling you it's going to storm. It's going to storm.
Like we were under thunderstorm watch.
Storm watch.
Yeah.
The whole thing. No. It's going to be fine. I go, okay, well, count me out as the driver. Because I'm not going to drive there. I'm not going to drive back because you're being ridiculous. You and your friends are being ridiculous. So you got another mom to do it.
Oh, they conned someone else.
Yeah.
Got it.
So they were back after about an hour and a half or something like that.
So you caught in the rain?
I mean, they played. I mean, it came down like buckets. I mean, you couldn't.
That's not good for his bleach perm.
No. Which is getting a little orange.
Yeah. You got to tone it.
Mine.
You have to maintain. It's hard to be blonde. You got to invest that time and
He loves it.
Right.
I'm like, dude, you got to do something about this. Can we dye it back or cut it a little bit? Because it's like a Q-tip kind of thing.
Right. Yeah.
I'm like, oh. But
yeah.
He loves it. So
if you're gonna be blonde, you got to commit.
Yeah. Because no, my tips are looking good.
Tom knows,
They're
right?
looking Frodo or whatever they.
Right, Tom. You know how hard it is to be blonde. What color was your hair?
For how hard.
Wait, what color was your hair when you were when?
Yeah, when it wasn't white.
Yeah, was it brown?
My hair is brown now.
Were you a towhead? Were you? It was never blonde. You never had blonde hair. No.
No.
Were you born like a towhead?
Yeah, I don't know.
No.
A Jewish towhead? Yeah, there's not some problem.
I don't know.
Bloodline.
He's got other stuff in there. I don't know how it works. All right. Hey, we got a great show for you today. I do know how that works today here on Tasty Live. It is a thrilling Thursday. And on today's schedule, at the top of the 8 o'clock hour, fan favorite, Trades from the Research Team, the world's greatest financial think tank, presents their trade ideas to Tom and Bat. Then at 8:40, we're doing Hear Me Out. But we got a little upgrade with Dylan Radigan. What?
Yeah, that's right. We're bringing the Radigan, bringing the lefty, bringing the big guy.
Is he in America?
Yeah.
I was going to say.
Oh, in America, he's like in the Hamptons someplace or something like that. He's like a mover.
Oh, that's right. Because our Tasty Live account follows him on social, and he has been posting from the Hamptons. You're right.
Yeah, you kidding?
He's roughing it in Southampton.
He is. He is.
$85 chicken salad.
Yeah, he posted a picture from like a cute deli grocery thing that has like the $80 lobster salad.
I've been watching those TikToks on the $85 chicken salads.
The lobster salads too. Really it's crazy. What are you going to talk about with Dylan for Hear Me Out today?
We changed the format. We're talking about a bunch of different questions. We're talking about yesterday's kind of crazy market action due to Trump.
Sure.
About the Fed chair. We're going to talk about a little bit about meme coins and crypto regulation, and we're going to talk about JP Morgan and certain banks being too big to fail.
How long is this segment? Because you both are certified yappers.
It's 20 minutes.
Okay.
We're going to go through it at breakneck speed.
Sold right. Sold right.
Listen, we're changing the format up a little with Hear Me Out with Dylan, and so he's going to be sitting in for Victor for a few weeks, and so we're going to check it out.
Okay. We are going to see how that inaugural segment segment is going to go, but I call BS that you're going to keep it to a tight 20 minutes. But that's fine. We're going to see what happens.
We only have 20 minutes.
Well, we're going to see what happens.
There is no other time. There's nothing.
You were going to blame everything on me. You're like, Vanetta went over.
Well, you go over every day.
I don't go over every day because you bunch of yentas. You're yapping all the time.
Stop the arguing.
You're yapping all the time about some coleslaw that you had in 87, and I can't finish my news.
Let me just say something.
Sometimes we get a little off.
Let me tell you something. I had the coleslaw on Sunday at
I had to mention coleslaw.
and it was so good. They should just sell that.
Where was this coleslaw? Where? Oh, at Carson's. Oh, gotcha.
Coleslaw. That is the best.
Because it's got a little bit of like
sugar.
What's that?
Sugar.
Well, sugar, but it's got the little spice to it too. It's got like the horseradish.
Horseradish.
They should package that coleslaw and sell it because it's the best coleslaw ever.
Ain't nobody wants coleslaw.
You know what's good coleslaw too?
Oh, we got to bring back the coleslaw segment with Jules.
We are gonna go over. No, look, we gotta.
But I can tell you who else has good coleslaw because you'll like this.
I won't like this. I hate coleslaw.
Roost has good coleslaw.
I like Roost
because they put cucumbers in their coleslaw.
Oh.
And Fry the Coop has good coleslaw.
Interesting. Okay. Hey, we have a market measures at 9 o'clock. How about that? Part of our Zero
Since we're on that
DTE
topic,
series.
James Hot Chicken has good coleslaw too.
Part of our Zero DTE series.
We should list our top
Zero DTE flies in depth part 1.
What?
Zero DTE flies in depth part 1. That's what it just says.
That's the market measure.
Yeah, that's what I'm trying to read this schedule. And that's the market measure at 9 a.m. Then 9:30, live from the trade desk, big boy Scotty S. Scott Sheridan counting down all the top trending tickers over at Tasty Trade. Hey, programming note tomorrow is #Fan Friday. And we would love your trade ideas. If you have a trade idea you'd love Tom and Bat to do on the show, they would do them in tomorrow's segment we like to call Fast Market. And you can submit at the top of the page here. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
All right, hit me with my theme music. Let's go, yentas.
Our leading story, breaking news,
coming
across the wire. Leading story, top stories, jump in.
Today's headline.
This just in.
I'm surprised Yenta hasn't been a Wordle question yet.
All right, everybody. Today is a thrilling Thursday. It's July the 17th. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat.
Well, everybody's going to talk about Netflix. AXP Schlumber would be the top.
Ooh, okay.
Netflix has wide markets though, and it's a high price stock.
We have no Netflix position on. We have not Netflix.
All right, well, we'll talk about it. I got a Netflix story. We'll talk about that in a second. But hey, getting to my first story of the day, the dollar was on fragile footing yesterday after having lost ground overnight. As concerns that President Trump was preparing to fire the Fed Reserve Chair shook confidence in U.S. markets. President Trump says he's not planning to fire Powell, but Powell under investigation for renovating the Fed offices. And he has till July 21st to respond to questions in this letter. Some of you have not been. He's like in a relationship before. So when a man says, he's like, well, I'm not planning to cheat on you.
I thought it was an incredibly...
What was going on yesterday? It was just a weird day yesterday.
I thought the whole thing of backhandedly accusing him of fraud was one of the most childish things I've ever seen.
Well, he needs a reason to fire him for cause because the Supreme Court has established that he can't remove the Fed chair.
I find it hard to believe that the Fed chair wrote a check for $2.7 billion. Okay, Jay Powell.
Also, I learned this morning that building hasn't been renovated since the 30s.
And I'll bet you right now, Jay Powell has a room in the corner with like a single wooden desk.
Yeah, government offices are not, super luxurious. What does this do to the bond market? What does this do for volatility?
In the end, bonds were up like 2 ticks. They're down 7 this morning. It did absolutely nothing. With respect,
but it didn't help the bonds. I mean, they were staying soft.
It didn't help them. It didn't hurt them.
Okay.
I mean, they were up 15 yesterday morning. Then they were down 15. So they ended up kind of on the low end of the range. They're down a little bit this morning. And the dollar got killed, and then it rallied back. And this morning it's up a little bit. So who knows?
What about the euro, the yen,
I'm talking about
pound? I know, but what are you doing?
The dollar's a little bit stronger this morning.
Okay, a little bit stronger now.
But you know what? The market's in there this morning because I tried to adjust positions in the Canadian dollar, the British pound, and the yen, and they all the markets suck today.
Getting into crypto, the big, beautiful crypto bill is still trying to make its way through Congress, so kind of getting held up on procedural shenanigans. But tech billionaire Peter Thiel disclosed a 9% stake in a Bitcoin miner called Bitmine through his venture capital firm Founders Fund. So Ethereum was up big yesterday, and Bitmine, it's BMNR, were both up yesterday. So.
And Ethereum's up again today, another $78. It's a 2.5% move. Ethereum making a little bit of run for the roses here. I mean, just a month ago, it was closer to $2,400. Now it's $3,400.
What are you doing in ETH?
We're long.
Okay.
Oh, look at you, tough guy.
Oh, look at you. Are you doing anything in any of the other Bitcoin miners? I don't know if they also went up, like a Riot or Mara. No? Okay. I was just curious. In other crypto news, Coinbase is trying to generate an everything app that is stable
like the Everything Bagel?
powered. Yes, I love Everything Bagels. The base app would replace the Coinbase wallet, and it would combine wallet, trading, and payment functions, as well as social media, messaging, and support for many apps. What are your thoughts?
See, I don't get this. I don't like the salt on a Everything Bagel.
Neither do I.
You like the salt on Everything Bagel?
Oh, I am a sodium freak. Yeah.
The only kind of bagel I don't like is salt bagels.
Yeah.
But it's everything. Like, I don't taste just one individual component. I like.
And I don't like everything.
Seasoning?
I don't like everything bagel seasoning.
Yeah, I knew you were going to say that from TJ's, from Trader Joe's.
They sell a lot of things with everything bagel.
Oh, it's good.
I don't get it.
I like it. Hey, Coinbase and everything.
Unchanged, $398 near its highs, right out of time.
I don't have a position currently on in Coinbase. I mean, as far as a business model goes, it makes sense to me what they're trying to do.
Okay.
But we don't have a position.
When are Coinbase's earnings?
Coinbase has earnings coming on the 31st, end of the month.
Here's something interesting, and you're probably going to talk about this maybe, or because maybe you don't even know about this, but you are going to talk about JP Morgan with Dylan when he comes on at 8:40 for Hear Me Out. But this is interesting. According to Fortune, JP Morgan Chase is going to require workers give 6 months notice before quitting.
How do they do that?
Goldman Sachs, I know, this is crazy. Goldman Sachs is now having junior analysts do a 3-month loyalty pledge. They have to certify every 3 months that they haven't accepted an offer from a private equity firm. I don't know how this is like legal. I don't know, but they're doing it.
Oh, okay, cool.
So the tactic is, it's a broader push among big investment banks to resist the aggressive recruitment of private equity firms, and it's frustrating banks like Goldman and JP Morgan. And so this is how they are trying to fight back. Again, I'm only reporting that this is.
I just want to go on record as saying anybody who wants to leave Tasty can leave tomorrow. We'll walk you to the.
I don't have to swear to a 3-month loyalty pledge to you.
We will gladly walk you out to the door.
No, I've been here 15 years. I'm not going anywhere.
I'm just saying that's how I feel about this. If you want to leave, leave.
Yeah. Well, this is interesting.
That's cold.
It's not cold. We just
a little cold.
In the financial world, as best I know, if somebody says they want to leave, you leave that day.
Sure.
There's no staying around.
Sure. Yeah, I get it. It'll be interesting to see what happens. But obviously, what happens. In other news for earnings, United Airlines issued a new 2025 forecast. The CEO says that the world is a little less certain, but the airline is still facing challenges. They now expect to earn between $9 and $11 a share this year, down from a forecasted $11.50 to $13.50 a share. And they said that Newark still going to be a problem. It'll maybe less of a problem, but it did affect their bottom line. Like, it was just issues, and they were like, "Look, we
stock
can't."
was down like $1.
Yeah.
Last time I checked.
Yeah.
Yeah, last I checked, it was down $1.02. Right now, UAL is 88 on the offer. That would be down 50 cents.
So it was like nothing.
Nothing, honey.
What did you start over? What did you do in United?
We sold some strangles.
Okay.
I mean, I ranked with 31. It was
the only play I thought that was decent on the board. So we sold some strangles. It's going to be a winner.
This is crazy. The Amazon-backed company Anthropic is now looking to raise money at $100 billion valuation in the high-stakes AI money go round. That's kind of crazy how everyone's just throwing money at these AI startups and they're not really making money yet, but it's just
I don't think Anthropic makes a dime.
I don't know. I can't say with certainty whether they do. I mean, I know people pay for it. But again, I don't know what. But they're also in like a talent war, so they're throwing these huge pay packages at people to acquire more talent, more engineers, and stuff like that. So that also probably affects their bottom line. But Anthropic's worth $100 billion. What you got?
Yeah, what you got, boo?
You know what? All power to them. Good job, Eddie.
Good job, Anthropic. Scale AI, which did get acquired by Meta, announced they are cutting 14% of their workforce after their founder was hired away by Meta. Meta bought Scale AI for $14.3 billion, and Scale AI's CEO Alexander Wang, not the designer, is going to serve as Meta's chief AI officer. The reduction in workforce is around 200 jobs for Scale AI. What are you doing in Meta?
Oh, we don't have. I mean, we do, but it's so far out of the money now that we would need the stock to crash in order to get money back.
Stock's not going to crash. It just
705 up $3 and change. $3, $2.50 to $3.
When are Meta's earnings?
Ooh, Meta has earnings July 30th. A lot of these are going to have earnings end of July, beginning of August.
OpenAI is working on a payment checkout system within ChatGPT. OpenAI wants to take a cut from online product sales made through ChatGPT by integrating a payment checkout system within the chatbot. The move would allow OpenAI to tap into a new source of revenue. Are you buying things on ChatGPT?
Yeah, you buying things on ChatGPT?
I am not buying things.
Right, I am not either. And I buy things lots of places, but I've never bought anything on ChatGPT. But they would partner with e-commerce platform Shopify for that. So you can't trade OpenAI, but you can trade Shopify. The markets are wonky in there, I know, but.
No, there is fair.
Shop has a IV rank of 42, earnings August 6th. August options are decent. Yeah.
Oh, okay. Oh, so I might have did something.
You might have did something. Today's Thursday. Option trades today every Tuesday and Thursday. Hopefully we'll get one like we did in yesterday. Well, Tuesday in SPX. August markets, September markets are about 20 cents wide. August about 10 cents.
Also, congratulations are in order, rocketing up the list. Larry Ellison, Oracle's founder, is now the second richest man in the world, only behind Elon Musk. He leapfrogged Mark Zuckerberg as Oracle just continues to outperform the market after their earnings. Can I just say, he looks amazing for his age. Do you know how old Larry Ellison is?
Like a 90.
Yeah, he looks great. I'm just saying, I'm not mad at his face.
As Tony would say, that's the best picture ever. You don't know what this guy looks like.
That's the best he's going to look.
This guy hasn't been out in public.
He's 80 years old.
Look, he's the second wealthiest man in the world, and he's 90
He's looking even
years
better
old.
now. He looks better than me.
Shooting my shot.
Yeah.
I'm shooting my shot.
I vote for you, Vanetta.
It seems crazy to me. What are you doing in Oracle?
I'm not doing anything in Oracle.
You're not giving him any more money?
Oracle IV rank of 28. It does have earnings September 8th.
Oh, that's past the cycle, so that might be something to do.
That might be something to do. You are correct.
Okay, there you go. Get in there. Mm-hmm. Hey, this is crazy. According to a recent survey from Resume Builder, it finds that half of managers are using AI to make crucial decisions about their direct reports. That includes which employees are promoted and which ones are fired. The survey polled 1,342 managers in the US, and 60% said they relied on AI to make decision about their employees. 78% used the technology to award raises, 77% use it to award promotions, and 66% used it to determine layoffs and terminations. I was surprised by this because I didn't think about it in that. I'm also not a manager, but are you surprised by this? That over half of people are just using AI to figure out yay or nay on people?
That's half the people that use whatever company this is.
No. These are just managers. This was just a company called Resume Builder. They just did this survey. This was managers, all types of different sectors.
What AI could I use to tell me
You could
How to get rid of bad.
Like
So so we use a company like Workday, and we have to fill out evaluation forms. Right. You could just copy and paste that. You could input that just into ChatGPT. You could put it into any AI like that. The AI doesn't matter. That's negligible. So it's your data set that you're inputting. So from your worker evaluation, so you're like, hey.
I don't believe it.
Okay. Well, so. Why would people say that they were using AI if they weren't using AI?
I think you know.
I think people are using AI. I don't think they're using it to make their decisions.
I absolutely think but then why? But there's no incentive for them to not be truthful about this.
I understand that, except that there is an incentive because it takes the pressure off them. It basically.
So then that leads validity to this story being true then.
No, it leads validity. If you ask me, do you use AI? The question would be, yeah. The answer would be yes, I do use AI. Then you said, would you use AI to make these decisions? Because then you say, well, then I don't have to tell everybody that I just fired, that I made it myself. It's AI made it. I'm just telling you. First of all,
the mental gymnastics that you go through.
AI, you have to feed AI the information somehow.
Yeah, but I'm saying that that's very easy as a manager.
That easy.
It is using an established protocol that you have for reviews.
Protocol?
Well, but that's why I don't report to you because you don't do this. That's why I report to Beth because she handles all this business shit. That's on the real.
Oh boy.
You are technically my manager, but you give 0 Fs about managing me and doing all this. So that's why you don't know about the back end tools. So I write out my goals every quarter. I write out the things that I've done, how I've been.
Well, we all have to do that.
Right, but he doesn't have to do that. And he doesn't know.
He's above the law.
Yeah, I know. So I'm saying that's why you don't
write out your goals and
understand
they can't
this.
fire you.
You are Steven Seagal right now, Sosnoff. You know that.
If you don't pick up the phone, they can't fire you.
That's right. That's right.
Moving on. You guys frustrate me. MP Materials, been the hot stock this week. They announced yesterday they're going to sell 500 million of their common stock a day after the U.S. rare earths miner inked a supply deal with Apple. Shares of MP Materials fell around 5.8% in extended trade, but they are up 275% for the year. MP.
Sosnoff, you care?
I do not. We did a trade in there yesterday.
Oh, you did?
Yeah.
How was it? How are the markets in there?
They're not very good.
Okay, well.
Yeah, we did a trade
Java
yesterday.
Cream just came out, correct?
Something.
We sold the 60-65.
And maybe like import-export prices too.
Oh, actually, it's going to work out nice. We sold the 60-65 call spread. We got shorted.
Oh, look.
Hey.
Look at you. Good.
Hey. Hey, can put it on the board. We're going to be a winner chicken dinner this
Down
morning.
around $3.
Yep.
MP.
All right, good job, MP. MP. Hey, this is interesting. I have a new meme stock for you.
Ooh, give it to me.
Ooh. Until very recently, shares of Open Door Technologies have been left for dead. But over the past week, retail traders swapping stock tips on social media and sites like Wall Street Bets have brought them back to life. Open Door shares are up 90% since the market opened on Monday. Love to see it. BAT, the ticker is just open.
Yeah, earnings are August 5th. The stock has gone from around 50 cents to $1.50, where it closed yesterday to $2 today.
You know, we used to trade this company way back when.
Open Door? I don't think it's been around that long. It's a real estate
We used to
company.
trade OPEN. I don't remember what it was. Then it must have been something else.
It was probably something else.
Actually, you're right. It was Open TV.
Oh yeah, because this is a newer
Open
company.
TV wasn't that a company we used to trade?
Not TV, but Open something. I
think it was Open TV.
Open the door.
But our meme stock's back.
Why? Because Open Door went from 50 cents to $1.50?
Yes, that's right. Because of social media chatter.
No.
Okay, well then what is your criteria?
I don't know, but it's a stupid stock that went from 50 cents to $1.50. Why does that mean meme stocks are back?
Because this headline says so.
Oh my God.
And I need you to prove otherwise.
That's right. That's right.
That's right.
The burden of proof is on you, Sosnoff.
Heavily shorted? How heavily shorted can a 50 cent stock be?
They are still well below their peak from early 2021 when Open Door traded at north of $30 a share.
When a stock's trading for 50 cents, how heavily shorted could it be?
Yeah.
I mean, who's going to be short a 50 cent stock that hasn't covered?
560,000 bullish contracts changed hands Wednesday. Activity and call options hit a record level yesterday.
In what?
In Open Door.
It's $1 stock.
Stop yelling at at me. 560,000 contracts. That's a lot. I yell right back at you. I don't care. You are not my manager.
What traded? The ones, the twos? I don't know.
I don't know what to tell you. Hey, Walmart is cutting hundreds of store support roles. The U.S. retailer is eliminating their market coordinator job. It's a position that supports some managers, and they are doing it to streamline their internal structure. They're also cutting some coach and coordinator roles at Walmart Academy, which trains store employees and managers, WMT Walmart.
Do not have a position.
In the Walmart trading $95 on the bid, basically unchanged, just as even the S&Ps are.
Okay. When are their earnings? And they're normally later because the retail.
August 21st.
Okay. Yeah, so you got some time. What's the IV in there?
21.
Oh, that's not.
Our volatility's low, 1940, down 6 cents. Market's unchanged.
Hey, Netflix earnings are on deck as investors weigh valuation and content strength. Netflix set to report second quarter earnings after the bell today. Shares have soared 40% since the start of the year. That's not too shabby. Wall Street is expecting Netflix to bring in revenue of $11.06 billion versus $9.56 billion. Netflix getting more into also live sports. They have that ad tier, but the streaming market is more competitive. What is your plan in Netflix? And Bat, what's the expected move?
Netflix has a decent IV rank, I guess, of 33. Expected move for the day is $81. Sounds like a lot. It's higher than most have been on a percentage basis, but it's not that like 10% move that you would say is real high, which would be $120. $80 expected move, but earnings have been muted at best.
It's pretty funny because they rolled out like the trailer for the new season of Stranger Things, and I think that's one of the unique aspects of Netflix is like they'll do a show like Stranger Things, which is so good, gets so much buzz, but that show's only done 34 episodes in 9 years. Like the kids are smoking and they have beards now, and they're supposed to be 12 years old. Like, like it's been 9. Yeah, but they're a little older. But sort of that's like the problem with like Netflix is like you get into these shows, but it takes them so long to get to the next season. I was into it the first 2 seasons.
You're not missing anything.
It was
Not
great.
your demographics.
It was great. It was nostalgic. It was really well done.
It was stupid.
It was really good. Behave. It was good. But we'll see if it's enough to save Netflix. What's your plan
I
for?
wouldn't consider Netflix at $1,250 needs saving.
Well, save their earnings. I mean, like what's your plan? What are you going to do?
I don't have a plan because I'm always worried at $1,200 that they're going to split the stock and people are going to, so I don't know what I'm going to do yet.
Okay. What's your existing position?
None.
Oh, none. So you're going to put something on,
Yeah.
maybe.
Yeah,
You're going to step in front of a train. Okay.
I'm not going to, I don't know what I'm but I'm not going to do anything insane.
Okay. Hey, Jack in the Box made its return to the Chicago area this week after a decades-long absence. The West Coast fast food chain announced a 12-unit franchising deal throughout the Chicago area in September 2024, with the first wave of locations set to open this year. Marked its homecoming in southwest suburban Plainfield on Monday, July 14th, opening a new Jack in the Box, Plainfield, Illinois.
God knows where Plainfield is. I don't even know where that is.
Southwest suburbs, yeah.
Okay, I've never been there.
Okay, well.
But I do like a little Jack in the Box. Haven't been there in 25 years.
I was going to say it's not going to live up to your expectations.
Probably not.
Road trip.
Road trip.
Not worth a road trip.
Road trip, why not?
I mean, growing up, it was a West Coast franchise, but they had them in New York.
We had them in Texas when I was growing up in Texas.
Wait a minute. I think there's a Jack in a Box in like Des Plaines, Illinois or something.
They'd been gone for a decade, maybe Bat in the 80s when you were young. But
Last time I went to Jack in the Box, we were in downtown San Francisco, and we were staying at the Marriott Marquis. We were doing a money show, and across the street there was Mel's Diner. And across the street from Mel's Diner, there was a Jack in the Box.
This location's going to be 24 hours, so.
I went into that Jack in the Box. It was across the street from Mel's Diner in San Francisco.
You can go to Naperville if you want one, Naper World.
There was 3 crackheads in there.
Okay.
And there was.
Hey, they got to eat too, boo.
No, I know. I'm just saying it was in that Jack in the Box. And then that Jack in the Box, we ordered a bunch of food because we had these memories. Oof, it was not good.
Well, but maybe it's different now. I don't know what to tell you. But if you are headed to Plainfield, Illinois, congratulations. Hey, how about this? Lou Malnati's and Portillo's are teaming up to launch a uniquely Chicago creation, the Chicago Dog Deep Dish Pizza. It debuted on National Hot Dog Day yesterday. The limited time pizza combines Lou's buttery deep dish crust with Portillo's classic hot dog ingredients, including mustard relish, pickles, and sport peppers. Would you eat this?
You got me with the relish and all the other stuff. Just plain.
You drag it
hot
through the
dog
garden.
on it.
That's the Chicago dog. Drag it through the garden. You could trade Portillo's, PTLO.
It's a real downhill.
Would you eat this, though? Would you take a bite?
Of the hot dog, yes. Of the pizza, no.
You wouldn't try this?
I don't like pizza mashups.
Yeah.
It's available now at Lou Malnati's full-service restaurants in the Chicagoland area.
I don't like pizza mashups. I feel it's a.
Well, they did an Italian beef pizza.
I don't like pizza mashups. I'm not.
Rare.
What, does he stutter?
Okay, I guess
I don't
so.
order gimmicky pizza mashups. Period.
Okay. Harumph.
A rump, but I will eat a Chicago dog.
PTLO, just under $11, earnings August 5th. I don't see anything you can do there unless you have directional bias.
Okay, there you go. Hey, the WNBA's Portland Fire has unveiled their name and logo ahead of a 2026 tip-off. The name of Portland's WNBA team is going to be the Portland Fire, and it's a rekindling of the city's previous WNBA team that played from 2000 to 2002. The new logo features a rose on fire, a reference to Portland's nickname as the Rose City.
We have a fire in Chicago.
But they are men. They have penises, so it doesn't count. And it's soccer, so.
I know, but
yes, we do have a fire here in Chicago. Again, take it up with the league. I don't know.
Not bad. I mean, not my favorite.
Okay, well.
I did like the Portland. I liked when I like the Trailblazers when they have the rose, as the logo on their stadium and stuff.
Oh, I don't remember that.
Yeah, but I don't think they did a great job.
I've never been to Portland. I'd like to go to Portland.
It's kind of a funky city. I like it.
Yeah, I've never been.
A lot of a lot of good food.
Sure. Like a hipster vibe.
I like Portland, Maine better than Portland, Oregon, but it's still.
Duly noted. I will add it to your file.
Now I'm mad at you.
Hey, look at me finishing on time. I'm gonna take that. This video is pretty funny. If something happens to your coworker, do you A, stop to help them, or B, take out your phone and start filming? The answer, of course, is obviously B. This is what it's like doing landscaping in Australia. This is some sort of bird, and it's swooping season. Watch this.
Swooping season?
Mm-hmm.
I don't know why anybody lives in Australia.
George! No, it's not going to do anything. Just keep walking. Hurry up, George. YouTube. This is a YouTube.
The screams for me.
Come on, hurry up. It's okay. George,
so he takes the wheelbarrow, puts it on his head.
That's safe. Good
I don't
idea,
blame
George.
him.
Come on.
Poor George.
Zoom out.
You guys like zoom out.
For all you youngins out there that have never seen the Hitchcock movie The Birds.
Doesn't stand the test of time.
It doesn't?
Thank you, John.
Those birds looked fake when I was watching it.
Oh, really? Oh,
yeah.
I haven't seen it in a long time.
Tippi Hedren.
Yeah.
Yeah.
Good job out of you.
Hey, that's my time. Look, let the record show that I finished 7:44 and 4 seconds.
Let the record show I did
54
not
seconds early. Good job out of you.
Let's take a quick 90-second break. Keeping it on time. We've got more Tasty Live with Confirm and Send after this.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
All right, Mike.
All right, Glenn.
All right, Nick. What's a recent news report or earnings call that completely changed your view on a company?
I mean, everything that's happened with UNH over the last month or so, and seeing the movement in the stock, and then over the last 2 months, it stayed basically sideways. So I feel like the worst of it is baked in here.
Probably Lululemon. I thought it was the clothing brand you wanted, but it's not the stock you want, that's for sure. They were hit hard with tariff implications, I presume, but yeah, their stock went down 30% after earnings. So, big red flag.
A common trend now, given all the tariff volatility, is to just not give guidance. I think that's really interesting. We'll see how that shakes out. It's been up and down for different companies, but I don't think that'll continue very long.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a look at the market. Even the S&P is up $5.25. They were a little bit, they were lower, they were higher, they were lower, they were higher. They're up $5.25. NASDAQ up 48. That was the weakest of the group yesterday. Catching a little bit of a bid today. Russell down 3, Dow down 26, and volatility in by 11 cents. Bonds down 1 tick, odd enough. Sounds like they're weak again, but man, they traded down to 11.21 this morning. They're 12.04. Oil.
Oh my God, they're exploding.
Oil up 50 cents. Gold down $40. 33.15.
I know.
Is the low. 33.18 is where it is now. Silver down 13 cents, not down nearly as much as gold is. Nat gas up 6 cents and change. So the big mover of the day, that's right, Lucid. Lucid going from 230 to 330 in a heartbeat, Sadnoff. Uber investing in them or something? I don't know.
Uber, that's the story I just read.
Uber also up about 75 cents or so.
I care about Lucid because since I have a Lucid, I want Lucid.
You just want them to go out of business.
I want them to stay in business.
UAL for earnings, trading 88 and change, basically unchanged. And TSM was up $7 or $8 earlier. It's up around $7 or $8 still. There we go. That's all I got.
All right. We're going to have a packed day for you today. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. And it's 7:50, almost 7:50 in the morning. We're in Chicago, if you're wondering where we're broadcasting from. We're in our studios in the West Loop of Chicago. We're about 5 miles from Wrigley Field. We're about, let's say about 3 or 4 miles from where the Sox play. How far are we from guaranteed rate?
Let's see.
Probably 3-4 miles. We're right in the center. If you're a baseball fan, we're right between guaranteed rate where the White Sox play and Wrigley Field where the Sox play. I know we're 5 miles from Wrigley.
Let's see.
4.6 because I live there.
You've got that down.
I got that down.
I don't know.
Yeah. I'm thinking we're 3-4 miles from kind of right in the middle.
Close enough.
Yeah. We're about equidistant from both airports in Chicago, too.
Yeah.
So we're right downtown.
Centrally located, I guess.
We're centrally located in the West Loop of Chicago.
Approximately 5.2 miles south enough.
5.2. We're right dead smack in the middle of both baseball stadiums. And we're probably about a mile from Soldier Field and we're close to the United Center. You could actually walk.
Yes, you could walk.
You could actually walk to the United Center. That's where the Bulls and the Hawks play.
Yeah.
If you are a foodie, we're right in the middle of a neighborhood where there's probably 10 Michelin star restaurants right in the West Loop, right where we are. And
a mile and a half from the train, south enough. So
we sit on top of, we're in the same building as where they filmed The Bear and a restaurant called Ever, which is a 2 Michelin star restaurant down on the first floor. And we're upstairs. So Tony, we have to get Tony's lunch every day from a 2 Michelin star restaurant just so he can, so he's happy. Everybody else has to eat prison food.
You know I'm not like that. I'm a prison food guy. It's in my blood.
Yeah, you're a prison. You eat prison food, but you
prefer my palate.
Prefer the 2 Michelin stars. Anyway, let's do it. These are emails that came into us overnight from viewers all over.
I'm ready.
We don't list the viewers on these. We just pick them randomly. If you've been writing emails to us over the last 14 years, you probably had some emails show up in confirm and send. As a firm, we get about 5,000 emails a day. It's insane. But Tony and I get hundreds, and we do our best to answer them same day. And I think we're the only people in the freaking world that do that in the brokerage business. So let's do it.
I'm ready.
Thursday, July 17th. In my past trading, it was not uncommon to give up profits. And that has been my only angst as of recently, making it to the end of the year green. My question is, what does Tasty do to maintain profits? I have chosen to maintain a higher cash balance. It's only July, brother. Push some of the profits into fixed income, and I've gotten a little pickier with taking my trades. Trying to protect your winnings.
So what's he saying? He makes a couple of trades that are winners, and then by the end of the year, he's made a couple of trades that are losers, and he's not keeping his profits. Is that what he's saying?
What he's saying is a lot of times he's up in the first half of the year, and then he gives it back in the second half.
Second half of the year. I don't know. That's a tough one. I never kind of. I don't know. That's a tough one. Maybe are you doing the same things that you did in the beginning of the year that you do in the back of the year? Or are you taking more risk in the back of the year, less risk? I don't know. Whatever you do in the beginning of the year, do it in the back. I don't know. To me, this is a tough one.
Okay, so what I said to him is, listen, you can do whatever you want, obviously, but we don't think this way.
Yeah, I never took profits and put it someplace else.
I do have 1 year of my career where I was trading on the floor, and from Christmas to New Year's, I lost like 3/4 of my year. And I was so mad. And that's the only time that ever happened to me. And I was so mad because I did something incredibly stupid. But for the most part, we don't think this way. We are always pushing forward, and we never think about locking in profits.
Yep.
I mean, we always take profits, but we never think about locking in our year at a certain point. I mean, you can't be successful thinking that way. You have to just always keep pushing forward. Never stop.
I agree.
Let's go to the next slide. I saw a segment, they're talking about yesterday, about synthetic long call short put to reduce buying power. We did a segment yesterday on synthetics. Curious what you think about buying a deep in the money call like a 90 Delta as a stock replacement instead of a synthetic. I'm thinking about buying a deep in the money call that has a fixed cost, so I don't have to worry about margin expansion.
You won't have to worry about margin expansion if you keep the play in options with buying the call and selling the put. So that worry is gone. Now, by buying the 90 Delta option synthetically, you do have a stop in at $90 plus whatever you paid for that option. I mean, you do have you have no risk under $90. I guess that would be your
under 90 deltas.
I'm sorry, under 90 delta, whatever that option is. Yeah, that would be the only difference.
Yeah, I mean, listen, if you want to buy a deep in the money option as
6 of 1's a half dozen.
if you want to buy a deep in the money option as a stock replacement, as opposed to like, buying the 45 delta call, selling the 45 delta put, that kind of thing, sure, go ahead. It's no different. I don't even know which one would cost more money or be more capital efficient, but it's the same thing. Well, actually, it's not the same thing because doing the synthetic combo, you have the same risk as being long the stock, whereas buying the 90 delta, you're stopped out.
Like I said, yeah.
So,
but the chances of getting to that 90 delta might be 3% or less.
They're pretty slim.
Yeah, that's what you're.
So anyway, the bottom line is you can do either one. We wouldn't buy the 90 delta in the money option just because those markets are probably crappy.
Yeah, but their concern here is about margin.
Yeah, their concern is about margin. That's not an issue. But your other concern is the 90 delta essentially gives you a stop too. Stop loss. Let's go next slide. What do you think would happen if Jerome Powell were to be fired or resigned? We are going to cover this with Dylan next. But is there some kind of precedent, or do you think yesterday was Trump testing the market reaction?
I mean, I know you guys talked about this being a test by Trump. I don't see it. I don't think he watches the market that intently like that on a day-to-day basis. So I don't think that's the thing here. But I mean, you did see the market getting a little bit weaker on that tweet. I would assume the same. So maybe a little bit of weakness at the beginning. I mean,
it wasn't a tweet. It was a White House staffer that reported it.
Yeah, that said, he's thinking. But there are multiple tweets about it too, not from him, but from other sources. Sure.
So I mean, listen, nobody really knows, but I would think that it would be very upsetting to the markets if the president of the United States fired the chairman of the Fed, especially when you only have 9 months left to go, I think, in the term. And especially because Trump appointed Jerome Powell as well. I think that it would be very, very negative for the market. And I don't think the market would like it at all. I don't think the market would crash or anything. I just don't think the market would like it at all. I think it'd be a bad thing. I'm going to disagree with Tony, and I do think that Trump was testing the market reaction yesterday. And as soon as he saw what was happening, or as soon as people text him to tell him what was happening, he changed his mind. But that's, nobody will ever know.
Of course.
Let's go next slide. I know you said that you bought bonds on the sell-off yesterday. I did. It was a contrarian move. But had they not rallied, how long would you stick with a trade like that, where your only reason for getting in was that they made a violent move down?
On top of moves down, on top of other moves down. I mean, they're trading near their lows.
Yeah, no question about it.
This is not just I'm taking a shot on an expected move kind of thing.
Yeah. This is not the bonds going from 116 to 115.5.
Right.
This is the bonds going from
116 basically down to 111.5.
Yeah, 112 to 111.5. Big difference there.
Mm-hmm. Into perpetuity. I mean, it doesn't.
I don't know if it would have been because I already have a long.
You've held positions for months.
I have held positions for months, but I do have a long position already in the bonds. So I think that yesterday that was just a scalp for me, and I probably would have
dumped them for a loss.
I probably would have dumped them for a loss.
But you would have probably kept some bond positions on.
Oh yeah. But the ones I bought yesterday,
you wouldn't go to zero bond position.
No. The bonds I bought yesterday, I probably would have dumped at the end of the day for a loss. Bonds I already had on coming in, I would have held those.
So which bonds are you answering this question with? The ones from yesterday?
Ones from yesterday.
Okay.
Just the ones from yesterday. It was a contrarian move. I bought them. You know what? After I bought them, I didn't make anything on the trade. I made a tiny couple ticks. It wasn't worth it. I didn't know what was going on. Whatever. I took a shot.
Mm-hmm.
Let's go to the next slide. It worked out, but it wasn't a great trade.
Yeah.
It wasn't worth the risk. It's a long one. What do we do in situations where we sell a 45-day to expiration 16 delta strangle and get a large we get a large move early in the trade? Let's say a big down move on day 3 after we open. The deltas become 0.8 on the call side and then 0.3 on the put side, meaning that market went down big and your puts exploded and your calls went down.
Mm-hmm.
Should you immediately be rolling this trade, narrowing your overall profit range, or would you let the market play out for a little bit? How about rolling both sides? I mean, what would you do?
This is what I would be looking to roll. I'm always looking to reduce delta.
Okay, so let me answer the way I answered this question. So there's two ways.
What is the position? 45-day.
It's just short strangle, 16 delta short strangle.
Yeah, I'm rolling the untested side.
Okay, so we aggressively roll. There's a bunch of schools of thought on this. I aggressively roll. Tony's a little less aggressive than me.
That's true.
You'll listen to somebody else on the network, for example, like Dr. Jim, who won't adjust the positions unless the call or put side are breached. That's a very different way. The answer, in the end, our research shows that whether you're super aggressive like I am, moderately aggressive like Tony is, or conservative in your approach like Dr. Jim is when you only adjust on a breach, in the end, at the end of it all, over all the trades that you make,
the same place.
You end up in the exact same place P&L wise. There is virtually no difference P&L in the end. The difference for me, and the reason I do it, is A, it keeps me engaged, and B, it lowers the volatility of my portfolio by a lot. It lowers my intraday P&L swings, my intraday delta swings. It lowers your P&L volatility, your portfolio P&L volatility tremendously. I like that. Some people don't care, and they don't mind the P&L swings because in the end they know that a lot of times it's going to work out. There's no right answer to this. I roll aggressively. I'll just leave it there.
Yep.
Because I like the lower P&L swings. Let's go to the next slide. And this is the last one. What is the best way to play crypto and digital assets to the downside? Would you use the ETFs or the crypto futures? Also, I have an account with an offshore crypto firm that allows you to short the cash market, but it seems very expensive.
I can't speak for the other firm if it seems very expensive or not, so I'll leave that part out of it. Typically, if you think it's expensive, it's more expensive than you think it is, even. For me, the ETFs, because I'm not that big in, not that, my positions aren't that big to warrant the crypto futures. 5.
Yeah, I mean, listen, we're not going to comment on an offshore crypto firm that we know nothing about that allows you to trade, to short the cash market. And if it seems very expensive, it's because it probably is. God knows what interest rate they charge to short the cash market or how much they charge for that. I would not touch that in a million years. Mm-hmm. If we want to short crypto, we would get short either the ETF or, buy a put spread or sell a call spread or short calls in a crypto ETF. I did that yesterday in the ETH ETF. Didn't work out, but I did it. So I think the best way to trade digital assets or crypto to the short side is using one of the crypto ETFs like IBIT, what is it, ETHA, the one we did yesterday?
Yeah.
ETH one. Mm-hmm. The futures are fine, but they're pretty big. The micros are really small contracts, and the minis are pretty big contracts. So you better be pretty careful there.
Yep.
And the markets are kind of wide. I think the ETFs have better markets.
Are you ready to take a quick 90-second break?
Please.
I'm ready to take a quick 90-second break. We got trades and the research team next. Even the S&P's up 12. I'm back in 90 seconds. Stay live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not, just trust us and do this, which is a very dangerous thing in the financial world. But, learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Diversify with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tomas, we are back, my friend, but enough out of you. We got trades from the research team. Who is our first researcher? That's right, the Pink Panther himself. Thomas is in the house. How are you, brother?
What up, what up, what up?
Good to see you again.
It's nice to be here. Can't wait to show my trade-offs to the fans today. Hello, Tasty Nation.
All right, you've got a funny one here. Go ahead. What do you got for us?
All right.
Funny how?
Well, you'll see in a minute. Funny peculiar.
I have a short strangle on Archer, the electronic vertical takeoff helicopter company, one that helps shorten your commute from Manhattan to New York. It's Newark. How do you say the one? It's Newark.
Newark.
That's a tough
You
one.
Midwesterner. Newark.
Galf. Newark. It's tough. It's a tough language.
Newark. Yeah, it's tough. I guess I never thought about that before. It always sounds so normal for me.
Earnings are August 14th, a day before.
Yeah, just a day before. We have an event just one day.
I have
before
never
the day.
traded this stock before.
That's why I said a peculiar one.
It is.
Peculiar one.
It's a funny one somehow.
Does it have?
Rank of 41 is good. Markets are good.
Oh my God! So it was a tough time this week to find a trade to present today because the markets are just
Got a lot of open interest. All right, what do you got here?
Yeah, we got a short strangle on the 10 for the put side. We have it on the $10 strike. For the call side, we have it on the $15 strike. This credit to buying power ratio is 1 to 2, so real juicy for low risk. What do you guys think? And with IV at 45%, the individual.
I mean, we've never traded it before. We'll give it a shot. Does this thing? Did they launch yet?
I don't think they've launched yet, but the website looks amazing. The idea is great. I definitely would have wanted to use one of those takeoff helicopters today from the commute from the suburbs to here. So the traffic, it's chipping away at me.
You can afford that. We're paying you way too much.
Maybe when Dylan comes on at 8:40, he can tell us about this. I think he flew someplace, some helicopter somewhere, someplace in New York.
Dylan flies a helicopter?
Oh my! No, he doesn't fly it. I don't believe. I believe he was a passenger in it. He's flown.
Oh,
flown it. Yes, and more experience than you and I.
Oh, okay.
You seem like a helicopter guy.
Nope, never been in a helicopter my entire life.
Really?
Nope. Have you?
I was when I was a kid, a long time ago.
I was never in a helicopter.
Yeah.
That's shocking. I would have expected you to be.
Have you been in a helicopter?
Yeah, Sasa, he did triage back in the day.
I did one over. It's in Las Vegas. I did like a flyover.
Oh.
Yeah.
No, I've never done that. Yeah, I'm not a helicopter. I can't. I've never been in one, so not fair. But all right, I put it in. We'll see what happens.
Sounds good.
All right. Thanks, Thomas.
Sure.
Good job out of you. Who is our next researcher?
It's weirder and weirder every time.
Baby Shark. No, Shark. My man Jaws. What's up, brother?
3 different nicknames, huh?
As many as you need.
Yeah.
Roku back to $90. Haven't looked at this stock. Last time I looked, it was like 70.
Oh, when we put the kibosh on them for
Been a while.
Yeah, I know. It has been a while since I haven't looked at it either too much. So I looked at it last night, and it's hard to find stuff, with all the earnings and the low IVs and this and
I wonder
that.
how the markets are in there. Not bad, it looks like.
They're not bad. They're not bad.
But they do have earnings coming up.
August 7th.
August 7th. So you want to get out of this is a trade you get in quick and you get out quick, hopefully.
I thought I was going to do that in Costco last week, Tuesday. It hasn't worked out for me.
Hasn't worked out. Okay.
No.
8105?
Yeah, 8105.
Okay.
This is a pretty good credit to BPR ratio, but we'll see where we actually get put in when the market opens. So,
yeah.
I don't know if I'm going to fill exactly at this point, but yeah.
I don't know either. Last time I traded Roku, it was about $72 or something. I haven't traded it in a while, but sure, let's go. Let's try.
Let's see how it works. Yeah.
LFG, Tony.
LFG, stay on pace, Sadnov. Good job out of you, my friend. And do better, all right?
Do better.
Yes. You have to
then one day you can fly a helicopter too.
And then one day I can fly a helicopter.
And one day you'll be able to fly a helicopter.
Honestly, I don't think I will ever be the pilot of a helicopter in my lifetime.
No. You want to be a passenger, okay?
Would you go in the new ones they're basically like driverless, pilotless.
Oh, we haven't even had self-driving cars. Self-driving helicopters? I don't know.
They have self-driving helicopters now.
They do? Okay.
Yeah, but they're electric.
Okay.
Would you go in one?
Maybe. I mean, people say flying is safer than driving, right? So maybe.
Would you go in a self-driving?
No, I don't think so.
Helicopter.
Don't trust the technology. Don't trust the technology yet.
Although, if somebody said, you can go in this helicopter for, a half hour, 25 minutes, or you can stay in traffic for 3 hours to get someplace, I'd probably put my life in my own hands and take the helicopter.
Chicago traffic.
You would too.
Chicago traffic's just that bad.
No, I mean, maybe it was in New York or somewhere else like that. I mean, I don't know.
All right.
Yeah. All right, you ready for our next researcher, Saz?
Sure.
Who is our next researcher? That's right, it's my man Gad. All right, brother.
Good morning.
Good morning.
A post-earnings trade, huh?
Yeah, post-earnings trade.
Ooh, I like
ballsy.
I like the play. UAL trading $90.70.
What's up now?
$91. It's up. Yep. About $2.50.
Was down to 85, 86 last night. Now to 91. Yeah.
Cool.
Yeah, that's why I'm doing any kind of.
I kind of like this post-earnings trade idea. I mean, I don't know if you can get filled because they may just annihilate premium.
I'm doing it safe, so not in August.
Yeah. All right. I like this. So what are you doing? Which one? 72, 77?
Yeah, 72,
105?
Yeah.
Yeah, you may want to move the put side up just because the stock's
now
higher.
movement.
What?
Now with today's movement.
Yeah, you might probably want to do 85, I think 80, 75, 80 instead. Yeah,
Okay.
105. Yeah, 75, 80, 105. You have 100.
It's 100.
Well, that says 100, but it should be 110.
105 and 100.
No, you got it backwards. You should be buying the 110s.
Oh, yeah.
Yeah.
Yeah, he's got it. He's got it back.
Yeah.
What?
He's got it backwards.
No. You want to sell the 105s, buy the 110s.
And buy the 110s, yeah.
Not backwards.
Not backwards. He's got the wrong strike
Yeah,
there
wrong
on the
strike.
100s. Yes.
Yeah, John, we just got to change that to 110.
Yeah, John, fix that. Unbelievable. It's John's fault. Don't worry about it, Gad. We have somebody to blame on here because they don't have a microphone right now.
Good. Thank you, man.
You're welcome. You're
That's why
welcome.
I
Don't worry.
like
Never your mistake.
No, never again.
Good to be king. Good to be king.
All right, we got it working.
Who is our next researcher? We got a pack house today. Who's want to have a drink? Good. Hi, my man.
How are you doing?
Your music's contrarian for you. You're too even keel and smooth. That rhetoric.
Yeah, as a research member, right? You got to be quick.
Flying the colors like Sosnoff did yesterday.
Flying the colors, yeah.
I like it. What do you got for us today, my friend?
All right, Roblox. Haven't
Are you wearing a
traded for
shirt
a
under
while.
that? Are you wearing a shirt under that or just that?
Huh?
Do you have a T-shirt on underneath that, or are you skinny?
I have.
You have a T-shirt.
Yeah, I like.
Because
I
you're
like
a
this
man.
one.
Most men do that. Women wear it with no T-shirt underneath it, so they can show the cleave.
I think this is more American style. I don't think people do in Asia or I don't know.
Do what?
Wear a T-shirt underneath.
Yeah.
Yeah, because we have washing machines here, so that we can do the extra kind of load of laundry. That's right. Right. Big washing machines. America.
Fair enough, America. Yeah, America.
Right. We got water. We got washing machines. We got electricity.
We have dishwasher.
We have dishwashers.
Right.
That's right. America.
America.
What you got for us, Kai? What do you got for us, Kai?
Roblox. Ugh.
Yeah.
Roblox, not Lex.
Roblox.
Roblox hasn't had a downtick.
Oh no, went through the roof. So I just try to fade move a little bit with the neutral strangle. Just try to catch the high imply.
Earnings July 31st.
Yeah, so that's why I want to use the August. Try to take the profit within 2 weeks or so before the earnings.
Mm-hmm.
Any profit would be great.
Yeah.
97.5 on the put side and 145 on the call side.
I have a lot of positions on in RBLX. It's not working yet.
Oh yeah,
Stock has been,
it's crazy, all time high.
yeah, hasn't had a downtick. It's up again today. Yeah, a little bit. Unbelievable, brutal stock. Wide markets too, pre-market. Okay, well let's see if you can get.
Yeah, I checked the price before yesterday's close, roughly $4.90. You can move it up a little bit.
145.
97.5.
God, I can't believe it. 97.5s are. Yeah, I think it's crashing, so I got to move my puts down.
Oh, you're gonna use 95?
Yeah, 95 or 92.5 because I think the stock's gonna be down $10 this week. But so far, I've been wrong every single day in that stock. So it doesn't. It's not. Don't pay me no. Never mind, as they say.
Okie dokie.
All
Good
right.
job out of you, Kai. Who's our next researcher?
Hey.
I like the moves. You got a good little shimmy there.
Well, thank you.
Slap a set on you. Good job out of you, Data.
No, you really don't want. I don't want to see that. Nobody wants to see that.
There was that guy who did that. They like for a bet. And
William Hong?
What's that?
William Hong?
Was that his name?
Shabam.
No. It was a guy on the internet made a bet with his friends, and he got a pair of breast augmentation for himself, and he had to wear it for had to keep it for a year or two.
Yeah, it was a bet that he lost.
His
he was
wife
just
really
using
liked
that as an
it,
excuse.
she said. I remember the whole thing. It's fun to play with, I guess. I don't know what to tell you, but
I think he has some other. I think he has some other
years,
issues
and they let him
going
out
on.
after a year and a half. But they. What do you got for us, Dex?
Oh, well, I'll be happy to pay you if you want for that.
I'm not interested, thank you.
I'll be happy to comp that one.
I'm sure you would. What do you got for us, Dad? I don't have the shimmy that he has.
Tell me who I got to write the check out to.
What's up?
ETHA.
Oh, we did that
ETHA.
yesterday.
So yeah. We talked about this in cherry picks, and Nikki and I. Huge volumes. This was basically nowhere just a few months ago, and now
You
all of a
are
sudden,
right. It was
it's
like
every
$19
eye,
or something like that.
yeah, every eye has been looking at this ETH, this Ethereum ETF. It's been moving around a lot. This is a short iron fly, so the probability of profit's pretty good on this because there's no risks on the downside because the amount of money that you're receiving, the credit. This is straddle, so you're selling the 25s on the short call and short put, and then you're buying the 23 put, and then you're buying the 30 call on this. It's kind of like a vol collapse on this. It looks like the stock's actually going to open up this morning, so you could even
You're
think
buying
about,
these are puts. You're buying the 30 put.
no, the 30 call.
You're buying so you're selling the 25, 23.
No, I'm selling.
Oh, you're selling the
25.
straddle, buying the wings.
Yes. Yep.
Okay, got it. Sorry.
Iron fly.
Yeah, iron fly. Yep. I see it. Sorry, I wasn't looking. Selling the 25 straddle, buying the wings.
Yes, that's right.
Got it.
Yeah, just like
No rest of the
just like
downside
what's
on
on the
this one.
screen. You got kind of low D there, low testosterone, low something over there. Your ding is
No, my
very-
ding is my sound is as high as it can get.
Is it? Sounds very low.
Sorry.
That's okay.
Okay.
Good job out of you. Sounds good job out of him.
I mean, this is yesterday we got a little bit short this underlying.
It's not working out for you right now.
No, it's not up around 30.
No, I take it back. We actually sold a strangle, and it didn't work.
Okay.
This morning I sold some stock naked in there.
Okay.
So we'll see what happens.
Live long enough, good things will happen to you eventually.
rank.
Eventually, good things will happen.
Yep, that's right.
Beautiful.
Yeah. Okay.
Who is our next researcher? I believe our last researcher. That's right, Saddle. Finishing with strength. What's up, Julia? How are you?
I'm so glad it's Thursday. How are you guys?
Doing great. Good to hear your voice. Good to see you.
I know. I feel like it's been a minute since I've been on here.
It has been a minute. It has been a minute or two. So I'm glad to see you. And we're finishing strong.
Thank you.
We have time to talk to you. Usually we're rushing you. We got perfect timing today. Sadnov is hitting on all cylinders.
Got a lot of outlier plays today, and you're coming to us with a target.
I know.
What's wrong with you? What happened to you?
You're such a Midwesterner. You're such a
Okay.
Midwesterner.
No, I like what she's going for here. Go ahead, talk.
At least
Go
I
ahead.
didn't mispronounce Newark, to be fair. But whatever, that's fine.
Newark
Anyway,
is
yeah.
a very hard. Newark is a very hard. Newark. I've seen
I
people.
mispronounced plenty of other. I mispronounced plenty of other stuff. Don't get me wrong, but I also don't say Juan instead of one, which I'm very proud of.
Nice.
Tom, you're a Wanner.
Wanner.
He is.
But yes, I'm looking at Target right now with the earnings in just full force. It's a little bit tricky, but Target's got an Ivy rank over 30, which is kind of nice, and earnings outside of the 29-day cycles. So for August, looking at the 95 110s short strikes and $5 wide on that, and it's a little bit tighter than I prefer. The strikes are not as granular as I would like them to be on this underlying, but it's still I mean, actually I think it's moved a little bit, so it's closer to 22.20 for the short strikes. But keeping this as a little baby trade, it's a little bit short term with earnings right after expiration. I think just makes more sense to keep this a little bit smaller of a play, but collects almost 1.5 in credit for 354 in buying power.
She's doing the 95, 90,
110s.
110.
Yeah.
115. Got it.
Look at that.
$5 wide, 146.
Earnings August 20th.
Bada bing, bada boom.
Bing, bada boom, bada
Bada
bop.
bing, bada boom.
All right, Miss Spina. It's in the electronic order book on some exchange. I have no idea which exchange.
Not going to sell past the close on that one.
Yes. It's sitting in an electronic order book somewhere in cyberspace.
Beautiful. I think you did
that
a
was
good
the most
job,
accurate
Julia.
technical description I've ever heard of that.
Yeah, it's not a good technical description. All right.
cyberspace.
Thanks, Julia.
Thanks, guys. Peace.
Ciao.
Good job out of you. We're going to take a quick 90-second break and come back. Even the S&Ps are up 4. They were just up a little bit more, about 6, 7 handles higher than that. NASDAQ up 35. Russell's been weaker. It's basically unchanged, down 60 cents. And
Yeah, I
the
saw
Dow
them up like 12 or something.
Yes. They all 4 indices were up a moment ago. Now you got even the S&Ps and NASDAQ still a little bit higher. Russell and Dow a little bit lower. We'll be back in 90 seconds at the opening bell next.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
I found very early on that I was comfortable with having risk, and I liked the benefit of it. I mean, I found trading in a unique way. I loved seeing Wall Street in New York. When I was a young kid, I would drive down to the financial district and see all those guys in suits, very powerful looking. So to me, that was a way of having some sort of social status where I bettered myself. Trading was just a way out of Brooklyn. I go anywhere there's action. Really anything that has high implied volatility. And the IVX 5-day change, that's the volatility of the product's 5-day change, is green. And I show that on my Option Trades Today podcast. You can definitely get the thoughts on why I'm making this trade. Am I leaning a little bit longer? Am I leaning a little bit shorter? All the things that we talk about on the show day in and day out. It's not magic, it's just math. By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader. People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. With a minute and a half to go before the market opens, Sadnoff, even the S&Ps are showing you the way. They're basically unchanged, up $3. Tight market last night. 62.88 near the lows, 63.16 near the highs. We're kind of on the higher end of mid-range with the E-mini S&Ps up 2 handles, 275. NASDAQ up 24. Russell just turned green, and the Dow is down 27. Basically an unchanged market here. You can see from the percentage move on all 4 of these indices. Volatility unchanged too. Staying a little bit here these days, Sadnov. Yesterday, volatility up, market up, kind of a little bit strange. We've seen that twice this week, which we have not seen in the previous last week or week before that. Bonds up 6, Sadnov, 112.
Oh my God, they're exploding.
They are exploding. They're on their highs, Sadnov. Something you could not say early this morning when you came in to see the market. Bitcoin down 1,500 on the futures, 118 and change after flirting with 120 last night. Oil up 11 cents, basically unchanged. You can see here from the percentage basis, most of the market is unchanged. Ethereum doing the opposite of Bitcoin. It's up 2% or $70. Sadnov, there was your low testosterone ding that I was talking about.
Can't
the
help
market just opened. Oh, you did something wrong. Oh, TSM, you got filled on your 1x2 that you put on puts versus calls. You paid $313. It's $368 right now, Sadnov, mid-price. The natural bid is $371. You pick those guys off. They want you to go back. They're going to call you. They're going to want a price adjustment.
More interesting than that, Mr. Batista. More interesting than that. I did that at 518.
Or 518 this morning.
No. $5.18 yesterday.
Oh, money goes to money. You are so good.
Yeah. What's important about that trade is that
not only did you pick them off on the entry, you picked it's $5 mid price right now, Sadnov. You paid $313. Stock's up $10 now. Stock must have opened lower.
Thank you, Tasty.
It did open at it opened at 245. Ooh, somebody's gonna be pissed at you.
Ooh, somebody's gonna be pissed.
You better hide. You better shut your platform off. Oof. They're going to come after you.
You better shut the front door.
Roblox, you sold some stock pre-market. It's up by you're up on the trade by about 70 cents. And at Ethereum shares, you're basically unchanged. Even the S&P's up 4. All 4 indices are now higher, Sosnov. Volatility up 7 cents.
Yeah. It's a weird...
Talk to me, Goose.
A little bit of a weird opening.
Mm-hmm.
I'm going to take a look at some of the trades that we put in here this morning. Let's take a look at our UAL trade. Stock's up 460.
Say again?
Stock is up 460.
Yes.
Our UAL position is up small. I kind of feel like this is a little bit rich of an opening.
It's a new recent highs that they haven't seen since February.
Yeah. Yeah, this is an interesting, it's a little bit of an interesting opening. Looking at my UAL position, just trying to potentially put some orders in. Strong opening in there. I thought the stock was going to be down.
Strong opening.
Yeah, really, really strong. So I kind of thought the stock would be down.
That.
Yeah, didn't open down. We're up small in there. I mean, I'm not complaining because it worked. The
Sound like you're complaining a little bit. I'm not gonna lie. Sound like
the earnings plays worked.
Biatching.
I covered our UAL. I covered our TSM. So TSM earnings plays last night. TSM we're flat at now. It was a small winner. We did a ratio spread and a 1x2. And UAL, UAL was a small winner too. And Roblox, we just scalped some stock.
Good job out of you.
I don't do that very often.
Nah, but it was pre-market. It was the only thing that was open.
Pre-market, just felt like doing it, this morning. Now looking at some of the trades from the research team, Archer, which was the Thomas's trade, we're a little bit away on that one. A couple of bits in Roku. We're again a little bit away, a couple ticks. Roblox, RBLX. again, just a couple ticks away.
Markets move south enough. Your
I
TSM
know.
trade's now $3 mid price. The guys say they're not asking you for changing.
Thank you so much. Julia's trade just a few ticks away. And
what do you want? A few ticks of the position. NASDAQ down 6, even the S&P's up 2. Dow caught a bid. It's the leader in the clubhouse, up 110.
that's so funny because the Dow was the weakest pre-market.
That's correct.
And now it's the strongest.
That is correct.
Of all the trades that we had, we just have to finalize the, just have to get out of UAL. We have one open position left in there, and that's about it. What do you see? What do you see
Right
when
now,
you're
it looks like a rudderless ship, Sazno. If I see volatility up 4 cents, I mean, it's not doing anything one way or the other. It is staying bid, giving those for a down market some sort of hope.
ETHA, we sold that pre-market at 89. It's trading 81. Got 9 cents in that bet. You would scarf that faster than...
Do it.
No. I'm actually just trying to cover the rest of my UAL position. I don't know if I can. I didn't get filled on my post UAL trade. Post
That's
earnings.
okay. It happens.
Yeah. Let's take a look. Where are we here? All right. RBLX. Oh, we got filled.
Oh, look at you. You got a partial. You got a partial. Now you got filled.
All right, good. We'll take it. That's trades from the research team. 412.
412?
Yeah. Why?
Yeah, 412. You did. 92 and a half, 145.
Yeah. And let's see what else we got going on here. Just trying to, before we move on to the next segment.
Even the S&P's quite a bit. Now they're up 4, so enough they're going nowhere fast.
Taking a quick look at the market.
Bonds up 6.
Yeah, that's okay. Taking a quick look around, man. Not too much is moving too big this morning.
Place your bets. Place your bets.
Google down $1.50. Netflix up $2-3 before its earnings come out. Looking for stocks that have a big move. Moo.
MU.
TSM actually is sold off. It was up.
Ooh, MU down.
It's only up $4 right now.
Which stock?
TSM.
Yes. That's why they said don't worry about your fill.
Yeah. And boy, that is kind of a pretty dull.
What's Netflix doing for earnings today? Netflix up $3.42.
I guess the Russell's the big mover after being down. The Russell and Dow were down early. They've reversed. You can't tell pre-market. Sometimes it's really hard.
Would you say it's random?
I mean,
if sometimes you can't tell, it's really hard. Would you say it's random? I'm just quoting you.
Yeah, you can have random on your.
All right. Nice little victory for the bat there.
UAL, we're out now. Take a fill.
2090?
That was an inverted strangle we had.
Oh, now it makes sense.
Going into it.
Yeah.
So now the question is, UAL, the IB rank is 19. Do you want to do a post-earnings trade? And I'm guessing probably.
I think that's what Gad was trying to do for you, right?
Post-earnings Iron Condor, and I'm not going to get filled in there.
Darn.
Still working handful of trades from the research team. We've only got filled on one so far. Archer, Roku, and Target.
Gotcha, my friend. You got
Okay.
filled on Target?
No, I didn't. I'm working.
Oh, okay. Yep.
Okay.
All right. Well, listen, let's take a quick 90-second break. We got to hear me out with fan favorite Dylan Radigan. Coming up next, this is Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I mean, I watched an hour and a half of TikTok, and that was enough for me. Skinny waist, what is it? Skinny waist, pretty face.
Yeah.
Don't finish that song.
Yeah, that's Meg the Stallion. It's not safe for morning television.
Skinny waist,
Body yada 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 yada. Body yada 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 yada. Yes, Tom, you have.
I got it down to a science, Beth.
Yes.
I'm practically a TikToker. Skinny waist, pretty face, big bang, boom.
I didn't even know TikTok had music.
Yeah. I mean,
here you are, this big-time brokerage CEO, media mogul, TV star. You're a full-on celebrity, and you're running around singing TikTok music like a 16-year-old girl.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Enough out of you. We got Hear Me Out with my man, Dylan Radigan. How are you, Mr. Radigan?
Yo. Good morning. Nice to see you. Everybody's looking summery except for you, Tom. Tony, you're looking very Italian summer. Respect. You can see I'm wearing my lime green. Sosnoff, you wouldn't know it could be January for this guy, but whatever.
Got the short sleeve shirt on. What do you? That's There's a lot of things he doesn't know, Dylan. Yeah.
If there's a t-shirt, black t-shirt's as good as it gets. Okay, I'll take it.
Black t-shirt's about as good as it gets for me.
What's up? All right.
Anyway, we are very appreciative that you are going to be joining us for the in the near future for the Hear Me Out segment, and we've changed the format a little bit for this segment today, not to make it more complicated or easier or anything like that, just to make it a little. I actually try to make it a little easier for Dylan. I mean, we're going to give him a question, and he's going to have to answer it. I think Dylan is capable of doing that, Sosnoff.
No, what we're trying to do is running with like JV. You're going to JV standard.
Well, what we're trying to do is keep you on track, Dylan. Sometimes you go a little off the rails. Keep the segment focused into kind of stuff that's. It's him, not you, Dylan. I'm just trying to make it you. I'm trying to deflect right now. I got to spend all day with him. He's driving me crazy. It's Thursday. I'm at my
I have a bat limit.
I just can't. I still have an image from our discussion on overtime yesterday of Howard Lutnick and Donald Trump, just the two of you, Donnie and Howard, watching the screens.
Don't bring up those. Those are those that gave me that gave me nightmares last night. Yeah. Anyway, we're gonna get right into it. We're gonna go quick. We're gonna have some fun with this, and we have 3 questions. First topic. It's not really a question. It's a topic. What was Trump trying to accomplish yesterday with the PAL leak or official White House statement, whatever you want to say? Is Trump following the old Turkish playbook? And now the reason that we wrote that, replacing J. Powell and lowering rates by decree, is because that's kind of like that's kind of what happened in Turkey a few years back when they replaced the central bankers and they lowered rates by decree. It didn't necessarily work, but that was kind of that was essentially, we've seen it happen elsewhere in the world. Let's put it that way. What do you think was going on yesterday, and what was what were we witnessing?
Yeah, well, so I mean, I know what was going on yesterday. So here in the if you spend any time in the media and strategery parlors of the world, whether it's in Chicago or Washington D.C. or the most esteemed media manipulation parlors on earth are here in New York City, there is an item that gets discussed on a routine basis. It's basically a standard, like, you know how in football there's like a sweep or there's a wedge or there's a Hail Mary. Like, there's certain plays that are standards. It's sort of more about not so much about what is the play, but when do you use the play. Well, what we witnessed yesterday in the common parlance of the global media world is called a trial balloon. And what you witnessed yesterday was the floating of a so-called trial balloon, where they sat around in the room and they said, I wonder what the market would think if Trump tried to fire Powell. And they're like, well, there's only one way to find out, ladies and gentlemen. I say we float ourselves a trial balloon and kind of see what happens. See if the dogs come out in the yard. Maybe they won't even notice. And so I believe what you witnessed yesterday is because remember, so why do you float the trial balloon? You float the trial balloon because you delusionally believe that lower rates are in some way going to be better for the economy at a time when you're already applying all this inflationary pressure. And I don't know that there's any economist or non-economist in the world who's ever thought that the best thing you can do when you're raising the cost of everything and when inflation is reaccelerating is to lower the cost of money in order to get inflation under control. I don't know that theory has ever actually been successful. And so when the trial balloon forget firing Powell is a metaphor for lowering rates. Right? It's not Powell, no Powell. It's I want lower rates, and this person's not giving me lower rates. I'm going to put someone in here who wants lower rates. And so you watch the trial balloon float. You watch the market pop the balloon and spit in everybody's face, and then you watch them put the balloon back in the garage. And I believe that's what happened yesterday.
I like the trial balloon term, but you know what's weird to me, and Tony, I don't know if you think the same thing. If you really want lower rates, which I believe Trump does want lower rates. The easiest way to lower rates, the simplest way to lower rates is to just say you have a single point of failure with respect to inflation, which is tariffs, right? That is everybody's on the same page there. Tariffs are creating this inflationary pressure. Even Jay Powell says it. You want to lower rates? You want bonds to go up 3 points tomorrow? Just drop the tariff stuff or minimize the tariff exposure, and rates will crash. I don't understand. Like, you can't have your cake and eat it too. So that is the simplest thing to do. You walk away as a hero.
They want their cake and they would like to eat it. I know, but I believe that there's a preference for both cake and eating it.
Well, you walk away as a hero if you just drop the whole tariff crap or most of it, and you save face by getting rates lower. Everybody in this country would appreciate lower rates and less inflation, and they don't give a rat's ass about the tariff because we pay for them anyway as consumers. All right, let's move on to the next question. I don't want to run out of time.
All right.
Next topic.
But the one issue is you're using logic. You're using logic, and that's an issue. So think about it.
That is a lot. That is an issue, using logic. Okay.
That's a flaw for your behavior.
Bonetta talked about this morning. Bonetta talked about this morning, and it's been top of the financial news all week. The House has been under pressure this week to pass crypto legislation, loosening crypto regulations. They got stymied because there was a few Republican House members that said no. Trump put a lot of pressure on them. I think they're going to get it done. I'm not saying there's anything wrong with the legislation necessarily. But according to Bloomberg yesterday, the Trump meme coin is set to be unlocked today. It adds $100 million to his net worth, $900 million of total value. How dangerous a message does this send, and why is nobody raising a conflict issue?
I mean, at this point, crypto to me is akin to, Dutch tulip mania, where you've arbitrarily identified a valueless concept as a sort of a digital code, basically a digital code word or a digital code number as a so-called token, and decided to assign economic or currency value to it. And the only thing underlying its value is the very fact that everybody agrees to pay for it. A house has value outside of its financial value insofar as you can live in it. Or, I won't list all the other things that have value, but again, a car you can drive, food you can eat, blah, blah, blah. This is a stock represents the underlying or future cash flow of the discounted cash flow of the enterprise value of a company, the payment flow of a bond. This is tulip mania. And it is tulip mania, worse than tulip mania. The president of the United States is a tulip farmer. And so you have a regulatory environment that is entirely in favor of the most liberal crypto regulations available. And you have a president enriching himself doing it. I actually think long-term is probably bad for crypto. I think that crypto probably has some utility using the blockchain and coding and transactions and cross-currency and title clearing and all the sort of a lot of the legal functions associated with assets and asset transfers, I think can be expedited using the technology that underlies crypto. And so allowing crypto to become very tulip-like, I think sets it up for a huge loss of money and loss of wealth in the future at some future point in time, which I actually think could be very destructive to the underlying value that's available.
Sure. I'd like to talk on this before you, because and I agree with you, Dylan. You have come out and said that you don't like that you do like politicians trading. Let them do whatever they want to do. 100%, blah, blah, blah. But I know you're going to hate this idea about Trump, and I don't like it either, as in the same camp as Radigan. Point I'm trying to make is, how could you be so for politicians who are on committees trading stocks that are affected by their committee's decision ahead of time when you cannot like
I'll answer
Trump coin? Because it seems like it's a disconnect.
I'll answer it. No, I'll answer it. If a politician created their own company,
doesn't matter. It's the semantics.
No, it's not. This is a meme coin. This is not what Dylan just said was accurate with the technology, whether it's blockchain technology, whether
this is not going to hurt Bitcoin or anything else like that. I disagree with Dylan on that.
Not going to hurt anything except the people that end up buying it. This is a
but say it as your own will. This is
a meme coin. This has no
Beanie Babies. This is stupid.
This is Beanie Babies.
This is stupid. I agree with you.
So what I'm opposed to is a politician creating their own Beanie Baby and pushing it out there. That's not a politician trading. That's not trading.
That's somebody who's going to give a multi-gazillion dollar bill pass so that this company is going to benefit from it and investing in it 2 or 3 weeks before they come out with this. You're just blinded here by
this is passing your own legislation so that you
same stuff, semantics.
Not even close. I'm sorry. This is a true conflict. It's almost
disagree.
In my eyes, it's almost criminal.
I feel like I have not wavered from my stance, but I feel like you pick and choose.
No, you're crazy. Well, go ahead, Dylan.
And I'm going to go with the man in the nice shirt.
Thank you, Dylan. Appreciate that.
Which is not you, Tom.
Okay, good. Let's go to the next slide. because this is another fun one, which I like.
All right.
Is JP Morgan too big to fail? They had earnings yesterday. The stock was like unchanged, I think, or down a little bit. I'm not 100%
It's
sure.
up 240 today, but yes, you are correct.
Yeah,
Yes, it's
okay.
lower.
JP Morgan is now worth more than all of its three largest competitors combined. So it's bigger than its three largest competitors combined. It's
bigger than US Steel.
It's almost $1 trillion company. Dylan, does $1 trillion financial institution, does $1 trillion bank, bigger than its next three biggest competitors and bigger than any other bank pretty much in the world, pretty much bigger than any other central bank in the world. Is that cause for concern? It's not a technology play, clearly.
I mean, only for the. I mean, so I have an issue with the way this question was presented because it's not. Is JP Morgan too big to fail was codified as an institutional structure of the American economy in 2009. We have had too big to fail institutions by law for however many years it's been since 2009, 16 years. And so it's not a question of is JP Morgan too big to fail. JP Morgan is too big to fail. Its much smaller competitors are also too big to fail. It's a matter of fact. I believe that the U.S. government in 2009, as a resolution to the financial crisis, made a decision to absorb all of the risk in the too big to fail financial institutions into the U.S. currency. And basically, it's the way I would describe it is, I give Tom a loan. Tom doesn't pay his bills, so now Dylan has a default, and Dylan's bank is in trouble. So now I bought insurance on my bank from Tony. So now I pass my default on to Tony. Tony passes a default onto the taxpayer. Nobody can pay. That's too big to fail. And the way that we resolved it was mathematically. I mean, this was a decision made by Paulson and Rahm Emanuel and all the gentlemen in the room there in 2009 was give me all of the empty holes, all the whether it's the unpaid mortgage loans up to the unpaid credit default swaps at AIG and everything in between. And we'll suck it all up into the U.S. dollar, and we'll hide it there because the U.S. dollar is a reserve currency, and so there's nothing. It'll just live there invisibly forever. And then in the process, we will legally certify with Dodd-Frank a piece of legislation that says that there are systematically significant financial institutions, which is a legal characterization. Furthermore, we'll recertify the investment banks, the broker-dealers, as bank holding companies, such that they have direct legal access to the Fed lending window, lest there ever be an issue like this. Because one of the issues in 2009 was they couldn't go that night and pull money to Goldman and Morgan Stanley because they weren't bank holding companies, and so they didn't have the legal standing to hit the window, which is one of the first pieces of legislative changes that was made in 2009 to bail everybody out. But hitting the window is just another way of accessing the U.S. dollar. So a long-winded way, and sorry for the minor history lesson on the financial crisis, but JP Morgan is too big to fail. Too big to fail is an institutional fact of the United States. That fact is worn across the currency of the United States. It benefits the executives and employees and shareholders of the banks, and it hurts the holders of the U.S. dollar, who have been defended up until Donald Trump from the collapse of the dollar by virtue of the reserve status and the relative weakness of the other economies, specifically Europe and Japan. So it is too big to fail. What are we even talking about? Come on.
I'm gonna almost disagree.
It's the law of the land, sir.
Go ahead.
I mean, since you jogged my memory when you said, look at history, look at the E.F. Hutton. I mean, if there is something like ethically wrong, I mean, E.F. Hutton, I think Merrill Lynch was the only company that was bigger and in the space than E.F. Hutton back in the 80s.
I don't remember which one was which, but there's a lot of financial firms that went out of business. Yeah.
No, agree. But it
Merrill
was
Lynch
one of the
almost.
biggest
Merrill Lynch.
players. If it wasn't the biggest player,
Merrill
it was
Lynch basically went out of business in 2008.
Yes. So yeah, you can. I'm going to disagree here, Dylan. They're not too big to fail.
I'm gonna agree with Tony and disagree with you as well, Dylan, in the sense that I think it's a little dangerous and I don't know what you do about it, but I think that, if depending on how JP Morgan wants to spend its wealth, because a lot of it is, a very high share price, blah, 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 whatever. But depending on how they want to share their wealth or spend their wealth, it could have pretty significant implications for the financial service business and or for the consumer, because it is one of the things that's always made the banking system in this country so relatively.
So you're saying it is too big to fail, but you're agreeing with me. It's too big to fail.
Different reasons. I'm saying right now it seems like it's too big to fail, and that scares me.
Right, but I'm saying everything's been too big to fail for 16 years. Are you just catching on?
Well,
they're just bigger than they used to be.
This is how it is. Yeah, I mean, I guess my question, you're saying you think something's changed?
Yeah, a lot has changed.
Do you think they're too bigger to fail?
Yeah, a lot has changed. What's
Meaning
changed
you think they're
is
even bigger?
What's changed is in 2008, 2009, the company was worth less than $100 billion. Yeah,
but the market was less.
No, I understand that. What I'm saying is
they're not too big to fail, and they'll be absorbed by somebody else or protected by somebody else. But they can go out of business.
Stop. What I'm saying is,
listen,
if you go back a decade or a decade and a half, there was very little that separated JP Morgan from other banks. Very little. And so the diversification inside of our banking system in this country is one of the things that's always protected the consumer. There's not enough money, in all the insurance programs to cover, to protect consumers. The consumer's always been protected by the diversification of the banking system in this country. Period. That's it. We've had between savings and loans,
which ended in 2009,
between commercial banks and everything else. Yes. And since 2009, what you've seen happen is that there's a certain portion of the banking system that's never been able to recover. And then there's another portion on the commercial side that has exploded, and JP Morgan has just completely dominated relative to everything else. So now,
which by the way is how every other country in the world functions, with a few giant banks.
Which is not necessarily a good thing, because if you look everywhere else in the world, you don't have the same kind of economic growth and opportunity that you have in the U.S. And one of the reasons we've had that is because you have banks that are willing to do certain things that are more aggressive, certain things that they'll take for consideration. When you have one place to essentially go to, you just don't have enough choices, and it's not a great situation for the consumer.
Totally agree.
Okay. Yeah,
but I believe the United States has become more like Italy or Japan. These countries that have they have Unicredit and Intesa. That's it. There's two places, or there's Sumitomo Bank and whatever the other one. There's two banks everywhere, and that's it. And I think that's a bad thing, because I think it reduces risk taking and it reduces creativity.
Okay, that's exactly my point. I agree with that. And so I'm not sure. I think we might all be actually on the same page.
I think so.
On this one, but okay,
we're allowed.
I thought there was a little difference, but no, it's really
You're trying to find a gap between us. I mean,
he's trying to separate us, Dylan. He doesn't like me playing with you.
He's
in your sandbox.
I don't like everybody playing very nice.
Jealous.
Yeah, no, not jealous, but I don't like everybody playing nice. I like it when there's
first we wear colorful shirts and leave you out, and next we agree on the liabilities of JP Morgan. Although, aren't you impressed with Jamie? Even if you don't like Jamie Dimon, you have to respect him as one of the most impressive executives in the history of Wall Street.
I think Jamie Dimon would be way more interesting to me if he never talked. If he just
like Heidi Klum. Heidi Klum, I was really impressed with until she spoke.
He's like Heidi Klum to me too. If he just shuts up, I'm fine.
Might be really intelligent, might be everything he needs to be. I just didn't have to hear it.
He just drives me crazy when he starts talking.
Yep.
I mean,
then I
Jamie
lose.
he's probably 10.
Every time I hear him talk, I just want to say, "Oh my God, I got to get my money out of there." And every time
He's
other
from
than that,
Queens.
I'm impressed. But when he talks, it drives me out of my mind.
You know, all these guys. He's probably 10 or 12 years older than me. I met him for the first time when he was in his late 30s. I was probably 25 or something. And he was a junior, but not junior. He was Sandy Wiles' lieutenant at Smith Barney.
Yeah.
And so I don't know. I became, I wouldn't say friends with him, but friendly with him over the years. And watched him get fired and thrown out and sent to the backwater that is Chicago. And then,
well, I think
you're gonna let that go. You're gonna let me get away with that. Was a
no.
Anyway, I didn't get a rise out of you for that.
I think he raised his kids here. His kids went to school in Chicago. I
think so.
Yeah. What was it, Bank One or something? And then he comes back as the conquering hero, picks up J.P. Morgan. Anyway, it's mythological. It's mythological.
Yeah, I mean, they all his kids went to school here. They're all like, whatever, local. Everybody knows everybody.
Gave his wife a third of his money while he's like, listen, whether we get divorced or not here, just take a piece. Good luck to you. The sort of
lucky thing,
mid-marriage.
Lucky thing you didn't follow that model.
Well, Dylan, I have only 3 words left.
I didn't.
What? I'm pretty sure you didn't.
I said.
I have only 3 words left to say to you, Dylan. You are out.
Yeah.
You are out in my best Heidi Klum impersonation.
That's your Heidi Klum impersonation?
The best I can do.
That's the only impersonation you have.
That felt a little more Arnold.
What bothers you about Heidi, or just her voice?
I'm picking up some
Yeah.
Arnold.
Her accent.
Yeah, her accent. Just the way
bothers you.
Yeah, so she speaks. I just
Can't get over that.
Can't get over it.
God, of all the things you can't get over,
don't you think that was more Arnold than Heidi?
That's the thing you can't get over. All the things in your life, you can't get over Heidi Klum's accent.
Before I get in any more trouble, my wife here.
That's the difference between you and Dylan. Dylan could get over it.
Dylan can get over it. Dylan can get over it in a heartbeat. We're going to take a quick now speak for you, Dylan, on this
Didn't even notice it in the first place.
We'll take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
We got our market measure.
You are correct. You are here. We'll be back in 90 seconds of Tasty Live. Good job, Dylan.
Thanks, Dylan.
All right, bye, guys.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Well, this is me. Thank you so much for tonight. I've never been to the Hard Rock Cafe before. That was really fun.
Bow, bow.
Okay, well, this night.
This is a song for the broken hearted. Bow, bow.
Okay.
Hey.
All right.
Why don't we get up there and you can lay some hands on me, and I'll see if you're slippery when wet.
That's really inappropriate for a second.
I want to lay you down on a bed of roses and send you off to Slumber Town in a blaze of glory.
No, don't say things like that because my boyfriend was an aerial artist and he used to do things like that.
I might be Monday now, but someday I'll be Saturday night. You give life a bad name. Whoa, shake it up just like bad medicine. Bad medicine is what I need. I'm going out in a blaze of glory. Take me now, but know the truth. 'Cause I'm going out in a blaze of glory. Lord, I never
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. Market measure. Even the S&P is up 16.5, volatility in by 7 cents.
Does not surprise me today that the S&Ps are up. This is one of the most.
See, I thought we would be lower this morning and then possibly rally.
One of the
I was
more
going
bullish.
with that plan. The drop, flop, and pop.
We got filled, Trades and the research team, we got filled in ACHR. And ACHR, what else did we do? Now we got something else. RBLX.
Roblox.
And, well, maybe I can't find, what was the third one we did from?
I don't know, but the diamonds have a dividend today. Well, tomorrow.
All right. Well, tomorrow's expiration. So there is if you are short in the money diamond options, just be careful. There's like a 50-cent dividend, so just be careful on those. And if you have an SPX position on, remember the last chance to trade anything that ends with an X. SPX, DJX. What else is there? RUT. They expire on the opening composite print tomorrow, so you might want to close those positions on the close today. You don't want to be subject to the opening. You will have Netflix earnings. That's probably the biggest one today. So I don't think there's going to be, that won't affect the S&Ps that much. It will impact the NASDAQ, right?
Yeah, I think so.
Yeah.
I'd play it.
What's Netflix doing so far today?
Netflix was higher. I'm assuming it's still higher. It is by $7.
Yeah.
Netflix opened at $12.53. It's trading $12.56. Change.
So what scares me about Netflix, and probably what scares you about it a little bit too, is just the risk of
The split
NFL.
thing. I was trying to play that split thing with Costco. That's now under $9.50.
Yeah, it didn't work.
It did not work.
Did not
And
work.
I waited till it was like $9.65 or something like that.
So I'm looking at Netflix, and the expected move in there is $80
Mm-hmm.
for tomorrow. It doesn't seem $80 move seems, what is that, about 5%?
Yeah, I mean it's better than some of the other
Yes,
earnings
it is.
that we've seen, earnings plays on a percentage basis, but not the 7, 8, 10% that you would love to see.
But I'm not the only person, just so you know. So if you look at a $80 move in there, the stock's currently trading at $12.52. Okay. And if you go up $80, just as an example, that takes you up to about $13.25, let's say.
Yep.
Right?
Yep.
$13.25?
Yep.
Okay. The calls are 14 and a half, $15, 14 and a half, $14.75. The 1 days. If you go down $80, okay, that takes you to $11.75, let's say. And the puts are $9 to $9.25, $9.50. So the calls are 14 and a half and the puts are $9.50. Just as an FYI, that's $80 away. That's called call skew.
Right.
And just keeping everybody very functionally aware of that. 2 times the expected move to the downside would take you to about, let's call it 1,100. There's a fairly tight market in there, Tony.
Yeah.
The 1,100 puts are 150, 157. I bring that up because it's 2 times the expected move. And
Netflix has been in years past one of your worst performers.
It has been, but I've done a lot of stupid things in there. My goal is not to do anything stupid in there today. Okay, so bear with me. I'm trying not to do anything stupid. Anyway, I'm just kind of pointing out that there is a lot of juice 2 times the expected move. More so than any other stock we traded. Also, there's a lot of risk. The upside scares me more just because of the potential for a split, which I don't think is going to happen. But you can go, and the upside call markets are pretty tight. You can go to the 1450, which is basically 200 points away. So it's a little less than 3 times the expected move, and still collect $1 something. There's some juice.
Yeah, there's some juice. Like I said, better than others. Not that great.
Yeah. All right, let's do this.
You have a lucid position? You don't have a lucid.
Not anymore.
You're out of your lucid.
No, I'm just long. I'm just long the car.
A reverse split.
Yeah, 10-for-1 reverse split.
Yeah.
I like that play for them.
I don't.
It makes it tradable.
I know, but the reverse splits never go over well. I don't like it.
I like it for them.
Well, the stock traded up to $3.19. It's under $3 right now. Its low is $2.83. It's trading $2.93, up 70 cents.
I just want Lucid to stay in business until, because I like my car.
I know. You just want to be able to get the
my hubcaps.
Updates.
Get my updates, keep the hubcaps working. That's all.
Did you find what? Give us the hubcap
I didn't look.
saga.
I didn't look.
You haven't looked for, so you're driving around with 3 hubcaps like a Jamoke?
Yeah. 3 out of 4.
Like a Mamaluke?
Well, if you only look at the car from the left side, you can't tell.
The left side. We say the driver's side or the
driver's side.
So the driver's side is good.
Driver's
passenger side is bad.
Yeah.
Yeah, you're not looking at it. Right. It's good. It's all good. Yeah.
I'm driving past people.
Right.
I always pass on the right, so nobody can tell.
You always pass with the right side of your car facing them. Hopefully.
No, I said I always pass on the right.
Oh, if you always pass on the right, then you're not passing properly. That would be actually against the law.
I understand that. I'm kidding, but I want.
No, you're not kidding. You just got it all backwards.
I want people to be able to see the right side of
things
my
because you don't know how to act like a man at times.
Oh Lord.
Are we ready for slides?
Please save me.
I'm coming, Elizabeth.
1 week from tomorrow, Tony and I are going to Denver, Colorado to take our show on the road.
Yes!
We're going to be at the Summit Theater in Denver. We're going to be there 1 week from tomorrow morning on Friday, July 25th. If you haven't signed up yet, please do. Doors open at 8 a.m. Show starts promptly at 9. You'll be at work by 11. It's an hour and a half nonstop. I think you're going to love it. We'd love to see you there. So Summit Theater, Friday, July 25th. If you've got nothing to do next Friday morning and you're in the Denver area, please come out. I think you're going to love the show. Doors open at 8. Like I said, show starts at 9 o'clock. It's free. Look forward to seeing everybody there. We should have a packed house. We should have just a lot of fun next Friday morning. The markets will be open. We'll be an hour and a half into the trading day, and so there should be plenty to do. And we don't know what we're going to do yet. We're just going to have some fun. That's it. We're leaving a week from tonight. You'll be at work. You'll be back.
Flying together, sitting together. Are we sitting together?
Where, at dinner?
No, you're not going to be at dinner, actually.
No, next week I am.
Oh, next week you are?
Yeah, we're going to the South Park place.
No, that hasn't changed. We're still going there.
Casa Bonita or whatever.
No, I'm gonna be sick.
You're gonna be sick and do your hair?
I'm not gonna be sick. I'm gonna have to. Yeah, I'm gonna have to. I'm not gonna go.
Oh, you never met a burrito you didn't like. You'll be fine.
I'll just have to drink my way through.
Yeah, you can have as much as you want to drink.
I know, but not that kind of guy.
Yeah, but with a little tequila. I like tequila.
Like I don't. You like tequila?
A lot of tequila. Oh, in Mexico,
what,
by
like
the way,
a margarita. Like
in Mexico, I drink straight like mezcal. Yeah.
You do not.
I do. It's like local. We do.
Local.
It's local custom. Don't mess around there.
Local Patron.
Yeah. When you're in Russia, you drink vodka. When you're in Mexico.
I get that. Yeah. I get that. When you're in Italy, drink wine, or Europe. Yeah, I get it. I understand.
Yeah. Yeah, I don't mess around.
I get it. I get that.
Yeah. When you're in Mexico, we go.
Yeah, but how do you drink your tequila?
Not
on
tequila,
rock,
like
straight
mezcal,
up?
straight up. They don't serve it on the rocks. They just drink it. Take a bottle, pour it in a glass, big glass, like this. This is what I do.
20? Just $20. I just want to get paid. I figure if I do anything more than that, I'll never get paid.
You and me?
$20. 10?
You know what we're going to do? We're going to get a bottle of mezcal, put it in the middle of the table. We're going to get our whatever kind of tacos you want, whatever kind of stuff. We're going to have a taco omakase and, have a little ant eggs, some tongue, escamole, and have a little fun with it.
I don't think
You don't think I'm right?
No.
I'm totally right.
Mm-hmm.
Anyway, we're looking forward to seeing you guys in Denver. Tony will be there. Don't worry about it.
I'll be there. Be there with bells on.
All right, let's do it, John.
Let's do it.
We have a market measure today. We're doing zero DTEs. We're following up on what Liz and Jenny did yesterday, and the zero DT iron flies in depth. We'd like to, give people a chance that didn't get a chance to see their show from the floor of the SIBO, and tweak it a little bit and have some fun with some zero DT iron flies. All right. So an iron fly is you sell a straddle by the wings in the zero DTEs at 9 o'clock in the morning. What kind of profit are you looking for? I can tell you right now.
I'm looking for full profit, Sadaf. I'm actually looking to go to zero immediately, if not sooner. That's what I'm looking for.
From a guy that can't handle Heidi Klum because of her accent.
Not just her accent. She's got a very deep, like she's going to hurt me kind of voice. Like, I need something a little more feminine.
Never seen you scared of anybody before. I kind of get.
I just expected something different because she was my wheelhouse.
Kind of get it. Oh, she was your wheelhouse. Oh my God.
Sadnov, we're going to sell off here. I'm going to be so annoyed.
Oh no.
I covered everything. I'm going to be so annoyed.
I'm
so annoyed at you.
Where is your profit target on your zero DT iron flies? I'll give you a choice. You can choose 10%, 20%, 30%, 40%, 50%. I'm not letting you go higher than that.
20%.
Okay. Tony's is 20%. I'm, as much as he says 20%, at 10%, he's already in the clearing firm. Okay. I'm the same way. We love taking profits in zero DTs. We don't love
volatility's uptick. I'm gonna be so annoyed at you, Sadnov.
We don't love hanging out forever. Let's take a look and see what our research shows. I think the earlier the better. I know the earlier the better. One standout result of our zero DT research has been the encouraging results from ironflies with aggressive profit targets. I could not agree more. Selling at the money premium shortly after the market opens with defined risk wings. We've focused on narrow wings. Today, we're going to focus on all kinds of wings. Let's go next slide.
We got all your wings.
We got all your wings.
Dry rub, all of them.
Yeah. Using over 2 years of data, we're going to sell zero DT ironflies 9 a.m. Chicago time. And we are going to use a variety of wing widths from $10 to $60. A variety of profit targets from 10% to 75%. Okay?
Okay.
All trades are assumed to close at mid-price. It's not an
exact science, right? Because not everything.
When we do these studies, we use the actual mid-price because we're not making all these. When we say we're trading something, we're trading it. Every single trade that we do on Tasty is real. Just so for people that are new, we don't have a virtual account, and every trade that we make on air, when you hear a ding, it's a real trade, and it's our money.
Yep.
And so everything we do is real time, real trades. But when we do studies, we use a database that we've been putting together for the last 14 or 15 years, and in this case, over 2 years of zero DT data. But that's just our research team, using our database. So those are not actual trades. Those are it's all the research. There's no way you could do it with actual trades. You couldn't make enough trades. So let's go to the next slide. But everything else we do is real trading. So the first thing you're going to see here, Tony, is your profit target is either 10 or 15%, because I know mine is too. And if you're doing $10 wide wings, 70% of the time, you're making money, which is good.
Me like
but the average P&L is pretty good at 10%. It makes no sense to wait for 50% profit or 30% profit. You don't make any more money.
Well, you make more, but it's de minimis.
Sometimes I regret teaching him English. Let's go to the next slide. $20 wings, 10% profit. You're the same at a 10% profit over time than you are at a 20% profit. And, you can make a little bit more if you wait a little bit longer, but then if you wait
too long. I like to make them think they have a chance, Sosnoff. You know what I mean? So waiting for 20%, make it the same as 10%.
Yeah, but why would
keep them in the game?
But why would you, when you have a 78% win rate, why would you?
If you're going to wait for 20%, you got to wait for 25 or more.
Yeah, but why would you go down to 59% just to make an extra, few dollars?
I wouldn't, knowing this.
Of course.
You're right.
Let's go to the next slide. So we go to $30 wings, and look at, as you go wider wings, your 10% profit target goes to 83%. You basically make the same amount of money.
Yep.
It makes no sense to wait on zero DTs. Just take your profits.
Mm-hmm.
If you go to $40 wings, I think this next one are 50. Let's see. Go to the next one. 60. Sorry, they jumped all the way up. Mm-hmm. The only place you make money is basically you have a 90% win rate on $60 wings, which is like a short straddle, and you make the most amount of money. Just take it and run.
Yep. Yeah, it's a no-brainer.
This is clear as day, this study. Clear as day. Take your freaking profits. Take them quick and just move on. That's all this trade is. It's a quick win in the morning.
Yep.
Let's go to the next slide. So when we break down some of the takeaways, our zero DT data set continues to grow. And thanks to your suggestions, we continue to find more opportunities in these fast-paced markets. Overall, our research was encouraging for zero DT traders who wanted to put in a bit of capital for their short iron flies. Wider wings mean better credits and better win percentages. However, with excessively wide wings, the profits become less reliable. In terms of mechanics, $20 and $30 wings seem to benefit from slightly more patience, while the best performance comes from 35 and 30% profit targets rather than $10 wide wings with 20% profit targets. Our research once again highlights the importance of managing early, and given the speed of zero DTE trades, that can mean getting out of trades very quickly indeed. I love the 10% number, max 15, get out, move on.
Hey, you went through that quick, but you validated yourself with the data, Saznoff. I 100% agree with you. I'm going to take a quick 90-second break and come back. I got more Tasty Live after this. Saznoff, what comes up next? That's right, your friend of mine from the Scott Sheridan Studios, because that's the name of them. We'll be back in 90 seconds with the man, Mr. Scott Sheridan, Tasty Trade World Headquarters.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
I did let off fireworks. I should have brought a video. I honestly have never paid attention to the amount of powder in there. And they say it. So like those are like 200 grams of powder, right? And so I got a 500 one this year. So it's usually me and my youngest Austin. We literally, it's like this. It's like, nah, dead serious. Like I don't mess around.
Tom and I normally park on the same level in the parking garage. And so when I go to get out of my car, I have all my stuff, and I see big signs on the door, elevator, out of service. I was like, that's not gonna be good for Tom.
I looked at it for like 5 minutes.
And he was like, blink, blink, blink.
I'm like, this has to be a mistake.
So Bat, what he's doing now is he's asking people around the office if they will go get his car for him because he can't walk up the 4 flights of stairs.
I see you looking at my hair. You're like, you keep looking above my head.
Who can't? You've got the beard, and I mean, are you like showering with Rogaine or something? What's going on? You're like going full Sasquatch.
I don't understand.
I have not been able to spend the time.
Sasquatch.
The sassy guy. Yeah, look at him. He's proud to wear it.
I was trapped once on the air and water show.
Oh.
I was trapped on a boat, like a big giant yacht for an air and water show.
These are not actual problems.
Yeah, it was. We were 200 yards off of the North Avenue beach, and I could have, technically, if I could swim, I could have made it in.
Okay, but you can't swim. We've already discussed this. You have negative buoyancy.
I went to America's Cup race here. It was the trial.
Look at you with all these rich guy activities. America's Cup.
No. Remember they had the trial for it?
I am black.
I went to that on a boat, and I was trapped out on Lake Michigan. They won't let you back into shore until like after those races are over. So you're out there for like 12 freaking hours. You run out of food. You run out of everything. You're hot as hell.
Your thong is starting to chafe.
Yes.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live. That's right, with your friend of mine, the very popular, hey, he even has a studio named after him. That's right, Mr. Scott Sheridan from the Scott Sheridan Studios. Take it away.
Golf clap. Did you guys do a...
Sorry, guys, that was my fault.
Did you guys talk about a golf clap? Are you participating in an open pool?
No. Open pool?
We didn't get invited.
What's open pool?
Well, you can't call it the British Open because they get offended because it's just the Open.
Oh.
Like you can say the U.S. Open, but if you want to refer to this tournament, it is the Open, and it is just understood. It's like saying you're from the city.
Like the Netflix.
Well, it's like saying you're from this city. It's understood that's Manhattan.
Got it.
So it's the Open. I am not playing. But I did see the Shark. Did you guys watch the video? I thought it was a good video from Scotty Scheffler. It's interesting.
Yeah.
He was really laying.
Guys weren't listen, I agree with everything he said.
No, he was laying it out there. He's like, look. Oh, you don't believe it? Like, want to
No,
spend
I
time with
believe
kids?
it. I believe the emotions are true. I believe everything like that. I believe every athlete who's reached that kind of pinnacle in life has reached that thing, always looking for something else of it. He's worth $100 million. Very easy for him to say everything he said. He had $20 in his pocket, and he was giving it to his kids so he could walk around with nothing. I don't know if he'd be saying that.
Okay. I'm going to refer to a scene, one of the great scenes of all time, although, again, the movie didn't hold up. Al Pacino sitting in the bathtub in Scarface. And he said, "Is this it?
Is it what?
Is this it?" Like, he's sitting there going, "Is this it? Like, is this what I've just done? Everything I've worn? Like, I thought it was going to be better." Anyway, I thought
say that every day.
Right after he sees me.
All right, well, fair enough. Okay, now, dinner last night.
Okay, dinner last night.
All right, excellent. You're going to have a problem.
Uh-oh. What's my problem?
Because they preset the menu already.
No.
You can't order
No,
all
you
those.
can order. And the duck was outstanding. Don't try to compare it to Sun Wat. Totally different.
Yeah.
It's totally different.
Wait a minute. Where are you guys going? What are you talking about?
I went to Alston.
Oh, I thought we were...
Did you have just duck?
No, we had 2 steaks. We have a seafood tower. We had 2 steaks. We had duck, some
You took advantage of the bitch program.
We did. It was good. Because the 6 was there, and the 6 gets whatever she wants. He loves the 6. So it was great. Here's going to be your problem.
Okay, what's my problem?
It's fancy.
Oh.
It's fancy.
You can't wear your Crocs.
Not a fancy whore.
Right.
Yeah.
And it's more of like, you got to be with your woman, not with Tooch. Okay? So, I mean, you might get
Tooch can adapt.
Oh, he can?
Hey, Tooch can adapt. I've gone to lunch with Tooch. He adapts. We went to Emma. Emma. Yeah. He adapted. He played bitch role very well.
You can put heels on?
Okay, hold on. So
yeah, he played Gumata like nobody's business.
You mean I can't wear my...
Can't wear your Crocs.
It's not a you don't need a jacket. It's not fancy. I mean, I went like, you go like this.
Fine.
Yeah, I go like this. It's fine. I mean, I wouldn't wear the Bad Coffee t-shirt, but it's fancy. Like, it's nice. It's a nice touch. They come over. They don't just bring you a basket of bread. They come over and they got the fresh, warm loaves, and they got a guy with a device, and he cranks it.
Who's been warming it for you
and he cuts,
as he walks up to you?
Goes through and he cuts the bread for you and puts it on, puts it night. It's fancy. Okay, so I'm giving.
How was the duck?
Great.
How was the duck?
The duck was great.
Great. Was it
But
the
not
best
as
thing?
good as Sun Wat?
Was it the best?
Different.
Was it the best thing you ate?
Well, the steaks were really good. We did an American ribeye, and then we did A5 Japanese Wagyu strip. I mean,
Oh, you had to say American ribeye because then you went over to Japan.
well, because they
You're going
have
to be disappointed at EJ's this weekend.
Right, they have American Wagyu also.
They
but
only
then
have- 'cause
Japanese
they only
American Wagyu. We
I
did
know.
A5,
Vinny's taught me.
right? You got to go A5. If you're going to do it, yeah, it might be disappointing. I think I got to go sausage and peppers and chicken. And I won't be disappointed.
You will not be disappointed.
Right, I think that's what I'm getting. I'm not getting a steak because I'm going to have steak tonight along with Dover salt.
Is it which is better, that place or Joe's?
You can't compare them. It's just different. This place, Alston's better than Joe's. You're going to like it better. I mean, in the room. So
it's
did
like
you
six
like
of
did
one,
here,
half dozen of another?
They're just different. Like Joe's to me, it's one of the worst rooms, period. But it's
Yeah, I hate
good
that.
food. The room sucks, but it's good food.
Joe's room sucks?
Yes.
Because it's just too big and
No, it's just there's nothing to it.
Is that place crowded or are they going to make
It's
it?
white
I
tablecloth.
don't know. It's only been open 6 weeks, but I will tell you, the bar looks like it's spectacular. I went through the bar to go to the bathroom. Beautiful. It's dark. It's
Oh, the
beautiful.
check was coming?
Exactly. I want to go back and have a burger. I want to sit in the bar and have a burger.
It's going to cost because I got to buy this time.
It's expensive.
Oh yeah, I know.
Yeah, I'll give you.
When are we going?
Dude, he bought Dave's hot chicken. You got to buy it.
Yeah, I got to buy this time.
Did the duck have feet? Was it duck with feet like Sazerac?
So what they do? It's interesting.
Did they take I like the feet off.
The legs, so it's because it's a little weird when they present it. When they bring the duck out to press it,
yeah,
it's just they cut so they've taken the legs off already. So I don't know where those are. Those are getting prepared in the back.
It's a dark meat.
The dark is great. That's my favorite.
All duck is dark meat.
All duck is dark meat. But the leg, but the confit. To me, I like the leg over the breast.
Whatever.
I like the breast.
Okay, they
Fancy
slice the
SOBs.
breast beautifully. But what they do is the guy cuts it. Then they take the carcass and then they press it. And that's how they get the au jus. Then they go back to the kitchen because the duck breast is not cooked fully through. Somehow they finish cooking it really quickly.
Well, when I was in Europe and I had duck at the peninsula. Oh, I didn't tell you guys that story.
Anyway, you're going to be very happy.
Can I eat a steak with that?
Yes, for sure. I mean, you'll each have a duck leg, some duck
Can I
breast.
eat a steak with
You'll
that?
share. I would share a steak.
Drag your foot the next
you
day.
share a steak. Oh yeah, it's Gout Central.
Gout Central.
Gout Central. It's pretty rum. Did you think Tradita was a pretty rum?
Yeah, but it's not my kind of place.
This will not be. It's too fancy for you. You will not like this rum.
Yeah, I'm not a fancy.
Right. I know you're not.
I know you're a man of the people.
Correct. Like, did he tell you where you went to lunch, by the way, the other day? I don't really want to call him out, but
He went to lunch the other day? Yeah, he went to lunch the other day.
I told him I went to lunch.
He told me
did he tell you where?
Gene and Giorgetti's.
Yeah, for lunch. This is what he does now.
I was across the street.
Whatever. You tell me that's your story.
He was with the wife.
Right. So
I gave him a pass. I didn't bust his balls.
She's
for lunch.
She's difficult to get food for.
It's a. What does she eat?
Oh, she had to pay for a nooner. It was one nooner that she didn't do when she was in Milan.
Or a salad.
Oh, by the way, we ordered the Dover sole last night. It was horrible. Don't get the Dover sole there. We're having it tonight.
I wouldn't get the Dover sole.
Anywhere.
Did you really order the Dover sole?
Yes.
You have to be a booby to order Dover
I
sole.
forgot to tell you. We had the Dover. It was terrible. It was. I would have sent it back, but I just don't send back food. But it was terrible.
I wouldn't order.
Oh, the six wasn't with you?
Oh, she was there. I don't think she
sent it back.
But I don't think she. Actually, I got to think about it. I don't think she ate it because she had a lot of the seafood there.
More importantly,
Yes,
Saturday we get to dine together
at your spot.
at my spot.
Could you confirm? You want to come? I would rather lie down in the middle of the road and get run over by some random car than go to dinner with you guys, your wives, Slappy and Butchie.
Yes.
That's it. Sad enough you can leave. We don't need you anymore.
That is a fair answer.
Right?
Yes, I do not want to go.
Did I say that correctly?
Yes.
Actually, verbatim. I mean, you nailed it.
I'm okay. You guys have a good time.
You're unbelievable.
Unbelievable. It's closing for 3 weeks.
I'm okay.
You won't get to go for 3 weeks.
I'm okay.
You want me to bring it to go?
No,
I'll drop it off.
plans. I'm busy. I'm very busy.
You have nothing to do.
Nothing.
Zero.
I'm very
Zero.
You have nothing to do.
I'm very busy, Seth.
You have nothing to do.
Cleaning out
You
your-
did everything you had to do that afternoon when you went to Gene and Giorgetti's.
Cleaning out your freezer, cleaning out your closet. What are you doing?
You're done. You know you're done.
No, actually, we're going for duck, I think.
Are you?
Le Bouchon.
Oh, duck for two. Wait a minute. You're having duck for 2 for 1?
I know. Don't ask.
And then you're going Tuesday?
Who wanted to go there?
I'm not going with Tuesday with her. I'm going with
The wife wanted to go there, right? Did
Yeah.
you say? Yeah, right. So he's going with the wife.
And then I got to go with the Gumata.
You want me to have the boys change
I gotta
their
go with
plans?
the
We can
Gumata.
meet you there. You can buy dinner for
I got to
us
go
if
with
you
the.
want.
No, thank God it's too small for you losers. You need a big table. They don't have one.
That's fair. I think we're going to get rain out on Saturday, by the way.
What?
Yeah, 75% chance
I
of
think
rain
we're
all
gonna
day
rain
on
out.
Saturday.
They
I
said-
don't want to get rained out.
I don't care what you want. Mother Nature does not care.
Mother Nature doesn't care. You
not
care what he
care.
wants. Oh, it went down to 70%.
No, I heard on the news this morning, like,
It went down to 70%. I'm looking right at it. It was 75%. It went down
Sorry.
to 70%. What time you going?
10 o'clock.
Oh, yeah, you're screwed.
Looks good. No, it looks. I don't.
You don't even know how to find the Weather Channel in there.
Well, I don't know how to find Saturday, but right now, it only shows thunderstorms and 70% chance.
Right. There's a brutal storm right now, I guess, in Louisiana that's coming up here.
Oh, that could hit here Sunday.
All right. We'll see what we can do. Have Chucky call the pro shop, see if he can push the rain off.
I got an umbrella.
Umbrella. You're a mutter.
I'm not a mutter anymore.
You're not?
If it's raining, I'm going in. I'm not a mutter.
Cold, like some of the days that we played in the cold rain, and
I once played golf with Chuck. I was me, Chuck. I don't remember. I don't know if you were there. It was snowing.
Snowing. I was there.
Oh, and I
think it was at Shelley.
No.
Yeah, Shelley B's.
It was
somewhere
I
up
draw
north.
the line at having
It was up.
It was at Midlothian.
Play golf.
Oh no, I did it once.
Freezing cold. It was Midlothian. It was freezing cold.
It's nothing worse.
Nothing
It was
worse.
sleeting. Our clubs had snow on them.
Yeah. There's just no reason to do that.
We once played at Dubs Dread. It was a torrential downpour, and I was drenched. I mean, it was like a wet T-shirt contest. It was horrible.
Which we don't want to see.
Yeah.
No.
Hopefully you do not have photos of that.
Yeah.
No. I was with Jules. I didn't want to see him either. There was nobody in the foursome, I can guarantee you. Seeing a wet T-shirt.
Yeah, no. All right. Let me pull up my list. We ready?
I think we are. I mean, if you say we're ready.
Oh no. Hey guys, can you throw my list up?
You can't find it?
I have it, but normally it's on the screen, but we're not. I got it. I'll just do it off of this.
Stand by.
Standing by.
Standing. You're too late. All right. Top 20 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Time for you. Number 20. OKLO. At 28. For everybody else, UAL at a 20. NVIDIA at a 3. Tesla at a 13. PEP at a -8. TSM at a 5. AMD at a 31. PLTR at a 38. UNH at a 54. LCID at a 69, Hood at a 32, Oracle at a 29, MU at a 17, RKLB at a 47, Coin at a 35, ACHR at a 47, Meta at a 30, Circle at an 8, Microsoft at a 24, ETHA at a 72, and number 20 for Tom, OKLO at a 28.
So I don't know what do you have to say about that.
UNH is ugly.
UNH was down around $8. Is it still down around $8? It's only down around 3. UNH isn't as ugly as it's been. So I've traded down to 283. It's 288 and change.
It's still ugly. It's a pretty decent sized down move because it got up to like 320.
You are correct. You are correct.
Of course I'm correct. All I do is watch the markets. What do you think? My first time, my first rodeo.
So obnoxious.
All day.
Can't we go to La Bouchon with you so you can pay for us, please?
All the La Bouchon. No, they don't have big tables in La Bouchon.
No, I know. No, I know.
You don't want to go with them.
I can go to a separate table. I don't have to sit with him.
Yeah,
As
sure.
long as he's
Just
paying
send them the bill.
personally. We can put like 3, 4 in a row.
Yeah, just send them the bill.
Try.
What's your go-to at EJ's?
Oh, he's
public. Here it comes. He's public.
I'm not public.
Let Tom say. Here we go. What's he gonna order?
The best thing on the menu, in my opinion, there's 2 great things on the menu.
Yeah.
One is the pork chops with the peppers, and the other is the
I like it.
The veal chop with the peppers.
I
love it. Chicken and sausage and peppers.
The chicken and sausage is great.
Amazing.
It's amazing. But you know what? I eat all the sausage, and I don't have room left for all the chicken. But that's
why you got to get a sausage appetizer for
no,
the table. And the animals eat some with
Don't get the sausage appetizer because you're going to get you can't get the chicken without the sausage. And then
Yeah, you can. The sausage doesn't make the chicken any better.
It does. You got it.
He doesn't know what he's talking
No,
about.
it does.
You get a sausage
Please
appetizer.
don't listen to him. He's
I
Italian.
was going there since you were pooping yellow.
He
You
has
get a
no idea.
you get a sausage appetizer
Please
for the table. Sausage and peppers.
You can do a sausage appetizer for the table if you go with a steak.
Yes.
Oh, you do
Yeah,
get that.
steak, but I'm
Except you're going with your 2 boys, your little.
Yeah, what do they do?
Butcher
But I think I might want to do the prime rib because you said it's great.
Prime rib is great. It's the size of the plate.
But here's what they do. Every appetizer, they're predictable. They order the lollipop lamb chops.
Yeah, they do that. They did that the last time.
They do it every time.
Which are excellent.
They're good. They're okay. They're good.
They're excellent. It's my wife's go-to. She likes the lamb chop.
If Tom doesn't get to order them, they're okay. If he ordered them, they're
It's the sausage appetizer.
Yeah.
Okay, sausage and peppers. Everything. You can throw in.
Get it on the
6
chicken. If you're going to get the prime rib, then you get the sausage.
Do we get?
You can get
share?
6
Do we
baked
share?
clams if you want to.
Do we
too.
share a salad?
Yeah, sure.
They give you one.
They give you salad.
Comes with it.
Nice.
Yeah.
It's old school steakhouse.
Yeah, but you got to get the crumpled blue cheese on there. He doesn't
Nice.
like blue cheese.
I like blue
You gotta get with the vinaigrette.
Also, with their prime rib, they do have good horseradish sauce.
They have great horseradish. Not good. It's great.
Do you guys?
But what
work?
time? If you're not going at 5:30 or 6, you're not going to get it.
What time's dinner?
7.
Oof. Better call ahead.
Tell them to hold a piece.
If then they're going to hold the bottom for you, then you can't eat it.
No, don't worry about it. Then you can go with the veal chop, which is standing. Or if you want to go a little bit Italian, you get a little pounded something veal chop. Saw it.
Or if you get there at 7.
Also the size of the plate.
Let me tell you the other problem. You get there at 7.
And the chicken with peppers, you can't sleep on that.
But if you get there at 7,
Yeah.
they put you in the back room.
No, Tony said he doesn't sit in the
I haven't made any calls yet. I don't want to step on a boy's.
I'll tell you right now.
I didn't do this because I didn't organize this. I don't want to.
I paid the guy off last time I was in the back room because of Steve and Butchie.
Because he saw who you were with.
Saw who I was with. Like but who depends who gets there first.
Right.
You guys get there first with your wives, you got a chance of a good table. You go with Butchie and Butchie's always early.
Is he?
Always. So you go Butchie and Steve.
Got to get there 10 minutes early.
It doesn't matter. Butchie will be there before you.
Oof.
And then you're dead because then you're in the back room.
Mm-hmm.
That's where they put the tourists.
Yeah.
That's where they put the tourists. Then it's a different experience.
Different kitchen, right?
Like being upstairs at Gina and George's where Tony eats.
You can't do that.
With Tony?
You can't. No, upstairs. I did that once.
You know what? Sasha and Chandler were going into the Gene and Georgetti's when Gene and Georgetti's was Gene and Georgetti's, not when you go for lunch with the wife. She would go into the with the cooks, and they would put whipped cream in their hands for them. They knew everybody in there. Their grandfather had been going there for 50 freaking years every Tuesday for 50 years.
It's like a pup cup for kids.
Like a pup cup for kids. They would take the waiters, would take them into the back. They would treat them like royalty. Okay, so I walk in there on the arm of the wife. Forget about what I get.
Why would they put the whipped cream in their hands?
Because the kids want, like, for dessert, they want, they take them into the back. They take them to the kitchen. They give them a little, like, pup cup. It was just fun for them. Come on.
You got a little animated there.
I know, because I can't stand him. He says I'm upstairs. Nobody puts me upstairs. Nobody.
It's actually, there's no way it's to code to sit up there. No way.
Can't.
No.
Can't.
No. That place goes up in flames. There's no way you're getting out from up there.
Oh, that staircase? I've only seen it from the bathroom.
Tourists.
Tourists. Like you.
No. They know. I walk in and they go, oh, yeah, this guy won't go upstairs.
That's because...
Are we done here? Because, we got Liz and Jenny. They got a special guest. You know who he is, Sosnoff?
No, I don't.
Oh.
Glenn.
Who?
Who? You say who?
I didn't hear
Glenn.
Oh, nice.
Don't you ever put Glenn upstairs like that.
I didn't hear who you said.
Oh,
Glenn sits upstairs for sure. 100% chance.
Well, he's going to learn from Liz and Jenny. Liz and Jenny don't go upstairs.
No, they sit downstairs.
They sit downstairs.
No, there was
Glenn.
There was a Curb Your Enthusiasm on that. Did you ever see the one? You never saw the one where Larry David goes to the restaurant. He wants to sit on the left side where all the good-looking people are. And they put him on the other side, and he can't get it. He's like, I want to sit over there. Like, oh no, this is the table we have reserved for you. It's great. Have you seen that one? Oh my God, it's great.
I don't think so.
It's great.
Yes, upstairs in the Italian Village is great. Saz doesn't know about that because he doesn't.
Who's telling you that? Frankie?
Yeah, upstairs at the.
When was the last time you were in the Italian? It's gonna be 20 years since I was in there.
Oh yeah, maybe more.
Hey.
Since I left 08.
You tell Frankie.
07, 06, 07.
Tell Frankie, the only people they put upstairs at the Italian Village was traders because they couldn't stand listening.
Correct.
No, you sit at the bar.
Correct.
You sit at the bar. You don't know what you're talking about.
That place stinks too.
Oh my God.
Oh my God. You bad. Sosnoff, I'm going to take a little 90-second break. Stay tuned. Even the S&P's up 14. Well, till the end by 10 cents. You had it right again, Sosnoff. We'll be back in 90 seconds. Take two.
How does Daddy do it?
Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
No.
My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11?
Oh.
First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
It's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast. Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on tastylive with all the data and all the value I thought that would bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from tastylive to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Tasty Trade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, everybody. Welcome to the Liz and Jenny Show. Today is a Red Shirt Thursday, and it's red hot because we have Glenn Freiberger with us today. Welcome, Glenn.
Didn't we call it the Glenny Show? The Glenny and Gliz Show?
Yeah, Gliz and Glenny Show.
I think we need some Eagles music. And Glenn, you might want to think of changing your name to Glenn Fry. Just cut off the burger.
It's definitely more commercial. Yeah, I agree. There's probably a trademark involved. I know, I was so mad this morning. I have no nice red work shirts. You think I can get that expensed?
Yeah, we'll get one for you. We'll get one for you.
Okay, awesome.
You can 100% expense that, and there will be some gifted as well. So it's gonna hit you twofold.
I freaked out.
You may wish you didn't ask for that, because we've gotten some red shirts for TP. I don't know if you saw him last week in his flaming shirt.
No way.
We might have to find something.
We are not responsible for Flame Shirt Friday. That is his own. That is his own purchase. We did not purchase that.
That's
well,
awesome.
we might have to find something like that for Glenn.
I would wear it with pride. I have a red Tony Batista, the portrait Cheers shirt, but he could only find me a small, and so I thought that would be a little inappropriate and uncomfortable.
Yeah, it is definitely inappropriate. I'm gonna try to find mine. So, are you referring to this shirt?
I actually am. Yeah, that's Merlot.
I have all the tasty paraphernalia around me. If you ever saw my office here, Glenn, it is a shrine. It is an homage, if you will, to everything tasty.
That's
you
awesome.
asked me if I could probably produce anything you need to within 30 seconds.
Well,
anything sparkling and tasty.
Some things that she maybe shouldn't show, because there are a couple things we took from the office without asking.
We did. We did steal the drum cover.
Well deserved. I don't think anyone would be mad at you.
I think I remember I gave it to Liz for her birthday. I think I remember when I walked out with it. Slowly snuck out the door with the drum cover.
Slowly out the door. So, Glenn, what is going on in the world of somebody who's super cool? Oh, by the way, can we You are not on next week.
Not on next week. I'm shipping off to Amsterdam tomorrow.
I know. I didn't know if we could say. I didn't know if you were private and people didn't want to know your undisclosed location.
That's
but
okay.
that's so
if you
exciting.
can
What are you
find me
doing?
in Amsterdam, that's pretty impressive. And go for it. I'll say hello. But yeah, we've got a boys' trip to Amsterdam. Watch out.
So boys trip, is it college friends, high school friends, grade school friends?
College friends. That actually, I saw most of them recently for the 4th of July, but it'll be a lot of fun where there's like a one-day music festival, which was the impetus for the trip. And we're just staying a whole week around it. One of my friends grew up there. And so.
In
knows his way-
Amsterdam?
Yeah. Knows his way around.
Wow.
His family still has a place. A free place to crash is enough to get me there.
That's the nice thing about going to school like Northwestern. When you go to on a trip with your college friends, most of them, they probably all have good jobs, and you can go to places like Amsterdam. Liz, I don't know if you recall our trips when we were Glenn's age.
Are you referring to Shotgun Eddies? Because that's what you're talking about.
Believe me, no, this is, I'll be taking home lunches for dinner from this office for the rest of the year, I think, after this excursion. No liquidity left. Europe
Hey, you
will
can't
take
take
it
it
all.
with you when you go. That's what I always say.
Yeah, you're only young ones. Do this now while you can. Once you have, like, if you ever have like a family, it's harder to get away with your friends and go to Amsterdam.
Yeah.
I know, but I always tell people too. I mean, this doesn't go to you because you're not going to buy the shoes, eat the cake, take the trip. Do it.
Yes, ma'am, will do. I was talking to Jamal outside complaining about how much money I'm going to spend. And he was like, dude, you have no kids. Don't even worry about it. You have no dependents. But you guys are shipping off to Europe later this year, right?
Yes, we are.
There you go.
We're going to Germany in September. We're very excited about it.
Big time.
Yes, very excited. We'll be speaking at the RMC, the Risk Management Conference, and it's sponsored by the SIBO. So we're going to have a great time, and it's going to kick off Oktoberfest. Liz has been practicing holding beer steins. We're getting ready for it.
It's true. Now, Glenn, I know we've told you this before, but Jenny and I did both work at a German beer garden. Jenny and I have known each other since we were about 15. Just a little FYI.
That's
I don't know
awesome.
if you know that, Glenn. So, but we both worked one summer in between college at a German beer garden. So we wore the dirndls and could
way.
each carry steins. Yes. This is part of our past. There's actual live footage of us in dirndls and carrying beer steins
That's
while
fantastic.
they play German music. Yes, true story.
I actually wish there was live footage. I don't think there was because this was in the 90s. This was back in the 90s when there weren't cell phones. So
Well, I say, and forgive me, Glenn, I apologize. I know you're young and you grew up with cell phones. I say I wouldn't have a job if there was anybody recording anything that I did back in that time. I would be relatively unemployable.
I mean, if I can think back to what the footage would look like, we would be in like jean overalls or flannel pants and sweatshirts doing keg stands. That's what the footage would be.
That's all time. But yeah, you got to start the forearm workouts now for those.
Oh yeah,
those
we're
steins.
working on grip strength as we speak. I'm down here working on it.
She's got that little what is that called?
Yeah, the little.
I don't know what that means.
Yeah, we have. There's so many different. I think I have a couple versions of like grip strength toys, very popular in this office for people on the phones,
Oh yeah.
especially.
Well, I think they call them stress balls
Oh,
in
yeah.
in that office. All right. So what's
Glenn,
doing that? Yeah, go ahead, Jen.
But what's going on in the world of FX? Why don't we go to Tasty FX and take a look at what we have going on?
Yeah, we've got turned out to be a pretty interesting week. Summer volatility tends to be a little bit lower. We're still we've got a Fed meeting at the end of the month, so people waiting for that. But we had some nice midweek volatility in the dollar, especially on the world's fastest taco trade yesterday. The Trump Powell spat. I don't know if you caught that around 10, 11 a.m. yesterday.
It was during our show. It happened during our show, Glenn.
Yeah.
And I mean, it was a massive reversal in the markets. What happened in the FX markets during that whole thing? Because honestly, I wasn't looking at the FX markets, right, Jenny?
Right. No, we were watching the screws.
Same thing. So if you just go to the trade tab here, you're looking at euro dollar already. Head over to Yeah, the trade tab.
Up and to your left. Yep.
And then on the chart, you're looking at daily. If you hit daily, let's go down to even all the way down to 15 minutes, because an hourly chart doesn't even get you what we're looking at. There you have it.
Oh, wow.
A gigantic run up of nearly a whole percent, a whole 100 pips, taking this market from 116 to 117 in the span of about 30 minutes. And it was interesting because, they were like on the financial Twitter sphere or X sphere, there were some reports like Trump saying he's going to fire Powell to congressmen, not taken seriously until a White House official report came in saying Trump likely to fire Powell soon, in quotes. And the dollar market, as I know the bond market as well, took this very seriously, priced all of that in. And then when Trump got online and said, no, none of that, and not going to fire him unless there's fraud, whatever he said specifically, took about half of that back. So if you were quick in these dollar markets and had the bias of the taco, Trump always chickens out, as is popular now, then you got some good movement. And then we look all the way to Thursday morning, which was of interest to me because, we didn't pare back all of the losses from the U.S. dollar. And so I was very curious how Europe
this would
would.
be Thursday morning right here, right?
Yeah.
Is this
yeah.
Thursday? That's where it's
exactly.
okay.
So consolidated there above 116. Wasn't sure how Europe would take any of this news. Could see it both ways where, they still take this threat as, not, you don't want to be in dollar markets while this threat is at all possible. But they stepped in, took this market back down to where we started before the whole debacle. And so now, markets, as the stock market did as well, not really pricing in any more of this, kind of back and forth riff. But it did make for an interesting trading day yesterday.
So Glenn, go ahead. I was just going to go to our positions because we have one of these in. No, we do not have USD.
No, we don't. I was going to ask just to simplify it for people who are watching or clarify for people watching. So we've got Euro USD. So that spike up meant US dollar was getting much weaker compared to the Euro. That spike up. Exactly.
So yeah, we saw a sharp move in dollar weakness across the board. So in a pair like Euro USD, that would mean to the upside, the euro dollar exchange rate moving higher.
So anyone who had a position on thinking the dollar would get stronger eventually, and if they had a stop loss on, they were probably stopped out on their stop loss.
Exactly. And the magnitude of the move was enough so that it wouldn't be ridiculous to put a stop loss a whole percentage point away. So yeah, I'm sure people got closed out there, but a very short-term move. But at the same time, if he hadn't pulled that back, we'd be, categorically in a different place perhaps, because the further backdrop is now U.S. dollar is starting to get some legs behind it. We saw extreme weakness when I first started on this show, new highs in euro dollar markets and European currencies across the board. Now we're starting to churn back a little bit. Mike and Nick are a little less upset with me with all of their red positions. They're very dollar bullish. And so if this little blip in the storyline is just a blip, then we still have some positive momentum for the dollar. Decent economic data this week in terms of inflation from the consumer side and the producer side. So if you think this isn't a threat at all, then there's still some dollar momentum in the market.
Well, so Glenn, I've got two questions for you. But I know I've heard literally on this network both sides. There are people that are dollar bulls and there are people that are dollar bears, literally on this network.
Yeah.
And I like that. I like seeing, because you can take both sides. And to be honest with you, if you can take both sides, and everybody could have been a winner if you would have had some stop losses or not stop losses, or your profit points in, like you taught us last week, which I think is kind of fascinating. So they can't get mad at you because they could take the opposite side. But my next question to you, Glenn, and I don't expect you to know all the answers to these because this is just random questions. How correlated is this to the market? Because what Jenny and I watched is we didn't really know what was happening. We're live on air at the SIBO, and we were talking about a market measures piece, and then she goes, wow, the SPOOs are now down. I mean, they went from up 20 to down 30 in the blink of an eye, which is exactly what this chart did. How correlated is that? How correlated is the dollar in the market? So the dollar got extremely weak all of a sudden, which, right, in that big pop up, and the market dropped. And then we saw that same thing where at the end of the day, everything came back and it was relatively unchanged, very similar to this chart.
Yeah, you're absolutely right. That's a great question. Pulling up correlations I ran not too long ago, we have a euro dollar on a 3-month rolling basis correlation to the S&P of 0.1%. So very uncorrelated traditionally. Okay. But this is one of those storylines where it is U.S. centric. It's not equity specific. It's in the realm of interest rates, the central bank,
more bond
which
specific,
which is much more correlated to currency moves. So and the equity market interpreted it as a significant risk as well. And so I would say for an event like that, it was way more traditional that the dollar market and the bond market reacted, and a bit more of a surprise that the equity market took it as seriously as it did.
Okay, and so how correlated are they how correlated is the US dollar or the euro dollar to the bond market?
Very correlated. So in terms of, it's an interesting exercise, one that we've run several times on Forex Focus, but looking at, the theoretical side of this is that, dollar denominated assets and the corresponding interest rates will drive a lot of US dollar demand, either to the upside or the downside. So in theory, very correlated. The moves we've seen in the US bond market specifically over the past few months has been less, supply demand, and more, overall risk, budgetary risk, things like that. So a couple more pieces playing out than traditionally in where there are less headlines. But what we do see is consistently the most correlated over the past couple years, most correlated pair to the bond market is US dollar Japanese yen for a variety of reasons, one of which being that Japan is
this one, right?
Yep, absolutely. So that one typically is the one we see most correlated to US rates because first, Japan is one of the largest foreign holders of US debt. So it kind of makes sense there. And then also you have the kind of carry trade interest rate differential dynamic in that US rates very elevated right now, Japanese rates near zero still and have been for a long time. And so this is a market where people who are looking to capitalize from that interest rate differential are very involved in this market already and are highly sensitive to factors that could change that, when we're looking forward and trying to forecast where interest rates will be.
So, can you switch the 15-minute chart to a longer-term chart?
Sure. What would you like?
What do you think, Glenn?
Yeah, let's go daily, and then so we're on a pretty strong up move here. But if you scroll out a little bit, or go,
There you go.
So if you see that big drop off last year, I don't know if you'll remember.
This one?
Yeah, there it was more of a widespread headline. This dollar yen carry trade unwind.
I remember.
Yeah, and so that's an example of, you had a ton of people that were long this market because if you're long US dollars and financing it with Japanese yen, you're getting the interest rate here in the US for holding that, and you're financing it with a near zero rate. And so you're able to passively get, in theory, get that positive credit for holding this position overnight. And the price also moved favorably in the long direction. Once that started to unwind on some Bank of Japan news, I forget what it was specifically, maybe a rate hike, maybe, a currency intervention. They're prone to just step in and try and regulate this themselves. And once those started happening, you start to see the nature of, leveraged positions starting to get auto liquidated, people that, were already profitable, just starting to close their positions. So triggered a lot more selling and kind of a snowball effect there last year. So there are definitely some nuanced players and characteristics of this market, but this is typically what I would look to when I see something interesting in the bond or interest rate sector.
Okay, so Glenn, what does your FX portfolio look like?
That's a great question, because I was gonna say, Glenn, we're new at this. I don't expect to, start killing it right when we are just getting started, but we're down since we've started trading FX. We need to make our money back. What do you think is the best pair going right now?
Yeah, I don't know how much specifically I can say, but I do think
the best opportunity in your eyes. The best opportunity in your eyes, or what you would, if you had nothing, what would you get into right now?
Yeah, so a few markets are interesting. We're looking at your positions right now. You actually don't have a lot of. You have dollar exposure in this kind of more exotic pair of against the shekel. But what you could do if you're trying to build this portfolio is get more US dollar exposure in a more major pair. And if you're thinking about it in terms of a longer term position trade, because a lot of these people want to get in and out very quickly. But if it's something where you're looking for more, something to tack on for more of a positions trade, I would look at the dollar Swiss franc market, which is dollar CHF. A couple interesting characteristics about this right now is this one, it's margined at 3%, I believe. And you're getting, if you look at that swap ask, this is one where you're getting, like that Japanese yen, right now you're getting a carry trade. So if you're long dollar in this market, you're also getting positive credit overnight for holding that position. And unlike the dollar yen, you're at historic lows for the US dollar. So in terms of all the factors playing into this, yes, you want the positive carry, but if you're in a dollar yen market, you're historically, we've been much lower in that market very recently. And so the price movement would go against you much greater than any of that kind of passive income you're getting from that credit. Whereas here, if you're looking just at charts, we've spent recently, 2 weeks under this 0.8 level. Prior to that, we hadn't been there since 2011. And so if you're looking for historic extremes, this is definitely a market that's interesting. And you're getting, for long dollar, you're getting that.
I do want to interject for 1 second because I just saw something on the chat, which I think is interesting. They said we trapped you into this question. We did not. Like, if I ever press this button, I will never blame Glenn. I know that the boys blame you, but no matter what happens in this process, Glenn, if I'm learning and I'm pressing the button, that's on me.
Glenn, we never blame anyone for losses. We never blame anyone.
You guys are very kind.
But even if it doesn't move, we'll still be making money because the swap ask is at 0.83. And how do one translate that into how much money are they making a day for holding this position?
Yeah, so that's quoted in pips. And so depending on your position size, it's the same as your dollars per pip movement. And so if you have a trade where your position size is $1 per pip, then looking at this would be 83 cents, right?
So this is one lot equals 10 CHF per pip.
Right.
That's your lot size right here, right?
Exactly.
And I asked you this before, but how is CHF Swiss franc? I think we talked about this before.
The question I get asked a lot. It's like the Latin name for the Swiss Confederacy or something. And so every pair would be 2 letters for the region or country, and then 1 for the currency. So the F for franc, but the CH less clear.
Okay, gotcha. So if I wanted to profit if this chart goes up, so say I think it's going from 0.80 to 0.84, I'm going to hit the buy button, correct?
Correct. And that.
So I'm going to hit the buy button. I'm not going to press enter. Then what do I do here? Size. How do I size this up? I'm going to put a 1 lot in. What size should I do here?
I would.
Well, hit the minus, right? Hit the minus to start.
Hit the minus, and that will start populating. Now you're looking for this. That would be your margin requirement.
Got it.
Yep. So you would know how you want to scale up or down. That's the minimum size.
Okay. So let's see this. This is This is good. $329, right?
And this would move.
We have.
Yeah, 1.1 Swiss franc per pip. So at the exchange rate, that's a little less than $1 per pip. And
so we only have $587 available. So maybe you want to cut that down to 0.05, only because we don't want to get a margin call. Exactly. We don't want to have all of our capital at use and get a margin call from Glenn.
Okay, so 0.05. So then we've got 0.05 per pip. And this is $150. And then I want to put a closing order in. So I'm going to place this trade, okay?
Mm-hmm.
So I'm going to press enter, and then we're going to put that closing order in. So do I press enter or place trade? Which is the best way?
Place trade.
Okay.
Ding.
And we're filled. Wonderful. Okay. Now let's put a closing order when it gets to here.
Okay. So you're going to, easiest way to do that. Click on this, right? Yep.
And then I drag it up. Whoops.
So drag from where it says take profit. Yeah.
To here.
That's aggressive. That's aggressive.
Well, be aggressive. I mean, we could take it down a little bit, but I feel like that's a good area. How about we'll split the difference, like right there, right in the meat of that.
Sure.
Okay.
And then how do we know how much we'll make between the one spot and the next?
Yeah, so it tells you, since this is quoted in Swiss francs, obviously all your P&L will be calculated by the platform. But here, the clearest way to do it without doing too much math is it gives you what your profit will be in the quote currency. So this would get you, what does that say, 116 Swiss francs. And so then you just do the calculation of the exchange rate at that time, which wouldn't be 0.8, it would be 0.82. And then that'll give you your US dollar. So it'd be what, a little less than 100?
And where do you see the 0.82?
Just the price level.
Yeah, right here.
That's the funny part about
this purple, right?
Yeah, so that's an interesting nuance to this market is, the price you're speculating on is directly, the price your currency is converted at. So not only, since our accounts are dollar denominated, not only would, this, you'd profit from this position, but you'd also, in theory, profit from the exchange rate going more favorable to the US dollar.
Glenn, I like this platform so much. I mean, I love that little drag and drop take profits.
It's so cool.
It is. It's super cool.
It is nice. And now it's all getting
Jenny's asking for the calculation. I'm about to put it up here. I think it's going up back up there.
No, but I'm glad having you on every week. This is all getting easier. And now we know. So you see, we'll make 116 Swiss franc times 0.82, or 0.828 or 8, then that converts it to the dollars for us. We're figuring this out, Liz.
Yeah,
I know. And you know what's crazy is it's very hard for me, and I understand why people want that stop loss button. I could drag down and put a stop loss in too, but very similar to what we saw yesterday in that euro dollar US. I don't want a stop loss in.
No, that's why we don't like stop losses. Yesterday we would have been stopped out and then it came right back.
Yeah.
Yeah, true.
I agree. And then there's also the flip example of, you guys got into that US dollar Israeli shekel play because it was, topical and you were looking for a bounce back from, the outbreak of war in the Middle East. A stop loss there, maybe if even though that would have realized losses for you, it ended up kind of drifting against you. And so now you're still in it. There's less kind of hype around it. Can it still come back? Absolutely. It can get back to historic price levels. You layered into it as well. But something like a stop loss there could have, then at least you can redeploy that capital for something more topical.
And quite frankly, Glenn, I mean, let's be honest. I just like being able to, when I'm at a cocktail party, tell people I'm in the shekel trade.
That's true. What dollar value can you put on that? Say, please give me 1 minute. I have to check in on my shekels.
Do you trade the shekel? If you don't trade the shekel, you're missing out because it was topical. That's kind of how I'm thinking about it.
Did you purposely use, quite frankly, as we're trading the Swiss franc, Liz?
I did.
God, you're good.
All right, Glenn, thank you so much. I think that's all our small brains can absorb for one afternoon. But we're going to take a break. We're going to try to do this by ourselves on next Thursday because you are going to be gallivanting around Amsterdam. Or actually, TP and I are going to do this by ourselves next Thursday.
All right.
But we can't wait to have you back because I think we're learning a lot from these sessions.
Fantastic.
Yeah, Glenn, have such a wonderful trip. Have a great time. And we'll see you in a couple weeks.
All right.
We'll see you in a couple weeks. Keep yourself out of trouble. Don't do anything we wouldn't do. And we'll see you in 2 weeks.
Absolutely.
Goodbye, Glenn. Thank you.
Thanks.
All right, Liz, should we jump into our positions? I know we did an earnings trade in UAll, which UAll was down to 86 after hours. I was watching it. And this morning, now look, it's up to 70, up to 91.
I know. I saw that. We have a Jade Lizard in, which is great. This is working out perfectly according to plan. It is not through it. We can make an extra $27. I'm closing this.
I would close it. Why not? Take our $70 on an overnight earnings trade.
Yep, he going. Let me see if anything else hits it. This is all we have today.
That was that using $2,000? Did we get $2,000?
Yeah, it was using a lot of money because it had a naked put in there.
And then JP Morgan was the other one that we had sold.
I don't think we got filled.
Oh.
What did JP Morgan do?
Well, let's see. I don't know. Up $1.75. So that would have won. But we didn't get filled. We didn't get filled in that. There were a couple trades yesterday.
Was that a calendar we were trying to do?
No, it was an Iron Condor.
Okay, then yeah, we did not get filled in. That would have been fine. There are a couple trades we're trying to do. Archer has been going up and up and up each day, which is fantastic. So we have to make the decision. We're at 58.4%, right? So what are you going to do?
At what point do we start rolling out one more weekend? We're rolling out to September.
Well, it's not bad. So it's kind of interesting because take a look at this. You've got 29 days. It is through earnings. So there's going to be quite a bit of premium in there. We still have $1 left. So I know that we have 50%. I get it. I'm well aware. But there's still, if I were to open this up,
$1. I would just leave it.
If I were to open this up, I might start with this. I would either start with that or I would pull it up to the 13.5. And I think there's 6 of one, half dozen of another. So I'm going to close this.
Did you listen to the boys this morning? Did you watch trades from the research team?
I did not.
So someone brought in Archer. And Tom and Tony said they'd never traded it before.
What? Well, no, that's okay. Because Archer's I'm saying it's our baby. It's not, granted, 33 million shares have traded today, and it's just a stock that my husband loves.
Right. So I guess
So Archer and the other one I bet they've never heard of is Joby. This is its competitor because my husband loves aviation and pilots, and these are both the vertical aviation technology.
And Joby got that deal. And it's, when we were looking at both, Joby was around 6. Joby's up to 17. So
yeah.
At first, I had split my position, half Joby, half Archer. And then at one point in time, I said, I'm just going all in on Archer.
But it's the same. Well, I guess it goes to 17. But this one at one point was 6 too, and it's 6 to 13. Now, Joby is 6 to 17. So they're.
Right. I think Joby got that deal with in Dubai at their airport. I don't know.
What they did. But both are vertical lift technologies. So we'll keep an eye on that Archer. What the heck? BBAI 2 weeks ago, Jenny Andrews. BBAI, we have a put spread that's up 43%. I'm closing this.
BBAI up to $8. Well, it's up $1 today. But it was here maybe a week ago or so. If you open up the chart in BBAI, that's one of those. BBAI came from
Here to here. Yeah.
Yeah. BBAI came from our friend Ben the Rat. And
so every time you say BBAI, I think BZAI.
You think of BZA. Yeah, that one's.
But what is that? Why is that? That was the new IPO. It was an IPO.
BZAI was like an AI. It was like an AI SPAC or IPO or something. But BBAI, one of our friends' husbands told me, "Oh, get in." My friends are all getting into BBAI, so I got in and brought it on the show. We sold a put spread in here. I don't mind selling another put spread.
I hope our friend is not watching because you just called her husband a rat.
Oh, Ben the Rat. I don't know why he got that nickname, Ben the Rat.
Like, oh no.
He doesn't watch.
The other thing I want to show you is your the Campbell soup 3 days ago, 30%.
Yeah.
But it's still, this is one of those where I still think I'd leave it.
Yeah, I'd put in just a GTC for 50%.
Yeah.
Right, I'd put that GTC in for 50%. As far as BBAI, was that August that we got out of, or was that a weekly?
It was August.
Yeah.
Get rid of our closed positions. And then as far as like management goes, I don't see much of anything else. I know we should look at the negatives as well, even though I don't want to. So Rocket Lab has been topical. No, this looks bad because we left the put spread that's going to expire.
No, it looks bad because we have a short call spread, 33.40. And
yeah, but it just, I mean, it's kind of wonky in the fact that like you've got something. When I opened it up, I was like, it looks bad because it looks like we have a 1 day option we're ignoring. We can't ignore it. You know what I mean? We don't need that.
And Lunar's up 67 cents today. What do we have in that?
Just shares.
Just 100 shares. I don't know. Rivian up $1 today. Yeah, we're getting a little bit of movement in some things, but I don't see
anything. That's a synthetic covered call, and we're just barely where we were when we put it on.
Yeah.
It's got 1 day left.
Roll that out. But again, it's not a synthetic. It's barely a synthetic covered call. It's just, there it is. We're getting 33 cents.
Well, when you take a look at this, you're either going to sell the 15 or the 16 if you're long in the stock.
Yeah, right. In the 1 day, we had nothing left in the 16. It's just like being long stock, but I would roll that out and maybe add on the 12.
Well, here, let me show you something real quick with Rivian. I'm just pushing all those out. Everything's been pushed out to the follow page. So I think we wait. Well, you could add the 12 now. I was going to say, just because earnings are on deck, we could do it the eve of earnings, but we might as well do it now.
I mean, we could wait with it up $1. We could wait. Doesn't matter.
Yeah, if it comes back down, we can add it. That is it, I think, for management. Our TLT is going in the right direction. I'm not going to manage this. I just wanted to open it because we put it on 2 days ago with the 83.85 Zebra. It's trading, 85.34, and we're up $21. That's trading. That's doing exactly what we thought it would do.
Now, I wonder with a Zebra, do you ever put in GTCs? Because if we would have had a the bonds have been moving, they've been moving, and we're only in this account, during our show. Would you ever put in a GTC to take $100 out of that?
It's so funny because that's what I was going to do. Close position. Can you do?
You just have to go to full. So we paid like $4 for it.
I know. I was going to say, it doesn't give you the percentage of profit because it's a debit.
No, you can't. But you have to just put it in, like sell it for $5. If we paid $4, sell it for $5. And
what we paid for it. TLT. We paid $4.12. So I'm going to put it in for $5.12.
So yeah, if you sell it for $5.12 and then toggle the time in force to GTC. And then it's in there. If bonds have a move, then we can get hit on this. I kind of think this isn't a Zebra that we just want to leave forever.
Yeah. No, we don't. We do not. No, we're looking for a quick pop in bonds, and that's just and the Zebra is just replicating stock. So and it's way less expensive for us to use the Zebra than it is to either buy the stock or do they. I know the boys did a bunch of synthetics yesterday, and I think they were doing the combo over the stock, and a combo is going to replicate stock as well. Sorry to go down this like weird rabbit hole. So if you sell a put and buy a call, that's a combo that will replicate stock as well. But that's going to use, and you'll have 1-for-1 to the upside, and you also have 1-for-1 to the downside because it's this naked put, and that's going to use $1,800. The Zebra used about $412 is what we said, and you have 1-for-1 potential to the upside with a $400 defined risk downside.
So, do you remember? Can you go to the SPY chart?
I would be honored.
Speaking of the way things are moving, this week, have we been up every day this week?
No.
Yeah. No. Okay. So, we had the recap, the option drive recap on Monday that we got from Kai, and it looks at the, previous weeks, and it talked about what percent the market has been up. What was it, like 23% in the last so many days?
Yeah, because you're watching this up move, then this up move. There's this little down move in there though, but.
And so I was trying to see, like, were we up this week? Are we up? Are we adding to that percent of how much we've been up since?
This seems pretty congested.
Yeah, it doesn't really look like it just doesn't look like we've moved much.
Yeah. Yeah. So, okay. Now there's a lot of earnings today, Jenny. So I'm actually going to hop into Twitter if that's okay. And we'll start, I was going to refresh. I'm going to start with Punished Pixels because I love it. Good morning, ladies. Thanks for the 0DTE Ironfly research that I had requested. It was fantastic. Please pass on my thanks to Jacob too. Looking good to do a $20 to $30 wide wings for a quick 10% profit target. I love it.
Yeah. All right. We'll let him know. So Jacob is great. I remember that we posted that tweet. I just forwarded it to Jacob on Teams, and he came out with the study.
Yeah, he's great. He's wonderful, and he's very. He's very clear of the concept. I know that sounds crazy, but he's very clear of the concept, which I love. I love communicating with him because you can ask him this question. He's like, oh yeah, sure. No problem. Do you know what I mean?
Well, but he loves getting ideas from viewers or having requests because he does an SPX study every week, and he's been doing it for over a year. SPX
he does the SPX 0DTE study every week. So it's like,
yeah. How many can he keep coming up with? So
I still think a lot. I think we've barely scratched the surface in those 0DTE SPX options.
They are fun.
They are fun.
Did you place one today? I didn't do it today. Today's Thursday.
I did. I did mine exactly at 9 o'clock. I'm following the rules. Let me see where mine is. I did mine exactly at 9 o'clock. I've got the 62. Here, I'll go back to it. 62.85 SPX was my short strike. And we're 62.90. I'm up $20. I'm not doing anything right now. I'm just sitting on it. I've got my GTC in.
I didn't do it today because I had that one study in my head that was like Thursdays are the days that most off more than any other day. Thursdays were the days that I didn't work out.
So, and I did it yesterday too when we were on the train exactly at 9 o'clock. And yesterday with the wild markets, I mean, honestly, that was luck that it came back. But as I was walking to the train to meet Jenny, I got the ding saying that I got out of it. So, it was a wild ride yesterday. We'll see. I obviously need a little bit of a pullback. Not really though, because I closed at $8.
Are up 30. I'm kind of surprised that we just keep chugging along.
I know. It's been a crazy market, but here we go. Okay, so this is, I think today the biggest thing is going to be earnings on deck. Take a look at this. Netflix, 3M, Slob, Charles Schwab, American Express, and Ally Financial.
Of these, I kind of want to look at. Well, I don't know. I don't even know if I'm going to play Netflix personally. It's just so expensive. But I'll probably play 3M.
I just want to take a walk down memory lane just for fun, because it was your son's birthday. On your son's birthday, which is what? January
21st?
21st. This must have been this day. Yeah, January 21st. Do you remember this? I met you for your son's 21st birthday. It's so funny that I'll remember trades. I couldn't remember the date. I couldn't remember the date of when it was, but I was there for your son's 21st birthday, and I met you at the casino.
And we all met at like 2. We met at like 2 o'clock, 2 p.m. Yes. So we had an hour until the close. And during the birthday party, Liz was watching Netflix earnings.
Yes, during the casino birthday party. I couldn't even concentrate on the casino because I did the upside diagonal and it went up and I was like, cha-ching.
She bought everyone an extra round of drinks.
Yeah, I did. But so that's what I'm saying. Like, that's a walk down memory lane. This is the date of your son's 21st birthday.
And now I can picture you sitting at the slot machine on your phone watching Netflix earnings come out. I can see it.
But back then, I mean, not that it was that long ago, Netflix was at $9.50. Now it's at $12.50.
I know. So it's tough. I don't think I'm going to play Netflix.
Is this a risk for, is this
splitting?
A risk of splitting?
I mean, I would think at $12.50, why wouldn't they want to split? 10 for one split, and then it'd be $125.
And
that
I
would
know,
make sense.
shame on you, Jenny. I remember the trade that I made. I'm sure Netflix has split a bunch of times, right?
You do. You know, we're the worst at this. We're the worst at this. I don't remember. So don't ask me.
I know. I shouldn't have done that to you. I'm sorry if I trapped you in that question. But yeah, I don't remember either. But it does look like a split candidate to me. And I don't know why, just because it's so frothy. And, you know, you get a lot more players when you split it. If they split it 10 for 1, this would be $120 stock.
I know, but Tony was talking about how, you know, he played like the split game in Costco. Let's take a look at Costco, COST. And I don't know if I don't know.
It didn't split.
Yeah, it didn't split. Maybe he was going long it because they thought, or there were rumors that they thought it would split and it didn't, and it's gone down ever since, hasn't worked out. So people getting long thinking that they're going to split doesn't mean that they are going to split. People are just assuming that maybe they would at this price level. And I think people thought that about Costco and it didn't split.
Yeah, I mean that got up to just about 1,000. That's a good. That's a good split. That's a good split price, right? You get up to 1,000, bring it back down to 100.
Yeah. Or it. I mean, did anyone announce a split?
I don't think so.
I'm looking it up.
I'm not putting the trade in, Jenny, at all. I just want to see how much the diagonal is. So the diagonal is going to the expected move for the cycle. I'm going to bring it in a little bit. I'm going to go to. Actually, you know what? I'm going to go to where there's volume. So the 1340, because that's the expected move for the cycle. And then it's $3,000. But it's $3,000 to make, what is it, 1260, 1290, to make 5,000, right? How far away is that?
Oh, let's see.
360. Yeah. That's $80 wide because you've got
$80 wide. So yeah. $4,700.
Yeah. So you'd pay $3,000 to make $5,000. Now, if Netflix goes down, you're out it.
You're out $3,000.
Yeah. Especially when you've got the 8-day in there.
Right. Yeah.
So Netflix, I think most people are going to have to be defining the risk. That's way too much of a risk. But so,
if I had to guess, they're making more money because they're really cracking down on people sharing accounts. I am constantly getting kicked out of my Netflix because too many devices are on one account.
How does that? Okay, and I know we can take this offline, but somebody can tell me this too. How does that work when somebody goes to college? Are they just all logged on to the same password?
So Logan will log into our Netflix. Yeah, so log into our Netflix, but because we have the house in up in Michigan City, and we have this house, and we have him at college. We're constantly getting kicked off. And when I will go to watch Netflix, or my daughter will try to watch Netflix, and it'll say you can't be on too many devices. There are too many devices on your account.
Oh, because you'll be in 3 different locations. Because here we can have it on. Like I can watch Netflix, they can watch Netflix, but we're in the same location.
I don't know if it's location or devices, but it happens to us all the time where one of us can't pull up Netflix. I'll go up to the lake this weekend and I'll go to log in to Netflix and I probably won't be able to log in because there's too many devices logged in.
Gotcha.
Yeah.
Okay.
So I know, I mean, this is more recent that this keeps happening to us. So I think they're really cracking down on people who maybe used to share accounts with like grandparents.
I would be very curious because, like I said, this was years ago, and I know they weren't cracking down because my mom's been gone for 2 years, but she was on our Netflix account, and we never had any issues with that. And like 5 of us could be on.
It never mattered before, but now it does. Like now we never had a problem before. Logan would be at school. My mother-in-law would be up in Michigan City watching it. Everyone would be using it, but now we have an issue with it.
Okay. So we shall see. But that being said, I can't imagine them going down. Why don't you sell a put spread?
Do we want to sell a put
But
spread?
90 cents, I don't want to risk $400 because it's a $1,200 stock and it's got it just under $80 expected move. That seems kind of low. What is that, 5%?
$78? Yeah. How high can you bring it up and collect like $2 where we're getting $2 risking $3?
Let's play that game.
Or
then it goes to 250 wide.
Oh, they moved to 250 wide. Okay, why don't we collect $1.50 on a put spread? Why don't we get $1.50 on a put spread and then sell a 250 wide call spread where we're getting 50 cents? So
okay, here's $1.50. Wait, here's $1.47. It's the 1200.
Okay, yeah, that's fine. 1200, 1205, and then go to the upside and see if we can do a 250 wide call spread.
That's not bad.
Yeah,
that's not bad.
We only have 50 cents in risk to the upside, and we have $300 in risk to the downside.
That's not bad. Okay. I'm gonna ship this. Then we're in Netflix, and we're filled.
All right, let me push that out to the follow page.
Yeah, everything I've been doing has been pushed out pretty quickly. Now I'm going to go back to Twitter just to kind of take a look at this. So 3M, Slob, Charles Schwab, AXP, and Ally. We'll come back to this. I want to make sure we get to everybody because there has been some tweets coming in. Oh, look. Well, Fabio, thank you. CHF is Confederation Helvetic Franc in French. Thank you.
In French, Confederation Helvetic Franc. Thank you.
And Frank Walsh, can you explain why a zebra should be used? If I'm not understanding where extrinsic value would be used. We'll give you a brief. Okay. So just
there's a video. There's a very in-depth, detailed video on the zebra.
Oh, you know what? Let me see if I can pull it up. Can I?
That would be much clearer. Watching the zebra video.
So that's going to be in Liz and Jetty Strategy Series right here. So if you go to shows, education, Liz and Jetty Strategy Series, then you can come right down here and take a look at where is it?
There it is, zero extrinsic value.
Right in here. And it explains what it means to wash extrinsic value. So Jenny, I'm glad you did that. But so if you want to, I think it's a 3 or 4 minute video. It's not very long. So that's pretty easy to use. But I just want to, I'm going to give a brief rundown. I'm just going to go to you all real quick. Just because I think they're dollar wide strikes. Yeah, they have 250 wide strikes.
That's fine. It doesn't matter. You can probably.
I'm trying to think of something else. EWZ. Because they have dollar wide strikes. Okay, you've got dollar wide strikes. I'm going to the 29 day. So this is going to be quick. So I apologize about that. But here, buying EWZ is going to be $1,381 if you're in a margin account, or $2,700 if you're in an IRA to control 100 shares of stock. If you go out and buy a call, you're controlling 100 shares of stock, but your extrinsic value is you're paying $43. So this has to move $43 for you just not to lose money. So what we did is, how do we get that, defined risk?
That's at expiration. That's at expiration.
And how do we get that defined risk without paying the extrinsic value? So you buy 150 delta, sell 270 delta. It's this one.
No, you buy 2, sell 1.
Sorry. I'm selling 1, buying 2. And you're paying 167 and 169, and you can see it picks up right where this is. So that's what we're doing. Is all we're trying to do is we created an option, overlay or synthetic stock position where you're defined risk to 169, but you have unlimited profit potential. Unlimited profit potential to the upside.
So it's like, just to keep it really simple, you're basically putting on a trade that's giving you 90 deltas. When you buy 270 deltas, sell 150 delta, you're getting 90 deltas. But at expiration, if this is all in the money, it's equivalent to 100 shares of stock, and it has 0 theta. So normally, if you buy a call, you've got negative theta. The zebra gives you that long call, but no negative theta. And I know it says like negative dollar theta, but the way the zebra is set up, it has, you don't have theta working against you because you're washing extrinsic value.
Yeah. So that's a great question. Thank you very much. I appreciate that. And I'm glad we brought up that video too, so we can go back to it. I'm going to go back to Twitter. And then MKSA, is there a difference in accessing TastyFX via TastyTrade and DirectFX? I'm not going to lie to you. I have no idea.
That's a question for Glenn next time he comes on.
Yeah. Or you can, I'm sure you can email him. Yeah.
TastyFX, Glenn at TastyFX. I don't know. It might be Glenn.Freiberger. I think it is. His email.
And then what is
you
this?
can always send it to support, and support will get it to him.
Yeah, you can send it to support, or you can ask support too. And then haven't been here since 2021. I'll be debt free by 1st of November. We'll start trading again. Okay, great. In the meantime, I use AI to help me with dumbing things down. Question: on the 16th, AI suggested a bull put spread in shop. Sell the 65 put, buy the 60 put. So the 60-65 put spread. I would risk 425 to make 75. What risk to make ratio is liked or disliked by each of you? You're risking too much to make too little in my opinion.
Yeah, right. We typically look to get a third of the width of the spread.
Yeah.
So we would bring that put spread up and collect more, just so you have less risk.
Yeah. So you've got a $5 wide you're only collecting 75 cents on, and we do like to collect a little bit more. And then today it suggested NVIDIA bull call debit spread. So buying a debit spread, buy the 160, sell the 170, risking. So this is different because they're actually not wrapping around the at the monies, because you're risking 700 to make 300. So they're actually bringing it a little bit out of the money.
If we do a call debit spread, we're usually paying half the width. So if it's a $10 wide, we pay $5 to make $5. It's usually 50-50. Usually we are more likely to do a debit spread when vol is lower. So the thought behind that is risk less, risk one to make one. And as far as the credit spreads, we do those when vol is higher, where we risk 2/3 to make a third.
I kind of like. I mean, it's kind of fun that he's using AI though.
Yeah, it's interesting. Anyway, welcome back.
I know, welcome back.
And good for you. Good for you. Debt free by November 1st. Congrats.
And then, so this is great too. MKSA, what is the profit target on FX trades? I'm not gonna lie to you. I'm just winging it. I'm literally pulling that bar and putting it wherever we want to.
We picked this point on the chart, right? So it wasn't like we picked a dollar amount. We picked a point on the chart, and then the point on the chart we picked, we're like, okay, well then we can make 116 francs converted to the dollar. Maybe we'll walk away with about $90.
Yep. Well, we didn't know that. Frank told us that, so just keep it.
Yeah, right. But now we know. Now we know how to figure it out.
Yeah, true. Okay, then Paul Smith, options trader, 0 DTE trade on SPX under an hour for a $400 winner. Woo! So
nice,
he's doing the closing is he's put spreads. Great.
Yeah.
Look at this. Sold it for $1, bought it back for 50 cents. You get the pop you're looking for. You're in, you're out. I like it.
Nice.
And then Punished Pixels. This is primarily a theta burn trade. Oh, this is the trade we were looking at yesterday. This is primarily a theta burn trade we trade on the calls sold with small positive delta to allow for positive drift, with the put spread providing a downside protection in case of a strong market correction. I'm playing around more on back testing to fine tune it. I love it.
Yeah, Punished Pixels. I get that. I get that. If it's a slow, like a theta burn trade, where if we're slowly drifting up, you're not going to have any issues with that upside diagonal. So that makes sense.
Yeah, that does make sense. Now we got to Bob's list. I know there's some under Bob. I want to make sure we got to everything.
And will you look at 3M? I did want to look at 3M.
Absolutely. I just want to make sure we got to everybody real quick, and then I'll go to 3M because what time is it? Yeah, it's 57.
Yeah.
Okay, so I'm going to heart all these so people can see them. I love Eric. He comes in with his tranches each day. And then we got to Frank the Great, and then we made it. So now we're going to look at 3M.
That was one other on the earnings list that up to 158. 158. Yeah. It's really had a run. Just take a look at the chart. It's had quite at 158. 158, I'll pass.
Yeah, I mean, because what were you gonna do? Try to sell puts?
I was gonna do a strangle. If it were in like a little lower, I would have do a strangle. But 158, 3M's really had quite a run. I'll wait.
Yeah. So would you, because it's had the run, would you do the Jade Lizard if you were gonna do a strangle?
No.
Not with the 250 wide strikes.
No. It was something, it's 3M, something I used to trade quite a bit. I was always selling puts in it, but now at this level, I'll just wait.
Yeah. Yeah. All right, Jenny, we are out of time for today. Thursday is done and dusted.
Have a wonderful day, Liz, and good luck to your daughter. I know you're super busy. Her plays on deck this weekend.
This is DEFCON 1. All right, everybody out there, good luck with their earnings trades, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
See you tomorrow, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. tastytrade. Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch tastylive because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part. Trade size varies between traders.
In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure. Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, Ms. Katie McGurgle in the house with me today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddies, Mike and Katie, the gang, baby.
Gang.
Good morning. Katie, how are you?
Gang, gang.
Gang, gang.
How was golf this weekend?
Very nice.
That was good. It was
very
fun.
Very fun.
Nice.
Yeah.
Southside action.
Who won?
Probably Kevin.
Yeah, Kevin, I think
Labs?
He shot an 88. Yeah.
Oh, all
We
the
were all
boys
in.
were out. Okay.
We were all in there. We were all
Okay.
in
Who was the
striking
who was the other 4? Or the 4th?
One of
Kevin's
Kevin's friend.
Oh, nice.
Marco.
I know him. Very
Nice-
nice.
nice young
It was
man.
good. It was great. Grand old time. Great weather. It wasn't that hot.
We're taking the youngins out tomorrow.
Oh.
Thomas and Gus.
Oh.
Yeah. Which
Little
Thomas
Twilight.
is the
Thomas Ferda.
Thomas
yeah.
Ferda, yeah.
Got it. Got it.
Little Twilight action.
Yeah, we're playing the role of Unk.
Cool,
what the
fun.
ki-
Funkles?
That's what the
Yeah,
kids
we're
call
trying to
the
be.
older, you know.
How do you do, fellow kids? That's the best.
That's what I'm doing.
That's
That's what I do every morning.
What are you gonna talk about? Like TikToks and
Yeah.
you know, Riz.
We're gonna talk about type
Skibidi
shit.
toilet
Type
stuff?
shit,
no,
you
we're gonna
know?
outdrive them on every hole.
Oh,
And
yeah.
then they're gonna be like, ooh, okay.
Yeah.
I see how this is.
I don't know. Gus looks like he can pack a punch with a swing
probably
with a
can.
golf
Gains
club.
by Gus.
Yeah.
Yeah,
But
we'll see.
if my driving is the same as it was
Yeah,
when we
Mike-
played,
Mike's
it
been
was
smashing some balls.
smash.
Yeah.
The smash factor was high.
Yeah.
I'm sure that has just breadcrumbed you throughout this entire summer season.
Yeah.
You doing ramen after?
Ooh.
Um,
Probably
Not the course.
Yeah.
Maybe we get a little Mexican food.
Ooh, okay.
That's usually the move after golf, you know.
Oh, it's not ramen anymore.
Well, that's the other side of town. That's
Ah,
north. This is south.
Got it. Fun.
Yeah, it'll be great.
Yeah.
Good stuff.
How are you, Miss Katie?
I'm doing good, man.
Yeah.
Kicking, you know, hanging, living life.
Okay.
Yeah. I'm looking in my display here right now, though, and it's funny because I was just trying to get ready for the show,
Uh-huh.
and I look on this screen, and I put on a ton of blush, but it does not translate on camera. So I feel like a Victorian child looking
You look amazing.
right
Katie.
now.
Always.
Thanks.
I think it looks great. I'm staring at their live feed right now. Yeah, there you go.
There you go.
I hear John laughing out there. You hear it? Ooh, we're gonna zoom.
Oh, please don't zoom. There's some stuff. The summer sweat is impacting the face, as it does everybody. The humidity yesterday was off the charts.
Brutal.
Yeah, it was terrible.
Brutal.
But
Yeah, I
this
was
morning was great.
I was a sweaty mess yesterday.
The walk to work this morning was fabulous.
I had the sweat marks, the backpack
Mm.
sweat marks.
Yeah.
Yeah, I get that. But no, otherwise I'm kicking. I'm doing good. We're going on the road in a couple weeks.
Yeah.
tastylive.com/events. Seattle. Here we come.
I think Tom and Tony is it next week? 2 weeks? Denver? I think.
Yeah,
Yeah,
25th, Friday.
Denver.
Next Friday.
Coming up next Friday for Tom and Tony at work by 11. Beautiful.
Yes.
And then August 10th, Sunday, 6 p.m., Seattle, at the Croc.
Yeah. Crocodile. Polish ambassador playing the show, I think the night before at that venue.
Sick.
I don't know who that is.
I think he does kind of like electronic-y music. music.
Okay.
Yeah.
All right.
Nice.
Yeah. I feel like I could be totally wrong here, but he might be in that same camp of like Caribou. Like,
I'm Unk.
yeah, you're Unk. Well,
I'm
this
just
is,
too
I mean, this
Unk.
guy's been around for a while, but either way, come to Seattle, tastylive.com/events.
Yes.
Me, Mike, and Nick, unfortunately, no Ryan.
Yes.
Ryan's on Baby Watch 2025.
Mm-hmm.
Close.
Getting close, but, you know, happy to pass along any crypto-related questions to him, but we'll be talking stocks, options, futures, in a portfolio, how you manage them, get social
All that
hours.
jazz.
There's drinks.
Yes.
If we don't sell you the drinks, the free drinks should sell ya.
Free drinks, usually some bites.
Yeah, light bites.
Great.
Yeah, it should be fun.
What else could you want?
Yeah,
I'm ready.
it'll be great. And then a couple more shows in the fall after that. We got Dallas and San Diego as well.
Hmm?
Big D and the Big SD.
Beautiful.
San Diego.
Yeah.
Ooh, we should go to a Padres game if there is one. That's what we should do.
Could be fun. We should just also
it's
go to
November. It'll be
the,
done.
what is it called? The Gas Lamp Quarter in San Diego or like Little Italy. There's some great restaurants I want to take you guys to. in San Diego.
Ooh, yeah, let's do it.
Easy.
Yeah.
Sign me up. I love eating.
Yeah.
Me too.
I feel like I'm scared though because I did such a good job in Miami. I don't know if everything or anything can ever like live up to that again.
Mhm.
That was an experience.
That was great.
Great.
Yeah, that was great.
But I mean, there's different vibes in different cities.
True.
So I think we start with a fresh slate everywhere we go. So
Very true.
I'm not comparing whatever we're doing in the future to that extravaganza.
Beautiful. Yeah. Anyways, what else is going on? I thought I heard you both whispering about some type of parlay or
Golf.
I thought
Yeah, I was asking. I was doing the meme, you know, of like the kid like sitting at his desk and the mom opening the door and it's like, "Are you winning yet, son?" That's what I was asking.
Oh.
The answer is no.
The answer is no.
Yeah, this is gonna be a bad week.
This is the
I tell you.
British Open.
This is the British Open.
Okay.
And it's gonna be someone like Harris English or Lucas Glover that wins, or some random name. It's not gonna be someone that I'm involved with.
Involved.
I can tell you that right
He's
now.
already calling it.
I'm calling it right
even
now.
though it's one round.
Day one.
Yeah, it's day one.
All right. Okay.
So we'll see.
Well, I hope your fortune reverses a little bit, or
Yes.
your predictions reverse.
However, we do have a banger of a UFC card on Saturday. Remember when we went out on
yeah.
that was honestly
elite.
It was an elite experience for you specifically.
I know.
You walked in there like, what's this thing? Is this like wrestling live? And then you saw literally the best UFC ever created.
Yeah, that was fun.
So there's another one this weekend that is a similarly stacked card.
Okay, where are we watching? We'll discuss after the show.
We should get David in here. We'll do the whole thing.
Yeah, New York City round 2.
Let's do it.
In Chi-Town. I love it. Fun times. Yeah, maybe you'll have to help me pick some stuff on my DraftKings account. It's been untouched since the Super Bowl.
Oh, so you got some tendies left.
Oh, I've got like $29 whole dollars in
Hell
there.
yeah.
Well, let's make it 58. How about that?
That's a
Oh,
couple
here we
free
go.
bets away from, a couple hundred.
Yeah. All right, cool. We're going to talk after this.
Sweet.
Nice.
Nick actually chatted me this morning like, oh, UAL. And I was like,
Yes.
I didn't get in UAL because I think I already had Southwest on and I didn't want to overexpose myself to airlines. But
You missed it.
regale me.
Yes.
Diagonal? Calendar?
I had a diagonal in there. I had a short put that I sold yesterday.
Ooh.
So
Double.
yeah,
Double doink.
Double bingo?
Double doink. I have something in my Johnny Trader account I have to deal with. Call ratio spread that's right at the money. So I've got to record that later today. So, but yeah, it was a good one. UAL,
Nice.
it's up $1 and change right now. It was as high as 94.57, so it sold off from the high, but inside move. So if you held through that or even into the actual earnings, it was inside. So probably a good trade for all the peeps of Tasty Nation.
Sure. We were bullish on that thing.
That thing.
That thing.
Yeah.
Yeah.
What about
was a
you?
good
Did
one.
you cover anything today?
Just the UAL call diagonal,
Okay.
and that's it. And then I threw on a new trade. which is
got
a
couple
secret.
Two new trades. I have a really degenerate one.
I like mine a lot too. I went spicy with
Mine is like I'm ready to ruin what has been a great year in my portfolio.
Ready to ruin
That's
it.
that's the sort of trade this is. But yeah, a couple good earnings trades. TSM had earnings this morning as well. I closed that one out. It's up $9 and change. Kind of played it up to this spot. Pepsi is up $9 and change as well. We call diagonal there, so
That's funny.
That was a good trade. I forget who gave me that, but so
Yeah.
took advantage of some of that move. But everything is up pretty.
Literally nothing is down unless it's UNH. That's the only thing that's down.
Yeah, UNH is down, unfortunately.
But they have earnings, and I think there's a candle that I'm seeing up to 400. So I think we'll see a 300-point rally after earnings. I can see it now.
Okay. I covered Google the other day. I think I followed one of you two into that last
Very
week.
nice.
I covered that on Tuesday.
Very nice.
What was that? Just a short put spread. I think that was actually a viewer suggestion, or was it one of your trade ideas? Doesn't matter.
We'll give it to the
covered it.
viewers.
Yeah. Sold the
great.
put spread for 258. Covered it for 153.
Nice.
Yeah, a little
Lovely.
hundo.
Like that. Oh, which one though? 160, or the 170, 160?
Correct.
That was mine.
That is correct.
I got that. That one. Very nice.
Very nice. Should we
Well,
get to some trade ideas?
Yeah. Let me give a quick little market update. E-minis up 30 at the moment, the high of the session here. Looked like they were going to go red for a skosh of a minute. It is by the dip season. NASDAQ up 180. You got the Dow up 190 and the Russell up 25. The Russell, the strongest of the group, on the back of a tiny little bit in bonds, up 7 ticks. Oil up 62 cents, 65.81. You got volatility futures stuck in the mud, at 1940. You have the VIX itself at 1679. No vol. Gold and silver both giving up a little bit, or I should say gold giving up a little bit of yesterday's rally. Down $16, silver up 14 cents, and then Bitcoin kind of chopping here in its new range around 118. It did get into the 122 handle at one point in session, so new highs overnight. ETH has been super strong, 3,400 here. Had a big candle today.
Huge.
Yeah.
Yeah, Bitcoin
buying them dips.
Trying very hard to catch up to Ethereum trying hard to catch up to Bitcoin.
Yes.
And we're seeing it in real time.
Yes.
Bitcoin's kind of stalled out the last 4 days where Ethereum has ripped higher. 3,400. Wow.
Yeah. Happens fast.
Yeah, weren't we just at 18 like 5 seconds ago?
We were. We were.
Should have loaded up more.
Yeah.
I only dabbled. I only threw a few shekels.
I think I got my friend Johnny into Ethereum over the weekend. He was in like Cardano or something, and I was like, just get out of that. Just dump it into Ethereum or Bitcoin. I think he chose Ethereum.
Very nice.
That's
happy man.
When your friends are thriving in the crypto space, that's when you know you're.
Wait until
Doing all right.
if it ever dips.
Right, that's what I was saying. Until they turn on you, and then Johnny's up your butt.
Yeah.
No, he's been long for a while. It was one of those, I was telling Nick, it was one of those where it's like, I haven't checked my crypto account recently, but I did today, and it's really nice. I'm like, yeah, I bet.
Oh, convenient.
Yeah.
Must be nice. It's great. Well, next time I see Johnny, I'll know he's buying the first round of drinks.
Nice.
There we
You
go.
will. All right. Should we pop over to the slides?
Let's pop over to the
Through some-
slides and pop your questions in the chat.
Yeah.
Love to see the chat chatting with each other,
Yes.
but we also need some cues to A.
Chat is popping off, as the kids say. But yes, Tasty Live YouTube
I don't
channel.
know if they say that now.
They don't.
That could
We
be
say
different.
That. That's us.
Yeah, that's us.
It's like when our parents said, like, what did they say? They said,
groovy.
Yeah, like groovy, or there's something else that I'm thinking of.
Tubular, radical.
Ooh, those are
That's like more like 90s, late 80s, early 90s words.
My dad always said wicked, but that's a Boston thing.
That's totally a Boston thing.
Wicked smart.
Yeah, we can
Speak
Matt.
it's Matt.
Steffi's on Southie. There's something else. I'll let it come to me.
Tubular. It's like a word that means like neato.
Yeah.
Okay.
Yeah. I'll think about it.
Okay. Drop your
I'll tweet
drop
it
your
out. I'll
guesses
just tweet
in
out the
chat.
word with no context later when I find it.
Splendid.
Brain. Yeah, splendid.
Divine.
Divine.
Oh, divine. All right. What are we trading today, fellas?
Well, Ned's Flicks has earnings after the close today. And if you haven't seen a chart of Ned, it is a mooning.
Did we see the Stranger Things final season trailer?
I
that
did. It
just
looks
came
really
out?
good.
I didn't.
So jazzed.
Looks great. So if there's one reason to pump Netflix. Another one is, speaking of UFC, there's been rumblings that Netflix might get the next UFC contract because they're expiring with ESPN.
Ooh.
Which would be massive because ESPN, you need ESPN Plus to watch anything, which gets rid of a lot of people unless you're sharing accounts and whatnot. But yeah, Netflix diving into the live sporting space, taking over. It's gone from sub 1,000 to 1,250. I think we're due for a split here, probably pretty soon. But it's had such a big run up. I think maybe we see a little inside chop. When you're dealing with a $1,200 product, it's very hard to do anything in there that's not narrow defined risk. So I actually went to August monthly cycle and I sold the 1315, 1325 call spread and the 1150, 1140 put spread. So this is just inside the expected move on the upside and right at the expected move on the downside. Covers about 100 points in either direction, 70 points to the upside, 100 points to the downside. And this is 29 days out. So even if this gets destroyed or blown out for earnings today, as long as it passes through this range, it'll be okay in a couple weeks. So chicken iron condor setup here, I collected 524 on this. The risk is 476. So the probability of profit is slightly under 50% because I'm collecting slightly more than half the width here. But all things considered, I think this is a solid setup. If you think that at some point in the next 30 days, Netflix will fly through 1150 to 1311 or 1315, not 1311. So yeah, this risk graph we're looking at, I pushed it to tomorrow and I crushed August implied volatility by 10 percentage points. So that would bring it down from 40% to 30%. And if that happens and you get an inside move, maybe it's a $100 winner. But if you're looking for more, you will certainly have to hold this for a couple weeks.
I'll bite. I got filled at 527.
The way you were phrasing it, I was expecting an upside play.
Yeah. It's just hard. It's like, what are you going to do? Sell a put spread?
Yeah.
I mean, yeah.
It's really the only thing you can do.
Yeah.
It's a,
It's a behemoth.
expensive. Yeah.
But yeah, let's see what happens here. And really the nice thing about this trade is that because it's in August, if Netflix goes to like
1,400 or
yeah, 1350 or like 1100,
this trade doesn't move.
It'll be a scratch or a small loser. Yeah. Because I'm collecting half the width and it's going to trade for about half the width.
Yes.
So
very nice. I like it.
Also, really, really like the trade alert that comes in on the live stream now.
Very cool.
I've-
Shout out to the design team, to the production team, to
Master Control.
Master Blaster.
Great reference. I know exactly.
Tom
what
and
you're
Tony used that with Thomas the other day.
Did they?
Yeah.
Did they know that video?
From what, Master Blaster?
Uh-huh.
Thomas probably had no idea.
Yeah.
But of course, Tom and Tony know Master Blaster.
Okay, we'll have to compare.
Master Blaster, I'm talking about from Thunderdome.
Oh, I'm thinking of a different one.
Road Warrior.
I'll share with you the one I'm thinking of after this. Yeah, it's like a deep cut, like early YouTube feeling type meme.
Ooh, I like that.
Situation. Yeah, that makes sense though.
Classic Mel Gibson.
Classic. All right, Netflix. I'm in.
Ned's Flicks. We're in.
Cool. I like it. This is one, as I said before, I'm ready to just vaporize what has been just a fantastic year.
A good run.
A good run. You know, like this is the, you know, the true, you know, why put it out there?
Yeah.
Why
This is your final
even do this
salute.
to yourself? You know, that sort of thing. So if you haven't seen this stock along with many, many others, it's all about the crypto treasury companies. That's the new hot topic. The new blockchain, the new AI. It's crypto treasury. And so this is one of those stocks. SBET. I've had emails about it, chats about it. Everybody wants something, so I'm laying some big time risk on. This stock obviously has
the chart
meme ability to it.
It's already memed.
It's been memed. It might meme again. Who knows? It's a risky trade. It's a silly, silly trade for me. But I'm doing it.
Sometimes
it's
you need
on.
an engagement play.
Yeah, sometimes you just like, you know, if this thing goes nuts, the pain you will be able to see on my eye
Palpable.
will be content gold.
Yeah.
And so
It'll make you feel alive.
yes.
Sometimes that's all you're looking for. Is
Yeah.
some kind of feeling.
That feeling, feel alive. So I'm doing it. So I'm doing a crab trade here. I mean, the strike selection is obviously limited because the stock has like 3x'd in like a week. I'm doing the 30 in September, and I'm selling 2 of the 55 calls in August. So the 30 is actually in the money. The stock was at like 35 when I did this trade. It is currently at, it's right around that. If you look at the in the money calls, I mean, they all trade for basically the same amount. And so I wanted to go in there and do this. Just giggling about this, where the debit was like basically zero. You could go to like the 35 strike and do this at basically a zero cost. You still have a naked option on the upside, so you have a lot of risk. But really, you're playing for vol on the tails to contract. There's tons and tons of call skew here. You're selling about $1,000 worth of extrinsic value in the August expiration. What you need to happen here is a couple days, maybe a week or two of sideways move / down, volatility to contract, and ideally your value is going to come from that long option holding value, holding more than $2 of extrinsic value. I would be looking to get somewhere around a couple $100 in profit. That's like my exit here. Of course, you do have unlimited risk, lots of risk to the upside, but your break even is roughly, because you have a 25-point wide long spread, so you have a buffer up to like 70, 75-ish. That's like your break even on the upside, but lots of risk. Buying power can expand here, so if something crazy happens, expect the capital required to hold the position to expand. And so if that's a problem, overall, it's probably a stay away trade. But like I said, you know, we're trying to spice things up. I'm trying to spice up my life.
Yeah.
Feel alive.
Yeah.
And so this is my feel alive trade.
Your SBET summer.
My SBET summer.
Forget Brat summer. It's SBET summer now.
SBET summer.
Yeah.
All right. Compelling.
Yes.
Probably not gonna dabble with you.
That's
Maybe
because
it will
you are
find a different
smart.
way to participate, though.
That is because you are smart and I'm degenerate.
It's interesting, though. I do think there is a lot of, Gus has been asking all those questions, market mics on Tasty Live's social, if you haven't seen them. And, I think a recent one he did was like, which space or sector or thing, a market topic right now, do you feel is like overhyped? And I know there was like a couple of name drops of like the AI thing. But I think, this is an interesting space as well, right? The crypto treasury.
I think it's
Treasuries on the Ethereum blockchain, whatever.
Getting a little frothy.
Yeah, but who knows? Maybe it's the future.
Ooh.
Far out, man.
Far out.
I did do an ETH trade for the cherry pick, so
there you go.
I'm messing with that too.
Okay.
Yeah.
Very nice. Was that what it was?
I think it was bizarre. That's
bizarre.
That's bizarre.
I thought it was gonna be like a cool or like a neat, like not those words obviously, but
yeah,
that's bizarre.
That's bizarre.
Interesting.
Certainly a term that's not thrown around as much as it used to be.
Bizarre.
That's bizarre.
It just reminds me of that song that was
How bizarre, how bizarre.
Reminds me of like the community pool growing up. You know what I mean? They play that over the radio.
On repeat.
Yeah.
Cassette radio.
When you go to the concession stand, your mom gives you a couple bucks.
Yeah.
Not even 50 cents.
Yeah.
Here you go.
Yeah.
Not anymore.
No.
No.
Oh.
Not in these times.
Now it's like $50.
Yeah. You want an airhead? It's gonna
I
cost
love
you $5.
I'm a big airhead guy.
Yeah, I like an airhead.
I eat all the airheads in the bowl.
Do you?
Yeah, I literally I hoard them. I'm like an airhead dude.
Go open up your little drawer next to your desk, and
Yes.
there's just. What's your favorite flavor?
I like them all.
Oh.
I like the chewing texture.
Yeah, it's
You
a
know?
nice texture.
The watermelon one is really.
Watermelon's good. You know what I like that's like an airhead adjacent is I think it's like those Laffy Taffies, but they had like the watermelon seeds or the pop rocks in them.
Yeah, those were fun.
I don't remember what the exact like name of those was called, but those were cool.
Pop rocks hit.
Yeah.
You're just getting a nice little candy feeling. It's just exploding.
Yeah, that talk about feeling alive, you know?
Yes.
Or warheads. That's how you feel alive. Throw a warhead in
5 seconds though.
Throw a warhead in the lower decky.
The lower decky.
I think
this is it.
I think yeah.
Is this our last show?
Meteor.
Oh my gosh. All right. Well, to bring us back down to earth, I've got a pretty straightforward trade for y'all. I don't even know what to call my feelings around gold anymore. Last year, I was staunchly on the other side, and I think everybody that attended a live show saw how that worked out for me because it just was short all year, and gold did nothing but go up all of last year. So I am looking at, where we've been kind of trading since, let's just call it May, early or mid-April. We're just chopping sideways, and so I am just trying to set up a trade that is centered around that continued chop. So maybe this is going to be the push or pull that we need. My trade is going to be the one that finally gets us to above, 35.50 or below 3,200. I also want to caveat here that I did make a mistake in terms of my put spread width, but I'm sitting with it. I'm owning it. And it's only, only I say, but, it was a little fat finger mistake when I placed this trade this morning. Blame it on not enough coffee. But I have on the August 26th gold iron condor. So there is a little bit of call skew, obviously, in these options. So you'll see, like, when I placed this trade, I gave myself a teeny tiny bit more room to the upside, just like based on where the price is relative to where I placed the spreads. But I've got on the 3,200, 3,180 put spread and the 35.35, 35.50 call spread. So would have been a 15-point wide spread. I've got, 5 extra points of risk on the downside to the puts. But I picked up $500 in credit here. So my max loss is the spread with minus what that credit is. And this one being like the put spread being the wider spread. That's where you got that 1,500 from. But as we've talked about quite a bit on this show and with Peter Klink and all the wonderful gentlemen of the margin team, futures options do have span margining, so I'm not required to put up that $1,500 in max loss on trade entry. That will change as my trade is tested, as volatility expands, as price changes, but basically half of the buying power requirement up front compared to my relative max loss. I'm having a tough time speaking today. You guys can't tell.
Okay. Tomorrow's Friday.
Yeah.
True.
Friday.
Yay.
Yeah. So I'd be happy with $150, $200 from this. I would say this is still a relatively tight spread in the gold, like futures options. So I know this thing will move slowly over the next 40 days. I don't anticipate like being able to cover this in the next week.
I like it. Yeah. I have basically the same thing on.
Oh.
Yes.
There we go.
So great minds think alike.
Yeah.
My silver put Zebra is rolling off tomorrow. It's out of the money by 50 cents. If you look at a chart of the SLV, it just doesn't. I didn't get the downward direction I needed, so that's going to roll off. So I needed something else to kind of re-add metals to my portfolio.
Very nice.
There you go. I followed you. I just moved the call 5 points further out to symmetricize it.
There you go. Symmetricize.
Symmetricize.
Yeah.
Symmetricize.
Yeah.
And I really want to do the SBET.
I know.
I mean, the 35.55 diagonal, just straight up diagonal, is $5.
Yeah. I hear you. It is.
But I'm looking in the YouTube chat and someone says there's 5 employees at SBET. Lol.
There you go.
So
Are you guys going to be working remotely tomorrow or here?
we're gonna be working remotely because we gotta test
new stuff.
Very nice. I was going to say I'll be able to tell by your faces how things are going, but if I don't see your faces in person, you'll have to send me like a.
We are going to come back here because we got to pick up the youngins.
Oh, that's
the
right.
golf outing.
Oh, yes. They can't drive yet. They still have their learner's permit.
Yeah.
I'm just kidding.
They need Unk to tank them.
The station wagon.
Yeah.
The old station wagon.
I wish you would like all pile in a minivan.
It'd be amazing.
It'd be great.
Mm-hmm.
Like a Ford Aerostar.
Yes.
Previa.
Oh, there we go.
Previa. That was the
little Astro van.
There was one kid that I grew up with in high school that had a Previa, and it was just like a party van.
How do you even spell that? Oh, Previa.
Oh, yeah, baby.
Oh, yeah.
Yes.
Yeah, it's like the stereotypical.
Yeah.
See, we were an Aerostar family. We had two. We had 2 Ford Aerostars when I was a little kid.
Very nice.
Yeah, one was like a blue and gray, and one was like a beige with like a coppery, like red brown stripe.
The stripe is the classic.
Yeah.
Yeah.
So good.
Old family suburban car.
Totally. So good. Love it.
I think we had the Chrysler.
Yeah, these kids now, like, they're running around
we
in
had the
SUVs.
Chrysler.
They don't know what it was like.
Yeah, we had the
Family.
2000 Town and Country, baby. We drove that thing to Florida.
Oh, yeah, we used to do
back.
that too.
We'd
Oh,
rip
yeah.
out the seats in the back, throw on some blankets, and then drive across the country with no seatbelts on.
I know.
Perfect.
Same. Yep. Didn't have MapQuest, didn't have GPS. You just had an atlas and the road ahead of you.
Yes.
You had to do brain stuff back then.
Oh, yeah,
Map
Brain
books.
Quest. Yeah, the atlases. Yeah. And you'd have like a little highlighter. I was just talking about somebody.
I
with somebody.
did that when I delivered pizzas.
You were a pizza delivery guy?
Yeah.
I didn't know that.
Best job ever. Cash.
Better than Grossinger Autoplex? I mean, we talked
maybe.
about your summer of just
Yes.
success at Grossinger Autoplex.
Yeah. No, the pizza delivery was great because I would really only work on like Fridays and sometimes on Saturdays, but it was from like the place closed at like 8 or 8:30 or 9.
Oh, so
something
like then
that.
you could do.
Yeah, so I was doing it from like 5 to 9 or 5 to 8 or something. It was all cash. You know, it's a suburb, so you get nice tips, you know.
Yeah.
It was just great. I just cruise around. But we had the map books. You
Yep.
know, like there was no Google Maps. So it was
Did
fun.
you do you have any like favorite, drop off stories?
I never really had any horror stories.
That's
no. Like of like dropping everything or like, something like that.
Yeah, or like some creep shows up in just like a bathrobe. Or...
Yeah, no. No.
It's good. I'm glad for you.
Yeah.
That is good.
Yeah. I was too young to appreciate the, hot housewives either.
But I'm sure they loved you. All right.
That would have been a fun story.
Oh my gosh. Omaha. All right, let's see what kind of questions we got. I see one from Tony Samples towards the top. Does the tasty method of in at 45 days and out at 21 days work on currencies?
That method is for options. So if you're trading options on futures, currency futures, then sure.
Yeah,
But if
or
you're
some of the
trading
more liquid ETFs.
Yeah. If you're trading straight up currencies on Tasty FX, then not really.
Yeah.
It's just a continuous position.
Which I believe settles like every day, doesn't it?
Mm-hmm.
Okay.
They have there's a roll.
Yeah.
All of a sudden, I'm printing in the FX space.
I know. I told you, long dollar. We've been contrarian.
I saw that you had Glenn on the show.
Yes.
I need to
Young
connect with
Glenny.
him. I needed to connect with him and have him show me the way.
Yes. Yeah, we got out of a couple positions.
The money.
Hey.
Good stuff.
Yeah, I'm just holding all these until they all turn green.
Yes.
then I'm
Euro
gonna
position closed overnight. I like the chart feature where you can put your trade in and then you could then use the chart for your stops and profit taking orders. And
Yeah.
it just like goes and
simplifies everything.
Yeah. Beautiful.
Great. It's great.
Some similar logic coming to Tasty Trade with updates to the active trader interface.
Yes. Very nice.
Coming soon.
Nice. Very nice.
Yeah.
But yes, options across the board. All our mechanics are pretty agnostic to what the product is.
True.
That's the whole point, you know.
All right, Ranch ER. I have an iron condor that needs some attention in Pepsi. 29 days to expiration. It's a 5-point wide iron condor, the 125, 130 put side, 140, 145 call side. Call side, of course, in the money, P&L red.
Mm-hmm.
This one's a toughie because it's such a tight spread. I don't really know, and you're right on the dance floor.
Yeah.
Yeah, I think you just get rid of the 130, 125
Yeah.
for 10 cents, and then you just lean short. Because you're right, you're already in the money. It's going to cost you a debit if you roll to September. And really, this trade will come in nicely with such low implied volatility at 22%. If you get a 5-point sell-off here, this could be a winner if you've collected $2, for example. Because if you look at the 145, 150, it's trading for $2. So I think getting rid of the put spread, not rolling it up into a 22% IV product, there's no reason to do it. You're just going to pigeonhole yourself into a low probability trade if you do that. But yeah, I think that's what I would consider doing.
Agreed. 50-50 shot.
Yeah.
You know, you got to kind of pick your spots at some point. $9 move into earnings. I imagine this is far outside of the expected move. So we could actually look. Let's see what. So if you go to the July expiration, so this was $9 move, let's say, puts us at 135. So we'll see what the 135 straddle is trading for. Nope. Change. So the 135 straddle, the call was at $3, we'll call it. The put was at just about $3, we'll say $2.50. So we'll call it about a $5-ish, $5.50-ish expected move. Is twice the expected move. So
yeah,
maybe you lean a little short.
All right, Mikos, I'm thinking of a target crab trade. Target. Why? Why are we on the same brainwave?
Because we're both rotting.
Target.
My brain is rot. Target 103. Earnings August 20th. Crab trade, huh? To the upside?
Up or down?
Probably up. Look at all that space to the upside.
Right?
Yeah, I think a crab trade is okay. You can get into, the September, August, if you do like the 100, 110, 120 for $6. I think that's cool. Or you can just do the diagonal and not have upside risk, but it'll cost you like $100 more.
Mm-hmm.
But yeah, I think either one of those is okay if you want to do it.
You can dabble.
Yeah.
I've traded.
Sure.
I might just do the straight up diagonal spread. We've played it to the long side a couple times. We sold that put on the second 100, or the put spread, the 190 short put spread, took a couple bucks out of that. Call diagonal, we took some money out of, so. Yeah, I'll play the upside. I'm going to do the 105, 110 call diagonal. It's $4.77 is where we're marked out. We'll see if we get filled on this bad boy. There we go. Easy peasy.
I just closed my crude covered call, micro crude covered call for $120 profit into this rally.
Boom.
Had the short call at 68 expiring today. Perfect. Neri, do you guys have a daily profit target of roughly 0.3% per day of net lick? I saw that in one of the options crash courses. So I think that is more
specific.
Yeah, it's more of a metric for exclusive short premium traders where you're just selling options and doing nothing else. Because the second you bring in other trades like diagonal spreads, calendar spreads, it's going to alter that figure because the 0.3% per day is about theta decay, extrinsic value decay, where when you layer on long option trades, there's no reason to look at it because it's not going to give you the same idea. So I just look at individual positions because I never have too many to where it's cumbersome to do so. So I literally every single day I just look at P&L day, see what's moving, see if that aligns with the P&L open that is green. And the opposite is true. If it's a big P&L day to the red side, I see if I can make an adjustment. But that's pretty much it. I don't really look at the portfolio metrics because I know that I'm avoiding aggressive metrics that are bad for me by adjusting positions and moving them around. That's just me.
Yeah, I try not to be too hyper specific. I mean, we try to put context around trading and give some mechanics, but at the end of the day, there's an opinion to it, there's subjectivity to it, there's directional assumptions, non-directional assumptions, whatever. And from a portfolio level, I would drive myself nuts if I tried to get somebody to be hyper specific like that, like an exact thing, because markets move and things move, and you want to lean short, you want to lean long at lows. It's the zero delta conundrum, delta neutral. What is that? You got to have some
kind of range.
Yeah, and that
Otherwise
applies to all the
churning.
metrics.
Yeah.
Yes.
Weiss, taking profit around 25%. If a trade is 0 to 5 days open, and 30 to 35% if it's 5 to 10 days open. Is it too scalpy, or does it sound like a de-risking, or is it a sound de-risking strategy? I think it's great.
Sounds good to me.
Yeah.
The only thing I would be concerned with is if your 25% is 10 cents, or if your 30 to 35% is 15 cents, and you're paying $5 to close at 15% profit, that's a little too much churn for me. But if your 25% is $100,
you're also not getting in those sort of positions.
Correct. True. But yeah, if you're closing winners that are $50 to $100, then I think it's fine. Or more. If it's less, I think I would wait longer to get more bang for my buck for the transactions of doing so. But yeah, if it's working for you, that's great. Dawn puts sold puts on NFLU as a proxy for Netflix earnings.
NFL.
Higher IV, much less buying power.
Netflix University?
2x long.
Wow.
Yeah.
I love these funds that come out. They're just like, oh, let's make a Netflix fund.
Yeah, they're awful usually.
I mean, big
Wide markets.
Yeah, wide markets for sure. So be careful with your pricing there. But yeah, IV is higher just because it's a leverage product.
Gonna move 2x. So you get let's see what Netflix expected move is. We can quantify this. $78, so we'll call it 5%. You get a 10% move. That NFLU goes down 20%. 2x move. And then, it's harder to get back. Because those long, anything that's leveraged long, when you get to lower prices, the same magnitude of move isn't as great because the price movement is based on the percent, the asset prices value. So this would go down to 44 or 54, 51-ish, $12 move. 51-ish, $50. The next 10% up move, if the next day was a 10% up move, would be based on the $50 price and not the $65 price. So it's not one-to-one. It's not like even.
Right.
Long-winded, I'm sorry.
No.
It's going to be okay.
It's helpful to walk through.
Hard to get that out.
Sometimes it is.
Better now.
That's good.
But we're better now?
Yeah.
We're, me and my personalities are better now.
Me and my personalities. Me and my friends.
Oh. Chad, looking at a crab trade in Netflix. Buy the 1260 in September. Sell the 1300s twice in the one day and buy the 1400. 1260, 1300, 1400. Bada bing, bada boom.
That's, you know, you're.
It's an expensive trade, but yeah, I mean it sets up as you would expect it to. You're reducing your cost basis on your $8,000 option by $5,000.
But you're sort of playing for a down, sideways / down.
Yeah. But what is the break even? What is the break even here? Tomorrow. Your theoretical break even tomorrow is around, let's crush this IV a little bit. Let's bring this down.
1325.
Yeah.
I would say.
1325, between 1325 and 1340 is where you can maybe get a little profit out of that. But if it creeps up towards 1400, that's when you're going to see losses. But yeah, I don't mind it for an inside up move. The expected move is 80 points.
Yeah.
So that brings you to
right
1340. So you need an inside up move. And if not, you have a long option in
inside
September.
down would be good too.
Sure.
That long
you're reducing basis, yeah.
Yeah, that long option.
All the way down to like 1200, you're still okay here. As long as the IV stays elevated a little bit, but I'm looking at crushing IV 5%, bringing it down to 30%, and my theoretical break even's down at like 1180. So, because you are reducing the basis on that long option by well over 50%. So yeah, don't mind it. Just an expensive trade.
Mm-hmm.
Atlas was such a great brain activity. You know, I started doing recently is brushing my teeth with my left hand. I can feel my brain just firing off on all cylinders.
What are you doing? This is irregular.
Yeah. But
Do you have a manual or electric?
Electric.
Yeah. You don't even need to.
You only have to join it. But it takes more precision with the electric to not blast your teeth off. So, I don't know. It was interesting.
Well, you've discovered a lot of hacks lately, like the exfoliation and the.
Yeah.
I'll try the left-handed toothbrush thing.
Try
I
it.
feel like I kind of switch anyways. I think I'm like because I try to multitask sometimes when I'm brushing my teeth.
Naturally.
Yeah.
I'm always walking around doing something.
Yeah. I don't want to just like stare at myself in the mirror.
No. Frank, do you guys do leaps? I wanted to do one on Amazon and sell a call against it. June 2026. How do I know if I'm paying too much? I mean, yeah, June 2026, 300 days out, 30% IV. IV ranks at 25. So, I mean, it's cheaper than if IV was higher. But if you want to sell something against it.
The 2035?
20.
What are they looking at?
I don't know, maybe an at the money option.
Yeah, they didn't say what strike specifically.
But yeah, if you're selling something against it, I would go maybe to August or September. I wouldn't go much further than that.
Mm-hmm.
But paying too much for a leap option, if you have something sold against it, is really about the width of the spread. So like, I'm looking at.
You're always going to have a debit that's over.
Yeah, unless you're selling something much further out of the money.
Yeah.
In which case, maybe you don't even sell it.
Yeah, you're not.
So I think maybe if you're going out that far, maybe you just buy the call if you're doing a call leap. And then if you get the move, then you can sell something against it and put yourself in a better spot for no risk to the upside, et cetera, et cetera.
Yeah, agreed. We don't do them on the show. It just would be quite a long trade.
But yeah, I
On
like
a
the
leap
idea of
and,
leaps.
You know, I guess we could have, considering we've been here for a million years, you know, we could have been trading leaps and it would have been totally fine, but
They would be great.
yeah, they would be great. Yes, they would.
That's the nice thing about the leaps is that they're in a lot of these stocks, they're low IV stocks that move. They have periods of time where their realized volatility is much greater than implied volatility. And during those times, that's when you're seeing a nice trade work out.
But if we do it now, Tom's going to fire us.
Yeah.
So I don't know if the ship is sail.
Can't fire us. Untouchable, baby.
Especially when those strategies are just printing. What are you going to do? Until they don't.
Until they don't.
If your covered call moves to being at the money way before 21 days, should you roll up and out, even if that pushes them beyond the 45-day window? You can.
Yeah.
It's really just a question of like, what do you really want? Do you want to give yourself more offensive room regardless of time? Then you kind of have to do it. Otherwise, you're going to let it go in the money if it continues higher and the trade's done. It's a short put going forward if that's the case. Bless you.
We do
silently.
full sneezes here.
Yeah.
No more silent sneezes.
We do screaming.
It's like, like those like kitschy mom signs that are like, in this house, we say thank you and say grace, blah, blah. It's like in this house, we do loud, audible scream sneezes.
Scream sneeze. The whole thing. But yeah, if you want to continue an offensive stance, then you got to roll up and out before it goes deep in the money. Because if it goes deep in the money, you can't roll up and out for a credit. Mike put on a broken wing butterfly in SBET. Ooh. 27, 30, 31.
Probably smarter than I. 27, 30, 31.
An August 29th expiration for 84 cents.
So it's skewed, no risk to the upside, it looks like.
27, 30?
27, 30, 31. Maybe it's to the downside.
Yeah.
Could either fly it off for an earnings lottery ticket or keep the 84 cents. Maybe you keep the 84 cents. I mean, flying it off is a 1-point wide spread and a 200% IV product, so it's not going to move.
Yeah, it's not going to go anywhere.
So yeah, maybe you just close it, call it a nice trade.
I think if you're trying to do butterflies here, you have to do them as wide as possible.
Does anyone still have an NVO trade?
NVO.
I do not.
Do I? Oh, I still do.
Looks like you do.
What do I have here? Okay, I'm out $100. So this calendar spread, this is expiring. So that expires tomorrow. I have the 70 call. There's not much to do here. Stocks at lows, out about 100 net on this trade. So I probably just hold it. We probably have earnings coming up here. Yeah, earnings on the 6th. Maybe get bailed out on that, but at about $100-ish in risk up until then, I think I would just hold it. I'm gonna hold this one.
Couple of rapid fires here. AMD Strangle, 140, 190 in August. Maybe September. 435 credit. Maybe it's in August, yeah.
One standard deviation-ish.
Yeah. I like to wait till earnings for these.
Just for the best location.
Best location, and it's not going to decay too much until earnings. Unless you want to take just sell a put or just sell a call, then it'll move on Delta. I just don't like selling strangles pre-earnings, like well before earnings. But yeah, for earnings, I think it's totally fine. In UAL, you were inverted wider than your credit, the inversion we talked about yesterday. If you missed that, check it out. How would you have managed the position if the move at UAL had not gone in your favor, or if it would have just stalled back down at like 50, 60? I would have just kept the trade. I would have just kept rolling the 70 strike put. So I had the 90-70 inversion. And then once UAL started to rally towards 70, I bought in the inversion, moved it from a 90-70 inversion to a 90-85 for a $3 debit. If UAL didn't get up to 70, I would have just kept rolling and rolling and rolling and rolling. And eventually, UAL, if it never came back up, I would have compressed my break even low enough to where I could have gotten out for a scratch or a smaller loss, but it would have taken a lot more time. But that's why I wanted to position myself to be profitable or get to a scratch if UAL continued higher, which it did. And that means reducing the inversion to a value less than my total credit received. What is the credit for Tasty earnings list? Yeah, it's definitely liquidity based. Netflix not on there, but Netflix has a 2-star liquidity rating, so that's probably why. I think it has to be a 3 or 4 for the Tasty earnings list.
Get it on the all
earnings. Venkata, last one here. Can you suggest a downside hedge for UNH? I have a January Zebra down at 50%, down 50% at 300, 340. A downside hedge against that would just be a symmetrical butterfly.
Put a little butterfly on or sell an upside call.
Sell an extra call, but yeah, downside butterfly. Yeah, symmetrical downside butterfly, just a cheap one that can appreciate if you get a sell-off. That's pretty much it.
That's it. What's for lunch?
I don't even know.
Roti, Mediterranean, something of that sort.
Okay, that's good.
I brought lunch. I don't know. Rice. I know you're a rice connoisseur.
I do.
Big rice guy.
If there's rice involved, I'm a fan.
Yeah. I'm doing like taco bowl style.
Nice.
Yeah. Anyways, that wraps up this edition of Options Trading Concepts Live. If you want to see anything in future episodes, just tweet at us. I'm at Trader Katie. Mike is at Trader Mikey B. Nick is at Trader Nicky Bat. Don't forget to sign up for our events, tastylive.com/events. We've got Denver coming up for Tom and Tony. We've got Seattle coming up for the 3 of us, and a slew of other events going into late summer and into the fall. So come hang out. It'll be a good time. In the meantime, good luck, good trading. Peace.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
We're back. It's Thursday, July 17th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, happy birthday eve to myself.
It's your birthday week? When's your birthday?
Tomorrow. It's birthday eve.
Oh, no, not birthday eve. Nice, man. Happy birthday, man. Wow, I didn't realize you and Tony were so close in birthdays. You got the New York thing.
We're
in
really
common.
not
You
that
got the
close.
Tony thing. You got the Italian thing in common. You got the cancer thing in common. Amazing.
It's what a wonderful world. But it's now no longer Tony's birthday week, as he so surreptitiously declares on the network every year. It's now about me. It's about these NASDAQ calls that are working here today that expire on Monday. So we have that going for us.
That's awesome, man.
Jamal,
I mean, oh, sorry, go ahead.
Good news is good news today, right? We have a stock market that's up because jobless claims are in and retail sales are higher. The bond market's behaving normally. We have gold and silver struggling a bit as the dollar rebounds. It's a buy America kind of day. Stocks up, long end bonds up, gold down, U.S. dollar shining brightly. Lots of concern falling off the radar here, volatility coming in, and I think the backdrop that makes it all the more interesting, Jamal, we're basically at a 50-50 chance for our Fed rate cut in September. The market is pricing in cycle lows for odds that the Fed actually moves before Christmas, which is fun.
Do you really think there's a reason for us to cut, though? I mean, I remain steadfast in not really seeing one, and I think a lot of this data is showing us that that's possibly the case.
We probably don't need it. Assets would love it, but does the economy really need it right now? It's a really good question. I mean, inflation's still above target. GDP is still 2% or more in real terms, depending upon where you look, which is actually a good segue for what we want to talk about here after the data this morning, the GDP trackers. We're basically at the end of the line for when you wouldn't take these numbers seriously. The downdrift that we saw, or downdraft that we saw in the New York Fed's nowcast report has evened out right around 1.5%. Same thing for the Atlanta Fed. It's sitting right around 2.4%. You want to split them even. We're looking at a 2% real growth rate for the second quarter. So no recession, but Jamal, if we're looking at growth around 2%, inflation between 2 and 3, and an unemployment rate that's still 4.1%, that's not an environment where the Fed sees any need to cut. That seems like an economy that's actually pretty much in balance.
Absolutely. And like I always say, this is one where you really really mainly pay attention to consumer spending, right? It's 2/3 of GDP. We just got retail sales today that shows the consumer seems to be spending fine in an environment. And again, I mean, you have to preface it by saying by and large, right? Like I'm sure that everything is not great for everybody right now with rates at 4.25, 4.5. People are trying to, buy cars and do all these other different things. Probably have balances they're carrying on credit cards. So I'm aware of that. But by and large, I mean, a lot of the data, what we're seeing, right, shows us that, retail sales, for example, was good today compared to the previous 2 months where there was negative. So things are seemingly pretty good in an environment where rates are 4.25 to 4.5. I don't think we need to cut, Chris. I think the market would go flying if we did, honestly. And then we're going to be like, oh, now the market's up too much. You know what I mean? Like that whole story again. You know what I'm saying?
Stocks rip, long end yields rip higher, right? We reinflate. It's like last September, October again. And that's really what's interesting today. I mean, when you look at the data, when I say it's good across the board, the 4-week claims average drops from 235.75K to 229.5K. So claims themselves come in at 221 versus a forecast of 235. Retail sales, literally no matter how you slice it, at the top line, 0.6 versus 0.1 expected. So let's do X autos, 0.5 versus 0.3 expected. What if we were to take out autos and gas? Well, 0.6% versus flat expected. What about the control group that goes into GDP? Even that was better, Jamal, right? Like everywhere you cut it, you're looking at readings that are above expectations. So today is just roundly good economic data. There's no other way to look at it. It's exactly what you want to see if you're a bull and a stock market that rallies for good reasons. The Fed doesn't need to cut. We don't need to cut right now.
Yeah, I mean, and again, I think the market has given us that signal today. Things are seemingly pretty good. We're getting a lot of good data, and yeah, market's looking pretty good.
Are stocks breaking their ranges, though? It feels like we are at the precipice of potentially unlocking the next leg up in this bull market. If you're the NASDAQ 100, you're already there, sitting at a fresh all-time high right now, just short of 23,250. The top tick for today's session is 23,276, so about 30 points off that high. The Russell, though, is perhaps the most instructive lesson here, Jamal, for traders who think about some of these shorter-term patterns. We spoke of the potential head and shoulders pattern here in recent days, looking at it on the 8-hour time frame, how it was picture perfect with your shooting star, evening star candlestick cluster, engulfing bar right shoulder. We get to your neckline, the former high that we had on June 11th near 22,010, or 22,000 in the Russell, 2210 in the Russell, and we immediately bounce. So you don't play head and shoulders patterns until you get a decisive neckline break. Until then, it could be just continuation and chop, and this is illustrative of that point. So the Russell's now near the top side of its range. The S&P is near the top side of its range, and we have a NASDAQ breaking out. Today's the seasonal peak for the market, Jamal. Is this as good as it gets for the next few weeks?
It's a hard question to answer. It really is. I mean, there's things that could derail it. I'm still a little annoyed that I missed out on the Russell breaking below 2,200, just albeit briefly. I would have probably applied that 2,400, 2,500 call spread that we were talking about the other day. I would have applied that again. But, is it, I think, again, I mean, we're seeing really good data on the economic front. We got another jobs report coming up soon. I don't imagine that any reason why that should be particularly bad. We know that there are tariffs that are in place, right? And we've seen some of these data, but it doesn't seem that it's really affected the data too much per se. So I think, markets certainly have reasons to go higher. The only thing it seems to me that could derail the rally is maybe some of the big earnings next week at some point or another have some issues, or even if as we get closer to the August 1st deadline, there's been talk that this time around they're not going to move that goalpost. That could probably be another thing too. So that's over these next couple of weeks. I think they're going to be pretty crucial, right? Like we got another jobs report, we got a lot of these big earnings, and then we got August 1st. Those are the possible things that could derail the rally.
I still think the approach that I'm taking right now for the market is probably what's going to work best in the short term, which is to say that I'm playing for immediate upside over like the course of a week, but looking at the longer dated puts in this low volatility environment. I don't want to call it a long calendar spread with puts, even though it's effectively a similar type of disposition where I'm long the NASDAQ call spread that expires on Monday, 23,350 short the 23,500. But then I'm also long the S&P 500 59.75 6,000 put spread that expires at the end of August. And so consistent with that, we are in the window where the market may pause a little bit here. The breakouts certainly look like they could be on the table, but the S&P hasn't crossed that barrier yet. We're not through 63.40 or so on a closing basis, 63.30. We've poked up there, but haven't leapt through. And likewise for the Russell, we're now back closer to the top side of the range in that 2280, 2300 area. We're now on the other side of expiration, though. We're going into a Fed blackout window. You mentioned that there are more important reports coming up in advance of the September meeting, but this next week, there's no inflation, right? There's no, what are we looking forward to that could derail this thing? Maybe we shouldn't worry about the seasonals, Jamal.
Yeah, next week, I mean, there's really no major economic releases, so it's really more about the earnings next week, right? And oddly enough, I feel like we used to have a lot of those big, well, that's not even next week, actually, when I look at it. The earnings seem to be a little staggered this time around for a lot of the Magnificent Seven names. They're usually within a couple of days of each other. And this time around, it's a little bit more staggered. I'm not really sure what changed there, but Google obviously is one of them. And I think, well, not even Meta. Tesla is the other. That's going to be big next week. So, yeah, I mean, again, those are some of the main catalysts. I can add another catalyst that might change markets. Maybe I should just go ahead and buy this Russell 2000 call spread, and you know what? That will ensure that we will probably eventually start turning downward. What do you think?
That's one way to think about it. Yeah, you mentioned the tech earnings here. Wednesday, July 30th is definitely a day to set your calendar for. It's not just the final Fed meeting of the summer. It's also a day when we have Meta and Microsoft earnings and Qualcomm and ARM. So we should have some fireworks that Wednesday. Fed could really get us wound up, and then the earnings could, you know, let's say we get a Fed that tells us nothing's going to happen, the market starts going down, and then these earnings miss. You wake up on Thursday morning, you're looking at like NASDAQ minus 2.5%.
Yeah.
Really easily.
Yeah.
So next week, not next week, but the week after is really when that meat and potatoes potential excitement, a thin market in terms of volume, low volatility. You get a surprise here or there. That Wednesday, July 30th, things could pop either direction. But for now, let's hope they keep popping to the upside because volatility is in. And I think that's the key here. The volumes are low. S&P 500, only 601,000 contracts traded. Oof.
Yeah, crazy.
Okay, so volume's low. Volatility's low. Positive technical drift is emerging again at the top side of a range. Have you heard of a quadruple top? Me neither, because it's not a thing in technical analysis. I would posit that this is continuation here, just like we've seen with the NASDAQ. And we should all take solace in the fact that the Russell has been a leader today. Strong breadth in this market, small and mid cap, outperforming mega cap tech. And that's something that we need to see because breadth has been thinning out where it's been the big names and then everything else has been struggling.
I think I am going to do it, Chris. I mean, when I look at this Russell, right, and you look back over the last, going back to the breakdown on December 18th, right? That was a Fed day, if memory serves me correctly. And you see the big range on that day, 150-point range in the Russell 2000, low of 2235, high of 2385. And I think that's really we're working with that area right now where it's trying to regain that momentum from that time period. So I think I am going to get long the September 30th expiration, 2400, 2500 Russell 2000 call spread. That's what I'm doing.
It's working. The Russell, again, here this week bounces off of its 1 month moving average. Ever since we get the close through there on April 24th, that really has been a rail that we've been able to ride here. There have been some flutters below it, certainly even this week, but no close below the 1 month. The structure here is very, very much intact. With today's movement, the 1 week moving average retains, or rather regains, a positive slope, a positive rate of change to show that momentum is coming back into the market here. I'm not one, as people hear me bicker with Ilya about, I do not care about divergences in momentum. I don't think that's a timing tool. It speaks to a market that's losing vigor, but you can go through a period where you lose vigor and don't lose your altitude and price. You simply just chop around sideways. And the market is actually less overbought today than it was back on July 2nd when we were trading around the same exact level. So we've become less overbought. What have we sacrificed? Just time. That's an excellent development if you're a bull. We want to see those type of developments. Corrections are in time, not in price. That's how you ward off the overbought readings. And we've done that here. So constructiveness into the end of the week, I think, makes sense. The NASDAQ, if it were to close here, it is a new closing high. How far this runs is another story, but a simple measurement of the 22,800 to 23,000, we'll call it 100 range. We're giving ourselves 300 points. So we get to 23,400 here. The range has been fulfilled. The measured move is there, and then it's just a simple momentum trade, riding it as long as it can go to the upside.
I gotta say, I mean, in any one of these indices you pick it's been great technical patterns, and it's not nowhere near the volatility that we were seeing earlier this year. So you're seeing this nice consolidation, and then bumps higher when and if possible, or potentially happening. NASDAQ obviously is just breached the bump higher. I mean, that looks like it's supposed to look technically. That's a beautiful thing. Even the Dow and the Russell, which aren't doing the exact same thing as NASDAQ, those appear to be in levels of consolidation right now. And markets don't seem to be as jittery as they were earlier this year. I mean, sure, when there were more mention of tariffs, markets moved a little bit, but last week, but it just doesn't seem to be the same. It seems most of those dips are getting bought nowadays. So again, I think it really just boils down to if data starts to change on the macro level, right, and things start to look ugly there, or if something happens in some of these bigger earnings, you can't deny how much they encapsulate the S&P 500 or NASDAQ 100 and how much they make those markets move. So, that's obviously a big deal. And then again, when it really boils down to it, the August 1st date, are we really enacting tariffs on the order of magnitude where that has been discussed? I think those are the main things that you need to worry about if you're worried about markets falling.
Very much with you. We look at the sector breakdown before we shift our attention to the bond market here. KRE, top of the board. Banks, regional banks. You love to see it. KRE here now, back getting to the place where it broke down a few days ago. We go up to that daily chart. I erased all the technical analysis yesterday. Sometimes it's just too legacy, right? I've been having these lines. I'm adjusting these lines that I put on the chart back in December. Let's wipe things away for a few days, reset the eyes, and let's take a different gander at it. But with that point still, we have the swing high in March that more or less becomes a line in the sand in recent weeks. And after hitting the 1-month moving average yesterday, we bounced right back above there. So banks are doing well in KRE. They're doing well in XLF. Again, bouncing at that 1-month moving average. And that kind of looks like a morning star candlestick cluster forming down here, Jamal. A bottoming pattern after a correction as we correct from all-time highs. This market still retains a lot of the beautiful sector rotation that you like to see. Industrials today, top tick to a new all-time high. Technology up at a new all-time high. Banks, tech, industrials. That's a growth story still. As much as we like to knock and as much as I'm fearful of the seasonality of August and summer vacation when junior traders take over the desks those final 2 weeks of August, it's been bad for the market. Volatility rises. People are happy to take the risk right now and think that the economy is going to look better in 6 to 9 months than it does today.
And if you are worried about, that time period in August, I think the best thing to do is just not have on a super sizable position, right? You still want to have cash, I believe, in this environment. I just added the Russell trade, by the way, and that I think puts me in a situation where I'm at 66% buying power. Still, I guess still got about 34% on the sideline. I think that's important. Given this environment, I mean, really, I have a couple of, I don't know how many actual vol trades do I have on. I feel like, it's your fault actually. I have a lot of directional trades. No, I'm just kidding. It's not really your fault. I do have a couple of vol trades, but outside of that, it is a few more directional things because of some of the, I've waited, right? Like, which we'll get to later, the idea of the dollar, the idea of bonds, like I've waited on those and it's been a long time and they just seem to be going in one direction. And I am waiting on a turnaround. I'm doing directional there. It's not a vol play, but for the most part, I'm bringing up vol play because most of our buying power can be taken up in a lot of vol play trades. There's really not the whole lot of vol right now to be selling. So be careful of being in too many of those. But Yeah, I mean, look, markets look good, man. I mean, we can constantly sit here all day trying to figure out what's going to take it down, but we'll never know until it actually happens.
I'm just quickly scanning to see where the volatility is. Materials 31.4, staples 31.9.
It's really not anywhere. And if it does show up in a couple of, those ETFs, it's going to be maybe because individual names are about to undergo earnings. And so that might be pumping it up a little bit. But I mean, really, vol is fairly low right now.
Yeah, there's even a name like Abercrombie and Fitch was
I mean, we're looking at an August VIX that has 1945. That's not low.
I think people are worried. Yeah, I think that's actually a really good point to bring up. If you go down the line, it seems like the market's still trying to buy some protection for Trump's tariffs that could arise. We're not like the market, we're pretending in the short term it's not going to happen. But then you look at the volatility price and it's like, why are you bidding up vol on the other side of August 12th? Oh, yeah, Trump's tariffs are August 12th with China. The curve looks great, though. I mean, look at the contango in the volatility futures curve here. Apologies to the sponsor, but we're going to pull something up from SIBO because they have a great visualization tool for this as soon as I can actually move it. There you are. I love this little chart, the VIX term structure. You can see we're at like a 5.5 point spread right now between front month and back month here listed. Healthy market. Complacent, perhaps.
Yeah.
But that's fine.
Yeah.
That's fine if you're staying long in the short term. If you're going to buy protection and you want to be bearish, buy it later on, which has me wondering, and I flashed this up on the screen earlier, about the one thing in my head today is with the NASDAQ rallying, and that's working well because that's for DTE, and specifically I'm structuring it like this. The S&P, I could maybe take advantage of this drift higher and pull up my strikes, right, and get out of the 59, 75, 60, 25 long put spread and maybe adjust it up 100 points. It changes the risk to reward of the trade, but if this thing does go sideways, it's more likely to realize any profit potential. So maybe that's it. As the NASDAQ's going up, pull up the long puts that we have in ES to keep the boat steady.
Oh, this is your put spread you were talking about, right? Yeah, I mean,
there's 43 days there, so really it's all about August panic.
You are looking for some carnage, huh? Look at you.
Just in case. Vol seems low, and a 3 to 5% pullback during the summer wouldn't be unheard of, right?
It's true.
Okay, let's make our way over to something a little bit more interesting, which is the bond market today. Fed cut odds for July are basically zeroed out. Fed cut odds for September are now at their lowest point that we've seen throughout the cycle. We're going to go to the SR3Z5 contract first here, Jamal. And you can see that we're basically sitting at the lowest levels we've had going back to February at this point in time. But what makes us curious is that unlike the pullback in rate cut odds that we had in July, at least the start of July, this time around it's not provoking more weakness at the long end of the curve. It's almost as if the market's saying, okay, you're not going to have an excuse to cut while this inflation risk is here. We don't need to worry about reflation like we did last September. So the stability is very, very, I think that's a very positive thing right now for ZB. That's all you could ask for. If the tariffs are implemented, we probably still have a problem. But how do you view the bond market today, where short end rates are a little bit higher and long end rates are a little bit lower? You can see ZT's underwater, but ZB's up. That curve's twisting, suggesting less Fed cut odds and therefore less inflation risk down the line.
I certainly don't claim to understand all the forces behind everything that's pushing bonds down these days and keeping the 30-year yields somewhere near around 5% on any given day, right? Because there's just a lot that's happening, a lot at play. Obviously, it's been one of the harder trades to sort of figure out. But that being the case, I do think that at times we've seen ebbs and flows in the bond market throughout the year. I mean, you can just look at it, different things have happened. Obviously, April was a wild time when you talk about the Liberation Day initially, and then to end of April, we saw some bounces. And so I guess really it just boils down to me looking at, okay, bonds are fairly low in vol, and we've seen a lot of ebbs and flows throughout the year. So why not try and take advantage of an eventual bounce? And again, if it continues to fall lower, at least I'm able to hold on. I got a call spread out in October 24 expiration. So at least it'll hold on to some extrinsic value if bonds do get towards those yearly lows, and it won't be completely out of the picture. And sentiment eventually has changed in this market, given a lot of these assets throughout this 7 months of this year that we've been trading. We've seen sentiment all over the place in plenty of different assets, and I don't think bonds are any different.
Bonds have surprisingly low volatility right now. If you look at IVR, it's only a 19.2. The move index is at 89.51. That's pretty low. Move index was over 138, 139 back in April. Thinking about how low this is, if we were to really progress much further from here, we go down below 80, you're talking about getting bond volatility back to its lowest point since February 22, right before Russia invaded Ukraine. And that's when bond volatility really started to take a leg up. Are we out of the woods? Are we out of the woods? I don't know if we can say that. But directionally neutral activity, I think, still works to some degree. It's not the greatest day for notes or bonds, but the fact that we have this good economic data and it's translating not into higher yields, but it's almost a relaxation of this fear that policy is going to push us in a direction that allows inflation to stay persistently high. Fed is not going to pour fuel on the fire. That's the read-through here. The economy is strong. You said it yourself, right? Retail sales up, claims are in. We're not teetering into recession the way a lot of people, myself included, feared we might if the worst of the tariffs were realized. And so why does the Fed need to cut if the unemployment rate has a 4.1% reading and it's been heading lower? If inflation is still above target for 56 consecutive months and growth is around 2 to 3%, it's a really tough environment for the Fed to justify cutting in. So maybe a recalcitrant Fed that doesn't listen to Trump, that could help the long end of the curve, just like the way the Fed doing too much last September hurt the long end of the curve. Do you think that Powell, do you think his job is safe after everything we've heard this week or just yesterday?
It's funny you mention this. This is the first time I really talked about it. I mean, I think a lot of times we assume the worst in any given situation. Like I've heard a lot of different bank CEOs reiterating the importance of the independence of the Fed, and obviously there's been a lot of chatter about Powell's job and what people think will happen if Powell were to get fired, et cetera. I tend to believe that even though we might see some jitters, whether it's in the bond market or stocks, everything will eventually be just fine, right? Like that's the one thing that we know from all of most of the things that we've traded through over the last several years. Eventually, cooler heads prevail and things will be fine. So that's what I think overall as far as trading. Is his job safe? I mean, I would say yes for now. I didn't really think the president could fire the Fed chief, but I don't really pay much attention to that type of thing. Who knows? I tend to think his job is safe, and even if it's not, I think markets will be fine.
I think markets gave us a really clear preview of what's going to happen if that were to happen, right? Yesterday was a Sell America day for an hour or so there. Dollar down, bonds down, gold up, stocks down. That's taken off the table. We get an inversion of that. We get good news that suggests the ship is sailing just fine as long as we don't rock the boat too much. And we get a Buy America day. Bonds up at the long end of the curve. Stocks are up. The dollar is doing well. Gold is struggling a bit here. So this is what the administration wants: higher stock prices, lower interest rates, stronger currency.
And
so just do more of this.
Do they put these headlines out so that we can buy dips? Is that what happens?
I don't want to say no.
No, but you know what? This is really messing things up, though, because, dude, for years we get all these questions about, is the market manipulated and what do market makers do? And,
oh, yeah.
And, we always tell, like, what really, market makers don't manipulate markets. It is what it is. But some of the stuff we've seen over the past year with regard to, like, we've seen it, okay? Like, we saw what happened in April. We saw what happened in May. Greatest May ever. I mean, come on, man. Like, that.
The April announcements particularly eyebrow raising because it's like, 20 minutes before the official announcement, which we saw here on Futures Power Hour that Tuesday, there was this huge surge in SPY call buying activity, like out of the blue. It's like, who did that? Oh, how serendipitous to have bought all these out of the money calls and SPY right before this announcement, and the market rallies 10% that day. What are the odds? Great timing. What conviction? I don't have that conviction. So we have a curve that's untwisting, or rather unsteepening. Flattening is the actual official terminology there. So a flattening curve here today. But I would make the argument that a flatter curve is a sign of confidence in the market right now. The steepening curve, lower 2-year rates, higher 30-year rates, higher 10-year rates. The Fed's cutting, and it's going to fan inflation. That's Donald Trump's pick as Fed chair coming in. Powell's getting fired, market reaction. An economy that's not getting its cuts, that has a steady hand on the wheel on the monetary policy side, 2-year rates actually probably drift higher. 30-year rates can come in. I don't have a curve flattener play on right now, but I'm very intrigued. That's probably the play if you don't think that Powell's going to lose his job in the next few months. I don't know if I'm there yet to put it on, but it may be the most appealing yield curve trade in my view that we've had in a few years. But I've missed a few of the steepening trades, so who am I to say that?
Yeah, and that's the one trade I'm still just not interested in touching. I would just rather be flat out long bonds one way or the other, whether it's but in this case I want to be long to the upside. And then the next lever for me to pull, if we do fall lower, if we do get near yearly lows, is probably I get long ZN. As of right now, I'm only long ZB call spread, but if we do continue to drift lower in bonds, the ZN call spread, long call spread is in order for me.
Jamal, just for the sake of conversation, this is a regression channel that extends over the past year for 10-year yields. The midpoint is basically 4.5%. We're sitting at 4.5%. One of the reasons why I speak of directional neutrality in notes is for all the warts in the headlines. This is a market that's been trading around 4.5%, the equivalent being roughly 111 or so in ZN since November. I think even though the volatility is not that high, if you do have a spike and you're near 111, it's a place to look. Directional neutrality isn't high convexity, but it's something to do, and it's something reasonable to do given the price action. Metals here. Still haven't learned my lessons from sitting at your feet, Jamal, in terms of learning to adjust when I should adjust. Maybe I'm feeling a little bit better about that today, but silver looks fairly constructive up here still. We do have this pullback to the former swing high on June 18th, up at $37.73 an ounce. We hit a low of 75 cents yesterday, a low of 68.5 cents today. So we've tested that high, and we're holding up here, and we're back above our 1 week. Have you re-engaged your silver positioning? Could I entice you, looking at this chart, that maybe silver has another chance to the upside shortly?
I think it does. Again, I never thought it didn't. It was just more about sort of cutting down the size of the position as far as the buying power, right? And so I'm still long SLV calls. That's a whole lot easier to do than being long the SI call spread. But I mean, this is on the order where I expected, right? I mean, look at this little pullback. You got to suffer through that for 2 days. And then now it's starting to try and bounce back. And I do think silver probably does eventually still kind of go higher. At what point do we start to see? The real question becomes now, we're closer to a fade. I would say we're closer to a big fade than ever, I think, before, right? At some point or another, that's going to happen. I don't know if that's 6 months, 9 months, a year away, but it's at some point, right? Like there's going to be the sizable pullback on the order of what we probably eventually what we saw back in 2011, like at some point or another, right? And so I think just managing the position was my whole thought process. Like I wanted to cut down some of the size, but still be able to play to the upside because I still think it's going higher in the near term. But at what point does that flip, right? Does that come on the result of on the back of a stronger dollar eventually, which we're going to get to later? Does that come on the back of that? That's one of the things to think about.
That's one of the notable points of silver's resiliency here today. You're seeing short-end yields go up. You're seeing the dollar move up. And you're seeing silver hold its ground. Mm-hmm. That's a very, very neat little occurrence. The fact that gold's off and silver is up speaks to a growth positive tilt in the market today. You see oil up 1.41% itself right now, and it's all in the wake of this good news is good news economic data. So silver prices at a 24.1 IBR. I'm still in at what, 40 something days to expiration, 40 days to expiration now. I should have followed you, as I like to poke fun at myself, but I do this because I think there's, a lesson to be learned. When you have a deep in the money position, it's a good time to adjust and not get too greedy. Just keep chipping away. Hopefully people don't make my mistake of, not following you in a certain sense of learning that mechanic. But to that point, at 40 days to expiration, the question is, would I want to have new bullish exposure here? I see a pivot point around 37.70. That's as plain as the eye can see right now on this chart. Tell me that's not a pivot point. As long as we're above there, bulls are in control. Drop below 37.70, take your ball and go home, maybe even look short for a pullback into 36. That's the line. Don't need to think too much about it.
With any luck, it's just more consolidation, and this time it doesn't take as long as the the move from from 36 to 40, right? In December anyway, this 37 to 40 move. Like it hopefully it doesn't take as long during this consolidation. Hopefully maybe it's like less than half the time. Maybe it's 15 to 16 days, and then you get another bump higher. But guess we'll have to wait and see.
Gold in a little bit today, off by 0.5%, although really hasn't changed much of anything for gold long term because it continues to consolidate in a triangle that has yet to break. So nothing goes on.
I'm not going to lie to you. Gold is the one where I'm starting to wonder, do I still want to remain long? This has definitely been a harder one, being patient. This consolidation is taking some time. And, it's one where you could have, over the last several weeks, you could have probably benefited from a directionally neutral position. Much like kind of we were talking about in bonds, except, that's the hard thing about gold and bonds on this. And this is, a deep vol discussion in a way, but not to get too crazy with it. But look, we always look at IVRs, right? But it pays to sometimes look at IVs in general. And so I mentioned bond and bonds and gold because they have fairly lower IVs on an absolute scale when you look at it. They're in the teens, right? And so when you think about it from a percentage standpoint, how much is vol going to come in? Like right now, I'm looking at gold August. It's 15 implied volatility. And so how much more is it going to come in to 12? You know how long that takes to go from 15 ticks to 12 ticks? Like it's a lot. It takes a bit of time, and it's going to be slow. Like it's not going to be like, Netflix vol earnings tonight going from 80 to 40. Like it's a big change. It's a lot smaller change, and it takes a lot longer. And so that's the hard part about being directionally neutral sometimes in these metals or bonds, right? So saying all that to say, you could go directionally neutral here in gold right now. Things have been fairly quiet, but I think we both agree it's more fun to play the big move, right? And the big move just hasn't happened in quite some time. I'm beginning to wonder what's up here. Do I still want to be in this one or not? I haven't fully decided yet if it's worth keeping on. I'm still in this September call spread, 3,400, 3,450. So for now we hold, but I don't know. I've been thinking about this one. I've been eyeing this one up, Chris. I'm not sure. It's not so much that I don't necessarily believe in the story. It's just like, is this one of the better trades? And it's for me personally right now. Do I love this trade still as much?
No, I mean, like gold has been great to me this year.
Yeah.
But not over the past few months. In part because there's been no directional movement to the upside. So having a position that's predicated on gold jumping another 3% over the next month and for it to go up and then pull back in and find myself exactly back where I put on the position, I'm kind of just giving away money. And it's the risk you take, right? Mm-hmm. The trades having been structured historically and still to this day so that the winners allow me to place a few bets. And if I lose, 3 in a row, then I'm back to break even. So I'm not thrilled, right? Because a good gold run in 2025, there's like 3 great trades in a row that's paying for the mistakes since late April. But I'm right there with you, right? This is feeling like a market where it's resilient on one hand. It's also not doing what it should be doing in the time that it should be doing it. And so it's just eating capital, eating buying power, chipping away at returns.
I mean, the main reason I'm still holding it right now is because I put on these long dollar trades, right? So at least at some point, something's got to give way, and at least in my opinion.
It's a good point. I mean, listen, if the dollar takes a big turn to the downside, one may presume that gold is getting hit too. Or gold's going to surge, excuse me. The only situation in which gold gets hit alongside the dollar is an early April liquidity shock type of situation. but that's rare. You don't play for those. That's like placing a bet on the far tail. You can do it, but you have to understand probabilistically that's not what happens normally, only in unique circumstances. Have you been able to do anything with copper? Have you been thinking about copper since last week's move? I know that was tough for you, but you've decided to operate around there still. What's the play here as someone who was in when we got the tariff announcement?
Yeah, I'm still in. Again, it's an in the money call spread at this point that I'm short, the 530, 540. So it's still, it's just above that obviously right now, right, with 549 and change. I mean, as of now, I'm not doing anything. I'm fine with it sitting in this area, even though I'm sitting on a loss. I'm fine with this sitting in this area, with the idea that maybe there's going to be some pullback. Again, I think this one is kind of tied to the August 1st deadline as well. So that's another 13 to 15 days, right? You're going to start hearing more about it as it gets closer, I'm sure. So for now, I'm just gonna, I'm gonna sit on it. It's like less than half of max loss. I think I'm about 40% in the hole on this one right now, which is fine. Down $800 on it. I'm just gonna sit with the idea that maybe it will sort of I don't want to say correct, but maybe pull back on some type of chickening out on potential trade.
So if I recall correctly, I think when you and I spoke about this that Tuesday, the position was like $1,800 underwater. So I think it's instructive.
Initially, yeah, because markets got so wide, so it literally went to max loss.
Right. Okay. So how do you make the decision to take off part of the position, right? If it's a short iron condor, you took off the short put spread side.
No, it was just a short call. It was just a short call spread. Short call spread.
Was it a function of the liquidity environment that you decided to stick with it? Was it a function of how much time to expiration? I feel like a lot of people would have panicked in that scenario, and you've decided to keep a cooler head, and as a result, you're nursing a smaller loss, and you have time to get this off the books. How do you work through that emotionally? I think I'm getting at.
Yeah. So, and initially, just go back to initially happened. I put on a silver call spread, the 40-42 call spread, and I was short a copper call spread, which is what we're talking about, in August, and I'm short the 530, 540. And the idea was these two have been kind of moving in tandem. If one's going to move, the other will probably move. It doesn't matter the direction. If they both went down and ended up out of the money, I would have been down 900 total on those two positions. As a result of the initial move in copper before silver made its move, right, last week, when copper made its move, like you said, initially it was showing me almost max loss, but that was because the markets were wide. As things calmed down, now it's only showing me down $800. Max loss was like $1,800. So now it's showing me down $800. How do I, how do cooler heads prevail? I mean, honestly, once it's wide, one thing you should never do is when markets are just completely wide and there's a lot going on, you shouldn't just completely panic and close, because again, if I had done that, you already heard what would have happened. It's in the money at this point. And like I said, we've seen, when we look at the bond chart from earlier this year, when we look at oil chart, we've seen a lot of big moves, and then eventually cooler heads prevail and things calm down. And so that's what I'm playing for here. Certainly this could continue to go higher. The only thing I can rely on then is if metals all of a sudden all go in tandem, which would be fine, because then actually the gold position we were whining about eventually starts working more. Maybe silver is even going to that next leg. I won't make quite as much money because it's XLV versus /SI, but still, I'll at least be able to sort of handle the loss that I think eventually copper would give me if it were to go in max loss, if some of the other metals go. So for now, this is 40 days out. And I guess basically, like I said, I'm looking.
My next question's right there.
What's that?
My next question's right there now, because you're at 40 days out. So what if it goes in the money for you and it's at 530? After you've nursed such a big position, do you keep riding it down to 21 DTE, or do you use it as an opportunity to get it off your books?
I think I just again, this has all been more about a potential 50% tariff that we don't necessarily know is even going to happen. That's really what I'm relying upon. And so that's the only reason I'm still in the position. Other than that, I probably would have closed it out already, but I don't really know if that 50% tariff is going to come into play for real, right? Like, is that really going to come to fruition? And so that's really that's really how my sentiment around this trade right now. That's why I'm fine being short that call spread. I don't believe it's fully going to come into fruition. If I'm wrong, then over the next 15 days. I got at least 15 days I'd like to feel, right? So then at that point I'm at 25. And so to your question, do I keep it on? It's hard to say as of right now. I don't know. I don't know what's going to happen, but I tend to believe that this 50% tariff is not going to stay, and where this thing is sitting right now, it's going to fall back below. That's how I feel right as of right now. That's what I'm playing for.
I mean, the rationale to put the copper tariffs on it incentivized production when mines take nearly 2 decades to get fully functional. We're going to push up copper prices here in the U.S. until 2043 before we finally get those mines going to balance things out. And that just lacks credulity in my eyes. But what do I know? Just a guy on the other end of this microphone. I'm with you, Jamal, though. I think that's instructive, right? If you have a position that there's plenty of time on the board and the reasons may be fleeting in nature to describe it in such a manner, it's worth sticking out. And I think that's tough for traders.
And I'll say one more thing. The only other things I could really do is buy copper futures. I'm not going to do that. They're $16,000. Or I could buy an upside call in July 28. But even then, I don't think that fully helps them because, again, we're looking for August 1st. And so I think anything I were to try and buy is going to cost more than I would probably potentially lose. So that's all the reason that makes it easy. Now, I did think about something too. I thought about FCX the other day. I thought about the actual, name, FCX, the copper producer. I thought about doing maybe something in there, but I didn't even see. I don't feel like they moved crazily on this news, not to the order of what actual copper did. So I don't even know if that turns out to be a hedge. But if that's one other option, I could get long some type of call spread in FCX in the event that this does stay into play. Maybe that's a possible to do, but I don't know if I think I'm just better off sitting in the short call spread and seeing what happens.
Yeah, FCX is actually lower today than where it was when the copper tariff was announced. So I know some people are piling in there to get exposure, but if you were fading, I think there's also the implicit, how come FCX is lower than where copper prices are? People couldn't trade in copper, and they didn't think copper belonged up there, so they shorted FCX instead over the past few days. Either way, though,
is the same way. It's another copper name, Southern Copper Corp. I remember this name.
Same deal. Oil prices are bouncing here today. They're bouncing after energy inventory data, the fact that we have more hurricane activity making its way, increasing probability of tropical storm or hurricane cutting through central Florida into the Gulf Coast early next week. And so that brings up the possibility in the short term that some wells will be shut in. We've seen that over the course of the past year. When production declines, energy prices squeeze, we measure the extent of damage. Is it just the drilling operations? Is it our export facilities? Are we flooding the domestic market in the short term? But right now, energy prices up a bit. Volatility continues to come in. Jamal, we're short iron condor people here in oil and this non-geopolitically influenced environment. And so today is actually a good day, even though oil prices are up, because vol's in and we're dancing around the midpoint of the range. So what is there to complain about?
Nothing at all. You're winning on that trade for sure. Oil has just been kind of quiet ever since saw the little bit of flare up a couple of weeks ago. So I think it's just gonna still kind of do what it's been doing. Why should you change?
It hit the low point from the May and June swing lows yesterday, which happened to coincide with the 50-day moving average here. And you know what? This 50-day moving average, I'm not crazy about how dark that is. It's kind of driving me nuts throughout the show. What's something there? We go, nice and bright. So we bounced off the 50-day yesterday. We're back above the 1 week, the 1 month here today. So you could see that this is a market that's not really showing you signs that it wants to drive to the downside again. Mm-hmm. It gives you a 63 level to work with. The low that you have on June 24th, the Israel-Iran relaxation low, if you will, 62.84. I still like the directionally neutral activity here, so I'm going to stick on that. But you have a place to work with, a very clear level that was resistance in April, in May, pivot point in June. We're holding the uptrend May, June, July swing lows right now. Oil has to remain constructive in some regard. So I suppose if you want to take a directional bias, directionally neutral with a slight upside tilt, little kicker there. 22.3 IVR is a tougher sell as the days go on because it's no longer the 40 or the 50 or the 60. It's starting to look a little deflated like you have in many other asset classes.
Well, I mean, this is just some of the quietest times in oil this year. I mean, we've seen some of the volatile times, and this is just really quiet right now. So you probably could not only can you keep your Iron Condor on, but you could probably put one on today and still feel comfortable about it.
Talk about feeling comfortable in an Iron Condor. Natural gas here is fairly interesting because it does have that 51 IVR. I know that we just pulled back above the lows from May that capped off the rebound in the start of July. But if we were to go out to 40 days right now and think about a potential, where are you? I want to see you. There you are, 293 and then 4243. 63% probability of profit, risking 700 to make 300. So, just a little over 2 to 1 risk to reward. This is kind of a classic Tasty setup. Natural gas is uncorrelated to everything else. You can go directionally neutral. You can look to collect some premium. Risking buying power is less than what you're looking to make in the max profit, Jamal. That's always a nice little setup. So natural gas directional has not been kind, at least the most recent trade, trying to sell put spreads down here and abandoning it at the low like a wimp. And I would be in the money had I just stuck with it. But instead of trying to be that hero, this is appealing enough of a setup, Jamal, that I think, why not right now? Oh, God, that got filled way too quickly. Just lost $700.
Yeah, I think I messed up in natural gas too, because again, I got short that put spread on the 26th, and we did nothing but go down from there. I took it off before it hit cycle lows. And again, just thinking back, if I had waited until a time where it was at those lows, sometimes I just feel like, again, this is how I feel about dollar trade, this is how I feel about bonds trade. Like sometimes if you just wait till things get to somewhat of a crescendo, you can profit a whole lot better. And that's what happened here. I mean, from 7.9, this thing has just been bouncing and going up seemingly every day now.
Dollar shorts continue to unwind. Good news is good news for the US dollar today, where we now find ourselves up across the board, which is just delightful for someone who hates the Japanese yen, quickly returning back down towards its lows. There was a really interesting reaction mechanism yesterday, Jamal. Color me shocked that we hit the 50-day moving average, and then we get the news about Powell being fired. We pull back to the 1 month. We get the news about Powell not being fired. We start rallying back up again. I point to the 50-day because we have not seen a close on the other side of it in some time, going back to the middle of February. It's a meaningful trend change after we break the downtrend from the February and now June swing highs here. So our Japanese yen, which is facing elections this weekend, it has a very similar story to what's happening here in the US. Deficits and debts are out of control. Are we changing our fiscal policy to increase or decrease those deficits and debts? What does that do to bonds? What does that do to the stability of the currency? For Japan, the elections this weekend could see the LDP party lose its hold on power, and the opposition has been talking about more tax cuts, which, given Japan's fiscal situation, the long end of their yield curve continues to blow out. So we want to erode Japanese fiscal stability. Bad for the currency. Higher yields, weaker currency, no bueno. And that's certainly the case. So pressing on, Jamal, that may have been the rebound yesterday to get back in on a new dollar long trade here, because we do see that there is further loss of momentum below these 1 month moving averages in the pound, in the euro, in the yen. This is not a rebound that's lasting, that's anti-dollar. I think we're seeing the positioning unwind, gathering pace and credibility.
Couldn't agree with you more. I mean, since the beginning of the month, we've seen the big downturn and a lot of these other currencies, and I think it's just going to continue for some time. And the dollar just seems to be in strong pace right now. Like it's the one it's been the trade that I think for the longest time, like we talked about, a lot of people were short. I think you're starting to see some of that trend reverse.
I'm going to make a small point here. This is the first time that the 1 week moving average in the British pound crosses above its 50-day moving average. Today would be, yesterday was the first time that we saw the 1 week moving average close below the 50-day moving average. So when the 50 was above, when the 5 was above the 50, the pound was screaming to the upside. We're now not in that momentum regime anymore. Even in pullbacks, the 5 never got below the 50, even in April. So something's different here. The momentum is clearly breaking, and you're seeing it across the board. I'd remind everyone, as we looked at the start of the week, there was a larger net long euro position coming into this week. There's still a very large net long Japanese yen position. There's still a large net long British pound position. And so speculators, they tend to be trend followers. If the trend is breaking, you tend to get liquidation and reversal. So I think right now, tactically, Jamal, the way that the dollar index is behaving, this is perhaps our best call of the month so far, is that the dollar rebound looks legit. And we could be taking the next leg up shortly, given the resiliency here.
Yeah, there's no way I would want to get in front of this not right now. I really think this is going to be one of the trades to pay attention to for the second half of the year.
And that doesn't mean the dollar's not going to be in trouble here henceforth. It just means in the short term, you might get a bounce. As we line out the show or close out the show, stocks are up near their session highs. NASDAQ up by 0.83%. 70 more points between friends, Jamal. Please. What's next on the calendar? Tomorrow's a busy-ish day in terms of important economic data, but will it move the market? Good question. Maybe the home builders. Housing starts building permits, but then there's that pesky Michigan consumer sentiment reading, which for some reason people care about. I suppose we'll pay more attention to what's happening on the tariff front and those inflation expectations that come out of the report. But Michigan itself, Jamal, they changed their methodology a few years ago. They used to do phone survey only. Now they do things online. Online surveys are much less reliable, even though you can get a lot more responses because people can fill them out while sitting on the couch eating potato chips off their stomach like an otter. So it doesn't require the hurdle of answering the phone and talking to a human. The reliability of the surveys has gone down. It's one of the reasons why I don't put stock in these sentiment readings so much anymore. I digress. You're going to be back later today in about 47 minutes time. But before then, Dr. J is up next with From Theory to Practice. So we'll bid adieu to the Futures Power Hour crowd for this Thursday. Until then, good luck trading. After a brief break, Dr. Jim Schultz up next here on Tasty Live.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Thursday edition of what it is that we are trying to do, man. Welcome to the all-time high edition of what it is that we are trying to do, man. I think we are right there. We are knocking on the doorstep. So if you are watching the show on the Tasty Live Network, I would actually bounce on over YouTube because you can join the chat and join the discussion, and you can celebrate with your fellow Bulls and commiserate with your fellow Bears. And, of course, you can hop in the YouTube chat and you can ask me whatever questions that you might have. I can't guarantee that I'll have an answer, but I'll still give you 6 to 8 minutes of commentary one way or another. So get your questions in early because it increases the likelihood that I will get to your question because I only get to about 0.5 to 0.9 per show. So, John, bring us in to the market. Man, let's do it. We got some things cooking. Man, look at that. That's doing more than cooking. I mean, they're cooking with straight vegetable oil at this point. Forget about the coconut stuff. Forget about avocado oil. Like, they're just going full throttle. Like, give me all the good stuff and all the bad stuff. Even the S&P is up 33 on the day, up to 63.36. You've got the NASDAQ risk-free instrument, also known as an extremely high-risk product, but it sure doesn't feel that way these days. Up 194. You got the Boomers up 215. And then, of course, you've got the Russell 2000 Futures Index up 20.30 on the day. Green on the screen. What does it mean? Man, I certainly do not have a clue, and I didn't even have a third rhyme there for you guys. You got bonds down a point. I'm sorry, down a tick. A point would be a little bit different. You got notes down 3.5. You got oil up 80 cents. You got UB40 about unched on the day. I mean, it's been unched for about 40 years, so that makes sense. You got gold down 16. You got the British pound is down. You got the euros down. Man, we got to start trading some tasty FX. I need some Danish Kroner to kind of mix some things up. We got to get Glenn back on the show to kind of show us how to do that. Maybe I'll do that in the next couple of weeks. So you got volatility down on the day, which makes sense. Got the Bitcoin bros right back to right about 120,000. And so that's pretty impressive for just a made up string of characters. And so that's some good stuff, man. You got Bitcoin. And I mean, I think crypto is probably the future, but we jab because we love. Right, we poke fun because we care. And so Bitcoin up to 119. Then volatility, you've got volatility futures are down. You got spot volatility down 48 cents. And yeah, man, that's just just another day. I mean, Bill Murray, he nailed it. What, 20 years ago, 25 years ago? I mean, every day is the same. I mean, you could go Bill Murray, you could go 9 Inch Nails. Like, there's a couple different ways that you could play this thing with every day being the exact same as the previous day. And so if we go into if we go to the positions tab, yeah, so obviously all eyes are on Netflix. You can see that right here. I mean, my eyes are on Netflix. I mean, you got all eyes on Netflix. You got all eyes on Tupac. I mean, this is all just some pretty basic stuff. You got Netflix up $19 today. How are we going to play it? Well, we're going to do some things here in the next couple of minutes. And again, I don't really think we need to overthink this. I think we just use basic common knowledge when it comes to how we're going to play Netflix. Right? And it basically just boils down to if you can't beat them, join them. Like, if you can't beat them, you just got to join them. Like, if you can't find a way to get through whatever it is you're trying to get through, you got to acquiesce. You got to surrender, right? And so we'll play this thing to the upside, and then obviously Netflix will gap down 10% tomorrow morning. So we'll do that. We'll do that here in a couple of minutes. But, man, I see you guys in the chat, man. Look at you guys. I see some overachievers getting in there early. I even got in there today. And so I'm trying to lead the overachiever crowd as an underachiever. And so that's kind of squaring a circle if I've ever seen one. But Ordenu's in the house. Down 721's in the house. Man, Good 5 student in the house, man. I appreciate you there, Good 5 student. G Llama's in the house. Emmett Morrison. I see Aaron, I see Brian, I see Joe, Kias, and Sergio. Man, I appreciate you guys and others that I probably missed. But let's go through a couple of things in the portfolio. So number one, let's talk about our Goldman Sachs butterfly. I don't know why Tasty is kind of janked up this strategy here, because you can see, like, normally when you open up, like I have it grouped by order chains. Hold on, let me try something. Because you can see, can you guys see what I see here? Like, usually, I mean, the butterfly is not just this piece, right? The butterfly is all of this. And so the fact that you've got kind of a little, I don't even know what you would call that, a little divider, like a little, just a little kind of fork in the road there with butterfly, and then you've got the option on top, that doesn't really make sense. So let me just group by position here, or group by symbol. Okay, so that looks better. We don't get the snazzy label that was on the top, but it was kind of doing some funny things there for a second. So this looks a lot better to me. We're about even on the Goldman Sachs butterfly. So we're down 20 cents on the trade. And you've got Goldman Sachs knocking on the door. I mean, it is right on the precipice of greatness. I mean, it's right there, man. You've got Goldman Sachs at 709.70 now, and we have a 710 call. And I mean, now we're only down 15 cents. Oh, look, now it's in the money. Man, look at this. So the markets are moving, man. Goldman Sachs is getting on its horse. So we are now unched on the position, like quite literally unched. We're down a nickel on the trade. So I'm going to go ahead and classify that as unched for my mental records. But here you've got a 710, 730, 750. I kind of want to let it go, man. Like let's let it go, I should say. We're on Thursday going into Friday. It's obviously going to expire tomorrow. We're going to do some Netflix action, so we'll already be somewhat active in the morning if some things work out. I may be taking trades off early tomorrow if they do work. And then, of course, again, you will not be caught in the lurch, or you will not be left out of the discussion. If I have trades that work, there will be at least a 17-minute victory lap per trade, so you will not miss anything. If the trades don't work, of course, we just give them a quick verbal cameo and we go on our way. But Goldman Sachs, let's sit tight. Let's see if we can get, $3, $5, $7 to the upside here, then this butterfly would be in a really good spot. Now, of course, I respect the fact that some of you might want to take this trade off. I think that's totally fine too. If you wanted to close out of that trade, I don't think that's necessarily a bad move. You'd be right around unched on the trade, still maybe down, 30, 40 cents. It looks like right now. So that would be totally fine too. And so for Goldman Sachs, I'm going to sit tight, but if you wanted to close it, I think that would be fine. I don't think, let me look at the chart here. Was there a chance to close this for a winner in the last couple of days? Because I know that this trade was yesterday. Let me think. Was this trade yesterday morning? I think it was yesterday morning. And so if you look at Goldman Sachs yesterday, this is, of course, when I was with Errol for today's assignment. You can see that it opened at 708, so it opened in right about the same spot it's at right now. But then it was weak for most of the day down to 691, and then it hit a high of 709.78, which is pretty much where it is now. I don't think you would have been profitable at any point yesterday. So we didn't really miss anything in terms of opportunities to take this off for a better spot than we're currently in. Like right now, we're basically in the best possible spot that we could be in for this Goldman Sachs position. And so we're going to sit tight. We're going to do nothing. And so that, of course, is kind of rule number one. And so let's go ahead and let's use that rule here today. So that's Goldman Sachs, a little commentary there. Let's talk about JP Morgan for just a hot second. So this trade is maybe a little bit different because we still have expiration tomorrow. Like you still have, 285, 290 are the strikes on the vertical spread, 288. And, we bought the spread for 260. It's currently marking at about $3. So we're up about 50 cents on the trade. It's marking a little bit over $3. This is one where I don't think it makes sense to hold this any longer. And this gets back to what I was talking about with E yesterday on today's assignment, what I talk about with you all, on a pretty regular basis, economic significance, right? Like you need to figure out when you're in kind of the gray area of, hey, this trade is working, it's profitable, but it hasn't hit my profit target yet, then you need to figure out, is it economically significant enough for me to take this trade off, right? If the answer is yes, then I would encourage you to go ahead and take it off. Now, what determines economic significance? That's a gray area in and of itself. But I think most people would agree if you're up 5 or 10 cents or 15 cents, that's not economically significant. Now, you may still want to take it off to remove the risk and things like that. That's totally fine. But when it comes to just, something that's actually going to move the needle forward from a P&L standpoint, I think we can all agree that 5 cents, 15 cents, 10 cents, 12 cents, not quite there yet. I think we can also all agree once you get to I'm just kind of making this number up, it's 70 cents. That's economically significant because remember, 70 cents in the options world is $70 in the actual world, right? So 70 cents, 80 cents, 90 cents, $1, that's all economically significant, right? For anyone trading basically any account, size, you could be trading 6 figures. And it's like, hey man, $80 is $80. Given the fact that we've had 40% cumulative inflation over the course of the last, 6 years or whatever, it's like, man, $40, that'll get you a ham sandwich and some chips down at the corner store. So it's like, man, that's lunch right there, right? That's one lunch right there. And so you don't want to obviously overlook that. But when you start getting to 30 cents, 40 cents, 50 cents even, you're kind of in the gray area and you kind of have to make that call. And I talked about that yesterday, I should say, with Errol, and he was up maybe 33 cents on the trade. And to me, I honestly would have kept it on. I don't think you've kind of reached the threshold of economically significant from my vantage point. He actually felt comfortable taking it off, so he took it off. And so I think that's totally fine. I think it just goes to show you that, so much of what we do is gray, and we try to make it as black and white as we can. But it's not that simple. And so for here, though, you could say I'm up 57 cents, 56 cents now. This is close enough to kind of that surefire economic significance of like 70 cents or so that I'm going to go ahead and close this down. I'm actually up 64 cents now. So the fact that I kept yammering actually worked in my favor. That never happens, guys. If you've seen the show before, you know that never happens. When I yammer more, I lose money. When I just keep going on tangents, it almost never works out. Not for you, not for my P&L. Like nobody's a winner in those scenarios. But let me go ahead. It looks like the mid price is 315. Let's give it a shot. I don't even know. Oh, we got Phil. Oh, wow. We got improved to 321. Wow. Okay. So JP Morgan was pretty wide, wider than I would expect for JP Morgan. Let me go back. Let me see here. So for JP Morgan, when the dust settled, all right. So there you go. Right. We bought it for 260. We got out of it for 321. That's a 61 cent. That's a 61 cent profit. I mean, that's pretty close to the surefire economic significance threshold of 70 cents that I just kind of made that up from the standpoint of like, I can't give you a study. Like, I don't have a market measures handy to show you that like 70 cents is the economic significance threshold. That's kind of a Dr. Jimism, which, those are always a crapshoot. I mean, those are, you would hope that they would be mostly gimmies, but I would say they're slightly overweighted to the gotcha side. But that's going to be JP Morgan. And all right, so we did JP Morgan. We talked about Goldman Sachs. I think the time has come, guys. I think it's time to do a little something in Netflix. All right, so NFLX. I don't think we have to overthink this, guys. I really don't. Everybody's happy. It's all strawberries. It's all sunshine, right? And the tacos coming out of the administration have shown that these are not just regular tacos. Like, these are like supreme tacos. Right? These are like the best tacos you've ever had, right? And case in point, yesterday. Like yesterday, the administration said, hey, we're going to fire Powell. We're going to do this. We're going to do that, whatever, right? And it's like, I don't even think you can do that, right? I'm not even sure that you have the legal resources and the legal means to actually get that done. But nevertheless, what happened? The market sunk. The market absolutely sunk. And then what happened? Man, the taco order came through. The taco order hit your desk, it hit my desk, it hit everybody's desk within like 30 minutes. And then we were right back to all-time highs. And so, again, I didn't think you could have a Taco Thursday or Taco Friday, but apparently I was wrong. And so, man, let's just keep riding these tacos. It's kind of like, when you get a hankering for Mexican, you got to ride that thing out, man. Like, it's not a one and done type of deal. You got to just keep going back to the well, probably for at least a couple of weeks, right? And some of you are thinking, I got like 18 hours. But I'm thinking long term, man. Like, we're in this for the long haul. We're in this for the long term. And so, anyway, I digress. Let's go into Netflix here. Man, show is completely off the rails. For a Thursday, though, it's almost Friday. That makes sense. Let's go ahead and you got a 1 DTE cycle. Again, I've kind of foreshadowed this all week. I love the Thursday going into Friday, expecting move butterflies. Absolutely love these guys because, again, if you get the directional move right, you kind of wake up on third base and you're in a good position to, potentially manage for a pretty nice winner if you get the move right. Of course, if you get the move wrong, then you don't have as many opportunities for it to come back. And that's the classic gimme gotcha exchange. Like, there's always a gimme gotcha exchange. You're going after a given gimme. You have to understand, okay, what is the gotcha that I'm willing to absorb here? Because it's there. It's always there. You're never going to find just gimmies and no gotchas, which is why actually that promo that they run for me and the live events where they say all gimmies and none of the gotchas, I'm like, man, I would never, ever, ever say that. Never say that because they're always there. There's always gimmies and gotchas together. They come as a unit. It's like oatmeal and peanut butter. Nobody's having a bowl of just straight oatmeal. Like, you're putting peanut butter in there, right? And again, it's like, are you just having peanut butter out of the jar? Okay, well, you probably are. But the oatmeal you're not having by itself. You're definitely going to add some peanut butter to that guy. But anyway, it's gimmies and gotchas. So going Thursday into Friday, butterfly is nice because it does give you a chance to potentially hit the home run. It does give you a chance to potentially hit a really, really nice winner if you get the move right. So I'm thinking we just go upside butterfly. Man, can we do a 50-point wide butterfly? It's a $1,300 stock now. Look at this thing, man. Netflix. Look at this thing. It is a beast. Hang on, let me look at a chart of Netflix. Man, look at that. Wow, that's some crazy stuff. That's a 1-day chart going back 5 years. Let me zoom out a little bit. Even just back basically since the beginning of the year. I mean, man, look at that. You've got some crazy. I mean, we started the year at 650. Man, so Netflix is sitting on a double this year. Wow, that's really, really impressive. I mean, a double for any stock is impressive, but a double for Wolf going from 3 to 6 is not the same thing as Netflix going from 650 to 1300, right? I mean, this is an established company. This is a company that's been around forever. This is a company that almost every single person uses, right? And so, I mean, Wolf, half the population doesn't even know Wolf exists. 80% of the population has no idea that's even a stock, right? Even most of the people that have Wolf in their portfolios have no idea what it is. And so for Netflix, though, that's impressive, man. I have to be honest, super impressive. Obviously, you had the liberation stuff. And then, man, that's basically a vertical line higher. Crazy, crazy stuff. All right, so let's go ahead. Again, I know my TA bros would agree with me. Higher highs, higher lows. This is basic bullish stuff. I mean, this is like, this is on the Baby Pips homepage. So I think we just go in here. I don't think we have to overthink it. I think we buy a 1300, sell the 1350, buy a 1400. Can we do it for $6 or less? $720. Ooh, yikes. Okay, all right. So we may need to think about this and maybe do a little bit of work to this. So if you're listening to the show, if you're an audio only audience member today, thank you so much. I appreciate you. The fact that you're coming in, with only 50% of your resources is quite impressive. That you're sticking with me and you're just letting the sultry voice guide you. Like that's a really, really dangerous thing because it is probably the least sultry voice you've ever heard, but nevertheless, it is guiding you verbally through the forest. Well, Netflix at 1270. We're in the 1-day cycle, so this is going to expire tomorrow. The strikes that we've chosen on the call side, of course, 1300. 1350, 1400. And the expected move to the upside goes up to right about the 1347 or 1348 level. And so we're basically right there. We are hugging the upside of the expected move. And so 1300, 1350, 1400. It looks like the cost is about $7. That's a little bit more than I would like to pay because if you've seen the show before, you know that from time to time we have some losing trades. From time to time, only like 8 out of 10, we have trades that don't necessarily go the direction that we would like them to go. And so we have to be mindful of this. We have to be cognizant of this, right? I mean, if we're talking, if 70 cents is economically significant, $7 on entry on basically a 50-50 shot is quite economically significant. So again, the portfolio size we're working with here is about 30,000. So you always want to contextualize everything relative to how much capital you have. 1 to 3% is a good range for defined risk strategies for most people. Generally speaking, if you have less capital, you're going to be on the higher end of that range and potentially even above the upper bound, your 4%, your 5%. That's very possible. If you're only working with, 10 or 12,000 or 15,000, you may need to kind of take the upper bound off and loosen it up a little bit to, kind of make the numbers work, being able to trade, especially like higher price stocks. Not even necessarily like a Netflix, but like a Tesla or like a Microsoft or something like that. If you have more capital, though, if you're dealing with 6 figures, multiple 6 figures, of course 7 figures, then you're going to be able to be on the lower end of that range and potentially even below the low end of that range to where now you're only 0.5% per trade or maybe even less if you have a significant amount of capital. But for most people, somewhere between 1 to 3% is pretty good. For me, I typically tend to be 1 to 2%. That's where I generally feel the most comfortable. So that's going to be $300 to $600. And so most of the time, if you've seen the show for the last few weeks, you've seen me do plenty of expecting move butterflies. It's one of my favorite strategies for when I want to take a directional shot, whether it be for earnings, whether it be for a binary event, whether it be for an Uncle Jay tie color, like whatever it might be. We're typically around $5. I typically like to spend about $5 on my expecting move butterflies. From time to time, we might be a little bit less, like Goldman Sachs was only 3 something. From time to time, we might be a little bit more, like sometimes on SPX, we tend to be $6 or $7. Like that certainly happens too. But I would say just on average, we're usually around $5. So here, $7 is not crazy. It's not out of the discussion completely from the standpoint of it fits within the position sizing parameters. But I still think Because $50 wide is a very wide butterfly. And I do like wider butterflies. I mean, anybody who trades butterflies would always prefer a wider butterfly over a more narrow butterfly because it gives you more ways to be right. It gives you more room around the short strike. You don't have to be as perfect. You don't have to be as fine. Like, there's so many benefits. Well, of course, it's gimmies and gotchas, right? Like, if you want a given benefit, you have to be willing to absorb a given cost. Well, if you want to widen out your butterfly, the cost of that butterfly is going to go up. Like, it's not going to be free. Like, the market's not going to just give you a wider butterfly for nothing. So, like, you can see right here, like this $50 wide butterfly. Let's say I wanted to go $60 wide, just to kind of show you guys. I can tell you with 100% certainty that number's going up. That debit that I would pay for the butterfly is increasing. It will go up if I widen this guy out. And so I really hope this happens. Otherwise, we'll have to edit this guy out later after the show. And so if I do if I move my 1350 strike, no, it'll happen. If I move the 1350 strike up to 1360, and then I move, the 1300 strike down to 1290, you can see, I mean, the cost almost doubled. Wow, that's crazy. I didn't expect it to go up that much. Wow, that's really crazy. The cost doubled for just an extra wait, hold on. I just messed everything up. Yeah, okay, that's what I wanted. It's 1290, 1350, 1410. Okay. Sorry, I was moving around the short strike, and that's not what I meant to move. I wanted to move the long strikes. 1290, 1350, 1410. It's $60 wide. It's symmetric on both sides. I left my short strike the same, and I just widened out the long strikes. And now you see the debit paid is $10 and some change. So it's gone up by a few bucks. That makes sense. That's about what I expected it to be. And so again, if you want an even wider butterfly, you have to be willing to pay the piper just a little bit more. So of course, the opposite is also going to be true. If I narrow this guy up a little bit, and tighten up the strikes, then I'm going to be able to reduce my debit paid on the strategy. And so I'm going to go from, instead of doing 50, let's try 45. So I'll do 1305. Okay, that's a lot better. I do a 1305. I keep the 1350 the same, and then I do 1395. And I do 575. So 575, 580 on the mid price. I mean, this looks pretty good. I really think this is the move. And so it looks like 592. That's fine. It's, I wish it was closer to $5, but that's okay. So we got filled at 592. So there's your Netflix trade for tonight. And we're playing it to the upside. Once again, if you have ever seen the show before, you know that if you are serious about making money, but some people aren't. Some people are they're out for having a good time. Like, they're just in this to just kind of pass the time away. Amen. You got to decide what you want out of this. If you are serious about making money, you should do the opposite of everything I do. You should be fading every directional trade that I do. Now, I wouldn't sell this butterfly, the one that I just bought. I would just play Netflix to the downside because you probably very comfortably have a winner on your hands. All right. But let's go ahead and I was going to do something else in Netflix too to the upside, but I'm like, I think that's probably good. And so one stack of cash tonight is probably sufficient to be set ablaze. So let's go into the chat though, man, because I'm a little over halfway mark of the show. So let's see. Where are you guys at? Oh, okay, here we go. I'm going to surprise and delight Joel James in the middle. Says, Dr. Jim, yes, please get Glenn on to do some live FX stuff. It's the only way I learn. That's why your show is the best. Man, Joel, we are going to make it happen. We are going to make it happen. So I'm going to reach out to Glenn. I'll see what his schedule's like. I think it's sometime in the next couple of weeks. Let's get him on here so that we can learn together because I don't want to mess this up. Like, I'm not familiar with the Tasty FX. Like, I got the emails and I got the kind of the demos and whatever. But having someone show us kind of hands-on is kind of, that's obviously where it's at. So, yes, I am right there with you. We're going to get Glenn. We're going to get Glenn on. All right, but let's see where you guys are at. So, Org Danu's in the house. What's going on there, Org Danu? I appreciate you, my friend. Org Danu says, greetings from Italy, Dr. Jim. I did a short put on ABT, 125, 122, so a short put spread, August 29th. Now the extrinsic value is 0. Should I close it? Or should I wait until 21 days to go? Okay, so a couple of things. Extrinsic value is never 0 if there's still time left. And so the fact that that's in August 29, let me look at this. So you said ABT 121. Let's see. So it's fully in the money. So I'm assuming you did a short put on ABT 125, 122. So I'm assuming you mean a short put spread, and I'm assuming you mean you're short the 125 put and you're long the 122 put, and you are in August 29th with 43 days to go. So let me bring this guy up. So you can see here that if you look at the extrinsic value, for some reason the 122 is not populating. Oh, that's weird. Okay, so so for whatever reason, ABT, is that a liquid stock? 3 stars. I mean, they're paying dividends. I haven't traded ABT in a while, so for some reason, and I would assume this is an exchange thing. I don't think that this is a brokerage level thing. This is probably an exchange level issue, where sometimes if you have bad quotes coming off of the exchanges, you're going to have bad quotes showing up in whatever brokerage you might be using. And so for ABT, though, you can see this 122. So here's the issue there, OrgDenu. You can see that the 122 is just not populating for whatever reason. And so it's leading you to believe there is no extrinsic value in there because there is no price there. That's of course not true. There is a price for the 122 put. We just don't know. We just don't know what it is right now. Because I mean, you can see all the neighboring quotes are showing up. I mean, you've got the 125, the 124, the 123, like it's all there. Oh, there it is. Oh, it just popped up. All right, nice. So we got something now. Okay, that's good. I'm glad. So you can see now it's selling for about, I mean, the markets are extremely wide. I haven't traded Abbott in a really long time, if ever. And so I don't know why the markets are so wide. I thought, was it 2 stars? 3 stars. Yeah, I mean, it's 3 stars on liquidity. I would expect the markets to be a little tighter, but for whatever reason, they're not. And so this is clearly not a zero extrinsic value situation. You have a significant amount of extrinsic value left in this this strategy. Now, what's tricky about this though is here. Let me even let me bring this up. If I sell a 125 and I buy a 122, so this is what this is the strategy that you have on. Okay, look at the extrinsic value. It's negative. It's negative. So let's talk about that for a second. Your short put spread, again, if I'm reading it correctly, which I think I probably am, for your short put spread, it's fully in the money. When you and I'm sure you sold this when ABT was much higher and now it's gone in the money. This happens to all of us, of course, and this is just part of trading. When you have a vertical spread on, short put spread or a short call spread, if it goes fully in the money, what ends up happening is your theta on that position is no longer positive. It actually flips to negative, which you actually see that right here. So that literally means time is now not on your side. Time is now working against you. Now, you can see that in a couple of different ways. Number one, you see it with the negative theta. Number two, you see it with the negative extrinsic value. But also number three, you actually see it with the credit on the strategy selling for less than the width of the spread. And so remember, if this thing is fully in the money at expiration and you carry it all the way to expiration, which if you have a defined risk strategy, sometimes that's what happens, you are going to assume maximum loss on the position. What is maximum loss on the position? Well, it's a $3 wide spread. So the maximum loss is it's going to mark for its full intrinsic value at expiration, which is the width of the spread, so $3. And then you're going to subtract whatever you collected on entry, which I don't think you put that in the chat, but it's probably about $1, right? So if you sold it for $1 and it marks at 3, you lose $2 on the trade. So right now, even though time is working against you, even though the extrinsic value is negative, even though the theta is negative, these are all very normal things. They happen with spreads that go fully in the money. I would do nothing. I would do absolutely nothing. I would sit tight. I would give the position time. I would give the position room to breathe. You've still got 43 days to go. I mean, so many things can happen between now and 43 days from now. And so that's what I would do. So hopefully that helps a little bit. Don 721 in the house. What's going on there, Don? Hey, Dr. J, for this year, January to December, my commissions and fees will be around 9% of my net lick. Okay. Is this percent high or low for the tasty style of trading? We all have to chip in to buy that second Range Rover. Yes, we do, my friend. So the fact that you understand the mission, the fact that you understand the objective, that's the most important part. But so I would say 9% of net lick, that's, you're obviously very active, right? I mean, by that number, I can glean that you are quite active. You're trading multiple times a day, several handfuls of times a day, I would imagine, most days. And that's not necessarily a bad thing. I think, 10% or less of P&L is usually what I typically think is a good level for most people. And so, some of you might be thinking, well, Jim, I'll take 10% of net lick because the P&L is still not green. It's like, yeah, I understand that. And so when it comes to, I would need to know a little bit more about what you're trading specifically. Like, is it all options? Do you have some futures in there? Do you have some other things in there? And so, you can certainly, you could follow up in the chat, but I probably won't get to it. I know I won't get to it. But if you want a little bit more guidance or a little bit more of a suggestion, shoot me an email. I know that we've emailed before, Don, so, you can follow up via email and we can carry on this discussion with more details. But I would say 10% or less of P&L, of a positive P&L, is going to be a good level for a lot of people to shoot for. And so, again, it depends on how active you are. It's largely determined by how active you're going to be and how active you are. So, Kiosk in the house. Here we go. Go time for my favorite Dr. Jim. Man, I appreciate you, my friend, man. Look at you. Kiosk goes on to say, I have 3 long calls of NVIDIA at 195 expiring August 22nd. Do you have any thoughts? Yeah, I've got a few. Let's see. NVIDIA. So you've got 190, 195. They expire when now? August 22nd. So right before earnings. Okay. So a couple of things. Number one, these are out of the money calls, right? It's gonna. In fact, here, let me even bring it up. You've got these guys right here. You've got these 15 delta calls. This is classic, like buy an option, try to hit a home run type of strategy. Generally speaking, as a foundation for what you're doing, I don't think it's a great idea. You look at the research, the negative theta, you look at all the things that kind of point to this not being a successful strategy long term. I would use that to guide you here, right? I would use, buying calls, buying puts. It's just a difficult game to play. So I would encourage you, I would probably close at least 2 of the 3. If you want to leave one on to kind of take a flyer, it's not a big position. It's $1.35, whatever. No, I don't know what you paid for it, and you didn't say in the chat, which is fine, of course. But I don't know, and I don't know how big your account is. It largely depends on your account size, right? And so let's actually bring it back to, like account size. If I was gonna, and I can't tell you guys the last time I've bought a call or bought a put, especially not an out of the money call. Now, like a deep in the money play as like a stock substitute or like a future substitute, that's a little bit different because you can treat it very much like a scalp, and you're not going to have all the negative theta that you would have for an at the money strike or an out of the money strike. But buying an out of the money option, it's been many, many years since I've done something like that. And so I don't love it as a foundation. I don't love it as a sizable chunk of what you're trying to do. But if you want to take a shot every once in a while, hey, man, go for it. I think that's totally fine. I would have it on the lower end of your defined risk range of what you typically do for defined risk strategies, and possibly even below the lower bound of that range. So again, if you're 1 to 3% usually, maybe you're 0.5% when you want to take a flyer on a call or whatever. Now, the tricky part about this call specifically, Kiosk, is you don't even have earnings. You're not even going through earnings, right? To kind of have that huge binary event that's kind of coming on down the chutes in a few weeks that could obviously lift NVIDIA significantly, right? That thing could be 200, 225, 250, whatever. It could do that before then, of course. But I think all eyes are kind of on NVIDIA earnings here in a couple of weeks. And so, I would what's the 195 call, just a week later? It's going to be significantly more because of earnings, but maybe not that much more. Okay, yeah, that's a lot more. So it's more than double. It's almost triple, actually. And so that goes to show you the power of the volatility that is concentrated on these binary events, that's concentrated on these earnings calls. And so, I don't love it. I wouldn't hold 3. Just hold 1, man. If you want to take a shot, take a shot. That's totally fine. I would actually prefer to just do an at-the-money vertical spread, maybe. Just do an at-the-money call spread, at-the-money put spread, if you want to play it to the downside, but this is obviously a bullish play. I think that's a more strategic way to do it. And so that's what I would do. Hopefully that helps a little bit. All right, so let's see. Where am I at here? Sergio's in the house. What's going on there, Sergio? Appreciate you, my friend. G Llama's in the house. He says, I heard Dr. Jim's theme song, yes, the Dangerous song by Big Data, this morning when I was driving, and I was so confused. You know what's amazing about this? And I've said this before on the show, but it's been at least a couple days, so we'll bring it up again. I've been, I don't want to say pressured, that's too strong of a word, but it's been gently suggested to me multiple times over the years to change my theme song. Not because it's not a great song, but just because to kind of freshen some things up and, you know, get a new look, a new feel or whatever. And every time I have resisted. Every time I have planted my feet in the sand, in the cement, and said, we are not moving off of this theme song. We are absolutely not moving off of this theme song, because when it's all said and done, whenever that is, right? Could be next week. Could be, you know, tomorrow. You know, I think we have the Canadian durable goods print estimate forecast tomorrow morning at 2 o'clock. So, or I'm sorry, tomorrow afternoon at 2 o'clock. So this could be it. Like, this could definitely be the end. If it is, I want us all to go out together, having that song forever etched in our minds and have it be associated with this show. Again, you're driving, you're just having a good time, and I hit you out of nowhere, man. Out of nowhere. You're not even thinking about me. In fact, you're actively trying not to think about me. And then Big Data hits you, and you're like, how did Dr. Jim just weasel his way into my noggin? I got my ways, man, and that's one of them. And so I appreciate you there, G Llama. So Good 5 student, what's going on there, Good 5 student? Costco was very promising. Now it is in decline. What do you see coming for Costco? I have no idea. And respectfully, I don't think anyone else does either. But, you know, yeah, I mean, Costco, yeah, you're right. So Costco was well over 1,000 up to 1,100. Now it's back down to 950. You know, I mean, I think it's anybody's bet. I think it's anybody's guess, you know, and so that's why I would much prefer if you were going to do something in here, whether you were bullish or bearish and you wanted to take a directional shot, I would just, you know, I would use short premium to do it. Like, give yourself, you know, multiple ways to win. Give yourself room to be wrong. So if you were to do something bullish, maybe you sell a put spread. If you want to do something bearish, maybe you sell a call spread out of the money, of course. If you wanted to do something neutral, you could do an iron condor. You could even do a butterfly. I mean, there's a couple different things you would do. I probably wouldn't do a butterfly super long term because I think that's a difficult trade. But iron condor could be fine if you wanted to do something shorter term. Now, you guys know I don't love iron condors, and I don't, and I've been very open and honest about that. But Good 5 student, I'm not sure where you're at on the learning curve. You might be brand new to the show, or at least you're brand new to the YouTube chat. So thank you, my friend, for popping in. And I really hope that you come back, whether it be to my show or any of the amazing shows that we have on the network, because there's a lot to choose from. If you're just starting out, though, iron condors are great strategies. It's a great strategy because it's powerful, man. It's powerful to learn. Man, I can make money without even having a directional bias. Like, that just that totally changes people's view and totally changes people's approach to the markets. And so I think that can be a really powerful thing, even if that's not my favorite strategy. And I have many, many reasons for why I feel that way. They're very slow moving. They're very difficult to adjust. They're clunky and things like that. But I think it would be a fine strategy if you're on the earlier end of the learning curve. If you're not, if you're like further down the road and you're trying to think, all right, what should I do in that scenario? I would much prefer to see you take a directional stance, either bullish or bearish. I don't really care because I don't really know what's going to happen, and neither does anyone else, and do a short vertical spread. I actually think that could be more successful in the end than being neutral, even when you don't know what's going to happen to a given stock, because short vertical spreads are so much easier to manage than iron condors, in my humble opinion. And so Brian Dowdy's in the house. Dr. J on point today. Let's see what we do for Netflix. Yes, I gave you the ticket. All you have to do now is punch it, right? I showed you my cards. I'm playing it to the upside. You know, Brian, and I know that you know. And I know that you know that I know. You've got to play this thing to the downside. And you know that. I don't even need to remind you of that. But just in case, because the show's almost over, you might be thinking, I don't know, man. I think Dr. Jim's got this one. I don't have anything. I can assure you, we are going to be in some hot water tomorrow with that butterfly. And so let's see where we at. Emmett Morrison, it's Dr. Jim time. What's going on? And it looks like we're actually going to make it through the show. So yesterday we got knocked out by the storm with like a minute or two left. Oh, you know what? Hold on a second. I'm gonna pivot from this, and I can't remember who asked the question, but somebody asked me about an IBIT call ratio spread. So, man, I really hope that you're watching again today. And I'm so sorry I wasn't able to finish my thought yesterday because I got knocked out by the storm. There was not much I could do. I know it was a call ratio and it was an IBIT. So let me talk about, I don't remember the strikes, but I can still give you my general thoughts. So if I were to do a call ratio spread in IBIT, I'm just picking strikes at random. I think it was like $3 wide or something. I buy a 70, I sell a 73. It's a 1/2 call ratio, and I pick up $2. Okay, is this a good idea? No, I think it's a terrible idea. I think it's a bad idea, and here's the reason why. Being naked short something like Bitcoin just feels like you're asking to get gorilla smacked. It just feels like, man, you are asking to get just taken out to the woodshed with no mercy, like no end in sight. I really, really, really do not like that strategy. Now, if you've seen the show before, whether it's whoever asked the question yesterday or whoever's watching today, we'll sell some calls from time to time. Like, I'll pick and choose my spots, but I'm not selling calls in Bitcoin. I'm not selling calls in NVIDIA. Like, we'll sell calls in Pepsi. We'll sell calls. I think we even sold the call on Amazon, and we kind of cheated death on that one. But it's like, man, these real high flyers that have a chance to, obviously Bitcoin could be 130, 140, 150 in the next week or two. I mean, if the internet is right, then the free internet money, it's gonna be 250,000 in the next couple of months. And it's like, man, if you're short a call on IBIT when that happens, or IBIT, whatever it is, that's gonna be really, really, really painful. And so if you want to play, and the thing about ratio spreads is they're kind of omnidirectional, where you're kind of bullish and bearish at the same time. And so if you want to take a stance in IBIT or Bitcoin, then take a stance by all means. But I would be very thoughtful about it, and I would probably be defined risk for almost anything I do in there, because I feel like the risk, it's astronomical on both sides. I mean, I could see Bitcoin at 160. I could see Bitcoin at 80. You could make a strong case for either pathway forward through the forest right now. So I don't like the call ratio spread in IBIT. And so hopefully that helps whoever asked that question yesterday. And again, sorry that we got knocked out yesterday, but I'm really glad I remembered today to kind of finish my thought. But let's see. Joe's in the house. What's going on there, Joe? Aaron Sin's in the house. He says, alrighty, today's the day for Netflix. Butterfly, that's right, my man. That's how we do it. Please do the honor picking the strikes. There you go. We did it. We did it, man. 1305, 1350, 1395. Let's go. That's just the way that we do it. And so I hope that you're able to find a way to fade that, Aaron, before the bell rings today. Brian Dowdy, what's the difference between spot volatility and futures volatility, Dr. J? I would never brand myself as a volatility expert. And that may surprise some of you, because that's what we do on the network, and we sell volatility and things like that. And I'm obviously very well-versed in that and comfortable with that. But I'm talking about the actual volatility curve and there are people that have made their whole career on, trading the volatility curve and the differences between them. And you start talking about spot volatility doing X when, front month volatility does Y. Or back month volatility does Z or whatever, and you've got VIX expirations, and there are people that are looking at this stuff like with a fine-tooth comb. I'm not one of those people. I've never been one of those people. It's actually on my list as a way to improve as a professional. And so it is something I want to learn more about, but I haven't done it yet. And so when it comes to like the real ins and outs, like the nooks and the crannies, I'm only going to get you just barely started when it comes to this. The VIX is basically, it's taken from, SPX option prices, and it's showing you market-wide volatility right now, forecasted over the next 30 days. So it's an implied volatility number. So implied means obviously forward-looking, but it's a 30-day measure, and it's essentially used as kind of spot volatility. So volatility right now, whereas volatility futures like /VX, that's going to be future volatility. And so, when it comes to, which of the two should we use, I know a lot of traders like Tom and Tony usually use the futures volatility. Again, I typically look at the VIX mainly because it just has a special place in my heart because of my first research projects I've talked about before here on the show. But normally the relationship between future volatility and spot volatility is what you see today. So you see future volatility at 1640, spot volatility at 1650. So a 3-point wide spread. That's a pretty significant spread, actually. That's kind of what I mean. Like the volatility bros and bro sets, they would know a lot more about that spread, and they would know a lot more about, is that spread wide? Is it narrow? Is it too juicy? Whatever. Whereas I'm just looking at this thinking, all right, this is normal. Future volatility should be higher than current volatility because uncertainty is greater for a longer period of time. There should be literally by definition more uncertainty in the future than there is right now. And so usually this is what we see. Now, after a huge, and this I've got to go after this, but usually after a huge sell-off, like what we saw in April, the VIX will skyrocket over and above future volatility. So that is quite literally telling you that things are so crazy right now that the expectation is that they will calm down in the future. Like that is what the market is pricing in, and that actually is kind of the basis of what we do, why we do what we do, selling volatility when IVR spikes and volatility is elevated and all those kinds of things. So hopefully that helps a little bit there, Brian. But I gotta go. Man, it's so fast. It's so fast. I can't believe the show is over, but man, I appreciate you guys in the chat. If I missed you today, please come back tomorrow because I'm going to need some company. I'm going to need some company as we lament my Netflix situation because it is almost certainly going to gap down tonight and gap down big time. But I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
We're going to play an interactive game, but are you open?
Yeah, sure.
Okay. In order for this game to work properly, you need to go to your front door right now.
Wow. What? Gotta go to your front door. Oh. Elijah left you a present. Go ahead. You really want me to go to my front door? And while Tom is getting his gift,
So these will be available starting today on a...
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Going on, everybody? I got to tell you, a lot of the data out there for the economy is looking really good, and retail sales was the latest thing. We'll talk about what's going on there. Uber is making their claim. They're making their claim into the robo-taxi area. It is becoming a crowded space, and it's like the space race almost, right? Like it's going to happen. We'll talk about that one. Finally, you know what's coming tonight. Netflix earnings, a big one. I'll talk about the trades I got on. You can talk about the trades you got on. We'll meet in the middle somewhere, and we'll do all of that. Welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. Back in the saddle again. Tuesday, I had my good friend Mark Benzaquin on. Seemed like a lot of positive feedback from you guys. You seem to... I figured you guys would like that one. Ever since I've been on the network, I've been on the show, people often ask me about my former trading, what it was like to trade a prop firm. And I've gathered you want to hear these stories from a lot of these people that used to trade in a pit, or those who are connected to retail trading now. I also had Matt Cashman on recently. Both of those guys work at the same spot. But I feel like you guys are really interested in those type of stories. And so maybe going forward, I'm going to try and have more of those for you from time to time. If you like that, let me know. Let me know through the chat. Give me a thumbs up. Give me some type of acknowledgement. I need something. Let me know if you're interested in that. Me having more of those former traders, former floor traders, former prop traders. If you'd like to hear more about that, and most of them are probably going to be connected to retail these days. But I could have more. I mean, I got plenty of friends. So just let me know if you're interested. We'll do more of that. Let's pull up the slides. Talk about what's going on today. And then we'll quickly get over to the platform because there's a lot more interesting trading starting to happen here and things are starting to shape up. Retail sales came in better than expected. We had 2 months of declines previously, but not this time around. Why does that matter? consumer spending, right? And if GDP is 2/3 of consumer spending, then GDP is going to be good, and that means we don't have to worry about anything in the economy, and the market is probably going to end up being good, right? If only it always worked that way. But I mean, theoretically, that's what's happening right now. So retail sales are good. That's a good thing. I mean, that's, markets have really liked that. We're seeing up 38 handles in the SPOOs a day, and everything seems to be positive. The only thing, again, that could derail this market going forward would be, I don't know, more talk of tariffs, August 1st deadline, something happening on earnings. I don't know if Netflix is the one that takes the market down. It's probably something like a Google or Apple or Tesla. I don't know. Something in the Mag 7. If all of those are not good, but so far bank earnings have been good, and I think we're seemingly in the clear. The biggest thing that's all year, the biggest catalyst, it's been always tariffs, right? And how much that's going to affect the economy and eventually affect consumer spending. But as of right now, we do have tariffs in place. I had to look this up the other day. I just trying to remember. I think we have a blanket 10% tariff in place right now. And so as a result of all this data we've been getting recently, it seems like that's not an issue. I don't know, man. Stay tuned. I could see it at some point or another being coming down the pipe and being an issue. Uber is teaming up with Lucid. I think they injected $300 million into the company, and they're going to launch a robo-taxi fleet. This is big news. I wonder, is Lyft doing the same thing? I wonder how long Lyft is going to be around as a competitor. I don't really know, but Uber, you see it in most places nowadays. I was somewhere, I think I was here in town, and I saw one of those Coco things, those little delivery drive right around boxes. I mean, those are around. Sooner or later, robo-taxis are going to be more of a thing. It's going to change a lot for that gig economy. Those who rely on that economy, you might want to start looking around for different things, because this is full steam ahead. You've already, you've heard obviously that, basically Elon is going to eventually use the Tesla fleet, obviously for autonomous driving. You're hearing about Uber going this route as well. Obviously Waymo is out there. So there's a lot of inroads to this area. And we all know that that's just how things work. And I've expected this for the future a long time. I don't know about you, but why should we have to drive? It's so much easier when we can just sit in the car, ride, and do whatever else we do. So now Uber's heading there. They're saying by 2026, they're expecting it to happen. Stay tuned. Finally, Netflix, big earnings. Right now it's forecasting about a 6% move and change. I retweeted something on Twitter earlier about how on the average over the last, I think, 8, it's been like an 8% move. I'm playing for bigger upside. This is one of the few that I do like to play, and I'm playing on calendar call, calling a calendar call spread. I got a couple of them. I'm actually probably going to add another while we're here on the show. Curious to know what you guys are doing. I know some people are doing diagonals. Hey, to each their own. Everybody does different things, but the biggest thing I feel like I wonder if they're going to talk more about these live events, right? Like, they had the roast. Obviously, sports has been a big area where they're going. It's a lot of money. They're leaning into it. I think there's the new edition of the quarterback show that's out right now. So obviously starting to profile. They had stuff for, I think, F1 recently. They had stuff for tennis players. I mean, they're just mostly going to sports because that's where the money is. Most networks are nowadays. So I don't imagine them not saying more about sports and live events. They just did a boxing match last week. This is huge for them. And I think that's where they're headed in the future. Leftovers, 2024 biggest box office bombs. Let's move to the next slide. This is a nice slide. I like it because this one shows the budget for the movie, which some of the budgets for movies these days are crazy, bro. And then the revenue. And, as a matter of fact, I'm curious as I'm sitting here, what was F1 movie budget? What was that movie budget? Spent in a $300 million. Yeah, okay. Yeah, make it. Yep, $300 million. And it's this AI overview saying has reported a budget of $300 million, making it one of the most expensive films ever made. Well, I'm just showing you Joker was $370 million. Superman movie budget. That could be crazy because this one has it has cheap actors, right? So it's not going to be as much. It's $225 million budget. I mean, that's a lot of it. Like, I bet Brad Pitt got quite a bit of money on the budget for that $300 million budget for F1. I would imagine that's what happened here with Joker. I would imagine Joaquin Phoenix got quite a bit of that budget. $371 million budget, only made $227 million, $144 million loss. Yeah, that's not good. They don't invite you back to do more movies when that happens. I'm telling you. Not the actor. The actor would be fine. It's the director who has to worry about. $331 million for Furiosa, a Mad Max saga. Fun fact, I've never watched any of the Mad Max movies, ever. Yeah, just doesn't appeal to me. But, to each their own. I did, however, see California Love with Tupac and Dre acting out Mad Max. I mean, does that count? I'm not sure. $211 million revenue on that one, $120 million loss for that movie. Borderlands. I know the game, never played the game, never saw the movie. $184 million budget, $104 million in revenue, $80 million loss on that one. Megalopolis, I don't even know what that is. Don't know it. $146 million in budget. That's a rough one. I mean, when you make only half of your revenue back, not good. Not good at all. And Kraven the Hunter, I remember when this thing was coming out and I was like, oh, okay, I guess they're just trying to find I don't know who the audience is trying to find. Wasn't really much of a finder of audiences. $191 million in budget versus $120 million in revenue. Yeah, not so good. So yeah, these are the biggest box office bombs of 2024. If you saw them, congratulations. Let's move to the next slide. Chat, what's going on, guys? Hey, Sergio, what's up? Paul Hyman, cool. I'll keep that in mind with the War Stories bet. Let's talk about Treasury yields here. That was one of the stories early in the week. 30-year Treasury touched 5%. And surprisingly enough, the markets did not freak out. And clearly, it's been a buy-the-dip moment as we've seen markets move higher. Yeah, yields don't seem to scare markets as much anymore. It's interesting. And then... yeah, I don't know, man. I'm still trying to figure this whole market out because things have seemingly changed quite a bit. But I don't know. Markets always have a way of reminding you of what things used to be like. And I feel at some point or another, the next time we get the 5%, markets are going to freak out. We'll see. Let's move to the next slide. This is the current situation we find ourselves in as markets continue to go higher. Implied volatility is fairly low. Trading over historical is extremely low. It's almost in the teens at this point. Things have been fairly quiet, and that's the kind of market we find ourselves in. So, of course, it makes you want to sort of play some downside, right? It's just a matter of when is that downside coming. I wish I had an answer for you. I don't have one, but this just lets you know when you see low volatility like this, you can almost count on higher market prices until catalysts like the August 1st tariff deadline comes in, and then all of a sudden we're going down for no reason or another. This is how it is. Everybody wants to buy. They're tripping over themselves to buy markets right now. I think things might calm down at some point. Let's move to the next slide. Another thing that's calmed down volatility-wise is oil. This is over the past year where we've seen oil. Remember, oil was trading $85 around this time last year. It's kind of crazy, right? Doesn't even seem like it, but it happened. It was trading over 80 again early in the year. And then, of course, we had the big blow up recently. And that was the main time we saw vol jump with it, which was due to, obviously, what was going on between Iraq and Iran. And you saw the other thing we have here, obviously, is OVX, which is the oil VIX. We saw volatility in VIX went up to 70. And it's come down. And when you look on the platform now, it's at IVRs in the 20s. And as much as I would like to put on a non-directional trade, I just can't do it. Not in the 20s. I usually don't put vol trades on in the 20s. I put them on in the 30s or 40s or 50s. 20s is just too low for me. I'm not going to do it right now. And this tells you vol is pretty low. So good luck. And I'm not really interested in trading oil directionally either. Just being in this 65 to 67 range feels like that's home for it right now. And so I don't necessarily, you're really trying to pick a direction. It's not worth it for me. Let's move to the last slide. So obviously we got Netflix, you got Interactive Brokers, you got a couple of those regional banks in there, Wall, HBAN, RF, Ally, if you will. Schlumberger has earnings, Schwab has earnings. So we're still in the banks earnings period. Oh, I forgot. Was right. 3M has earnings. I didn't realize 3M has earnings. I might make a. I don't know. Maybe make a play in there. I feel like earnings of its stock has moved quite a bit recently. Looks pretty bullish too. We might have to do a play in here, guys. Powell speaks on Tuesday, and that's mostly it. I mean, well, I should have put on here expiration. You guys know expiration is tomorrow, July expiration. I'm not exactly sure how big it is, but it is an expiration. And for that reason, I'm actually looking at, let's go to the platform really. The number of SP 500 stocks above the 50-day moving average, 363% of those stocks, 315, I think. Expiration is tomorrow. And I am going to do an iron condor. I'm going to do it $25 wide. I'm going to do, 6. Can I get it for 6? Is it highs? Ooh, I can almost get it for 6. I'll just get the trade off, whatever. Sometimes you ever do that where you're just like kind of staring at it, I'm just doing that. We're going to get it off for 610, I think. I'm going to put an iron condor, $25 wide, centered around 6,300. We're going to make that play right now. We'll see. I filled on that. That's one of the trades I wanted to follow. I want to do Netflix. Like I said, I already have a couple of different things on in there. Let's see. Hold on. Let me post this trade for you guys. Sometimes I'll forget. Okay, posting that. Netflix is about an 80-point move, right? It would seem. About an 80-point move, about 6%. Like I said, I've seen data that says it moves 8% at times. We all know Netflix can be a big mover. I'm playing for the $100 move type of variety. Now, I will say I did this based on prices, right? It's like, so initially I bought the 1,500 and the 1,600 calendar call spreads because they were just so far out of the money. And again, I'm doing it in August. The long part is in August. So what would be nice is if we just get a nice big $100 move on earnings, and then it just started like drifting up higher after that. I also have the 1,400 on. I probably have more than enough. I do this a lot based off of size of the position, really. So right now, the size of the position is, that's there. It's $400, as you can see. I'm willing to add another. I wanted to add the 1450 strike. I like big, nice, and round numbers, as you guys know when we do these calendar calls for earnings. But there doesn't seem to be a 1450 strike, so we might as well go 1440. Long August, and let's see. We'll sell them a week apart. We'll do the 14. I did 1440, right? 1440 call spread a week apart. $190. I can live with that. Wait, why'd you go 192? Well, just in efforts of getting this thing off. We'll do that. So we're trying to buy that one. Correct, Emmett. It was a put fly. Correct. It was a put fly. It was not an iron condor. Sorry, I messed that up. And be an iron fly if it's all in synthetics, right? If we just made the call side of that one thing instead of doing 2 in the middle, we do another call side one. That's an iron fly, right? It's a way to do that. All about synthetics. But yes, you're right. Sorry, I didn't mean to confuse you guys there. That was a put fly. 3M. This is one that I find interesting because this thing never used to move on earnings. It was pretty boring, and more recently I've noticed that it moves on earnings. So it had earnings when? Today's July, April 17th. Ooh, it had earnings in the midst of all the craziness before. That's wild. What do we think about in here? I don't even remember. I mean, does 3M still make like the same basic stuff that, the tapes and all this other sticky notes and all that stuff? This one could be interesting as well. We always play things to the upside. What kind of move is this thing expecting? Let's go to the 190 strike. About a $7 move. Do we think? You got to be a little bit. You got to kind of think out of the box a little bit when you do some of these. Yeah, they're really cheap, but then you also just think like, okay, is it really going to move? When I do these things, obviously I'm playing for an even bigger move. I'm playing for a big upside surprise for the most part, right? And so that's why I end up doing, like the strikes that I end up doing. So for a $7 move, we're playing for obviously something even bigger than that. In this case, do I want to do August, the 165s? See what that looks like. That's half. Yeah, put a couple of those, put one of those on. Oh, come on. Make it easier for me to get filled. August again, the 170. Let's see what 170s look like. Yeah, this one's easily going to get filled. There we go. Boom, boom. It's almost like the other one helped the other trigger and filled in Netflix. Well, look at that. Was it just fill 30? Is that what happened? Publish this to the follow feed, publish that to the follow feed, publish that to the follow feed. How about all of those trades, guys? Going through. Trading it up here today. Oh, well, just go to the trade. Other than that, I really, I did put on a call spread in the Russell 2000 a day. That's the only big trade that I have, not big, but one of the trades that I have in any of those indices, right? Like Dow, NASDAQ, S&P. That's the only one that I have now is this Russell trade. I put that on earlier today, 2,400, 2,500. It is buying power. It set me back about $1,000. And I did it in September, the September 30th expiration, with the idea being that it's going to encapsulate 2 of the Fed meetings. Obviously, next week's Fed meeting, 2 weeks from now, almost Fed week, 2 weeks from yesterday, Fed meeting on July 30th. And then you got the September 17 Fed meeting. And this trade is in September 30th expiration. It's also at the end of the quarter, which would really be nice. So if we keep going higher, this is going to be the one thing that I'm leaning on for the time being. You just saw me put on the 3M earnings trades. Oh, I meant to put the fact that those are earnings. Sorry. Robinhood is something that I've had on for a while. This stock has been mooning. I'm sure a lot of you have seen it. And I've tried to find ways to get long it. I've done calendar call spreads in this one too. I've had a couple. I mean, I had the 100, the 105, the 110. I actually closed all 3 of those that I just mentioned over the last couple of days. I still have the 115, still have the 120. And again, I always like to use the nice round numbers. I'm inspired to put on a 125, but the way the stock is mooning right now leads me to believe there's going to be some type of pullback, maybe to, let's see, maybe to the 1 week moving average is 101, so that's nothing, but maybe to 97, 95, maybe at that point, I even reinitiate some of the other strikes, maybe the 110 strike I put back on, maybe the 105. If it pulls back to 97, I'll put back on the 110 and the 105 strikes in calendar calls again, and we'll do the trade all over again. That's just how you do it sometimes. Let's see. I'm still in this copper trade. I'm not sure if you guys have any copper situation there, but just so you know, this trade right here, max loss to be $1,800. Okay, I was short this call spread versus being long the silver. Remember, if you know you're a longtime listener of the show, I was long a silver call spread, 40-42 call spread, right? And I made about $1,200 on it. I closed the trade out, mostly because at the time it was about $3,500 and buying power. And I just didn't want to have that much buying power at play in the trade. And so I closed it out, put on some SLV calls. So I'm still able to profit some if silver keeps making a big move to the upside. And so that's just been my play there. I am short a Palantir Strangle right now. Stock's been on the move recently, of course. Short that one. Do I need to, I might need to adjust this just a little bit to the 130s. Yeah, let's do it. I'm going to adjust this down just a little bit. Make sure I did that right. Buying that, selling that. Oh, come on. I hate when the prices change. Yeah, let's make that happen. I'm going to adjust that a little bit as it's moved up. Let's see. Yeah, sell everything. Yeah, you would think that, one of the trades I would want to put on would be a short spooze, but I just don't. I don't know. I don't really feel convicted in being short of spooze right now. I probably should. All-time highs is not necessarily always a reason to sell anything, but the other reason why I'm not that convicted yet, because I don't think, as much as we've moved, guys, I don't know if the crescendo has happened yet. I mean, this right here is sort of textbook consolidation, right? You see a couple of days. This is. You see a couple, again, we're breaking out a little bit here. This has been this real consolidation since the beginning of July, that the market is basically dancing on this green line of the 1 week moving average. And as a result of that, you need news more than anything to derail it. I mean, when the economy is moving well, even at a level where interest rates are 4.25% to 4.5%, nothing seems to derail this economy outside of talk of tariffs. And so I look at this consolidation. This is beautiful for those who pay attention to charts. It's sitting on the 1 week moving average, and then it bounced off of that on this day. If I were betting, I would say markets are probably going higher. I just don't feel like putting that much money into that case. And I feel like at some point or another, we get a pullback because there's mention of tariffs, and then you can resume buying. You know what I mean? So for that reason, I am Grumpy Mike. I am not getting anything big. Again, I'm just long the Russell here, which I think is probably one of the weaker. If markets are going to go higher, then that's going to play catch up at some point, I think. Wouldn't be surprised to see if people start sort of selling out some NASDAQ and buying Russell at some point or another too. So that's the other reason I like to trade. Yeah, outside of that, there are, you see the new few trades that I put on, but the dollar is probably the biggest thing that I finally decided this week to get serious about. And so getting long the dollar via short put spread in the euro, which has really worked as of late. Matter of fact, my long strike is in the money right now, 117, 115. Why did I choose those strikes? Basically because the 115 sort of came from this more recent. The last time it was sitting around this level in the middle of June, and when it made a big move, it jumped off the 115 level essentially, right? And so I figured 115 would be sort of a near-term downside. Plus the other, when I initially put the trade on, I thought, no, wait, here. Let's not use the future value. This, sorry, /6E. This 115 level, when you look at the continuous contract, is basically that 50-day moving average, that red line you see on the screen there. And so that is why I chose my downside area being the 115. So we'll see if this is going to continue to go. Look, dollar has been depressed very much so throughout the year. We've heard all the people who were short the dollar. And look, despite it's not about what you think, it's about what's happening. And the dollar is starting to bounce. I think that's pretty clear here. So I'm keeping this trade on, and I even doubled down on it by doing 6J a couple of days ago, long as 6J put spread as well. 006 in the orders, 00655. You'll see. I don't know. We'll see what happens. But the dollar is definitely one of the more interesting trades here as of right now. That's mostly what I got going on, folks. Sell everything. I mean, it is interesting maybe to do a ES short contract here, but why? Why bother? I just decided to do the SPX 25 wide put fly. We'll see how that plays out. I would like to think, I feel like markets could end up hanging around this 6,300 level, probably bounce up a little high and then go down low. It's an expiration, so we're good for that. But I feel good about this one. We'll see how it works out. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. See ya.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello again, hello. Well, we've got the usual on tap today, which is lifetime highs across the board. Everything is green. NQ, ESRTY, YM, you name it. Bonds are down a sliver. And the best stuff going right now is the smattering of long ideas that I've been offering here and there. Palladium, again, just fantastic. And D-Wave. You know, that's the quantum stock that I was really fond of. So we'll look at a couple of hot issues right there. The cool part of the earnings season starts this afternoon. I mean, let's face it, most people don't really care that much about the earnings from Wells Fargo and JP Morgan. It's the household names they like. You know, Netflix this afternoon. And then as we go on, you know, Alphabet and Tesla and Apple and Amazon and all the rest of it. So that'll be interesting to watch. So let's bang through the charts. I've got them loaded in advance for you, and we'll see what we see. Here's the spider. Same old, same old. We got a big old green bar. We're at lifetime highs now. We are just kind of escaping from these doldrums, and it seems that we're clearly on the safe side for the bulls of this long-term midline. We teased it a bit during that 7-minute plunge yesterday when it sounded like Trump was going to fire Powell, which everyone agrees had the exact opposite effect that he wants. If he wants to have higher rates, fire Powell, that'll do it. But that was dispatched pretty quickly. And so we pierced that midline and now we're well above it like so. So lifetime highs there. Diamond, we are on the ETF itself, not quite at lifetime highs. The industrials are just a little bit weaker than its compatriots. The small caps, IWM, is also not at lifetime highs. It's getting within the same zip code. There's no really clear pattern here. As we've discussed, the analog kind of got ruined, starting with this rally right here. In retrospect, we can see that starting on June 20, actually right here, June 23, that was kind of the end for the analog. So we're approaching recovery highs, the peak of which was just a few trading days ago. Overseas, emerging markets also up a bit, about 0.6% above their cup with handle bullish base. And for China, I went ahead and covered this early today. FXI really wasn't doing much of anything. So covered at a small profit, and the gap is still unviolated. So could still be a pretty cool trade, but it's so close to the gap, it's just not worth the aggravation. But as usual, the hottest of the hot right now has anything to do with tech, be it semiconductors, quantum computing, drones, that kind of thing. Here we see the cubes, which are definitely at lifetime highs. In this instance, well, let's look at this trend line here. So this long-term trend line was last approached on April 7. We're miles away from it now. The more relevant trend line is like so, which is much younger. That only goes back to the October 26, 2023 bottom. and it has played as support and resistance during that time. And it was resistance for a while here, and that changed right along here, late in June. And since then, it's been support. And as you can see, we've just been notching lifetime highs on a pretty regular basis on the cubes. It's certainly helped by NVIDIA, which seems to make lifetime highs every day. It's just been, almost every single day, bang, 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 up we go. I don't know, the market cap's well above 4 trillion now. I don't know what it'll take to get it to 5. Be pretty easy math to do, but I'm sure that's not out of the question at this point. And therefore, the SMH, the semiconductor ETF, is also at a lifetime high. Intraday, I guess it was a teeny bit higher on Tuesday, but it looks like almost certain that it'll be a lifetime high close on SMH. I will say that in the midst of semiconductors, there are some non-NVIDIAs out there. And to my eyes, if you have a sector at lifetime highs, if you have the market leader in that sector at lifetime highs, any weakness in that sector is interesting to me. AMD being a strong candidate there. AMD had a big day Tuesday, followed up yesterday with some more gains. It did seal this gap up. It's doing some profit taking now. It's plus, unlike NVIDIA, it does still have some amount of overhead supply to contend with. I've reshorted this with a higher stop like so. 167.51 is the most recent lower high, like so. But yeah, a little bit of selling in AMD. I would also point out on semiconductor ON, which I'm also remain short, that got close to its stop yesterday, but didn't violate it. And we're showing a little bit of selling there now. And it's very, very, this is the best, probably the only really good bearish pattern amongst the semiconductors. Very clean. The entire pink top there, just it seems impenetrable zone of overhead supply. I haven't touched Micron in a while, but I'll just point out MU is down pretty hard today, about 3.25%. And compared to everything else, it's been having a pretty rough go of it. We had a recovery high here back on June 26th. It's about 130. We've lost about $18 since then. So Micron quite weak within an otherwise very strong sector. Precious metals is a bit of a mixed bag right now. I was looking at my posts back on January 22 is when I really locked in to palladium because I'd never really looked at the chart before. And then I was very intrigued by it. It looked like a very good, relatively safe buy. And it was a real laggard. And it remained a big laggard until just a few weeks ago. Gold was not a laggard. It was having a great time. And now I think, on the one hand, gold is sort of burning off, just doing some of the profit taking there, whereas palladium is catching up. So GLD, it sort of ended its stardom back on April 22, and it's been really pretty dull ever since then. It's been grinding away with less and less volatility for, almost 3 months now. The miners also, here's GDXJ, the junior miners, not too exciting. These had peaked on a recovery basis back on June 5, and have been just kind of grinding around away there too. And then relatedly, XME, which is a broader mining ETF, that's actually approaching lifetime highs, which were a long time ago. The lifetime highs were way, way back here. What is this day exactly? This is back on June 30, 2008, which as I recall, was a pretty interesting summer in retrospect. Yeah, so that was 17 years ago that we had that high, and we're approaching it now. And these charts, by the way, they do take into account, I don't know if there's a lot of dividends involved here, but all these charts are adjusted for dividends. So anyway, we're getting very close to the peak there. So having a strong day, almost a 3% gain on XME, very, very close to the lifetime high. But as I mentioned, the real star lately has been our old friend Palladium. And even with this very long-term chart here, you can see what a tremendous rally we've had since we began kind of honing in on it a few weeks ago. As I had said, I first kind of got grabbed my attention way back in January around. So, and this is a nice illustration of how choppy this market is, because if you said, great, this looks wonderful, I'm going to go into palladium in late January, but around about here, the next 2 months or so, 2 or 3 months, would have been not a lot of fun, because it rallied, then it lost all of that and then some, then it rallied again and lost all of that and got even lower, and then rallied again. Very choppy, not very encouraging. In retrospect, we can see the selling was done on, not surprisingly, April 7. And since April 7, it has been with more and more gusto each time, just vaulting higher. And we have burst above this zone, this basing zone, which spans back to October of 2023. And it's bound to sell off at some point and ease back, because that tends to be what this does. I mean, you can look here. This thing doesn't just like burst above and just go straight up. There's a lot of back end filling all along the way, again and again and again and again, if history is any guide. So if you feel late to the party, like you missed it, probably going to get another chance at some point. It's a pretty thin market, and I don't think it would take a lot to sort of spook people into like taking some profits, a portion of them at least. But long term, like, how about a year from now, I expect we'll look in the rearview mirror and see this was a very important pattern serving as a base. This one I don't trade, but just as an aside, PPLT is sort of a combo of, I believe, platinum and palladium. I could be wrong on that. Maybe this is just platinum. I'm not sure. Excuse me, because I just don't trade this critter. But PPLT, yeah, it looks like it's physical platinum. Also having a very strong day, up, as with palladium, over 3%. And it has big burst above its zone base, like so. I said earlier that there was a handful of sectors that were especially hot right now, kind of fad-driven. And here's a handful of them now that have been doing very well lately. Joby Aviation, GOBY. This one's up over 6% today. It looks like a lifetime high on this one. Archer Aviation, we see a trend here. This one's also up about 10%. AST Space Mobile, lifetime high. Here we have a gain of about 10%. And you can see preceding all of these nice clean basing patterns. So that's kind of the things that fly and go into space zone. Then we have the quantum area. Rigetti RGTI, a very strong day yesterday, following up today with a smaller gain, but more than 1%. D-Wave, which is of the quantums my favorite chart. PBTS, this one is up over 13% and getting quite close to its own lifetime high. It looks like probably a lifetime high close on this one. And you can also see, incidentally, just how much volume is picked up. Until here, it was pretty lackluster. 1 or 2 million shares a day, a few million shares a day. These days, it's in the tens of millions pretty regularly. QuantumScape, which, by the way, in spite of its name, isn't quantum computing related. It's actually a battery company. But I wanted to share it because it's having a tremendous time, too. It's up almost 20% today. And one last one, of course, there's nothing hotter than AI, Big Bear, which is the only bear that's had a good time the past 3 months. This is BBAI, and this one is up also almost 14%. A couple of EV companies to mention. Of course, the biggest, the big Tesla, not doing too much of anything. It's definitely long past being a meme stock. It's just sort of grinding away with less and less fervor. You can see here that there's a lot of dynamism in a bad way back here, and then big recovery, and then a down, and then up, and then down, and up, smaller and smaller and smaller each time. So it seems to be kind of wiggling its way to a comfortable level of around 315 to 320 or so. In contrast with this, Lucid is for once having a tremendously good day because they reached a deal with I want to say Waymo, but I could be wrong on that, but one of the big self-driving taxi firms. And so LCID, big pop, 35%. and doing a lot of damage very, very quickly. But in a few minutes, or I guess 30 or 40 minutes, the star of the show is going to be Netflix, NFLX. This has been, for its entire history, in this very long ascending channel. This is one of the great success stories of the century. And more recently, it's a channel within a channel, like so. So this is a more sharply ascending, shorter term channel. And we're kind of on the upper echelon of it, but it's really, I have no position in this. I don't tend to trade this thing, but not a real slam dunk in terms of direction. I would suppose it's just going to keep drifting higher until it stops. This has been a phenomenon for decades, and it's just been quite smooth lately. So that'll be very interesting to see, because as I said, this is the kind of name that gets a lot of headlines as opposed to some of the big banks earlier. So we'll wrap up things tomorrow. For those of you in Netflix, good luck to you. And I will see you to wrap up the week on Friday. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I did let off fireworks. I should have brought a video. I honestly have never paid attention to the amount of powder in there. And they say it. So like those are like 200 grams of powder, right? And so I got a 500 one this year. So it's usually me and my youngest Austin. We literally, it's like this. It's like. Nah, dead serious. Like I don't mess around.
Tom and I normally park on the same level in the parking garage. And so when I go to get out of my car, I have all my stuff, and I see big signs on the door, elevator, out of service. I was like, that's not gonna be good for Tom.
I looked at it for like 5 minutes.
And he was like, blink, blink, blink.
I'm like, this has to be a mistake.
So Bat, what he's doing now is he's asking people around the office if they will go get his car for him because he can't walk up the 4 flights of stairs.
I see you looking at my hair. You're like, you keep looking above my head.
Who can't? You've got the beard and I mean, are you like showering with Rogaine or something? What's going on? You're like going full Sasquatch.
I don't understand.
I have not been able to spend the time.
Sasquatch.
The sassy guy. Yeah, look at him. He's proud to wear it.
I was trapped once on the air and water show.
Oh.
I was trapped on a boat, like a big giant yacht for an air and water show.
These are not actual problems.
Yeah, it was. We were 200 yards off of the North Avenue beach, and I could have, technically, if I could swim, I could have made it in.
Okay, but you can't swim. We've already discussed this. You have negative buoyancy.
I went to America's Cup race here. It was the trial.
Look at you with all these rich guy activities. America's Cup.
No. Remember they had the trial for it?
I am black.
I went to that on a boat and I was trapped out on Lake Michigan. They won't let you back into shore until like after those races are over. So you're out there for like 12 freaking hours. You run out of food. You run out of everything. You're hot as hell.
Your thong is starting to chafe.
Yes.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend, and you know what that means. Time for a little more Tasty Live. No, Sosnoff, that doesn't mean more Tasty Live. That means new all-time highs, Sosnoff. Even the S&P is up just about 40 handles, trading at all-time highs. NASDAQ up 192, trading at all-time highs. What's wrong with the Russell? Only up 28, close, but not there for all-time highs. Dow, well, yearly highs. Dow up 265, also do the same. The Russell and the Dow are the two weakest of the group so far this year, and even the S&Ps and the NASDAQ. Sosnoff, put on your 6,400 hats. Put on your 24,000 hats. We don't do that anymore?
I never did that. Thank you, though, for the...
Volatility, Sosnoff, only down 11 cents. It is a 0.5% move, but 1935, we've actually been lower than this when the market has been lower than this. What do you think about that for volatility? It got me yesterday. It got me a little bit yesterday because I leaned a little bit short on the close.
I think you're micromanaging volatility too closely because you're not thinking about, I'm
looking for signs. I don't know if I'm looking for stigmata or something.
I know what you're looking for, but you're too public right now. You're thinking about things in like.
Oh, you know what? If you're going to come up with a too public,
let me finish.
6 minutes into our segment.
If
you're going to come into it a public, I'm going to leave.
Okay, you can leave. Because all I'm going to say is that you're looking at things in a very binary way, and you got to look at things and say, okay, you know what? We don't have volatility expansion on an up 40-day going into expiration, except if there's potentially something that might move the markets, and Netflix earnings might move the markets. That's why volatility is up today. That's it. That's the only thing. That's all they got. And so you got a big
Netflix
NASDAQ.
Up 23, by the way.
Yeah, Netflix hasn't had, I don't know if you've watched it today, hasn't had a downtick all day. Hasn't even
I have watched it because it was my option trades today. Sosnoff every Tuesday and Thursday. Lucky for you, today happens to be Thursday, and we got a little bit long Netflix.
Okay, well, you can get all the long Netflix you want.
I got long it when it was up $7, not up $23.
Okay. Well, it's not going to matter because it's either going to be up 80 more tomorrow or down 80 tomorrow. It's not going to matter whether you're wrapped around the at the money. The one thing you can bet on Netflix tomorrow is it's not going to be wherever it is right now. It's not going to be here tomorrow.
Well, it's had basically unchanged movement in earnings past recently.
I don't remember last earnings. No, I don't think so. I thought it was up big last time. I thought it was up like $80.
Well, if it wasn't last time, it was the time before. Because I remember these big mag stocks were doing absolutely nothing.
Yeah, Netflix. Sure. Netflix was the stock last time that freaked everybody out and outperformed to the upside. That's the only reason I don't think it's going to do it again this time. Is last time it was the one that, if you remember, initially it opened up like 30 or 40, which was inside the expected move, which was like 60. But by the next morning, it was up 80. And they had, it was a really tough trade, no matter what you did. So Netflix was a tough one. I don't think, I did really nothing. I sold a couple of very far out of the money puts.
That's exactly what I did. Some put spreads. I mean, it's exactly.
Yeah, I just sold some naked
no hero
puts.
Crap. I was just promoting my option trades.
But I can tell you right now,
Thursday.
Those put spreads, nothing. The puts I sold when I sold puts when Netflix was up, I think like $5 or $7 this morning, and now it's up 25, and they're basically 10 cents lower. They're like the same price.
Yeah, they really haven't moved. My spread hasn't moved much either, to be honest with you. Maybe $50-$60. Yeah.
Yeah, I think there's a lot of stocks today. First of all, going through the commodities, the bonds tried to rally, they couldn't hold up all day.
See, don't you think that's the canary in the coal mine? The bonds not really giving any.
Yeah, I think the bonds are going to put a cap on this market, but they haven't so far.
I was going to say, if at 112, they haven't put a cap on it. Where do they get their magic cap from? 110?
Maybe. Yeah, 110.
I don't know. Okay.
I don't know.
That was a question. I was just asking.
I don't know. I thought the market was, I thought there were certain stocks that have been really strong lately, and they've stayed really strong today. So I I did not get into trouble. Like, I didn't try to short Netflix. I'm sorry, I didn't try to short Nvidia today. Didn't try to short Palantir. Tried to sell a few call spreads in Roblox, but nothing major. But when you look at some of these stocks that have just been out of control, like Microsoft, Palantir, Nvidia, and then you can go down the line, a bunch of them. I did not get in the way of anything today. Although I do think we're getting a little frothy.
Every day, Sosnoff. I mean,
every day. Every day we're getting frothy. Every day. Yeah, I think they are getting to extreme levels of frothiness. I mean, there's very few stocks to me today that looked kind of ugly. Where'd Taiwan Semiconductor end up? I didn't look at it. Let me see.
TSM is up $10.
Yeah. So, I mean, a lot of these stocks.
Tesla was down $2 today. I mean, this is not ugly stuff. I mean,
no,
Lilly was down 26. I mean, Abbott's down 10. I mean, this is not.
Lilly was probably the ugliest of all the stocks on my board. Lilly, Micron, and UNH were probably the ugliest. And none of those stocks are great trading vehicles.
No, and GE had earnings yesterday. The aerospace, it opened significantly higher, and now it's trading near its lows, down 6. It traded up to 270 and change. So it was up like 10 or 15 bucks. It sold off for earnings. That's the only one that's kind of been a high flyer that sold off.
Yeah. So I don't really trade that, so I didn't even look at that.
I don't trade it. I don't trade it at all. But you mentioned high flyers.
That's fair.
That's been a high flyer.
That's fair. So what else has earnings other than Netflix tonight?
Oh man, like Schlumber. I mean, they were few and far in between. I will give it to you.
Okay, no worries. You don't have to.
No, well, you did this, so I'm gonna do it. So, Pepsi. No, that was this morning. Sorry, 17th after the.
I forgot to check and see what Pepsi did.
American Express.
No, they're on our they're
do
on
not
the
fly zone.
They're on the yeah.
Pepsi up $10, Sosnoff.
Oh my God. We covered our strangle in Pepsi yesterday. Do you know what the expected move in there? Remember we talked about it? I had a strangle on. I did not like the implied move of, I mean, the IB rank was like 15 and the implied move in Pepsi was like
$3. I've come to
no, hold on. What's the stock trading for again?
Well, it was $135.
Right. The implied move was like 3%, like $5. Yeah.
Okay. It was like $3 or something like that. But yeah, sure.
Yeah.
Yeah, $10. You know why? Because they're going to start using caned sugar. That's right. Instead of that bad stuff, they're using pure cane sugar.
Yeah. Oh, that's why the stock's up $10? No, they must have had good earnings.
No idea. I'm just
I mean, what do they use in regular soda? I don't even know.
Refined bad sugar, like the.
Oh, so that's why everybody likes Mexican Coke?
That's right. Yeah,
I knew there was some reason, but I don't drink.
Mexican Coca is the best Coca. Mexican Yeho is the best Yeho.
Yeah, well, here's the thing. I don't really have. I don't drink.
For a green card, I cut him up real good.
I don't drink non-diet soda, so I couldn't tell you. I don't think I've had a soda with sugar.
Pure cane sugar?
I don't think I've ever had one, actually.
I'm going to get you one now.
I don't want one. Thank you so much for your help, though. All right, let's see what else we got here. Going into now, remember that tomorrow morning is really nowadays it's really just an SPX. SPX and a little bit NDX, but mostly it's an SPX markup or markdown, which is a composite opening on the tomorrow morning on the opening print of all the stocks, and they'll figure it out a little bit after the opening. It's been very bullish, as we've said before, in July, so we'll see what happens tomorrow.
You just talking about the Thursday close, today's close, it's tomorrow morning's crap sheet.
Yeah, yes. and based on what has. And to be fair with everybody, based on what's happened recently, this was kind of what we've been talking about all week. Look for a pretty strong market on Thursday, and
And then Friday, maybe after that, you get a little relief. Knowing all that, I didn't take off enough of my shorts yesterday, so we paid for that today. They took a
That's
little.
okay.
They took a blood sample.
Yeah, I came in short this morning also. I took it all back.
They took a little blood.
It was a losing trade. Yeah.
I didn't faint, but they took a little blood today. They took a little. They got a little bit of me today. I was okay until the bond sold back off, but that was it. Yeah. I was doing a lot of stuff today, so I didn't make a crazy number of trades. I made more yesterday, but still we were pretty active today. I got a couple of really interesting emails today. Somebody said, well, they go like, how does anybody know when they're topping out? And I wrote back, I go, you know what? If you could ever figure that out.
Yeah, you're going to make yourself one wealthy family, generational wealth, okay? Not just you make a couple of dollars.
It's everybody's been trying to figure that out for the last 1,000 years. Well, why can't AI help? Well, you can try, but it's not going to give you an answer. I can promise you that. It's not. Nobody can tell you, and it's so interesting. Just that whole idea that nobody knows.
Nobody knows nothing. It's just that's unfortunately that's the truth.
Yeah, I mean, I've been thinking about tells, and I was doing a lot of customer interactions today, and I was like, trying to talk about, markets and a lot of questions on like, what are you looking for? How do you buy Netflix up $25? How do you buy, Palantir at 150? There's a lot of stocks that have had these monster moves. Are you buying Microsoft at over 500? Are you buying Robinhood at over 100? Are you buying,
But you could have said that about any of those stocks that just because Robinhood's close to 100, it's actually 106 out enough. You could have said that at 90. You could have said that at 80. You could have said that at 60. I
did say it there.
We bought it in the teens.
In the single digits.
The single digits. Whatever.
I could have bought.
I'm just talking about this year.
Yeah, last week.
Calendar year.
I was looking at Roblox and I look at my position there, and I'm long the 85.90 put spread, which I bought when the stock was 87, because I always buy one strike in the money and sell one strike out of the money, so I know exactly where it was. Yeah, and then I saw that I'm short. Then I'm long the 105 put spread. Because that means the stock must have been about 102, and then so I see where all my trades were, and I'm like, oh my god, these are all in the same cycle, So I do think we are. Well, we're pot odds-ish. We're getting to that point where the pot odds are starting to get a little interesting up here, where it starts to get. Doesn't necessarily mean we're going down. I think it means we might get a little whippier.
But okay, so people ask you what you look at. Gold isn't doing anything. It's been going.
Gold really doesn't have. Gold really doesn't tell you much at all, I don't think.
Well, I was going to get to the rest of them, but so what are you looking at? Nat gas? I mean, gold isn't doing anything.
No. I'm not looking at nat gas. I'm not looking at gold. I'm looking for, I'm looking for
Bitcoin is high. It hasn't come down.
No.
The bonds, if anything, is the only thing that you can look at. Volatility is 19 at the average.
What, if anything, volatility is more bullish than bearish. And what I mean by that is...
Explain to me.
I will. Volatility is more bullish than bearish because usually when the market's making record highs, volatility is making record lows, or lows. Not record lows, but lows.
Yeah, right.
Now you have the market making highs, and volatility is still relatively high. And so the contrarian argument here for the bullish, I shouldn't say the contrarian argument, the bullish case here is that volatility's got a long way to go before the market tops out. That's the bullish case. The bearish case here is the market's rallying a lot on anticipated interest rate cuts, I think, and you're not going to get any cuts.
The chance of an interest rate cut is basically zero in September.
Yeah, exactly. So that's your bearish case. I'm giving you the bullish and bearish case. The bullish case
but
is...
But you just made fun of my volatility look at just a minute ago. 5 minutes earlier, you told me I'm micromanaging volatility. Now you're telling me to look at volatility to support your thesis.
Okay, let me just explain, because you'd like to jump down my throat. Mine is a much bigger picture view. Yours is a very... short
bigger
term.
picture. Got it.
You're looking at things on I said you're micromanaging. You're looking at things on a minute to minute. I'm looking at the big picture. Volatility's been stuck in this 19 range.
Got it.
Yeah. You got to work with me here, okay? You know, you're don't jump ahead.
I'm doing the best I can.
I'm looking also.
Do we buy this dip on this 3-point dip, a little bit of a sell-off here on the E-mini S&Ps?
No, but
some profit taking?
What I am looking for in certain stocks here is I'm looking for stocks that open higher and go lower, like to look for a little bit of a turnaround for some selling to come in. I haven't seen any of it yet. There's been a few isolated cases.
That's it. GE. That's the only one. Other than that, there is nothing.
I don't consider GE to be a market leader, but
I don't either. But
when I look at other stocks like that, I don't see that kind of tape action. Like, it's weird, but lately, you know, a stock like Nvidia opens up, goes up. A stock like this morning, you know, I really wanted to sell RBLX. I did, and then the stock just continued to go higher all day long. There's a lot of stocks out there right now that just, you know, Microsoft, the same thing. I kind of watching that stock saying, you know what, is it possible this thing turns around? And the answer is no, not really. You know, these stocks have been crazy strong and they haven't turned around. And if you're watching some of the indexes like, you know, the Qs and SPY and Coinbase and Google and everything else, you know, I mean, they're just there's not any two-sided trade. I mean, there's like an absence of sellers. Because of that, I think it's kind of like a smart thing to just take a step back, like we're doing, not do anything crazy, and wait a little bit for like a better tell.
Okay. I mean, waiting has never been a good forte of mine, but okay, I will do my best.
There is, looking around some other things, just a couple of quick little notes here. Surprisingly, the 10-year note actually went lower today, which is really weird to me. Gold was down 40 earlier. It's only down 13 right now. I'm not reading into any of that. I'm not reading into any of actually the commodity markets here because I don't think there's anything that interesting. And I'm gonna write off this rally as saying, okay, there's a little bit of, July expiration, that kind of stuff. I'd be careful tomorrow, but maybe next week we get a little two-sided trade. Plus, we're going on the road, and when we go on the road, there's usually something that happens.
Usually, yes, I agree. Usually something happens. Well, volatility is upticking a little bit here, so I think it's going to be unchanged, even with the S&Ps rallying here a little bit.
Yeah, I just think, if you were short vol here, you can't get it back. And I think a lot of people are thinking what I just mentioned before. Well, the market's making new highs. Why is vol so high? So they got short a little bit of vol, and I don't think you can get it back. Like I noticed today, you couldn't get back a lot of like junky puts and stuff like that. I'm not going to read too much into it, but I thought that these puts traded rich across the board everywhere today. Maybe it was vol, maybe it was whatever, but you couldn't really get stuff back today.
All right.
So I'm like I said, I'm not reading too deep into it. I thought the liquidity in the markets was really good today. Generally speaking, I thought the fills were really good. So I think there was a lot of play. You should have had pretty decent futures volume. No, not really. Wow.
No,
I'm surprised. For the Thursday before expiration, not much at all. Yeah. So there's no capitulation there.
No capitulation there at all. No.
Yep. No capitulation there. And then again, taking a quick scan. I mean, on my watch list, I just kind of look at all the active stuff. I don't really look at anything else. And there's really, there's a lot of green. I'll leave it there. There's a lot of green.
A lot of green indeed, my friend. A lot of green indeed. You still got 6 minutes to go. Netflix is up $25. You made your bet in there. You're good to go.
I didn't do anything. I sold a couple of puts.
I know, but you're good. That's all you're going to do. You're good to go.
Yeah. You know what scares me about Netflix? I've said this 10 times. It's just that stock could be like, they could say, we're going to split 10 for 1. And then somebody will think that that's a reason to buy it. But so I didn't sell any calls. And I sold like puts way, way out of the money to over 2 times the expected move. So I don't know. I'm not that concerned.
Dougie, does it scare you that that there's no real good volume here in even the S&Ps or anything else?
It scares me that means the rally might not be over. I would like to see a little capitulation to the upside. I would like to see people, like trying to reach over each other to cover some shorts and things like that. But I'm not seeing it. That's what I talked about earlier. I thought it was too orderly today to the upside. I didn't think there was enough.
That's what I mean. Like there's no capitulation to this market.
Yeah.
It's just it's a stair step.
Yeah. Yeah. I thought it was just a strong market all day. And I did not. No. You can't get me. I didn't buy.
Don't use a double negative to talk to me. Remember, I'm the simpleton here.
I did not bite today, and I did not get short. So I'm hanging tough. I'm waiting it out. I'm stonewalling it. By the way, tomorrow is on every Friday we do something called Fast Market, which is we take your trades, and we are every Friday, but next Friday because we'll be on the road. But we do something called Fast Market on Friday. So if you send us your trades at tastylive.com/fast market, tastylive.com/fast market. And if you get bored tonight and you want to sign up for our live show, please do tastylive.com/events. Really simple stuff. So hopefully we'll see you there. Let's see, what else do we got going on here?
Netflix still up 23.68 actually.
Yeah, I think Netflix is going to move, $80 to $100 after the close. And
I mean, well, the expected move was a little bit less than that. Wasn't in the 70 handle?
I don't know. I'm not looking. I don't know.
Let me take a look here. Yes, 78. You're right there. You're
okay.
spot on. I can't. I can't split
78.
hairs with you there.
Yeah, I'm 2 times the expected move on the downside. I have the 1100 puts. I'm short. I don't.
Well, that's
really
way. I mean, that's. Yeah, I guess that's 2 times. Yeah.
Yeah, it's 2 times.
Yeah.
I mean, when I did it, it was 2 times. The stocks rallied an extra $10.
Yes.
But yeah, that's it. I mean, so far earnings have been fine. The only thing we lost on this whole cycle so far was Delta Airlines, which was really small. And Delta Airlines has been making it back for us every single day.
So a post-earnings trade has been doing well in there.
Yeah, post-earnings trade has been doing well in there. So it's so earnings have been fine. No harm, no foul, no big trades. All very small. All keeping them in line. United Airlines actually did nothing today, and TSM was outside the expected move to the upside. United Airlines was inside the expected move, also to the upside. What's your call on Netflix?
Well, I'll tell you what I would like.
Make it bold. Did you go? By the way, did you do August or July?
I did one day.
Yeah, me too. Me too.
Oh, that's right, man. Big dogging it right here. Laying it all out. Put it out on the table. Sadnov made fun of me the other day. So I said, yeah, that's what I'm doing.
Well, I did one day because I think the stock's going to be down.
I think the stock's going to be up, Sadnov.
All right.
That's why I sold puts. You sold puts because you think the stock's going to go down. I sell puts because I think the stock's going to go up. Okay. How about this? It goes up and it doesn't hold.
Well, I do the one day because even if the stock goes down, I think I'm still good.
Because you went so far out of the money, but you're using naked options, which use what, $17,000, per.
Yeah.
I mean, it uses a lot of buying power, is my point.
I worked my whole life so I could do that.
That was very cute. I'm not going to lie. That was very cute.
Spent 45 years trading so I could sell naked puts in Netflix with one day to go. Damn straight.
That was very cute. That was very cute.
Yeah. Worked my freaking ass off for 45 years just so I could do that. 45 years ago, I go, you know what? 45 years from now?
Someday, I'm going to need this money.
someday before Netflix was even a company, I'm thinking that, first of all, I never thought I would sell puts on a $1,100 or $1,200 stock, because most stocks were
ever in your life. That's for
ever
sure.
in my life. And but here we are.
Yeah, and diamonds have a dividend. Well, it's too late now, but diamonds had a dividend going in tomorrow. Most people already knew that. Netflix up it's under $24. No movement in it after hours at the moment. Take a look at NASDAQ futures, Sadnov. Maybe they're up $185, $183, $180 right now. See what Netflix does.
Netflix has a tendency, if I remember Netflix, they come out really fast right after
that's what I thought. They come out right after the opening. So it was
right after the close
right now. It's right. I quoted the NASDAQ and Netflix. Yeah. Netflix is up $3 right now after market, but that means nothing.
that's the guy who's sitting next to the guy that went home short. That goes, you better cover before that number comes out.
I got 12 shares so far. I need 8 more.
That's the guy at the prop trading firm that's smacking somebody over the head, going, "You freaking idiot! Cover that stock right now. I don't care what you have to pay.
What's wrong with you?"
Yeah, I've seen this movie.
Man, I don't know. Volatility getting a little bit big here on.
There you go. Netflix up 20. That's a inside the expected move.
Inside the expected move is right.
Netflix unchanged. Netflix up 10. Wow, that's really inside the expected move.
I told you. I tried telling you.
Oh, come on. Can't you say as foretold?
As foretold, Sosnoff. There you go. As foretold. I'm glad you got me in there. Thank you.
See, this is why you can't trade after hours, too, at Netflix. The market's $10 wide. I don't think it's out yet.
It's got to be out. NASDAQ futures haven't moved.
NASDAQ futures have not moved. Not a tick.
What are you, a parrot now?
Netflix is up $10, but NASDAQ futures haven't moved.
What are you, a parrot?
Is this all they got? Then the stock's going to be down.
Well, I think that's what volatility is trying to tell you here. It looks like they're bidding up putties a little bit.
Well, the NASDAQ futures, again, I'm watching them. They haven't moved. The S&Ps haven't moved. Netflix looks like it's unchanged. I don't know. I don't know. It's all fun and games. It's all fun and games until they move 2 times the expected move.
Yeah, right. Actually, Netflix unchanged right now.
I said I don't think it's out.
Let's see if it's out.
I'll tell you. I'll check.
I'm checking too. Netflix is now down 6 or 8. Let's see. Not yet that I can see. Netflix looks like it's down 15 at the moment.
Oh, that's foretold.
NASDAQ futures down small.
Now it's down 20. I think they're out now.
Oh, now that it's down 20, they're out. When they were up 20, it wasn't out. They were out.
All right. Well.
All right, my friend.
This is as sharply on an $80 expected move. This is sharply unchanged.
Sharply unchanged. Totally agree. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with overtime next. Peace.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this Tasty Live site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you know, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Can't stop this market. New all-time highs. It's Thursday, July 17th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Mike Butler in studio in Chicago today. Dylan Radigan will be back next week. We're here for the next hour. Futures market closes at 5 Eastern, 4 Central. If you're on the platform, Tasty Trade, on the website, tastylive.com. Thank you for joining us. Welcome to the show. Come over to YouTube. Tell us what you think of this market today, where good news is good news again, Ilya, because retail sales beat expectations and initial jobless claims were a little bit softer than anticipated. A market likes good news, and so stocks led by your Russell 2000, small mid-cap growth lead the way today. Likewise, we see a NASDAQ close at fresh all-time highs on a seasonal peak of the market for the month of July, at least for the next 2 weeks. But it was a buy America kind of day, Mr. Butler. What did we see? Bonds up, gold down, dollar up, and stocks up. That's a sign of faith in this market as volatility continues to come in. We have a lot to cover here today, though. Mike, I'm going to give Ilya a quick second to collect his thoughts as our resident bear here. And as a fellow bull...
Oh, my thoughts are collected. Don't you worry.
As a fellow bull who is trying to fly close to the sun before our wings melt, how are you handling this market?
I'm laughing every time I open it in the morning. And I'm really just keeping positions light. I mean, when volatility is low, there's not too many opportunities to sell premium. So I'm going more the diagonal spread route. I'm kind of cherry picking certain products that have higher implied volatility. Like I've got position on an IBIT, which is a great Bitcoin vehicle. I've got Ethereum positions on now and ETH, and then just throwing on some earnings trades. Like I had an earnings trade in Netflix today. So just keeping things light until maybe something shifts here. But until that happens, I don't really want to have a ton of risk on. But I'm still playing it to the upside because permabulls seem to prevail time and time again. Right, Ilya?
I mean, so far.
Before you get into it, Ilya,
S&P didn't break its high, so
we have Netflix earnings.
I remain undeterred, but whew.
No, Netflix earnings are out here. EPS of 7.19 beats the estimates of 7.06. Revenues 11.08 versus the estimates of 11.05 billion. It's down a little bit here after hours. Mike, I saw a piece of research today suggesting that the last 10 earnings reports have produced an average move of 8.5% in Netflix the following day. Maybe that's not right. That seemed a little high. But I believe that the implied move for today's earnings report was like right around 7.5%. What do you take of this? Did you have any plays on? You said for Netflix. Is this a Netflix and chill market?
It is. Yeah, I think they were due for an inside move. I mean, they've just had an explosion to the upside. I personally think this is kind of a front-running move to new deals and new exposure to different sectors. I think Netflix is going to land UFC. I've been thinking that for a while, but it seems like there's more news that's coming out, and I think that could create a template for a lot of other major sports leagues. I know NFL already is involved. You have some boxing events on there, but you could see a lot of other revenue drivers. I mean, they made a killing last year with just like a handful of NFL games. So, and then of course, if you consider the fact that they're probably going to split the stock price, I would assume at some point here, maybe a 5 or 10 to 1 split, that makes it more accessible for anyone that wants to invest in it. I mean, it's craziness. But yeah, to your point, pretty decent expected move, almost 80 points. I threw on an iron condor in August. There's really nothing else you can do other than credit spreads or debit spreads that are kind of narrow in a $1,200 product. So I had my short options were at 13.15 to the upside and 11.50 to the downside. So almost a 200-point range with 30 days to go. I collected half the width of the risk and just figured, even if it was a big blowout move to either side, a 200-point range in a product like Netflix, as long as it passes through your range, if you do nothing, you'll be fine over the next 30 days. So we'll see. If we open up down 10 or 20, that'll be like right in the middle of the spread. If that's paired with a nice vol crush, maybe we can see $150 come out of there overnight.
Well said. Netflix here, I don't see anything about a stock split just yet, but we'll keep an eye on that here. Tom's talked about how this is, given where the pricing is, it's a little bit of a difficult product to trade, but revenues are up 16% over the quarter. That's not too shabby. Ilya.
You know what, though? This is a surprise relative to forecasts of just 1.7%. So this is, I mean, it makes sense that Netflix is idle here. This is bang on expectations for the most part, especially when you compare it with a 16.5% beat last quarter. So it seems to make sense that there's a level of benchmarking here where the market's kind of said, well, how many quarters in a row can they do this? They obviously surprised markets by a lot last time, and analysts adjust. So this is pretty much as expected.
You put out a quip that the S&P 500 wasn't looking like it was cycling to a new high today. I would digress and suggest otherwise, but
it didn't close above it.
Why do you think that the retail sales report today was hollow, which the market seems to be celebrating?
So the market looked at the headline figure, and the headline figure was unmistakably better, 0.6% versus 0.1% expected. And then, in fact, if you actually go down the list, all the various kind of permutations of the retail sales data, excluding this, excluding that, holding this constant, holding that constant, all of it better. But there is an important detail here that's missing in the headlines. And then when you look under the headlines at the components that made up this thing, you find something a lot more soggy. So motor vehicle sales make up about 20 to 22% of overall retail sales. It is by far the dominant component. That should be relatively straightforward. What is the most expensive retail thing that people buy other than housing, for which there is a separate set of numbers because housing is obviously huge and special? It's cars and vehicles of every kind. So not surprising that when you count up retail sales and take volume multiplied by dollars spent to get a value, and then you look at that over time, motor vehicle sales are going to be the biggest thing. Well, if you look at what motor vehicle sales did this month, rather than the previous two, you get a nice little bounce of 1.2%, except for in May and in April. In May, they fell 3.8%, huge. In April, they fell 0.7%, not small. So you take this 1.2% bounce, and what you end up with on net is retail sales fell about 3.3% in the second quarter. That's after the weakest contribution from consumption to first quarter GDP in almost 2 years. And the only thing that really matters for GDP is consumption. It's 68%, 68, 69, depending on the quarter, of the overall total. So what these numbers tell us is that after a soggy consumption quarter in the first 3 months of the year, we're going to get a second one in the second. That the second quarter is again going to be weak in the one area where you don't want to be weak. And the Atlanta Fed GDP Now cast, which was, of course, updated with this data, very pointedly showed you exactly that. Now, never mind whether this forecast is right or wrong on the number itself. That's not significant. We're still a ways away from second quarter GDP data. A bunch more numbers are going to go in the pot here, and we'll see. The important thing is when they published their update of the model just today, they said, we have to lower our second quarter GDP forecast in the wake of these better than expected, quote unquote, retail sales numbers. Because what we actually have to do is we have to revise down, and I quote, personal consumption expenditures growth. Now, you'll show us surely in a second that some of this was an inflation adjustment because we had untoward inflation data earlier this week, showing us both in PPI and in CPI, most importantly for retail sales because that's consumers, that tariff-based inflation is finally starting to show up. So none of this adds up to a happy quarter in the second quarter and through then the first half of the year for the most important catalyst, the most important engine of U.S. economic growth.
Tech closed at highs today. Banks are closing near highs, at least you see KRE and
well, I mean, as ever, the economy is not the market and the market is not the economy.
That's the case, Mike. Why wouldn't we keep this rally going, even if it's a hollow retail sales report, as our Soviet friend contends?
Rallied on the hollow report.
I think you will see it continue higher. I mean, really, if you just isolate volatility and the impact of low volatility on markets like the E-minis and NASDAQ, you will almost always see a slow grind higher. Now, the last couple of weeks have not been a slow grind higher, but I think what you've seen from July 3rd on, where we've just kind of like chopped around, volatility continues to contract, we keep pushing to higher highs. I think unless something changes where we see bigger moves day to day and a vol impact that is sizable, I think we will continue to see this just grind higher. I hope we don't. Honestly, I hope we get more two-sided action. I want to see more 100-point moves in either direction. But when we're at peak complacency, which is what it feels like right now, that's typically when fireworks start to rear their head. So we shall see.
Why do you say peak complacency? What metric do you use for that?
When I say that, I'm just looking at like the VIX. VIX is at 16, making new lows every day. It's not as low as it was a couple days ago, but it's trending towards that line. And we've stayed elevated, which is interesting. We haven't gotten back into the low teens. But I mean, a VIX of 15, 16 is typically a grind higher type environment, I would say.
We like doing sentiment checks around here. Do you think the official White House Instagram account putting out a AI video of American eagles dropping Benjamins everywhere is a sign that maybe we're close to a top?
Maybe.
Wow. I didn't see this today. This is almost better than an Economist cover.
It might
be. A guy.
I feel so much better about my shorts.
From a guy, an administration, the first
week of April. I wish you shared this with me sooner.
First week of April, Besson saying things like, for years it's been Wall Street's turn. Now it's Main Street's turn. I'm not looking at the stock market, right? Isn't that what the president said on several occasions in March and April?
Hassett said there's a 0 chance of recession, which means there is a 100% chance of recession.
It's all it's a little too funny. So yeah, things feel a little frothy, right? We have our little sentiment checks around here, but the White House celebrating the market up at all-time highs feels a little different than the attitude they displayed in March and April, and certainly the first week of April. But then first week of April, Trump starts saying things like it's a great time to buy stocks. And if you listen to the president, it was a pretty good time to buy stocks back in that first week of April. So maybe the fact that they're celebrating means that they're just going to pump this thing, Mike. They know how much it means to people that crypto's up and stock prices are up. And, if they can't bring down yields, at least they can give people a wealth effect.
Yeah, I mean,
market's just ripping right now.
Yeah, there's always that angle too. But I think it's interesting too. Like I've been checking the interest rate forecast every day, and almost every day we've been getting a higher and higher probability that there is no cut in September. What is your feel
Meanwhile,
for
the
that?
2026 outlook keeps getting more and more dovish. The markets are pushing out the cuts. In fact, they did it again today in the wake of these, again, quote unquote, better retail sales numbers. The upshot from the markets was right. So it's not that anything is great. It's just that it's going to get pushed downwind again, which, by the way, obviously makes sense in terms of the inventory build, in terms of the front running of tariffs that we saw in the first quarter. I mean, there was a 40% swing in imports. We're only just now in June, based on the CPI data this week, starting to a little bit notice that goods inflation is creeping into the market. And into the economy. So we're starting to see it, but of course it's delayed. The great unknown is how long. And the markets are clearly saying, right, so the Fed is resistant. They're maybe not even going to get off a second rate cut this year, maybe just one. They're down to 38 basis points for this year, to Mike's point. For next year, they're out to 73 basis points. Against the Fed's forecast of 25. So the markets took this data not to mean that things are good, but that things will get worse later.
I don't know. Bond yields at the long end of the curve were down today. All while stocks rallied and the dollar
moved up. I wouldn't go so far as to say they were up or down. They didn't do much of anything. In fact, they've been stuck. Basically.
Let me put it a different way.
Basically.
We had a decline in Fed funds expectations at the start of the month. When we started to see those July cut odds go down towards zero, when we see the September odds go from like 70, 80% to where at the market close today, it's a 55% chance that the Fed cuts in September. That is so on the line. We haven't had to bring up this stat in a while, but it remains true. Go back to 1998. Every time there's been a Fed meeting, the day of the Fed meeting, as long as the market's been pricing in a 55% chance of something happening, the Fed's done that outcome 100% of the time.
Right.
So if we were to go into the September meeting, a cut is priced in, but at 53%, there's no guarantee that even though it's favored, it actually happens by the historical metric. But I would point out that while we see the erosion in Fed cut odds throughout July, we see bonds get hit, and yet today it's a Buy America day. Cut odds are down, but for perhaps a good reason.
Well, yesterday we had the spook that we had, clearly, right? And what we saw was this sell America dynamic around the idea that perhaps the White House would be so foolish as to try to fire the Fed chair. And to the White House's credit, within an hour of the rumor mill starting to spin, the president came out and said, whoa, no. That's not what we're doing. So today the bonds do nothing because, again, there was a conversation with the president and he decided he was going to undo some of his own calming effects yesterday and said, we're not going to fire Powell unless it's for fraud. You go, wait, what? So
that's what this whole Fed renovation story is about.
Yeah,
they're trying to dig something up so that they can find reason to find cause to remove him.
Right. So this just tells you that it's not that the president has some sort of institutional instinct that would prevent him from an illegal firing of a Fed chair, which even the Supreme Court has now told him is not a thing that they're sanctioning. But it's that they need an excuse. And so the bonds essentially go nowhere today and go, well, this is either red meat for the base or some kind of something. This maybe prolongs using Powell as a bogey, as a talking point. Maybe there is no intent to fire him. Maybe there is. Maybe they find something. Maybe they don't. Obviously, they're attempting to drum up some sort of kangaroo court situation with the renovation of the Fed's buildings, as you were just saying, Chris, in Washington, D.C., which absolutely no one cared about for the longest time until suddenly an excuse was needed. Echoes of the Soviet Union ring in my head as a former Soviet. But when you look at all of this in context, it makes sense that the bonds don't exactly reflect Fed policy odds in a clean way, because this whole, are we going to tarnish the Treasury as a risk-free asset now and for all time, is a big, big, big deal. And it's not looking as safe today, perhaps, as it did yesterday, at least not in a convincing way.
Okay, Mike, so we move away from the bond futures themselves and go to the more approachable product for most retail traders, which is TLT.
Yeah.
This is near a multi-year low, like the lows that we've seen since 2006.
Staying long, baby.
Oh, yeah.
What do you do here?
Yeah, TLTs. I like TLT as a Zebra product. So Zebra is just a back ratio. So where you're buying two options in the money and then selling one at the money to remove all the extrinsic value. Basically a synthetic stock position, but for much less capital than actually owning stock. So I'm in the TLT position. I've been in there for a couple of weeks, but I've got the 85, long two of the 85 calls, short one of the 88s in August, 29-day cycle. Paid $500 for it. It's down $200, $300 right now, but it's right there. If you get a move back to 86, 87, it'll be a decent trade. And if it goes higher, it'll be a really nice trade. But yeah, it's trying to get off those lows. But someone in the YouTube chat said, as long as we have uncertainty about Trump firing Powell, bonds will stay heavy, haven't recovered from where they were. Interesting point. But yeah, I'm playing it to the long side. I think it's a low vol product. You can do a lot of different things in there, and you can get cheap delta in there for sure.
Yeah, you mentioned Zebra. People have asked us before. It's zero extrinsic ZE and then back ratio BR ZEBR.
Yep.
That's where the name comes from. It's basically a near 100 delta replacement strategy, so you can get synthetic stock exposure without having to lay out all the same capital.
Yeah.
Just going a little bit deeper there, Mike, because I know even for me, right? Like I'm like, oh, Zebra. Okay, yeah, okay, got it. A little bit more complicated of an option strategy, but as you point out, it's a way to contain your risk here, given what's going on, and take a shot, because this is maybe the commenter in the chat has a point, right? There is a term premium, Ilya. We shared that chart earlier this week, where since April 2nd, given where notes and bonds have historically traded relative to Fed funds futures, you would expect 10-year notes to be about 40 basis points lower had April 2nd not happened. That's right. Because the relationship has changed. And so selling puts is different than buying calls. I can tell you I've had dog luck with buying calls in bonds. But for those who've been directionally neutral, the directionally neutral trades have been working fine. It's just being directionally aggressive to the upside's been hurting me, Ilya.
Moreover, by the way, the term premium share in the 10-year yield today increased again. It is now back toward the highs that we set in late May, just 2 basis points off, as a matter of fact. And the term premium, I know this is going to be shocking, has been rising since just about October 2024 and really broke out in November 2024. Before then, from about October 2023 and up into the election, the term premium was actually declining as a share of the 10-year yield. One might say with the election, folks started to want to be paid more for uncertainty risk embedded in duration.
You know, it's a nice place to protect yourself from uncertainty. Silver. Silver's up today. Silver is the most beautiful. Ilya, come on. I got to get you to buy something.
It held in such technical perfection. You look at this and you go, well, you can naysay technical analysis all you want, but I didn't make this price action happen. This isn't an AI-generated chart.
It was Dylan cornering the silver market again.
Is that why he's out today? He's celebrating a successful hunting?
Yeah, with his good, very nice. With his 5-lot SLV call spread. Yeah, that's still a bit in the market.
Yeah.
No, but it's such a clean. It's like 37.70 or so, right? It's give or take 73 here on the high. Yesterday the low was 75. Today it was 68.5, I believe. Yeah, 37.68.5. That on the 4-hour chart. Former resistance becomes support. We've just seen this recently here in silver, not too long ago, where we had the former highs, right, from October and March. That more or less, again, once we broke through, resistance becomes support. This thing looks really constructive still. And silver's one of those assets where, like, we got a little bit of growth tilted data. Are we going to be deficit spending? Absolutely. Why not go back to $40? Mike, do you have any precious metals exposure? Because Ilya, Dylan, and I, Jamal, we've all been jumping in long on these things in some form or fashion.
I'm sitting long gold for the record, and I think it's held up heroically over the past couple of weeks, so I'm happy.
Yeah, I had a bullish position in gold futures in the Q contract, and I just threw on a neutral-ish position in the V contract 40 days out. Just a wide iron condor there. The short options are at 3,200, 35, 35. So, we'll see where that ends up. But just wanted to get some kind of neutral, choppy premium in there. But it is interesting to see silver catch up to gold, the gold-silver ratio getting a little better. It feels like the exact same scenario as Bitcoin and Ethereum, where Ethereum is continuing higher while Bitcoin kind of chops at highs. But definitely involved in gold and silver. And I think they're very similar to TLT. If you're looking for cheap delta, Silver, like SLV and GLD, are two products that kind of offer that. Not at the same degree as TLT, since TLT has a lower implied volatility. I guess GLD is very similar in implied volatility, but SLV is a little bit elevated. But $35 stock, you can get pretty cheap delts in there too.
Yeah, we didn't see a big push higher in gold today, but it is worth noting that we do have a nice pull up here as the session goes forward. We bounce off of that 50-day moving average, which we have on several occasions here, early April, right? Again, here in May, and we hold it at the end of June into July. The triangle continues. Mike, I think your approach, honestly, it's been the better approach for the past few months. I've been riding the rails up to the long side on various out-of-the-money calls, and that worked great up until early April. And for the past few months, I've basically just been throwing away money, right? Betting on high convexity trades, 4-to-1, 5-to-1, 6-to-1. And I get a few days where maybe it works out, and then I find myself having to roll the position back basically where I entered. So it hasn't been great for me. But what you pointed out here, going directionally neutral, I couldn't help but just size it up on the chart myself and thinking, what if we hold the May low? What if we hold the April swing high here? What if we were to go out to 70 days and you were to construct a potential trade in this neighborhood, and you could find yourself going $25 wide in a short call spread, this is 40 days, short call spread, short put spread situation. And you can get yourself close to that 60% probability of profit, and you're risking 3 to make 2.
Yeah.
It's not terrible. It's actually a really decent risk to reward, all things considered. And my last checkpoint for this would be how much buying power am I laying out relative to the profit potential here. And I always like when my profit potential exceeds the buying power. So this kind of checks the box for me. Even if I'm going to be directionally bullish, I may want to augment this and add in something that's a little bit neutral in case this thing continues to stall.
Yeah.
You've inspired me here.
Yeah, I mean, this has been a really nice trade. This has been one of my favorite trades of the year, is just doing gold futures broken wing butterflies with the intent of, like, if I do it on the call side, for example, where I want it to drift higher slowly, if I throw it on the call side and I'm collecting between $250 and $400, which is typically the setup if you're doing it 20 points wide, 20 by 40, where your long spread is 20 points wide, your credit spread's 40 points wide. If there's a sell-off of any kind and you can remove the risk by turning that 40-point wide credit spread into a 20-point wide and basically legging into a symmetrical butterfly, you can usually do that and lock in a 60 cent or $100 or $150 credit. And then you're ultimately legging into a wide butterfly on the side that you want the product to go to. And if it expires worthless, you keep that small premium. But if it doesn't and it rips towards your spread, you can sell out of it for a greater value. So I've literally had 6 of those in a row. 1, 2, 3. All 6 of them have been profitable between 50 cents and $250. So
very nice.
And that's because even with gold's rally, if you look at a chart of gold, like, yes, it's had these crazy rips, but it's been two-sided to a strong enough degree to where you can remove that risk in those butterflies. So I think I'll keep doing that as long as we see this kind of chop around.
I mean, in effect, where do we find ourselves right now? And this is, where do you want to put on an iron condor? Generally speaking, I like to do it at the midpoint of a trading range. And so when I take a look at the chart right now, I see where our gold prices. These are really ugly colors. We're going to fix all this up. Yellow, yellow, yellow. And goodbye. Okay. So literally the 50% mark of the trading rate post-Liberation Day high to the post-Liberation Day swing low here. You're at the 50% mark right now. Right? If crude's a good play, Ilya, from the post-Liberation Day high to the Israel-Iran war high, that swing area, okay? We go from here to here, and the 50% mark's right around $66, depending upon what contract you're looking at.
Yep.
Got to play it neutral. Now, the only quip I would have here, and the one thing that's getting at me, the positioning may be a problem. Even with yesterday's news out of the administration, the snip, snap methodology of deciding whether or not we would have Fed Chair Powell continue in his role, we get the pullback from the 50-day, and then we immediately get back up there today, Ilya. And that's because, in my view, this is an exceptionally crowded trade where people are now trying to get out of their short dollar exposure.
Mm-hmm.
And so knowing that short dollar exposure, a leg of that is also long gold exposure. It's one of the reasons why I'm thinking that Mike may be onto something here with playing directionally neutral, and maybe we temper our enthusiasm, curb our enthusiasm. How did I miss that? We curb our enthusiasm about gold's directionality to the upside, maybe play it a little bit more in silver. And if the dollar keeps rallying on this Buy America type of setup, then our gold position may have some problems ahead.
Thankfully, the way that I have my gold position is expressed is through short premium. So I've actually just sold puts, and that's how.
Look at you, fancy.
I have it. That's how I've had it on. Well, no, it's a vertical, not to worry. I'm staying very, very risk defined in these wacky markets.
In fairness, if I was selling puts as opposed to buying calls, all of these trades would have worked out. That's really my issue.
Yeah.
It's the way I structured my opinion.
I looked at vol when I was putting this on, and this is already after an initial roll, and it looked too expensive, and so I did it this other way. And so I'm okay to continue to sit. I've not only used verticals, but I've also given myself a lot more duration this year. So whereas the tasting methodology might call for, let's say, 45 days in, I've been getting closer to 60, just because I want to reduce my direct exposure to the underlying moves, because these markets have been really, really choppy. I want to give myself a lot of time for things to work, because whereas macro is already a very difficult thing to time, now it's just look at the term premium surging, an even more difficult thing to time. So I'm fine with gold basically idling here. I don't love silver, not because it doesn't look great. It does. No question there. It's just silver has this sensitivity to overall risk sentiment. And if you're going to be bearish, as I am, on overall risk sentiment, gold is your vehicle most likely, and not silver. The dollar rebound is very interesting in this context. I am very long dollar at this point. I've been layering it on essentially for 2.5 weeks now. I started with the pound, added the euro, doubled down on the Aussie just overnight as it made its break, doubled down on the yen last week. So I am very long dollars at this stage, having been very short in the first half of the year. So I've almost completely flipped over the boat. I'm not quite as long as I was short at the end there, but it's getting there. So in my mind, what this becomes isn't so much a Buy America thing as it becomes risk aversion, whereby the dollar is again a haven. Because we've gone through the bit, I think, in April where the markets had a genuine concern that, oh my God, we are going to break the US dollar-based global commercial order and surgically extract the dollar and the US Treasury bond out of their bedrock role for modern finance. And then as we force the foundation out, the house can do whatever the house likes. We know what happens to houses when you extract their foundation. So in having kind of settled that concern, April through, let's call it, the end of June, you get back to a dollar, which we can see how it's behaved around the recent spooks in markets. It's gone higher. So I think you're back now to a dollar that's going to be a sort of refuge of last resort if there is a push for de-risking and liquidity. And that's still sort of the world that I'm seeing.
Mike, what themes should we be thinking about for the second half of the year? Is it still AI? I know AI is very much in the news today because of Coldplay, but there has to be other reasons. I would encourage people to listen. When this company IPOs, I will probably be buying some of the shares. Because if they can get to market, after surviving this debacle,
it's gonna be a meme stock just because of this debacle. That's the best part.
What was it in Knocked Up? Like oh, you listen to Cole. Okay, never mind. So, is AI still the most prevalent theme in this market, Mike? Jokes about adultery and infidelity aside.
Yes. I mean, it's definitely going to be a focal point for sure. I kind of like the nuclear products that, in theory, should drive the AI movement, like SMR. You're seeing that rip to highs.
Oklo's doing nice too here the past few days.
Yep. Yeah, I think it's just another way to get involved, but not directly in like a product like Nvidia that's $600 trillion now, 4.02 trillion on its way to 5. But yeah, I think it'll be interesting, and really I think this earnings season will be interesting too, because last earnings season they had the luxury of just saying, "Oh, we can't tell you anything because pending tariffs." But now it's like things are getting more clear. I think we're going to get more. I think the market is expecting more from these companies now that tariffs are getting more clear. So I think we could see some big moves in some single name stocks. But yeah, I think the tech space is obviously thriving. I don't see why that would change unless there's some dramatic shift in the market as a whole, specifically because of the concentration in these tech stocks in the NASDAQ and in S&P 500. I think that is what we saw to a pretty strong degree in April. And, that concentration is not changing. If anything, it's getting more concentrated with people FOMOing into products like NVIDIA and Microsoft and all these other ones that are at all-time highs.
Oh, yeah. I'm going to guess that your theme of the second half of the year is growth, which, in fairness, we did share a stat a few weeks ago, right, about the S&P 500's recovery. This was just the 9th time in history where the index was down by 8% or more at one point in the first half of the year, only to close the first half of the year in the green. 6 of the previous 8 occasions saw the S&P 500 close the second half of the year even higher, but the only 2 occurrences where it did not, 1957 and 1990, were years in which recession came out of it. So we had said back a few weeks ago, the game that we're playing now as bulls is basically, are we avoiding recession? And so you'd have to forgive me then for thinking the retail sales data today is better than expected on all accounts, the inflation adjustment aside. Recession's a little bit less likely at the margin. That should be good news for stocks because that's the game we outlined a few weeks back.
That's actually not what I see at all. I see that
of course not.
No, and neither does the Atlanta Fed, because they revised their consumption component in second quarter GDP down, not up.
Which is a story, by the way, we wanted to get to earlier. Sorry to interrupt you, but this is a long-standing story of what's been going on with retail sales the past few years, where part of the reason why the Atlanta Fed revises things down is because they make their inflation adjustment. And if you take a look at this, comes from Greg Dachow over at EY Parthenon, their chief economist. If you were to adjust retail sales going back to basically the start of 2021, they're flat in terms of volume. The reason why they're higher is because of inflation. And this is one of the quips that we see with the actual spending data. Today's a nominal release. So it doesn't really tell you what's been going on if there's been a big push higher in prices behind it. Because, again, at the end of the day, P times Q equals GDP. So if prices go up and quantity of goods stays the same, you actually have a bigger GDP number. But you're not actually moving more product. I digress, Ilya. Your point?
Well, that's exactly it. So what this chart is telling us is basically that retail sales has been soggy since basically the beginning of the year. And of course, we already had the first quarter GDP number. It was negative for reasons completely unrelated to retail sales or to consumption in general. Obviously, the huge 40% swing in imports was a very anomaly-like development. So was the surge in the investment component because all of those imports went into inventory. That's now cushioning consumers from costs, as are wholesalers that are eating into margins to cushion consumers from higher costs. We saw that in the PPI report for the third consecutive month yesterday. But nevertheless, you take all of that noise off the table, because that's just statistical anomaly, whatever. We had the weakest consumption as a component of GDP in the first quarter since the second quarter of 2023. This retail sales report, nominally, forget inflation for 1 second, because that actually makes my point stronger and makes this look even worse. Let's look at the nominal side of things, because the rising inflation in June flatters this somewhat. So let's take that impact. Even still, retail sales on net fell by about 3.3% over the course of the second quarter, because the declines in May and in April far outstrip this bounce in June. But of course, the bounce in June is forceful enough because motor vehicles are such a large component, and that's where the recovery occurs, to flatter the headline number, one headline number. If consumption, which is 69% of the GDP total, is getting weaker into the second quarter, the risk of recession isn't lower, it's higher. Now, are we going to get a recession confirmed in second quarter GDP numbers? Almost certainly not for any kind of underlying consumption reasons. If anything, we'll have more chop around the tariffs, but the negative number in the first quarter wasn't a real negative number because of all this weirdness. But that's
how many recessions have started with a 40% surge in imports?
This is a weird thing, right? Because this surge in imports is not a reflection of consumer demand. It's a reflection of companies trying to pull orders forward because they don't want to pay tariff rates later. This is why you got a massive parallel surge in inventories. It's not like this 40% jump in imports, like, oh my God, everybody's buying stuff, import more. No. It all went into warehouses, waiting. So that's going to smooth out how much goods inflation consumers see. It's not going to get rid of it. And when we look at what wholesalers have been doing, they are already fighting a losing battle because they continue for 3 consecutive months now to eat the input costs. And yet in June, the goods inflation numbers in CPI started to creep up. It's a losing battle. They can only eat margins for so long. They will pass it on.
Probably fourth quarter.
They're not going to take themselves out of business for the sake of not raising prices on consumers, because of course they're not doing that so as to protect the demand. But
they're talking about this in their earnings. A bunch of companies are saying how they're working on supply chain management right now, and they'll worry about revenue management tactics later on, which is basically saying we're going to figure out ways to get deals. We're going to start cutting promos, and hopefully when we raise prices, we can make it up on volume.
Yeah.
I mean, that's the playbook that Samuel Rhines over, I think it's Employ America, has a really good article about how businesses are going to navigate this environment moving forward. Mike, we got 5 minutes left here on the day and the week. Netflix's earnings are helping propel the NASDAQ here higher after hours, 23,251. We're not the exact high, but it's pretty darn close. This would be a high 4-hour close of all time. Do you care about seasonality here and the market that tends to get stuck in the second half of July? Does that matter to you whatsoever?
Not necessarily. I think there's always interesting data points when you look at long-term analyses for certain months or certain quarters, but I think right now there's a lot of pending things. I mean, a lot of stuff is potentially priced in, like the Bitcoin rally we saw up to 120K. I think that was pricing in what we're seeing today with the passing of stablecoin legislation, and this week is crypto week, blah, blah, blah. So, I think the market always knows first, and I like to listen to what the market is telling me versus my own assumption. But again, I think if we stay in this 15, 16 VIX, how are we going to drop from 6,300 to sub 6,000? I don't think it's going to happen. I think we would need to see the VIX pop back to 20, 25, 30 before we get down to those levels. And that obviously makes sense, but we need that kind of volatility pop before we see substantial moves to the downside. And if we don't get it, I think we'll still see chop. Don't get me wrong. I think we'll still see days where we're down 100 points, 150 points. But I think the trend is up and to the right, for better or worse.
Up and to the right until it's not.
Yeah, I mean, yes. Exactly.
And also, Ilya, the screen was from
speak
Ryan
for yourself.
over at Carson Research. Oh, no, go ahead. Sorry to interrupt you, Mike. Have the floor.
Speak for yourself, Ilya. I bought 100 Lulu joggers, so it is not company's front-loading inventory. It is my demand.
Nice.
All
Lulu
kidding
jog-
aside, but yeah, they're doing that.
I'm more of a Viore person. I'm finding those to be.
They're great.
It's all about
me and
Mac
Nick.
Weldon, gentlemen.
Me and Nick are both Viore boys.
Excellent. Good for you. And see, that's why we get along. We understand the sports betting and the attire.
Yeah.
All right. Ridiculous stories to close the week. What's the most ridiculous thing that we've heard in the market this week so far? I don't know if there's a good corporate story out there, if there's anything good about AI, if there's anything good about the Fed.
Gotta be the NVIDIA story. Come on now.
NVIDIA now being worth more than the Japanese stock market.
NVIDIA being allowed, NVIDIA having restrictions on H2O chip sales to China lowered because we're in a trade war, everybody.
I think it's the White House pump it up meme. Like that's
that's a good one too.
The most wild thing I've seen.
I mean, isn't that? I think that's kind of validating though, in the sense that, I mean, Ilya, you're here every day with me. I've had a very stupid point of view that they're just going to pump it. And, you drop a meme of American Eagles making it rain Benjis. I don't know. It kind of feels like we were right.
Yeah.
It's getting ridiculous. Yeah. It's getting so ridiculous. But you know what? We're here for the ride. Sticking with the same things. I'm not in tomorrow because we're celebrating our 36th turn around the sun. But leaning along the NASDAQ, 23,350 calls, 23,350, 500 call spreads with an expiration of Monday. So let's make it happen. Just 100 points. That's all I want. Just 100 points between friends. Likewise, though, still along the S&P 500, like 59.75, 6,000 put spread. That's dated for the last week of August, because I think we are, Mike, we're in this, let's blow off the top, get a little crazy. Bonk is up 18% pre-market today. When the meme coins like that and all the, what do they call them? The shitco's, when the shitco's start going, that's when. Yeah. So the signs of a peak are getting close and we're near a seasonal top. Volatility tends to bottom out in the third week of July, which we have now entered. So buyers beware. But I suppose with that, overtime is now out of time for this Thursday and this week. We'll be back next Monday, same time, same place, 4 p.m. Eastern, 3 Central, as always, right after last call. So for Ilya Spivak in San Francisco, Mike Butler in Chicago, I've been Chris Vecchio in New York. Good luck trading. After this, brief break, and then Ilya's back with macro money. See you there.
See you there, everybody.
If you missed the live show, here's our cherry on top weekly recap.
I did let off fireworks. I should have brought a video. I honestly have never paid attention to the amount of powder in there. And they say it. So like those are like 200 grams of powder, right? And so I got a 500 one this year. So it's usually me and my youngest Austin. We literally, it's like this. It's like. Nah, dead serious. Like I don't mess around.
Tom and I normally park on the same level in the parking garage. And so when I go to get out of my car, I have all my stuff, and I see big signs on the door, elevator, out of service. I was like, that's not gonna be good for Tom.
I looked at it for like 5 minutes.
And he was like, blink, blink, blink.
I'm like, this has to be a mistake.
So Bat, what he's doing now is he's asking people around the office if they will go get his car for him because he can't walk up the 4 flights of stairs.
I see you looking at my hair. You're like, you keep looking above my head.
Who can't? You've got the beard and I mean, are you like showering with Rogaine or something? What's going on? You're like going full Sasquatch.
I don't understand.
I have not been able to spend the time.
Sasquatch.
The sassy guy. Yeah, look at him. He's proud to wear it.
I was trapped once on the air and water show.
Oh.
I was trapped on a boat, like a big giant yacht for an air and water show.
These are not actual problems.
Yeah, it was. We were 200 yards off of the North Avenue beach, and I could have technically, if I could swim, I could have made it in.
Okay, but you can't swim. We've already discussed this. You have negative buoyancy.
I went to America's Cup race here. It was the trial.
Look at you with all these rich guy activities. America's Cup.
No. Remember they had the trial for it?
I am black.
I went to that on a boat, and I was trapped out on Lake Michigan. They won't let you back into shore until like after those races are over. So you're out there for like 12 freaking hours. You run out of food. You run out of everything. You're hot as hell.
Your thong is starting to chafe.
Yes.
Get the full scoop by checking out the archives at tastylive.com.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure. Tom, when you're scooping the offer, what are you doing?
That means when you're scooping the offer, you are buying whatever you can get your hands on at the best available price.
What does it mean when something trades by appointment?
Trading by appointment is when like you're in a pit back in the day that had like 1 or 2 market makers in it, and if they were having lunch, you had to make an appointment to make a trade with them.
In the pit, if you said, I'm gonna buy your book, what did you mean?
If you're gonna buy the book, that means you're gonna buy everything that is posted in an electronic book. So every resting order that's posted in the book up until a certain amount.
If you say take a fill, what's happening?
If I'm taking a fill, that means I'm a broker, and if I'm a broker, that means I did something horribly wrong because I'm a market maker.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A Scoopy.
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you know, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
Tasty Trade is now on TradingView.
So I studied economics and international relations, and I wanted to time you're wrong. And so, for me, every macro narrative begins with what's the price action saying, rather than this or that economic indicator or some such thing.
U.S. retail sales data seemed to surprise higher, but for some strange reason, we'll get into what it was in just a moment, bond markets and the Fed didn't think that this was necessarily good news. So what does this mean going forward, and how does this set us up for the market's perception of the U.S. economy as we get into the second half of the year and start to think more acutely about economic growth? That's what we're going to cover here on Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And the markets, to be sure, certainly liked today's retail sales report. And indeed, that seemed to be the cue for stocks to launch higher. But nevertheless, one does have to ask the question and look under the surface, how is the U.S. economy actually doing? And those details are perhaps not quite as encouraging as the markets thought they were. Here's the performance that we see, and here is around where we get that retail sales report right here. We can see once we get it, the S&P 500, the Dow, they inch higher. It's a similar story for what we got in the Russell. So the markets did like this data, and at the headline at least, it certainly seems to make sense why. Overall retail sales up 0.6% compared with a 0.1% consensus. And indeed, as you look down kind of the various permutations of this data, you see that the control group better, even if you exclude autos here, it's a little bit better, although not by much. The gap narrows to just 0.2% from this gap here. So autos obviously an important consideration here, but nevertheless, the numbers look in all better. In fact, this increase in the year-on-year reading up to 3.9% was the first uptick in 4 months for the year-on-year rate. So on the face of it, these are certainly encouraging until you look just a peek under the surface. Here's the breakdown by category, and you can see here's retail sales. Here you can see they fell over the preceding 2 months, down 0.1% and 0.9%. Here's the 0.6% increase. And the thing that really stands out immediately is this motor vehicle component. And to some extent also building materials and equipment, which is why It's not just a story of one category per se. It's why even when you take autos out of the equation, you still get this little increase, although it's much more modest. But this is really the main story because motor vehicles are between 20 and 22% of the retail sales total, which of course makes sense. Cars are one of the most expensive things that retail buys. So, not surprisingly, it's a very large part of the tally here when you take the amount of money spent against units moved. So, what you're looking at then is a situation where, to be sure, this very potent increase of 1.2% in June is an understandable way to power retail sales to better than expected results. To some extent, the 0.9% rise in building materials is likewise a standout, but it still is a smaller component of the total. It's really this motor vehicle bit that is the driver, given how important this is for the headline tally. But consider that this comes after 2 months of significant losses. A 0.7% decline in April and an eye-watering 3.8% decline in May. And when you add all that up together, what you end up with is retail sales, at least in motor vehicles terms, that are on net down about 3.3% in the second half of the year, or in the second quarter, rather. In other words, the 1.2% rise is nowhere near enough to offset these losses earlier in the second quarter, and that, of course, is echoed, albeit with some diluting in the overall numbers. So retail sales on the whole actually fell over the course of April, May, and June. And that, of course, sets up an ominous sort of a backdrop for what GDP data will do, because already in the first quarter, if we discount all of these shenanigans with front-running the tariffs, this 40-ish% swing in imports and the stuffing of all those imports into inventories, which then gives us this surge in the investment component of GDP. It's how you end up with a nominally negative GDP number in the first quarter. So take all this noise and let's chuck it, because as a lasting thing, it's obviously not a factor. This is front running of tariffs that have since arrived. And moreover, when you take these components and you consider how much of GDP they account for, but for these wild swings in the high double digits, which are very abnormal, all these components add up to a pittance in the overall calculus of GDP. By far the biggest component is household consumption. And what we saw was that in the first quarter, it was the weakest since back here, going back almost 2 years. And we end up with a story now, given this guidance from retail sales, that seemingly points to another weak set of consumer numbers in the second quarter, which, of course, given that this accounts for such a dominant part of GDP, 68, 69%, depending on the quarter, is telling us that the underlying economy is actually slowing and slowing considerably. And perhaps this is why, in the wake of these retail sales numbers, Fed policy expectations actually moved to a more dovish setting, despite these ostensibly better than expected numbers. we end up with a little bit of a trim on this year's rate cut outlook. We're to 38 basis points now, so we're not quite sure we're going to get a second cut. Markets are now fully baked in for a single 25 basis point cut. They're 13 basis points in the direction of a second one, so that's narrowly better than even at 52%, but only just so. But the real disparity is for next year, where the markets are growing increasingly dovish, including today, which is how you get this net more dovish move in the sum for the outlook between now and the end of 2026. For next year, we've moved out to 73 basis points, which essentially means we've all but completely discounted 3 cuts next year, whereas the Fed only sees 1. And so the markets are clearly signaling here that what this retail sales data means is that in a optics sort of way, this probably means that there's maybe a little bit less scope for rate cuts this year. But this does not change the trajectory of economic growth in a more positive direction. It just delays rate cuts and pushes them downwind. Because indeed, the weakening of the economy continues all the same and is in fact made more apparent by this data. Tellingly, in this context, the Atlanta Fed's GDP Now estimate of second quarter GDP numbers that takes in incoming economic data and then feeds them into this model that's updated sometimes daily, as long as we have data to look at that is relevant. We now see it was revised lower today, not higher, on the basis of this data. And that's largely, if you actually see what the Atlanta Fed flagged as the reason for the adjustment. And here a quote is perhaps most appropriate. The Atlanta Fed very directly says that what they did was downgrade personal consumption expenditure expectations. So the markets looked at this, as did Fed economists, and collectively came to the conclusion that in the wake of these apparently better than expected retail sales numbers, the consumption piece for the second quarter looks worse, not better. With that, we get another view of where consumers' heads are at, going now into the second half of the year, with the last bit of notable event risk for the week, the University of Michigan Consumer Confidence Survey. And here you can see we saw a very spirited rebound off these COVID equivalent lows. These, of course, were the post-COVID bottoms in sentiment here. And not surprisingly, sentiment was declining as inflation expectations were rising as a consequence of the pandemic's many disruptions. And once inflation started to fall, once the Fed really started to lean into rate hikes, you can see this is, of course, the beginning of 2022 right here, where the Fed really starts to hike. Once that starts to have an effect and inflation expectations decline, sentiment improves. As you get the advent of tariffs at the beginning of this year, inflation expectations surge and have in fact surpassed at one point the COVID peak. Sentiment craters. Fast forward to the June survey and the decline in inflation expectations from 6.6 to 5%, looking 1 year forward in these numbers. That gives you a potent jump in sentiment. As we look ahead, we can see the overall index is expected to nudge up just a touch, but expectations looking forward 6 months or so as well as the assessment of current conditions, a little bit weaker in the forecasts. And perhaps that makes a bit of sense, warns that actually the headline figure might disappoint. And that takes us back to these inflation expectations as a driver of sentiment. Now, we just saw earlier this week that although the overall CPI report looked encouragingly normal at first blush, and the increase in headline inflation matched expectations pretty much exactly, 2.7% increase in the headline from 2.4. The thrust here came not from services where inflation already is the most dominant, and that's not surprising. Services is the biggest sector in the economy, but from goods, suggesting that the impact of tariffs is starting to appear. In fact, here's the change in monthly contributions to year-on-year figures. We can see the overall headline figure rose by 0.3 percentage points. That's from 2.4 to 2.7. But the thrust here is 4 times larger on the goods side than it was on the service side. If we actually look at the momentum of prices rather than just their levels. When we then got the PPI report, that seemed to continue. The goods component in PPI saw its first large increase in quite a while, and the largest since back here, January. So this is now a very sort of straightforward appearance for inflation linked to tariffs. We can obviously see that goods inflation has been basically non-existent going back for 2 years until this. Moreover, if we look deeper into the price dynamics here, we find that at the very beginning of the U.S. supply chain, at the intermediate demand level, before goods essentially go from who initially begins to have them at the wholesale level, then moves them on to final distributors that then put it out in stores and, of course, make it a retail-facing item. At the very beginning of the U.S. supply chain, margins got absolutely smoked 3 months ago. In fact, this is the biggest decline in wholesalers' margins since back here in 2013, the worst in 12 years. And for the subsequent 2 months, those margins didn't exactly keep pace, but they continued to deteriorate, suggesting that wholesalers are eating inflation costs, ostensibly from higher input costs around these tariffs, without passing them on to consumers. This is, of course, or even to final demand distributors, so wholesalers downwind along the supply chain. And in fact, as we look at corporate earnings reports, we see companies attesting as much. So with all of this in the inflation data, there seems to be a meaningful risk that consumers have noticed that the price of stuff seems to be heading higher, and that the thrust there seems to be significant and more notable than it's been in quite a long time. Now, if this feeds into these one-year inflation expectations and we get a nudge up here, given how this has been the driver of sentiment for the better part of 4 years, one would expect that sentiment would then deteriorate and give us a disappointing outcome, which would then, of course, make the second quarter story that much more ominous. If consumption is as weak as it appears in the first quarter, and it looks like it's on a pathway in the same direction in the second, if not worse, then all of the growth concerns on display in the first half of the year, they have the capacity to become still more acute. Now, you might say, what growth concerns? Stock markets hit a record high in the first half of the year, and that's certainly the case. However, as we keep going back to here over the past several days, notice that in the first half of the year, stocks, whether you look at the S&P or the NASDAQ, rose only a touch more than their normal 6-month average, but those gains were absolutely dwarfed by a dramatic US dollar sell-off. The dollar fell 9% against the yen, almost 40% against the euro, over 25% against gold. And so if we consider stock markets up 5.4 or 7.9% up, it's important to remember they're up in dollar terms. Factor out the influence of the weakening dollar on inflating these asset values and express them in any other major currency, and you end up with a loss for U.S. equities in the first half of the year. Meanwhile, for all the fire and fury in the Middle East, crude oil fell 9.2%, and the front end of the curve continued to price in rate cuts. Front end yields fell. And whatever happened in crude oil clearly seemed to suggest that the markets are more concerned with demand destruction than they are with supply being disrupted. And so, again, just a small look under the surface, and we end up with markets in their price action telling us we're not concerned about something cataclysmic. In fact, this whole sell America dynamic is obviously not something that stands out, because clearly the decline in 10-year yields suggests that investors are perfectly happy to lend to the U.S. sovereign at favorable rates, because their faith and their confidence in the faith and credit of the U.S. government is unshaken, despite recent events. But that, in fact, what they're still seeing is rate cuts and demand destruction. And, of course, against that backdrop, a weaker U.S. dollar makes quite a bit of sense. That dollar weakness then is not about jettisoning U.S. assets, as the 10-year would surely attest. It is about getting ready for an easing cycle against the backdrop of something that starts to smell like a recession. And so, with that in mind, if you then get aggravation of these dynamics as you head into these numbers, and if they disappoint because inflation expectations here tick higher, the story for the second quarter starts to look a lot less resilient than perhaps the nominal dollar-based equity market levels and valuations would suggest. With that, we have today's episode of Macro Money. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and where things may go from there. We are going to be off here next week, but Macro Money will be back the week after. In the meantime, I'll be surely still commenting, because I can't help myself, on the platform formerly known as Twitter, and on Blue Sky at Ilya Spivak. If you're watching this on YouTube, like and subscribe. In the meantime, happy trading.
With rate cuts back on the table, are there any trades that you're watching in particular?
Well, rate cuts have never been off the table, but every time bonds drop, I think they're a buy.
Not really watching any specific trades in the interest rate space. I do keep an eye on, the futures options like the ZBs, the ZMs, the ZTs to see if there's any volatility types of plays that I can integrate into them. Unfortunately, I don't really feel like there is a really great micro future to trade the changes in interest rates just yet. I feel like they need a little bit more volume, but when those get a little more active, that will be definitely one way I will be participating.
Yeah, I am. I would say honestly the dollar trade, and I know that is one trade that has been very crowded as far as a lot of people are short the dollar. And if you look over the last couple of years, typically when interest rates are higher, the dollar is higher, and we've seen the opposite. So it would definitely be the dollar and how I'm going to trade that based on what happens with rate cut.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm, okay? I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm gonna be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right. I know it's on there.
It's warm.
No. I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5, just because I like Kentucky Fried Chicken.
Come on. Do you want to be KFC's power?
3.7. I gotta be real. 3.7.
Okay.
Because the chicken's good. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce. I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot, is what he's trying to say. It's an elevated. It's an elevated. It's an elevated nothing. It's a chicken. It's actually pretty good.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God,
that's amazing.
That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What is going on, everybody, and welcome back to Risk and Reward with Gus and Errol. Gus, what's going on, brother? We got Dame Lillard. No, how are we doing today, brother? I know it's been a crazy week in the market. We've been rallying to the highs, been selling off, and kind of holding near these highs. How are we doing, though?
Yeah, that we have. Yeah, a little bit of stagnation, but we do continue to push through and make higher highs. Yeah, to those of you who are confused by Errol's opening statement, it is breaking news. Damian Lillard back to the Trailblazers. Big deal there. 3 years, $42 million. Congrats to Dame. I see we have some excellent conversation going on in the chat about your preferential rounds. 30-06 seems to be a favorite. So yeah, I can get behind that. But yeah, doing well. Positions are moving how they're supposed to for the most part. I will say this past like 10-day period since we've kind of stagnated a little bit, I've mentioned to you a lot that I've just kind of been long delta until proven otherwise.
Right.
We're starting to test that until proven otherwise sort of level. And so there has been a lot of cutting losses in the past week while, putting on some new things as well. We put on UAL, which did not work out for me. I've already cut the losses on that position. Unfortunately, you gave yourself a better time horizon. But yeah, it's just been this stability. You may not know this, but it's really easy to trade when the market just goes straight up. It's like makes it super easy.
It makes it very difficult for myself, actually.
Oh yes, I suppose for somebody like you, perhaps, but for me, I like it. I like it when stonk go up. So this bit of stagnation has been hurting me, but not burning too big of a hole in my pocket. Still doing well in the year. Can't complain.
Oh, I hear you. We'll kind of see how UAL and some of those other airlines kind of perform and kind of digest all those news. I know I got 29 days left till expiration, which I am fortunate with that one. Did you look at Netflix? Are you doing anything in there?
No, I have nothing on with Netflix. They are after close tomorrow. I do.
Yeah.
Is it? Today's Thursday.
We're gonna have to double.
Oh, it's after close right now. Man, I've thought all day it was Wednesday until right now. I came and sat down in the studio thinking it was Wednesday. How about that?
It's one of those.
Shows you about how good. Hello, guys. Sports news. Yeah, shows you about how well I'm keeping up with things these days.
After the bell, what do we got right here? We'll get into these slides here in a moment. We're going to talk a little bit about Peter Thiel making a big bet on Ethereum. It's looking like Netflix taking a little bit of a hit right now.
Yeah, but before we do, we got to talk about this astronomer CEO situation.
That's tough.
It's the talk of the town
That's
today.
Tough.
For those at home not aware, which it'd be hard to be unaware if you've been online at all today, but the CEO of Astronomer, which is a small. What did they do? Do we remember what they did?
I didn't look too deep into their
data
company.
management.
Exactly, something along those lines.
Yeah, basically corporate buzzword company based out of Cincinnati, Ohio. But their CEO last night was caught on camera at a Coldplay concert, rubbing all up and giving some loving to their CPO, which I did confirm is actually Chief People Officer.
Oh, it is people.
Yes, it is people, and she's head of HR. That's why people have been referring to her as head of HR. But yes, people officer, not product officer.
Did you hear a little bit about more of the lore though?
I didn't. I mean, I've been keeping up with it all
The lady
day.
next to the right of her, that was like had the oh my gosh face. I believe the head of HR just gave her or just promoted her.
Oh,
right. So this can come back with some more conversations because she's also
interesting.
The lore might be going a little deeper, but I don't know. His face has been plastered everywhere. I know they're scrambling online. But it's just crazy how much fire
online, and the situation just continues to develop and worsen today.
Yeah.
I just mentioned to Errol right before we came on air that the wife of the CEO has now changed back to her maiden name in her social media profiles, which is obviously no good. But as we talked about earlier, is this the greatest publicity stunt in the history of publicity stunts? Here I am on air talking to our audience about Astronomer, this company we've never heard of before.
Right.
So, is there such a thing as bad publicity?
Is it smoke and mirrors? I don't know. At the end of the day, we'll never know. But we do know that something like this can give you a lot of publicity. So, I mean, what a marketing strategy. If you got some friends that own some arenas, hey, point the camera to us. Maybe something not that diabolical and scandalous, but it's not a bad marketing idea because now people are going to be watching those videos and be a little bit more aware of them.
Yeah,
So
if you got friends at the right
you
places,
can get creative with that.
Yeah.
I honestly think it's a great creative marketing ploy if someone were to, spin it into something that they want. But Jumbotron marketing, but Peter Thiel in crypto.
Yeah,
Gus.
let's talk about it. Peter Thiel, we talk about the other founder of PayPal all the time. We don't
Right.
seem to mention Peter Thiel very often. Let's dive in. You kick us off. Yeah.
All right, there we go. Peter Thiel, billionaire tech investor and co-founder of PayPal and Palantir, known for his early investments in disruptive tech and crypto. So that's Peter Thiel. If you didn't know who Peter Thiel was, PayPal very relevant. Elon being a little bit more relevant for the face of PayPal or just being tied to those names. And then Palantir. Palantir has been extremely relevant over the last, 4 to 8 weeks. So this is where Peter Thiel plays a role in
closer to 4 years.
Closer to 4 years. Yeah, 5 maybe. I think 2020. And then Tom Lee, well-known market strategist, co-founder of Fundstrat Global Advisors, recognized for his bullish stance on crypto, pro-crypto, especially Ethereum and Bitcoin. But this is who Peter Thiel is. If you're wondering, why is this even important? Because why do we even care that so-and-so believes in Bitcoin? I believe in Bitcoin. I don't see my name in headlines, guys.
Yes.
So what happened, though?
Peter Thiel taken a 9% stake, I believe it was, in Tom Lee's company. This company is essentially doing with Ethereum what MicroStrategy is doing with Bitcoin, to the best of my understanding. They are loading lots of Ethereum, and that appears to be their primary business strategy. You want to start a business where we just load Dogecoin?
I'm down for Doge because I feel like Solana's next.
Oh, you think Solana's
We could
next?
take Doge. I mean, it was Bitcoin, Ethereum.
Solana gives me Safe Moon vibes. I can't really explain it.
Wait, like not a lot of risk on? Like Solana gives you...
Like hype then die sort of vibes is what I get out of Solana. Maybe XRP. You want to do XRP?
XRP is a buzzword. I think XRP is turning into a buzzword.
It's trending on TikTok right now. We could probably syndicate pretty easily.
We could.
Okay.
I think we could.
If anybody wants to invest in our in our company that only exists to buy XRP, instead of investing in XRP yourself, get at your boy.
Before we move on real quick, though, what do you find more utility in or see more utility in from a personal point of view? Let's say you're the CEO of a company. You guys are going to invest in either Bitcoin or Ethereum. MSTR took the Bitcoin approach. Tom Lee and Peter Thiel are taking the Ethereum approach. Which one would you choose?
If I have all the money in the world, it's Bitcoin.
Really?
I would say, yeah.
Okay.
I mean, I think why not? I think that if money is no object, why not just choose the most well-known cryptocurrency that there is? Because if your stance is that crypto is going to grow, everybody who is coming in to enter this crypto market and grow it, as you predict, is buying Bitcoin first.
Right.
So I think I would have to say Bitcoin at
In
least
terms of
from a growth angle.
Okay, a growth angle.
Yes, and Bitcoin also. And this is, this is kind of like a doctor talking about surfing here. I don't really know exactly what's going on, but I know that Bitcoin is more tangible. It holds its value a little better. It's more of a real asset than a lot of other cryptos. There's because there's like the three boxes something has to check to be an actual currency, right? It's like a store of value, a medium of exchange. In my Econ 311, professor shakes her head. I don't know what the third one is, but Bitcoin checks all three boxes. So yeah, I feel Bitcoin just has the most strength. But it all depends on your angle, your risk tolerance.
It's a great point. The only reason why I actually lean a little bit towards Ethereum, just because I feel like Ethereum is one of the only cryptos we've seen real utility of. I know it was super hyped up, but I thought that the NFT mania that was going on was a great example of how the infrastructure of Ethereum and smart contracts could be used. And I feel like I've never seen anything with Bitcoin but headlines. So maybe it's just a store of value, digital gold, they say.
Perhaps it's just who we're talking to, because that's like kind of the same view I have on Bitcoin.
Right.
Yeah.
Great point. But why does this even matter? Well, Peter Thiel is a big headline in the crypto space, especially anybody that supports these new industries or sectors, whatever you want to call it. But it's a signal of confidence, right? If Gus is running a massive corporation and he's been investing in Bitcoin over the last 5-10 years, and his name's in these headlines. If I see Gus in the headlines, he's purchasing on Bitcoin, I'm going to be a little bit more confident in doing so. But this could be a little bit of a catalyst for a lot of investors. But don't you find that kind of interesting? It's like nothing fundamentally changed or technically changed. It's just a headline about, a big person in crypto showing their support, and we're getting some headwinds off of it. We're getting some movement.
Yeah, it's true. I mean, we see that happen all the time. Right. Sometimes, and there's the way that sentiment can spread like through people is very interesting. Something like a common one that I would reference is if a SpaceX rocket blows up, Tesla will go down.
Oh, right.
And it's like, why? Obviously nothing fundamentally changed about Tesla, but it's the whole ecosystem. So yeah, I do find that to be an interesting part of this. And I also think that, kind of what you just said can be applied to crypto as a whole. Like in terms of take Bitcoin, for example, or Ethereum, nothing has ever fundamentally changed about these cryptocurrencies. It has just been this progressive snowball of more and more people buying into the logic of cryptocurrency or just using it as a growth asset, whatever it may be. But yeah, I think that this is an interesting microcosm of that as well.
100%.
But yes, and as somebody mentioned in chat already, BMNR is the ticker that we're talking about here. But yeah, so as we just discussed, credibility boost from Thiel's backing is kind of the biggest factor that's even moving these right now. And I suppose, having somebody that has billions and billions of dollars in their corner supporting your company and with equity in your company, perhaps there is some tangible thing you can tie to that as opposed to just a credibility boost. But that creates investor speculation when somebody that is really good with their money is chasing after something. You're compelled to do the same. It's why I bought Berkshire Hathaway for so long, though I don't hold any anymore. May Warren Buffett rest in peace. I know he hasn't died. And then yes, also potential impact on Ethereum-related valuations. This is a big one, and especially as these Ethereum ETFs become more widely available. And there's just I don't want to use the word brand awareness, but it's kind of it's kind of what it is. Yeah, it further pumps Ethereum in the news cycle, gives it a little bit more validity, and yeah, perhaps props up that valuation a little bit.
Oh, completely agree. I mean, I wonder what a lot of the valuations are going for on some of these NFT projects. I mean, we could clearly see based off of the price of a lot of these NFT projects and how that held. But I wonder what those evaluations were on projects built on Ethereum in 2020 and 2021. Because I do know, it got a lot of celebrity support. Like we were just talking about the influence that guys like these big names have. I mean, I remember Justin Bieber had bought a Bored Ape, I think it was. And it's like when the celebrities
started on the Bored Apes.
The Bored Apes, brother. When the celebrities are buying in, their peers, Justin Bieber's peers and the other celebrities' peers are buying in too. So just kind of seeing that human behavior,
yeah, it's true. I mean, kind of no matter how rich you are, your friends are your friends. You want to do the same activities your friends are doing. And yeah, holds up all the way across the board.
But what are some of these implications? Crypto stocks and altcoins may see a sympathy move similar to Ethereum-focused companies may rally on this news. I don't trade too many altcoins. I really don't. I know altcoins get a lot of volatility, and sympathy moves are not foreign to like the equity markets. We see it all the time. Something like Tesla, the head of the EV space, has a massive rally. We may see a little bit of a rally in Rivian or whatever else might have exposure to the EV space. So could see something similar in the crypto stocks. I'm not a big altcoin trader, but to somebody that was getting into altcoins, what would you classify as an altcoin to somebody just getting in?
Like right now?
Yeah. I've heard a couple different literally anything off the top of your head is probably a coin.
At like $1, man. That's real stuff.
And for anybody new, like, yo, what is Gus and E talking about? What's an altcoin? Anything outside of Bitcoin? Am I mistaken, Gus?
I think that at this point you could say Ethereum. Yeah.
Ethereum, yes. Bitcoin, Ethereum is safe to say. Nothing else would fit that category, would it?
I don't think so. I mean, hilariously, Dogecoin has kind of become like sort of relevant.
How is that still a household
sort of
name?
Valuable?
It kind of became a household name.
Man, I'll tell you what. Can I track what Doge is trading out on here? I so can.
Do you still have
Tasty
Doge?
Crypto? Thank you, Tasty Crypto.
You still have Doge, or did you ever get into Doge in 2020?
I did. Yes. Maybe I've told you this story before.
Yeah.
Yeah. It's at 21 cents now. Yeah. I got into Doge in 2020. Just as a complete joke.
Right.
We were bored, and I was like, "Oh, let's throw $20 into this stupid Dogecoin."
Mm-hmm.
And that was when it was worth well less than a cent. And then it went to a cent. I remember that, and we like 20x'd or something like that. And I was like, "Okay, I'm out." And if I had kept holding, as you can see now, I would have 20x'd another time.
Right.
That would have been quite the trade. What's be $8,000 on $20 buy-in? Yeah, 20 squared. So yeah, perhaps a little bit of a paper hands situation on that one. I recently learned that maybe I mentioned this to you. The third co-founder of Apple sold his 10% stake back to them for $800 when they first started the company. And
we didn't speak about this, but we talked about how a $5 investment in Apple X amount would have been at whatever X amount.
Yes,
we didn't go into those details.
Yeah, the third guy that founded Apple, Ronald Wayne, I believe is his name. In 1975, like the year they started the company, he decided he didn't want to be involved, and he sold Jobs and Wozniak his 10% stake for $800, and that would be a $300 billion position now. So my whole point is, there's people with worse paper hands than me. All right.
My point is diamond hands.
There's been bigger mistakes made than me selling Dogecoin at 1 cent.
Oh yeah, I mean anybody that had the opportunity to even invest in Uber. You know, speaking of Apple, Uber came a decade later, and I know a lot of people passed up that opportunity that had a little bit more capital under their belt to.
Yeah, and it's funny because companies that you would totally expect to pop out of their IPO will sometimes die as well. Like Coinbase comes to mind. Coinbase is just now about to pass their IPO like opening day peak.
Oh right,
yeah.
It's like that initial volatility everyone's excited for. I know we even have like IPO traders. Like there's some traders that specifically wait and look and study IPOs.
Oh yeah, yeah. Right? I enjoy trading IPOs, and I will do it where options are available, because very often you will see these companies just inflate like crazy out of IPO because everybody just can't wait to get their hands on their slice of the pie. And then, that's almost always unjustified. I remember I made a good money trading the Snowflake IPO, which was 2020 or 2021. Somewhere around there. Yeah, ticker Snow. And it was the same thing where there was this crazy hype train for like the first 2 days and it mooned. And then there's no way that this pace is sustainable or that this price is justified at all. And it's the most brain dead trade in the world to try to get that coming back down. And the premiums are through the roof. It's great.
100%. Sometimes whenever those IPO, I'm like, I hope the options chain hurry ups and comes out for this ticker so I can trade it.
Thoughts on WorldCoin, says Aaron Sin in chat. I've never heard of WorldCoin.
Never heard of WorldCoin either.
All right, there's our thoughts. I can't say too much more about it. I don't want to speak out of turn here.
Yeah.
Does not appear to be a thing we have on Tasty Crypto, which I've never heard of it. I suppose it's not that crazy, but anyway, we can keep it moving here.
No, but that's gonna wrap it up with the Peter Thiel. Peter Thiel. And Ethereum. I mean, Ethereum's still catching all of the headwinds. I think Ethereum's going to end as the top dog in the race. But that's going to be my take for.
I know Ethereum has been adapted more by people who are trying to give you a tangible means of exchange into cash. Like I know in Europe, the crypto ATMs are becoming an increasingly prominent thing. And Ethereum is the primary.
As in, I can walk up to this ATM and withdraw cash. Like what is the ATM doing? Is it
I suppose it liquidates your currency. I would guess it either liquidates your currency for you or it transfers your Bitcoin into whoever owns the machine's wallet and then they give you the cash.
Yeah.
Something like that.
It's like a pancake swap inside the ATM, or like is it like a Uniswap built into the ATM?
I mean, there's like a bunch of little guys in there. But so I do think that there's some validity to be had with that. But honestly, I mean, with crypto right now, I feel like there's no bad buys in terms of like a long-term holding context. I just think that this is we're still kind of on the forefront of this whole thing.
I don't know. Sentiment is really weird. It would be interesting to study more of the psychology about sentiment because, why is crypto not as exciting right now when the crypto industry is barely even, I feel like we've barely even seen half of what we're going to be seeing built over there.
Yeah. Have you seen, there's a bill in the works right now to make banks have to acknowledge crypto holdings when giving mortgages. I don't know if you've seen that.
Oh,
that's
like acknowledge it in what sense?
Like acknowledge it as an asset.
Okay,
like the same way they would. Like you can.
I think rightfully so.
Yeah, you can leverage a mortgage against your house or whatever.
Absolutely, there's capital gains tax on crypto.
Yeah,
as it should.
Yeah, so we're just now getting to where that sort of thing is formalized, and I think it'll be interesting to see what cryptos they initially choose to acknowledge in that, because you could have all kinds of funny situations. Like you wind up on some shit coin that you see shilled on TikTok or whatever, and then you put in $1,000 and it 100x's, and then suddenly you can go to the bank and say, "Hey, my Shiba Inu or whatever, my Shiba Inu is worth $100,000, bro. Can I get a loan?"
Yeah.
I think there's interesting implications with it, and they'll certainly have to pick and choose the cryptos. But I do think that's an interesting.
I think it's valid. I think it's. I think it's a right approach. I think it's heading in the right direction because we do.
I mean, is it like I think it's so obvious. I mean, is it not an asset? Is it not worth money?
When you have the stock market, which is like the cousin, it's like, Dad, why did he get to? You know what I'm saying? So I think that's the right move. I think it's a great push for the industry as a whole for crypto.
Yeah.
So
absolutely. It's very interesting that's coming around, but. What are you eyeing anything for the rest of the week here?
No, I know we got some earnings, traded a little bit of UAL, got 29 days left to expiration, so hopefully that could come back a little bit. I know Netflix, what I wanted to do originally was I took the Netflix position off. I wanted to roll the profits from UAL, the imaginary profits from UAL, into the potential earnings trade for Netflix. But what I'm going to do, like we kind of touched on too, is just maybe look for some outlier moves from earnings, some exaggerated moves, pick some of those up. But I'm glad I got the UAL one on. And I'm looking forward to seeing how Netflix is going to pan out, because it looks like anybody that sold an Iron Condor on Netflix, it might be opening up right in your breadbasket, or if you sold a Strangle, because we're going to close, or we might open up unched, as Dr. Jim would say, even though we put in a pretty high and a pretty low. 10 minutes later, we're at where we closed at.
Efficient market hypothesis wins again. we can never escape. But yeah, I do think that's interesting. And I will say, while I did not trade it, I was definitely bullish on the Netflix earnings call. I think that we have to be really close to Netflix giving us some kind of big announcement regarding live sports. That's something that they've been kind of trying to make a foray into this whole time.
Live sports, as in like watching the finals, watching.
Yeah, whatever you may have. They did get a few NFL games last year. They covered the NFL Christmas Day games on Netflix. And that contract goes through 2027, I believe. Yeah, the NFL Christmas Day stuff.
So I feel like they're going to try and change. It's like a nice little on-demand catalog. It might change to something like I don't know, what's a good comparison? There's so many competitors nowadays, but
well, I think that's the leg up that Hulu has on them, if you can name one, is that Hulu has the live TV offerings.
Right,
that's how I watch live TV. My father, love you, Dad, pays for the Hulu with live TV, and I'm on there, but it works great. I mean, it really is like everything in the world. It's the same thing as freaking cable, which I wish we could just go back to at this point.
I mean, might as well.
But yeah, I mean, it's got everything in the world. It's got all the sports you could need, all that good stuff. So I think that Netflix is maybe trying to capitalize on some of that market share. I know there was also talks about Netflix getting into a UFC contract, because that's always been pay-per-view.
Yeah,
it's the idea, and UFC outspokenly wants to get rid of the pay-per-view model they've had with ESPN.
It's been terrible for their fighters.
Yeah, it's been terrible.
For the top few fighters.
It's terrible for the viewers. I mean, like, if you wanted to legitimately be a fan of UFC, I mean, nobody has freaking. I mean, it'd be.
The only body that
went north of $150 a month.
The only people that win in a pay-per-view is the people making the money from the pay-per-view, because it's not a great experience on the consumer end, and it's not a great experience for the people putting on the show.
Exactly.
They don't make that much money.
And it's a really hard way to grow your sport too.
Yeah,
if you're
exactly.
trying to grow it, you're putting it behind a paywall. There's very few other
100%.
sports that are behind that type of paywall. I mean, they're all behind a paywall because you have to be able to watch them in the first place. Right. But then you're going to paywall me a second time. Right. Like, I'm already paying for this thing to be able to watch your sport. So I do think it'd be a good thing for them to phase out. And Netflix is a way that they've talked about doing that, because that would still be a subscription model. You'd have to be a Netflix subscriber, and they would take some of that revenue and chop it up however they see fit. So I know that's been in the works. But yeah, I just think I think Netflix is interesting and could have some promise in that regard. I think that's like, they've done all this just with streaming. Yeah. They've never done anything live until like last year.
How long until Hulu and all these streaming services are seasoned enough until we get a service that comes out talking about no ads, free this, free that, and then undercut all the other companies? Maybe not, but it'll be interesting to see how that evolves.
I mean,
it's cable again. We grew up with this.
Somebody monopolize
this.
New to us. Yeah, please, somebody monopolize this. I would genuinely pay like $200 a month if I could just get one place where I can actually watch all the games from all the sports.
Yeah.
And it just doesn't.
I cannot believe that's how it is nowadays.
Oh yeah,
that's the most absurd
thing. It gets even crazier the more that you're into. I mean, if you want, if you want to watch, say Wimbledon, you need ESPN Plus to watch the early rounds of Wimbledon. If you like EPL soccer, if you want to watch Premier League, you need Peacock. You got to have Peacock.
That's me and Paramount sometimes with Champions League.
Yeah, Champions League. You got to pop over to Paramount Plus, and you got to have this subscription, that subscription, and it just tallies all the way up. I remember seeing a study last year that to watch every NFL game last season, it would have cost, I think, $855.
That's insane.
If you wanted to actually watch all of them like legally through the desired means. And yeah, that's so insane. And I feel like it has to hurt these companies a little bit too, because like I'm not gonna pick up a new subscription. Like in the case of Netflix, did anybody subscribe to Netflix to watch the NFL Christmas Day games? I don't know that they did.
Probably not.
I don't know how many new subscribers you're really generating from that. People find a way to watch them, but it's it's just not through the desired means. So yeah, we need some consolidation in this regard, and I'm certainly not the only one to notice this.
No, 100%. Cable 2.0. We'll see what 3.0 is going to be looking like, but that is going to do it for our segment today. We got a little bit of risk, extra risk on the week. UAL had earnings yesterday. We'll see how that digests and pans out. Anything else before we look like you were gonna?
No, I was looking to I was just reading through chat here.
Yeah. We miss anything?
But yeah, no. I think everybody's just keeping up. But Yeah. Anyway, appreciate everybody watching. This has been great.
Cool. Well, that's going to do it today for Risk of the Week with Errol and Gus. We will be back next Tuesday, every Tuesday and Thursday at 4:30 Central Time. Be sure to come and hang out with us. Thanks for taking the time to chop it up with us for a little bit. We'll catch you guys next time. Peace.